and didn't really implement. Today, of the five largest solar parks in the world, two are in India. We are hitting record levels of rooftop solar mobilization. Can you give our viewers a perspective of what the solar power generation in India, what's the miracle that has happened where it's doubling every couple of years?
Definitely, and thank you very much, Rishabh, for having me. India's renewable story, including solar, is not just a miracle, but it is something that both developed and developing countries can learn equally from us. Like you mentioned, India today is the third largest country in the world in terms of installed capacity. Today we have more than 136 gigawatt of solar and almost 60 gigawatt close to wind. If you want to imagine, in 2013, 2014, when we started, we had only 2 gigawatt. So in 11 years, we have increased our capacity by almost 70 times. So this is not just any normal energy transition story, but this is actually a story that is filled with many inspirational anecdotes, as well as the policy level and implementation level uh, mastery that has come in, showing how India, if we want to scale things up, we can scale things up quickly. One thing I want to mention, now that we're talking about budget also, and in our renewable energy context, I've read page to page of the Indian Economic Survey by the CEA. One thing that is clearly visible is that in our planning, we should think globally and we should act locally. And if we want to panic, we should panic internally. So that is something that is very, very clearly, evidently visible from what the CEA says. In solar itself, in manufacturing, if I have to bring you to the facts, today we are the second largest manufacturing base in the world. Only to think, less than 10 years ago, we were importing more than 90% of our requirements that we have to install every year. So there is a strategic policy reform that has initiated our renewable energy revolution, if I can say, and today we are all beneficiaries of it. There is also another side of this story. Today, while solar energy is increasing in terms of installed capacity, in terms of the percentage of energy generated, we are less than 15%. I can give you one anecdote. Today, closer to 500 gigawatt of installed capacity is there in the total electricity. More than 50% is coming from renewable energy. But in terms of generation, we are around 17 to 18%. But that is going to change. So you and I, in less than 2 3 years from now, out of 10 units we consume sitting in our homes or in offices, at least 5 of them will be coming from solar. This was unprecedented, or this was never thought of before. And this is not only making us a renewable energy superpower, if I can use that word, but is also making our cost of electricity cheap. That
Okay.
has never happened in the country before.
Okay, so in one single calendar year, January to December 2025, India added 4.9 gigawatts of solar power just on rooftops, part of government schemes and other private enterprises. That is not a little bit more. That's, I think, 1.5 times more. It doubled in 1 year. Expected to do the same again this year. So in 2025, we crossed the threshold, which Mr. Pulipika just mentioned, where 50% plus of the power generated in India now comes from renewables. That, of course, non-carbon sources, that includes a little bit of nuclear, wind, hydro, but the large chunk being solar. So the big question, Mr. Pulipika, have we sorted the conundrum? And the conundrum is that for the solar industry to grow, you need cheap photovoltaic panels. The cheapest ones come from China. But in order for the PVC industry to grow, you don't want the cheap panels from China. How do we now solve that conundrum, the last big conundrum in the solar sector?
Yeah, I mean, that is the biggest conundrum in the solar sector, not only in India but across the world. I think we are almost 50% into the solving of this conundrum, and I tell you, and this is what even the chief economic advisor also tells, and he has put a very nice infographic about our manufacturing of solar and which should get priority. But Indian government, I'm sure you are aware, they've announced production-linked incentives in 2021 for different plethora of sectors. Solar has been one of it. And we got two tranches equivalent to 24,000 crores. So with that 24,000 crores, we are able to now decrease our dependency on final module import by almost 80%. So now 70 to 80% of our domestic consumption is coming from domestic manufactured modules only. But that is the beginning of the story. As you go back into the value chain, module is made from cells. Cells are made from wafer. Wafer comes from ingot. Ingot comes from polysilicon. Polysilicon, you should mine the pods. So this entire value chain, India is now planning to shift that entirety into our country. So in that entire value chain of 0 to 10, if you ask me, we are currently at around 6 in terms of energy independence or Atmanirbharta. Maybe by 2028, we will get into around 8. And by 2930, almost 100% of full dependency on domestic
No.
supply
You're
chain.
saying a very big thing, but you are saying it like an expert. So let's dumb it down for people watching the broadcast. Ladies and gentlemen, again in the entire history of India, okay, from my parents' generation to grandparents' generation, we have been a country of dependencies. Up until the 1960s, we couldn't even feed ourselves. So you had to get this low quality PL 480 wheat from the Americans, and you didn't have foreign exchange to pay them, so you paid them in rupees, and they built themselves nice baseball stadiums in the American embassy here, because where else would they spend the rupees? So we went from that dependency. Then you had the Green Revolution. Today, India does not even feed itself. We've had in the last year record, all-time record wheat production, all-time record rice production, all-time record procurement by government, all-time record vegetable production. We more than feed ourselves, so much so that we are exporting food all over the world, and including the United States of America, where we, believe it or not, are the largest exporters of shrimp into the US. And I couldn't believe it that some of this shrimp is being harvested and grown in Punjab. Who would have thought? So that's very happy news. But there are two other dependencies. Ajay Dua, in our entire lifetime, sir, the two biggest strains on the exchequer, and you've seen them firsthand, the two biggest strains on our foreign exchange reserve: number one, energy; number two, defense. Now, in energy, 50% of our power needs are coming from renewables. We've now done 20% ethanol mixing. I know there are some issues, technical issues still on that. But are we looking that there is a foreseeable future that we are not dependent on foreign oil and gas?
Rishabh, while I entirely share your optimism as well as of Mr. Pulipaka about the solar energy, there are certain issues of coordination still pending. Apart from the fact that we are importing a lot of cells, etc., from China, continued dependence upon it. But at the same time, in order to have the grid balance, you need to have a certain amount of renewable energy only, which can go into the grid. So it has to keep a ratio with the conventional energy. So we are backing down actually taking of renewable energy. PPAs are being delayed in signing for new solar power stations. But all these, I call it as work in progress. So somewhere things will get coordinated as we go further, because that's the future. The future is going to be renewable, not renewable and not fossil fuels, and it should not also be hydrocarbons, which we will continue to import, and we cannot afford it because of the constraint on foreign exchange, etc. Having said that, how do we really go forward? One means, I think, which the budget last year hinted at, and I do expect a greater kind of concentration on this, or greater attention being given to it, would be the small modular reactors, nuclear reactors. Last year, 20,000 crores were provided in the budget for component making in India for the SMRs. I expect that the emphasis would continue this year, and it is likely to happen because we've also been able to pass, just last month in the Parliament, the Shanti Act, which allows private sector to come into nuclear energy, and also we have been able to meet the concerns of the providers of nuclear energy in terms of their liability being limited. Earlier, they were all very afraid. That's why, despite the agreement, our
Okay.
opening up to civilian power, we were not able to do that.
Okay, so let me put that in context for our viewers. This civil nuclear liability clause, this debate has been going on since the Indo-US nuclear deal. When I was in college, this debate started. I have got grey hair, and India's nuclear projects haven't gone anywhere primarily because of this. But as Dr. Dua mentioned, that's about to change. The technology is changing. It's becoming more reliable. It's becoming more plug and play. The SMR is something that you can put outside a data center and doesn't have to be on a particular plant. And then you can add as many as you like. So the technology is changing. The ownership structure, investment structures, and liability structures have changed. So this is going to be part of the puzzle. But does it equate the multi-billion-dollar question that forget our lifetimes, in the foreseeable future, you can't eliminate oil and gas, petroleum, because plastics and etc. other industries, allied industries also depend on petrochemicals. So you can't make it zero. But can your energy mix with electrification, the EVs, two-wheelers, EV buses, potentially EV trucks with a little bit of hydrogen in the mix, with solar powering all the EVs, with the ethanol, can you get into a zone where your transportation infrastructure is not dependent on hydrocarbons, whether they come from Russia or they come from Venezuela is a larger question. So last thought on this with Mr. Pulipaka, then I want to go back into the budget expectations. This budget is not going to be the mover and shaker, and the reason budgets are not movers and shakers are because economic policy no longer waits for the budget, which is a great thing for the country. So don't expect the sun, moon and the earth today. A lot of the things we already know are about to happen. A lot of the fine-tuning details is what you get from the speech. So everything is not going to change. But Mr. Pulipaka, in a practical sense, are we seeing that paradigm shift, like economists want to call? There's something in the energy market, something dramatically new is here.
Definitely. In fact, when you're talking about how a dependency on oil and gas imports will be going away or not, there was a new research, one of the largest think tanks in Asia came out with, that is India transitioning to a electro state from a petro state? And the evidence is very clear. We need energy for electricity, mobility, industry, and agriculture. And each of these four sectors, slowly, electricity is replacing our petrol or oil intense or gas intense intensity that is existing. So there will be a point of time where in all these four sectors, electricity, of course, mobility, you rightly mentioned, industry, the transition is about to happen, agriculture, we are getting there. More or major chunk of our energy consumption in these four sectors is going to come from renewable energy, which will help us in two parts. One, our import dependency will definitely decrease, and attached import dependency of our burden on exchequer will decrease. Now, your question on what is whether we are at a paradigm shift era, are we at an inflection point? We are definitely at an inflection point. We are at an inflection point that has never happened before. And I know you like this analogy if I tell this. In the next 6 years, from February 26 to maybe February 2031, we are going to install more renewable energy than we have installed in the total electricity capacity in the first 65 years of our independence. So if this is not an inflection point, I don't know what it is.
Yeah, like I mentioned, it's currently doubling faster than gold. And that's saying a lot right now. That is relatable. So we've doubled solar capacity in 2 years. Believe it doubled, not increased. It doubled in 2 years. The scale of it is. You have to see the photographs of these solar power parks. Oh my God, they are massive. Can you imagine? Of the world's, I mentioned 5 largest, 2 are in India: Gujarat, Rajasthan, Tamil Nadu. They're coming up like never before, and we haven't noticed this. But I am still of the generation that remembers power cuts regularly in the national capital. It was perfectly normal not to have power for 12 hours, days. Everybody had a genset at home. Everyone had to have an inverter to last for 2-3 hours just to manage the night somehow. that generation, the new generation doesn't know that. It's not wholly true everywhere, and those are generally transmission problems. We export power now to neighboring countries, one of which currently doesn't seem to want ours. We know what's happening in Bangladesh. Okay, hold your thought, because there's lots to discuss here. And the reason there is to discuss here, because when you talk about fundamental shifts, here, mobile phone in my hand. Now, if you want to be fundamentally different, in this mobile phone, the critical components are the screen, the battery, and the silicon. None of these three things are currently made in India. If you further go into it, for the battery, the lithium has to be found. In 2025, India opened its first lithium mine. First lithium mine has been opened somewhere near Chhattisgarh. We are doing lithium prospecting now in Leh Ladakh. So you have to have the inputs of all the components before you become a truly a manufacturer, but we for sure have become the assembler. So let me get Vaibhav Jain back into this conversation. Vaibhav ji, now let's look at the rough and tumble. I've discussed the larger picture. Here we are. The finance minister is going to give us a lot of the devil in the detail, because as I said, government policy, economic policy, trade policy, commerce policy, none of it waits for the budget anymore. So the devil in the detail, what are you watching out for?
I think we have Income Tax Act 2026, which is taking a kickoff from 1st April 2026, which is already tabled. Income Tax 2025, pardon me.
Yeah.
After 6 decades, we are replacing the income tax law. This is again a very big reform, may not be as big as the GST. But we have seen a lot of aspects of income tax being rewritten, which of course may increase some interpretation issues. But a lot of stakeholder feedback has gone. And I see definitely, some detailed amendments which the government has waited and they have not done it while rewriting the law, which we will see on the table. So I think people on the tax professional side, they're going to be very busy after Madam's speech.
Okay. That's a good thing and a bad thing. Okay, it depends on which perspective you're looking at from. Vinod ji, on the devil in the detail, because the broader policy strokes we have, there will be a theme to this budget. There always is. But the broader policy strokes we generally already have. We've prepared ourselves for the trade hit with the GST cuts and the FTAs. Those will play themselves out. GST has already had an impact. But on the devil in the detail, what are you watching out for?
Yes, I've already mentioned that this is not arithmetical. We should not look at from that angles only, that it is only the tax rates cut or something of standard deductions, ATC deduction, new regime or the old regime. This is mainly the growth in infrastructure in the capex. That is most important at this time. As you have shown the phone and you have told the 3 stories, that the screen, the battery, nothing is being produced in India. Now it is time that we have to incentivize, we have to call for the investments to be invested in India so that we can produce this in our own country. Like Apple has already shifted their phone manufacturing here. Now it is time for the manufacturing industries to come back. We have to go back into the 91 era. I think I'm of that your generation, that when the power cuts were normal and all these things we gone off. We have seen all these crashes and all in our life. And then we had the COVID. So lots of things we are expecting on the side of manufacturing incentives. We are expecting that we will be getting it. And with that, the stock market and all stability will be there. And good money is going to be made in next coming 5 years. Stay tuned. I think this is the high time for this country. Now all the base which has been created in last few years, this will go double. As Mr. Pulipaka was saying, that it has doubled in last 10 years, in 65 years versus 10 years. Similar story is going to happen in all the industries in coming 10 years. This is my expectation.
Okay,
this is my
so for
expectation.
people watching the broadcast, just to put that into context, Apple exported $20 billion of iPhones out of India. Okay, that means they were assembled here in India, all components were made here. But $20 billion, this is despite the fact that there were Trump tariffs. They literally had to go to the White House to get an exemption, because up until a couple of years ago, it was China +1, that diversify away from China. So they diversified to India. Then, of course, well, like I said, Donald Trump happened. So putting that aside, ladies and gentlemen, if you've been watching Newsx for long enough time, you know that for years, almost a decade, we've been talking about we need to build the semiconductors, we need to build the semiconductors, we need to build the semiconductors. Every device that you're watching this telecast and every device you will watch the finance minister's speech on has semiconductors inside it. Okay. Currently, there are 8 major semiconductor manufacturing plants, chip manufacturing plants under construction in India. Adani is into the game, Micron is into the game, Tatas are deeply into the game. From the northeast to Gujarat, all over the country they're being built. Now, this has to click into place. The dividends will then come next year. The construction capex phase that he was just talking about, that comes in next year. So, I mentioned we started lithium mining for the first time. India had its first startup battery manufacturer start 2 years ago. We don't make the screens. Even Apple doesn't make the screens. Samsung and LG make all the screens and all the TVs and all the phones everywhere in the world. But they don't make them in India. They still assemble them in India. So let me put that question to Mr. Raval. To Mr. Gupta. Mr. Gupta, there is a larger picture here. But this is also today going to, I suspect, today is going to be more about the devil in the detail than something dramatic. What are you watching out for?
See, that's true. Every year we see this is to be done, this is to be done. So why don't the finance minister should give a new system that we should have a quarterly budget monitoring system? That what we were expecting, what we have done. See, in the Beva was saying there are a lot of things to be changed in the income tax, but we need to see there are different anomalies where there are disproportionate changes. Like corporate, you are charging income tax at the rate of 22%, whereas in the partnership firm, which is old ancient system of India, LLP and individual at the top level income, you are charging more than 30% income. So how this should reduce? One side, Indian government is offering free medical to all the aged people in the Ayushman Yojana. And on the other side, you are not giving good benefit to the mediclaim. That means who are claiming to own their own medical expenses. One side, you want to give all education free. And on the other side, those who are financing their educational cost by getting education in public school, you are not even ready to give the deduction. So, and one side you want to give lifetime pension to the employee, government employee, every day, and even the spouse of the employee. Even after death of the employee, you give the pension. So, after 30 years of service, you give 30, 40 years of pension, but you don't try to give any retirement benefit to the unstructured domestic maid, domestic servant, and driver, cook, gardener, etc.
Okay.
There is no plan to link with the PPF that there should be a mandatory system that you are paying some 6,000 per hour salary to your domestic help. So you need to deposit 5% in his account directly. It may be added in the e-shram account or whatever way, but we should make it mandatory. You are leaving, I mean, not less than 3-4% of the entire country's population without any future security. So one side you are very keen, every year they are commissioned to see the salary revision, and one side you are not doing anything. There is no minimum salary for the domestic help for the small people. So these things finance minister has, not only this Nirmala madam, otherwise nobody has taken care. So we need to see these ground realities. Yes, mobile manufacturing, I want to say on mobile, every salaried person has to have a mobile. It is his duty. Even my driver has to have his mobile. But he is not getting any income
Okay,
tax
so let's have a
deduction.
practical conversation on this. Manish Gupta ji, for people watching the broadcast, many of whom will be salaried persons, right? And the biggest gripe of salaried persons is that first they pay tax on their income, then they pay tax on the taxed income every time they have to buy something. Now, the reality check is if you were to incorporate yourself, okay, if I was going to create Rishabh Gulati Inc. and I made a company around myself, okay, I could write off a lot more expenses and come under a lower tax bracket. That's how the rich people do it. Everything, the house, the gadi, everything is owned by the company. Nothing is owned personally. And everything then has depreciation and everything is written off as an expense, much greater than what you can do as an individual, certainly not as a salaried person. So, Manish ji, should we all incorporate ourselves?
Not exactly all, but we should take one by one, because in India we have seen we have observed that many people tend to make it as income tax saving or tax evasion practice. So we need to think carefully which item I should consider. See, at today's time, mobile phone is a need. And one has to have mobile, so we should give the deduction for mobile. Either there should be a standard deduction or otherwise. In the past, we have seen that in a government want to simplify the process of income tax, but you cannot ignore these complexities, these needs. So we need to have a system of combination where we should have a simple income tax system, but we should not disregard the education tax benefit on education, tax benefit on
Okay,
mediclaim,
so
tax benefit
okay. I
on
don't want to
mobile
throw the
collection.
baby out with the bathwater, because again, I've been in that generation that's seen the transition happen. My father's a chartered accountant, so I've seen the transition that in my working life, my tax return is filed online, and within a day or two, the refund comes. And I don't even have to go to anywhere, meet anyone. That's a dramatic change. It's a huge deal. Let's not kid ourselves. But then these strange things happen that individual salaried people, pay tax on tax. And the richest people in the world, if you can follow this, it's very easy to do so. The riches are never held in bank accounts. They're all held in stocks. So if you're a billionaire, it's because you own X percentage of a multi-billion-dollar company. Until you sell those stocks, you pay no taxes. So what you do is you borrow against those stocks. On loans, you pay no taxes. So when Donald Trump's tax returns were leaked before the last presidential election, do you know how much tax he was paying as a billionaire in the US? $750 per year.
Oh my God.
And the guy who's leaked the tax returns is currently in jail and he's been sued by Donald Trump, but $750 he was paying. And that applies to all of them. Donald Trump will tell you that I happily manipulate the system because it's been designed for rich people like me. Capitalism works like that. But India is not just about capitalism. So let me look at the other side of the pie as well with Ajay Dua. Ajay Dua, simultaneously, we have been delivering since COVID to 800 million people per month free ration. We are nearing saturation in government schemes that were meant to provide free housing, or at least a pakka ghar to every citizen, tap water to every citizen, power to every citizen. It's nearing toilets, your LPG gas. It's nearing saturation, which means nearly 100% it's reaching. So on the welfare side of things, are we doing okay, and what can we do better?
Rishabh, $1 million question. Since we are talking of millions and billions, all that I would like to say, we are on the right path. The fact that we are looking for beneficiaries nowadays for these schemes has two sides to it. One, people have waited for long enough. They have made their own arrangements if they find that the state meaning center, provinces, all the governmental bodies are not able to reach them. Second, there is an issue right now in each of the terms, each of the things which you mentioned, of there being finer calibration. Do we really need to give 5 kilograms of food per month, grains per month, to 800 million people out of 135 which we have in the country? Or should we be concentrating on first the 20% or the people who are still below the poverty line, then the people who are in the BPL families, and not cover those who are above it? The number would then come down.
Dr. Dua, you're getting into a very tricky place, because you know better than me that the reason we distribute the grains is because the government is forced to buy the grains, because there is a resistance to let the open market purchase the grains. So the government is stuck with so many stockpiles of grains. What else to do better than give it away for free? So you know the problem here. If we let the market sort it out, maybe the farmers will benefit. But as soon as I mention farmers, it becomes a hot potato issue.
No, so what? This is the point I was coming to, that you have to be producing the goods or the produce for which there is a market. Not the fact that we've been producing extra wheat, we've been producing excessive rice in the of the late, but these are need to be substituted by other crops. We have to look at where is our water going, irrigation water going. Is it going to water intensive crops or the ones which will bring about better value added? You have to visit. We cannot be avoiding whatever, Rishabh, you might say. I'll not agree with that, the fact that in the country, when 700 million people are still dependent on rural areas, and agriculture is the vocation, we have to be addressing the issues of agriculture. Whatever might be the resistance or others, our productivity, we are producing more not because our productivity is high. We are 30% less productive than the Chinese farmer. We are and yet we are talking about how to get rid of extra food. Don't produce it.
Okay.
Produce something else in
Okay,
agriculture.
okay. So we'll agree that at least it's better than letting the food rot in the FSI go down. So that's a bad idea. But what do you do? It is a circular anomaly in this country that you are in record food production, and yet people don't have enough to eat. And the people who don't have enough to eat are the poorest, who happen to be part of the record food production, the farmers. I'm not talking about the industrial farmers, the people who drive Mercedes, okay, and who own 10,000 acres. Generally, the poor farmers are the farmer laborers who don't own the land but have to rely on agricultural income, which is a tough one. And you want to get into another hot potato, try taxing agricultural income. Okay, a lot of politicians also think that they are all agriculturalists, all farmers. You'll find that as well. These are hot potato issues, but let's take the other issue, Ajay Dua, which is mentioned here, which, let me sum it up in a singular phrase: social security. Now, in this country, we are saying, okay, for the first time, we are giving insurance, health insurance, accident insurance. So the people who, if somebody in your family had an accident or fell sick, you literally had to sell your zameen for treatment. There is a safety net now. This now applies. Think if you're retired and 70 plus, almost impossible to get health insurance from the private sector. That is now being guaranteed by government, because people, yes, are living longer. Therefore, the health needs, medicinal needs are increasing, and the last thing you want is medical bills when you're on a pension or relying on limited resources, no longer earning. So, are we building towards something, some sort of social security net which was being discussed right before this?
Yes, of the 4 labor codes, which the government reiterated this time, having passed these in 2020. The laws were passed in 2020, then referred to the states. There is a hiatus now for almost 6 years, but the government did show the extraordinary courage to bring these back, and I'm hoping that they will come into force, and that the exercise of making the rules, that is where it is stuck. That the Labour Ministry of the Government of India, now it's called Labour and Employment Ministry, they have to notify the rules as soon, and 6 months have been sought by the Labour Secretary, 2 months are over out of it.
Yes.
She made that effect. So I'm hoping that these 4 labor codes will get announced. They will come into force. What would happen is, because it's a concurrent list subject, the state government laws on the rules on the subject, laws on the subject would have to be better than the central provisions. Otherwise, the central provisions will apply in case of conflict if any state government tries to bring about the norms or dilute the norms. So that's a very good thing.
Yes, but again, I'm not. Yeah, you can have the other side of the argument as well, that even a person who's working in the gig economy, which I'm assuming that this budget is going to cover, and I'm going to come and discuss this after the break, or as has been discussed, that a person who's a domestic help, maybe a driver, do those people in that economic bracket also want to decide what they want to do with their money? Maybe they want to invest in the mutual fund, or do they want it to go in a pension account?
No,
I
They
don't
don't
know.
vote for
Again,
the
I'm traversing a generation here. The traversing a generation means I remember the concept of post office savings. All right.
Right.
The people who went to post office savings were people who had no hope in hell of even having a bank account. Now almost everybody in this country has Jan Dhan accounts. One thing is for sure, that from all the news coverage that I've seen in the past 1 week, including the parts that we have done, we no longer are showing you a graphic of onion prices for this budget. That's how the country has changed. Instead, in the past 1 week, the biggest news interest has been that will these German cars become cheaper after the FTA? Can you believe it? That's been the biggest news interest of the stories that we do, the greatest virality, that will the Skoda or the BMW or the Mercedes become cheaper in India? Lot of interest in these things. We've come a long way to go. Let's not kid ourselves. I'm going to take a short break, 2 minutes. We are back with you.
अब छोलिया हो या लोबिया, सफेद चने या काले चने,
सब कुछ मजेदार बने।
लाल रंग इसका अपार,
तीखा कम है फिर भी स्वाद,
बेमिसाल बेमिसाल MDH कश्मीरी,
MDH कश्मीरी।
MDH।
अब आया असली स्वाद।
अब आया स्वाद।
जब स्वाद के पड़े हो लाले तो MDH का चंकी चाट मसाला डालें। MDH का चंकी चाट मसाला।
MDH।
सस्ते वाले दाल मसाले स्वाद हुआ बेकार। MDH की हल्दी मिर्ची धनिया करे कमाल। ये रंग दे, ये खुशबू दे, ये तीखा, ये कम पड़े। क्या निराला MDH मसाला।
कभी खेलों के मानचित्र पर उत्तर प्रदेश सिर्फ संभावनाओं का नाम था, पर 2017 के बाद संभावनाएं संरचना बनी। जनपदों में स्टेडियम, ब्लॉकों में मिनी स्टेडियम और गांव में मैदान। खेल अब शहरों तक सीमित नहीं रहे। लखनऊ से मेरठ, वाराणसी से अयोध्या, ग्रेटर नोएडा से गोरखपुर, मैदानों पर सिर्फ खिलाड़ी नहीं, अंतर्राष्ट्रीय इवेंट्स उतरे। खेलो इंडिया, यूनिवर्सिटी गेम्स, मोटो जीपी, डेविस कप, बैडमिंटन से लेकर खो खो तक उत्तर प्रदेश अब मेजबान भी है और दावेदार भी। प्रतिभाओं को मिला मंच, प्रशिक्षण और सम्मान। आज उत्तर प्रदेश खेलों में सिर्फ भाग नहीं लेता, दिशा तय करता है। यह है बदलाव की कहानी, मेहनत की पहचान और भविष्य की स्वर्णिम उड़ान। ये है आत्मविश्वास, लगन और विजय का गूंजता संदेश। ये है नया उत्तर प्रदेश।
MDH कसूरी मेथी लाजवाब है, लाजवाब है।
स्वाद और सुगंध इसकी
लाजवाब है, लाजवाब है।
अगर MDH कसूरी मेथी नहीं डाला
तो खाली हाथ मलते रह जाओगे।
एक एक पत्ता हाथ से चुना, स्वाद और सुगंध जगाए कई गुना।
MDH।
MDH की देगी मिर्च,
देगी मिर्च का तड़का, अंग अंग फड़का।
MDH की देगी मिर्च।
इसको तो फुटबॉल खेलना भी आ गया और इससे तो पियानो बजाने भी आ गया।
चंद्रयान भी उतर गया चांद पर हमें
अब तक टेस्टी राजमा बनाना नहीं आया।
बिना MDH राजमा मसाला के टेस्टी राजमा कैसे बनेगा?
स्वादिष्ट राजमा के लिए MDH राजमा मसाला।
क्या स्वादिष्ट राजमा बनाए?
MDH।
Welcome back. You're watching Newsx. I'm Rishabh Gulati. We are just few hours away from the Union Budget 2026. Now, the budgetary exercise, the speech is no longer the be-all and end-all of economic and policy. In a time when I was in nursery school, when what the finance minister would say would decide the fortunes of the industrialists and the people, because if quotas in one sector went up or went down, entire industrial units would have to shut down because of a license Raj. Those days are gone. Economic and trade policy, even tax policy, because indirect taxes are the bigger chunk of tax policy, no longer wait for the budget. When it comes to direct taxes, we've already seen changes last year, so don't expect big chunky headline change this year. Technical changes here and there, devil in the detail, is certainly going to happen. So what does this budget need to be about? We don't know what it's going to be about, but we can logically postulate what it should be about. It has to be about investment in core sectors, investment in capex, investment in infrastructure. Because, ladies and gentlemen, here's the good news. Although we shall never be satisfied, nor shall we deign to become the kind of people who are always satisfied, but the country is doing okay. GDP growth very healthy, predicted at 7%, currently going at 8%, inflation at 2.5%, pretty good. Fiscal deficit under 5 at 4.2%, doing great. Foreign exchange reserve $700 billion, looks good. Everything looks pretty okay. But I'm still concerned. Microsoft lost $400 billion last year. I've lived through 2008, okay? So I've seen financial bubbles, not of our making, not of our fault, sweep through us, okay? We are not yet big enough, and we can never be disconnected enough for that to be relevant. I don't know what's happening with gold and silver prices. They're all over the place, okay? Certainly gold should not be going up that hard. That tells you a fundamental global realignment is happening, that institutions and central banks are selling US treasury bonds and buying gold and putting the gold on top of planes and getting those planes and putting them into vaults in Mumbai. There's a fundamental global realignment. Now, do we expect a fundamental global realignment to happen without any impact on anything, just smooth? Maybe, maybe not. And what do we do? You know, there's a movie called The Sound of Music. Many of you would have seen it as children. And it has a song, how do we solve a problem like Maria? So in a world of how do we solve a problem like Donald Trump, we don't have answers of what is happening next. He's been quiet for a few days because right now they're busy with Minnesota and Epstein files and whatnot. So they're a bit busy domestically right now. But what he comes up with the next few days, we don't know what that might be. And how that either shakes or manipulates global trade in the markets, we don't know. Okay, Alberta is the latest one in Canada, believe it or not. So there is a larger global picture. It looks great. Everything looks fine. 6 months of US tariffs haven't sunk us. The FTAs that we have signed will take 1 year to benefit us. Everything looks like it's heading in the right direction. Fingers crossed. All right. But something dodgy seems to be going on in world markets. $3 trillion in capex, nearly 50%, more than 50% of India's GDP is what just 3 or 4 companies plan to spend. Where's the money coming from? And is that money going to show a return? I don't know. Does it look like a bubble? Yeah, it kind of does. Seen it before. Ranjit Mehta joining us on the broadcast. He's CEO and Secretary General of the PhD Chambers of Commerce and Industry. Sumit Peer is with us. Gaurav Agarwal joining us as well. Let's pick up this conversation. Ranjit ji, so the country seems to be going okay. I think this is going to be more about devil in detail. So let me ask you a practical question. Since you represent chambers that has a lot of SMEs in it, there has been a bite, sir, in certain sectors, textiles, shrimps, many other sectors, of the tariffs. Now, overall the country is doing well, but some sectors have been hurt hard. They are yet to realize the benefits of the FTA. So, what do we need for those export-oriented sectors today, sir?
Thank you very much, Rishabh. It's always a pleasure to be with you here. In fact, this budget is coming at the moment when there are so many expectations. The expectations are not for populism, but the expectations are for priorities and precision. The growth momentum of Indian industry, or the growth momentum of India's economy, in fact, it needs to convert into inclusive and predictive outcomes. That's what is really required. Now, you really said about this MSMEs. Yes, due to recent tariff developments, our MSMEs, more than 7 crore MSMEs, 70 million MSMEs in our country, they have been hardest hit, especially in textile sector, gems and jewelry, and engineering and all these sectors. But the question is that government has definitely taken a very proactive approach on this. We have diversified our markets because many countries, we cannot, the time has come, the world order is changing, the global order is changing, we cannot depend on one single economy. The recent FTAs like FTA with UK, FTA with the EU, the mother of all FTAs as they call it, an FTA with Oman, New Zealand, all these FTAs have opened doors for Indian MSMEs. But it is going to take some time when they develop this market. For this, I think in the new export mission, what MSMEs require today is the hand holding. Because the small businesses, suppose there is a big fair in any of these countries, MSMEs cannot take part on their own. So for this, I think export promotion mission should have definitely market access initiative assistance that can give some kind of subsidy and that can help those MSMEs to participate in those markets, in those fairs, international fairs, so that they can display their product and get the business. And I think secondly, one of the biggest challenges of MSMEs has been the finance. How to get the easy finance. Not only easy, but how can they get on
okay, so Ranjit, sorry to interrupt you, but let me just dissect this into straight questions. Are you aware of companies who were exporting? I am certainly aware of people, especially in textiles. You mentioned gems and jewelry, whose primary market, which means 60-70% more of their exports were all going to the US. Are you aware of these people being badly burnt? Are there some companies in trouble?
Many companies who were really doing business with US for last many decades, they have been definitely burnt, and those companies, they had to really lay off their employees. Their businesses have been very badly affected. But at the same time, I think the discussions, the many interactions with the Commerce Ministry, we have been able to give them some kind of new market access.
Okay.
And now the government
so practically, so the EU India EU trade deal is going to take some time to be ratified. So you expect it to actually kick off in January next year, which will be a remarkable achievement. Okay, if it kicks off in less than 1 year, there are 5 grades for the EU Parliament to ratify it. It will happen. The political will to make it happen is there, but it will take a few months. So, Mr. Mehta, how many of these people, these entities, these companies, their CEOs, their founders, some of them are family-run enterprises, how many of them are now looking, as you mentioned, now trying to find clients in the EU? It won't happen immediately, but how many of them are being able to pivot?
You see, they have been trying. In fact, people have been visiting in business delegations to UK, UAE, and Oman. We have taken many delegations in these places. They are definitely searching. They are definitely exploring the new markets, new clients. But this business takes time. So the best thing is that what they are doing is right now they are diversifying. They are looking for the market, but the problem is very, very serious. It is like the biggest problem for MSMEs is they cannot really, as far as their finances, their loans, all these things are concerned, definitely the liquidity crunch is there.
Yeah, cash flow.
The cycle has
cash
been
flow is the
broken.
biggest problem. The future is okay,
Absolutely.
but the problem is that you have to worry about this year. If the company can't survive a year because of cash flow, then what happens 5 years later, long term doesn't make a difference because the company is gone and it's ruinous. So yes, in Europe, it's not just about the tariffs. There's something called non-tariff barriers, the quality control and their standardized standards. You have to get through all these regimes as well. You have to then, of course, have the practical things in business, which is client relationships, which you have to rebuild. If they were primarily in North America, have to shift to Europe. So yes, can our textile industry now take down the Bangladeshi textile industry because the tariffs now have equalized? Yes, absolutely. Will it happen? Yes, absolutely. But it's going to take a couple of years. So this budget, Mr. Mehta, has to be about providing for these export-oriented sectors for the next 1 or 2 years while this all kicks off, and then the markets can take care of themselves.
Absolutely, Rishabh. In fact, the budget must give some kind of interest subvention, and also the monetization of those loans which are for the industry people right now, because today in 90 days an MSME can become NPA if the loans are not cleared. Though we have been demanding that the payment cycle goes a little longer, we have demanded for around 180 days for this particular NPA regulation. However, this is under consideration. I think during these difficult times, the government will definitely look into this.
Okay. Last quick question before I go to Gaurav. Ranjit ji, the other thing you already mentioned is cost of capital. India's have the highest 12, 14, 15%. If you are a very small company, can be even higher than that. Okay, that's insane. For many decades in Japan, the cost of capital was negative. Interest rates were negative. So we have the highest interest rates in the world, so much so that foreign players just do interest arbitrage with us. Ranjit ji, is that an exercise that we can't do anything about, because our savings rate is dictated that we also want our 7% from our fixed deposit. So by default, the loan rates are going to be 10, 11%. Is there anything we can do about it?
What we can do is, earlier there was a scheme called interest subvention scheme, especially for pre-shipment and post-shipment for the MSMEs. That interest subvention scheme has been discontinued in December 2024. If that scheme of around 3% on interest subvention for these MSMEs can be given, that will be an excellent thing. And secondly, I think government has launched a credit card, for MSMEs. I think that will also be very, very useful. At the same time, they have come out with collateral, free loans that is guaranteed by the government of India. What is lacking is probably the implementation on the ground. When an MSME goes for a loan to the bank, still they insist on collateral security. However, CGSTs, their government guarantees it. There's a scheme, so that probably the implementation needs little more stricter rules. What we have suggested is, if there can be some kind of helpline for such people where they are facing some problem, maybe RBI can come out with some helpline so that the help can be provided to them with the particular bank. This is there.
No, of course, it cuts both ways. Companies that are just having a cash flow problem and they need a loan, either just to a working capital loan, or they require for capex investment. That's a good thing. That's what economic activity requires. Investment is driven by loans. But at the same time, we've had in this country a culture of taking loans and just doing nothing with it and converting yourself into an MPA, and nothing will happen. Well, there's been some good news on that front, because India's NPAs, after the cleaning up of the financial architecture, the NNPAs have come down to less than 0.5% of the banking sector assets. It was nearly 9% a few years ago. A shocking amount of money. Okay, disturbingly large amount of money, and a lot of them have been forced to be written off. So India's financial system seems to be healthier. So let me get a different perspective on this. Let's start from the theme that we're discussing. Gaurav Agarwal, on the aspect of this middle point for the people who are exporting to the United States of America, where they have having to deal with first uncertainty for several months, now tariffs for 6 months. The benefits of the diversification of FTAs will only come sometime next year. What happens in between?
So, Rishabh, this is a very pertinent question which you have raised, and let me tell you that the exporters who are expecting exporting to US have really turned down. So their turnover, which were majorly dependent on the US exports, have really gone down, and they are not getting any business from anywhere. I am telling you the practical problem down the line, because see, every exporter is having the clients not from, but it's a long-term business. It's not a short-term business. So when we talk about that getting the business from any other part of the world, it becomes difficult for the exporters to make it as soon as possible. So now they are finding the buyers from the other country. Now the very pertinent question is that when they go and look for more buyers, now the pressure comes for the pricing. Because see, if you are the person that you have to sell more, you have to compromise on the pricing part. Then again it comes to the question of cost of capital, which you are raising, that the cost of capital in India is so high that that offering a product below cost becomes a problem for the business owner, but he doesn't have any choice. He has to run the show. So in that case, they are struggling with the losses, they are struggling with the things, and down the line they are bound to sell before below the prices, which I can tell you because I am
Okay,
dealing with the
I'm sorry
business
to
on a day in day
interrupt
out.
you, but this is in itself is an example of how India is changing. The visuals that you're watching right now, the red carpet, is outside something now that is called the Kartavya Bhavan. Okay, this is part of the new Central Secretariat. Last year, during the same telecast, sitting here with me, you would have been watching the same visuals, but those would have been outside North and South Block. This is a story of India's capex in every single sector. Not only we have new parliament building, the secretariats which have been combined into one for efficiency, brand new, are being built. So these visuals will change forever, literally. The building from where the finance minister sits and leaves has changed. The building to which she goes, which is the parliament, has changed. Telling a story of India's change as we speak. So if you're expecting to see the very familiar North and South Block, not happening. Gauravji, finish your thought.
So that's what I was thinking, that the situation as of now after the exporters is not very good. But yes, we are expecting that they will get a new business from across the world other than US. And we are hoping that GDP is doing good. But
Okay.
coming back to the Dr. Ranjit Mehta's point that MSME, if we talk about, if in India government takes care of the MSMEs well, because they are the major contributor of GDP in India, and if they get incentives down the line, actually implementable schemes, as Dr. Mehta was saying that though there is a scheme that till 10 crores exporters or MSMEs can get a loan interest free or collateral free. So but actually that is not happening down the line. So if that happens and the government takes care of these MSMEs, I think that will be a great boost to the
Okay, all right.
MSME
I want to
business.
discuss Gaurav one quick thing before we move on, because one of the sectors which has been worst hit has been gems and jewelry, right? For those people, you know that 90% of the world diamond trade went through India because all the cutting, polishing work, India had a monopoly literally all over the world. But there's a problem, and the problem is not just about Trump and tariffs, and the other problem is that lab grown diamonds, ladies and gentlemen, we also make lab grown diamonds here in India. Okay, so it's an industry we are involved in also. But the Chinese have pumped this industry so much that lab grown diamond prices are down 96%. No jeweler will buy a lab grown diamond these days because it's potentially worthless. Overall diamond prices have halved in the past few years. So the industry itself is in trouble, Gauravji. So is there another pie of the story that's hitting at least one of these sectors, which is gems and jewelry?
So actually, there what the India has to think of, because we are still, if we see the jewelers in India, they are still pushing up the natural diamond, and instead of focusing on these lab grown to scale up their facilities with production of lab grown diamonds, we are still have a very thought process that these actual diamonds are more precious and all. So we have to come up and see, China in any case has always hit on to the Indian markets to start with. So this is a very new concept which has grown with the lab grown diamonds. I think India has to buck up if they want to actually deal with
Okay.
the economic, international pressures, and they have to increase their production, which is not yet at par with
Yeah,
the
but
Chinese.
let's not start investing in more lab-grown diamonds. It's become worthless. There is no industrial demand for it doesn't exist at that scale. 96% price drop. If it happened in any other industry, that would be catastrophic. That would be the end of the industry. 96% price drop, not little bit. And diamonds, the only reason the jewelry industry is still okay, and trust me, for jewelers, rise in gold prices not necessarily benefiting them unless they've been sitting on inventory, because in the end they only make a percentage on the price when they charge for making. It helps, but not really. So if you thought, oh, the jewelers must be making so much money because gold prices have gone up so much, not necessarily. So let me get a larger picture here. Sumit Peer has been listening in very patiently. Sumit, let's take a quick thought before I take a break and come back. What's happening in the overall picture? Are we doing okay, and what are you watching out for?
Good morning, Rishabh ji. Thanks for having me on your show. A pleasure as always. I think overall, if you look at the global economy, we are doing pretty much okay. If you look at the inflation, you look at foreign exchange reserves, you look at the tax structure, the amount of taxes we are collecting and we are going to cut. We are going to collect. You look at the GST collections. You look at the overall picture of the economy. It looks to be okay. Still, the GDP growth is quite, I would say, beautiful. Expected to do very well. Overall, the things are okay, but there are some pain areas which we need to work on. There are some turbulences which we need to just be ready for. I just want to make one or two points which are very important right now. Our friends here have been talking about how the MSMEs have been suffering. That's a reality. But the happy news is, with this FTA, for example, what we have done with EU today, there's an interesting aspect, that is it opens a $10 trillion market a year, $10 trillion US market a year, because what EU imports is $7 trillion of goods and $3 trillion of services. That makes 10 trillion. The total GDP of EU is 21.1 trillion. So basically, at 0% import duty, which is going to be for 99% of the things in a year to come, that is the quantum of import market or the export market for us, which opens for goods and services. For example, I'll give you another example. Now with this EU FTA happening, for example, Pakistan and Bangladesh has been selling. Pakistan has been selling around $12 billion of garments into EU, and Bangladesh around $5 billion. They have got this GSP status, which allowed them to sell because they were literally paying no tax because of the GSP status, which we did not have. Now with this FTA done, immediately that 12 billion of Pakistan and around 6 billion of Bangladesh can immediately come to us in textiles, leather. It's a few $1 billion, and especially talking of gems and jewelry. For EU, the market is right now is around a $10 billion, which was earlier be done by some players because we had to pay import duty. Now with this FTA coming in a year's time, we don't have to pay anything, and these are the kind of markets which are opening up. The American FTA, they are knocking our doors right today. They want to have FTA with us. Canada is there, and 14 more countries are there. We have already done 8. That if you look at the opportunity, if we can survive for another 1 year, hold it up. But the quantum of markets which is opening, the amount of market which is opening for a country with a GDP of $4.3 trillion.
Yes, I agree with you. The fundamental realignment is not happening. It's already happened. You mentioned Canada. The Canadian Prime Minister is expected to be in India very shortly, and a major trade deal with Canada, which after all the diplomatic issues that have happened is inevitable. I need to take a very quick break. As you're watching visuals of the finance minister, she's not going to parliament. She has to first go to Rashtrapati Bhavan to complete formalities there. Sid, when we come back, let's do a two-window of the last year exiting the old North Block and this year the brand new Kartavya Bhavan. And you can put that into context for our viewers also with something that you can upload. But we'll come back, take a short break. See you in a couple of minutes.
All right, with that, let me go across to my colleague Uday Pratap Singh for the latest news from Maharashtra.
Hello, my name is Uday Pratap Singh. You're watching Next in Maharashtra, a special segment where we bring you the latest from India's financial capital. Here's what's making the headlines in Maharashtra this week. In a massive economic triumph at Davos, Maharashtra has sealed MOUs worth 30 lakh crore rupees with preliminary talks for another 10 lakh crores, set to create 40 lakh jobs and build India's first innovation city near Mumbai. Watch this special report.
Maharashtra has achieved a massive milestone at the World Economic Forum 2026 in Davos, with Chief Minister Devendra Fadnavis announcing that the state has signed MOUs worth Rs 30 lakh crores, with preliminary talks completed for an additional 10 lakh crores. This landmark haul is set to create up to 40 lakh jobs across the state. Highlighting the global appeal, 83% of these agreements involve foreign direct investment from 18 countries including the US, UK, Singapore, Japan, Switzerland, Germany, UAE and more. The remaining 16% focus on foreign technology partnerships spanning sectors like AI, quantum computing, data centers, green steel, health, food processing, fintech, logistics and urban development. In a game-changing announcement, Maharashtra will partner with Tata Group with an investment of over 1 lakh crores to build India's first innovation city near Mumbai, a future-ready hub for AI, semiconductors, GCCs and innovation. Detailed planning begins in the next 6 to 8 months.
पुढच्या काही वर्षांमध्ये आपण मुंबईला एक सर्क्युलर इकॉनॉमीचं शहर म्हणून त्या ठिकाणी पोर्ट्रे करू शकू आणि हेच टेम्पलेट आपण सगळ्या मोठ्या शहरांमध्ये पुण्यामध्ये नागपूरमध्ये सगळ्या मोठ्या शहरांमध्ये आपण नेऊ शकू अशा पद्धतीनं ही गुंतवणूक आपण या ठिकाणी केलेली आहे.
In other news, the Maharashtra government and MMRDA have signed deals with 11 global giants for the Raigad Pen Growth Center, the first city in 3rd Mumbai and a hub for tech, fintech and data centers. Unlocking over 1 lakh crore rupees in investments. Here's a report.
At the World Economic Forum 2026 in Davos, the Maharashtra government and the Mumbai Metropolitan Region Development Authority have signed MOUs with 11 leading global companies to develop the Raigad Pen Growth Center, envisioned as the first city in 3rd Mumbai and a next-generation hub for technology, fintech, data centers and global capability centers. Chief Minister Devendra Fadnavis, who was present for the signings, extended a warm invitation to international investors to make Raigad Pen a premier business and investment destination. This strategic project, located just 15 to 20 kilometers from the Navi Mumbai International Airport, will be modeled after Mumbai's Bandra Kurla complex as a world-class international business district.
A lot of foreign companies have already shown their interest to invest in this new city, whereby it will host a lot of GCCs, it will host fintech, it will host. So it will be a very inclusive business district.
Meanwhile, at the Bombay High Court, Deputy CM Eknath Shinde honored CJI Justice Suryakant, highlighting Maharashtra's conviction rates soaring from 9% to 45% and pushing for 60%, while stressing justice, democracy and judicial infrastructure upgrades. Take a look.
In a grand felicitation ceremony at the Bombay High Court, Deputy Chief Minister Eknath Shinde honored Chief Justice of India Justice Suryakant, emphasizing that as long as justice-loving people hold the highest positions, our constitution and democracy remain secure. The event celebrated India's robust judicial system and Maharashtra's strides in delivering swift justice to the common man. Deputy Chief Minister Shinde highlighted Maharashtra's remarkable progress in conviction rates, rising from a mere 9% to 45% under the current government, with ambitious plans to push it to 60%. He stressed the focus on bolstering judicial infrastructure, technology, and manpower to ensure faster trials and greater accountability in the system. The Deputy Chief Minister urged Justice Suryakant to grant full bench status to the Kolhapur Circuit Bench during his tenure, fulfilling a long-standing demand that would bring quicker access to justice for people in Western Maharashtra. He praised Justice Suryakant's inspiring journey from a middle-class Haryana family to the Supreme Court, calling it a beacon for youth through hard work, honesty, and dedication.
Emphasizing green energy leadership, CM Devendra Fadnavis has announced at the World Economic Forum 2026 that Maharashtra is on track for 16 gigawatt solar power by year-end through Asia's largest decentralized program, slashing farmer costs, cutting emissions and powering a sustainable future. Here's more.
Maharashtra is scripting a global success story in the renewable energy. Chief Minister Devendra Fadnavis, speaking at the World Economic Forum 2026 in Davos, announced that the state is on track to achieve 16 gigawatts of solar power generation by the end of this year through Asia's largest decentralized solar energy program. The Chief Minister presented Maharashtra's transformative model, which has solarized every agriculture feeder independently, creating a dedicated company to supply clean power to farmers. This initiative has drastically reduced electricity cost for the farmers from rupees 8 per unit to less than rupees 3, easing the burden on industries and domestic consumers while saving billions in power purchase cost over the coming years. The Chief Minister emphasized how Maharashtra has reshaped its entire energy sector in under a decade, from just 13% renewables a few years ago to ambitious plans for 52% renewable power by 2030 and 45 gigawatt additional generation, including 70% solar generation by 2032.
These are this week's updates from Maharashtra. You're watching our special segment Next in Maharashtra. Stay tuned for more news.
Welcome back. You're watching Newsx. We're in the run-up to the budget speech of the Finance Minister for 2026 coming up very shortly. And one big thing that has already happened is, and it's visually anecdotal. There you go on your screens. Notice the difference between the left and the right. Left was last year, budget 2025, photo op, and this is what's happening, about to happen. And you will see dramatically that the location has changed, because no longer are we operating in North Block in the Finance Ministry as was since before independent India. We have shifted to the Kartavya Bhavan, which is the new Central Secretariat in New Delhi. So literally the building from which the Finance Minister will be departing, which is the new Finance Ministry, to the building that she will be going to, which is the new Parliament, fundamentally different. And it is a marked reminder of the very rapid infrastructural change. It's not all done yet, but we are seeing stuff happening that hasn't happened quite literally in decades. So the transition is not complete, but very shortly North Block is earmarked to become a museum open to the public. So you and I will be able to walk in to see historical galleries, and a more efficient workplace will be coming our way. And let me just absorb that with Sumit Peer for a quick second. Sumit, I know this is I'm trying to be whimsical and anecdotal here, but you know, pictures do speak 1,000 words.
But Rishabh ji, you're absolutely right, because if you look at this, Modi ji once said कि गुलामी की हर निशानी को मिटाना है. So that is, it's a part of the process which is happening. And overall, if we look at the infrastructure, not in Delhi, around the India, last 4 or 5 years, every year there has been a 15% spent on the infrastructure of India, increase from the last year. And in last 4 or 5 years, the spend on infrastructure has almost doubled in the Modi Sarkar. The biggest ever infrastructure spend has happened, and that infrastructure is now visible in every nook and corner of India. Moreover, you will see a new building, a new bridge, a new airport, a new railway station, a new medical college. Something on that side is coming up pretty much everywhere. And so Delhi has also got a new kind of a revamp. If you look at the Kartavya Path, you look at the Kartavya Bhavan, which we were rightly saying. So these things are all which are basically made in India. I mean, made in modern India. We have not inherited this from British. The new parliament, for that matter, there was a lot of hue and cry. Why do we need that? But nobody seems to be talking that. So slowly, India is moving to a place and creating an image of its own, creating an identity and a standard which is done in independent India by a powerful and a resilient India. So India is sending a message that India has lived through the past, which we have no problem on, but new India under the current leadership wants to make a mark at the international stage. I mean, that is where the vision seems to be, that is where the mission seems to be, and that is where the budget, I think, is going to be. And what I'll be expecting is, again, the infrastructure push will continue, because what Nirmala ji said in the economic survey is that mere infrastructure push created, these 60 million jobs. So a lot of jobs.
No, but I know I'm being parochial, okay? But I would remember, Sumit would remember, know this, and let's be honest, I'm not speaking from them, but everybody else sitting in this conversation with me would be aware of this. There would be a whole host of staff in all these ministries who would walk in the morning, sign their attendance in the register, walk straight back outside, sit in the lawn in nice winter sunshine, which is what is going to happen today, and be playing cards. Okay? Everybody's smiling slightly. Even those who probably deal with government regularly won't want to say it on television for show. But that's the truism. Welcome to the world of biometric attendance. To exit the building, you have to now scan out. So that doesn't mean everything changes. The sheer fact of all the ministries being in just two buildings now, not dotted all over this bhavan and that bhavan and here and there and everywhere. Just being in two ministries with state-of-the-art infrastructure, meeting rooms, internet facilities. I mean, this part of Delhi was built 30 years before independence. Okay, I mean, 1913, when all these buildings were being constructed. Everything else, the lifts, the HVAC systems, the internet systems, the security systems, CCTV cameras, everything else had to then be sellotaped on top. Completely inefficient. Very pretty places, very nice, but completely inefficient for the work of modern government. And that's a fundamental change, and it's very visually being told here. The old parliament, again, very nostalgic. If you've been the parliamentary reporter for 30 years, of course you're nostalgic about it. But it was falling apart. Let's accept it. So something fundamental is changing, and the entire map of the Prime Minister's office is next. The Prime Minister's residence and the Prime Minister's office are going to be promulgated into one entity. So that practically means more efficiency, less travel times, less road blockades for the PM's cavalcade just to go from LKM to South Block. All these practicalities make a difference in running a corporate entity, running it efficiently, running it well. All the things that everybody has to deal with, Sumit has to deal with, I have to deal with, is managing human resources, making sure everybody comes on time, that attendances are calculated, leaves are automated, HR systems are not registers, entry is access restricted, changing. You can see it happening. Completely brand spanking new building at the Kartavya Bhavan, telling that story. Okay, let's pick up the rough and tumble of it. I want to get into perspective before I discuss budgetary expectations, because we're not expecting something dramatic. The reason we don't expect something dramatic is a good thing, because the budgetary exercises are about the devil in the detail, about themes, because a lot of the information is shared with us. The policy making happens all year around, as it should. So let me get Navneet Damani into this conversation. Navneet ji, before I get into the budget per se, let us put in place the larger picture. India GDP seems to be doing fine, inflation seems to be doing fine, Forex reserves are pretty good at $700 billion. Fiscal deficit seems to be under control. Everything seems to be under control. We're looking good as a country. But most of us can't figure out that how are the gold prices where they are, what the heck is happening in the silver markets, okay, where it's doubling then crashing. We've seen a $400 billion loss in Microsoft shares yesterday night. Many people are saying AI bubble is a real thing. There is then I'm not even mentioning the Trump tariffs and the chaos that engenders. Is there a global risk? What is going on?
Well, thank you for having me on the show. And until Thursday, nobody was talking about these kind of risks, these kind of parameters, or these kind of fluctuation. Every alternate day, you were seeing gold and silver prices go by about 3% to 6%. People were making money, and everybody was comfortable. Suddenly, handbrakes were pulled in a fast-speeding car Thursday evening, and Thursday and Friday, you saw a carnage across commodities, not only just gold and silver, but across industrial metals as well. So something which has gone up vertically of 300% without any reasonable correction, then at least some point in time, velocity or gravity will come into picture. And that is exactly what happened in silver. It corrected about 32 odd percent from peak. And nothing much has changed in the fundamental. Nothing changed from 3 lakh to 4 lakh and from 4 lakh back to 3 lakh. On the ground level, nothing much has changed. The only thing that has changed is Fed has announced a new chief guard. And secondly, the biggest thing that China has started to re-export silver, which they were holding for a brief period of time. Overall, it looks like the world is, or probably India is now accustomed to higher prices. They've got absorbed to higher prices. We imported about 5,000 tons of silver in 2025. But in 2024-25 and 2025-26 number is estimated to be upwards of 8,000 tons. Mind you, that point in time, silver was $20, and this time the average could be about $60-65.
Okay.
So prices have gone.
Okay,
3x.
I'm sorry to interrupt you. We have breaking news coming in the context, and this is interesting because it's happening just a couple of hours before the budget speech. Yes, it's Donald J. Trump. And what's he had to say? Let me quote this. US President Donald J. Trump says, and I'm quoting, "China is welcome to come in and make a great deal on oil. We've already made a deal. India is coming in and they are going to be buying Venezuelan oil as opposed to buying it from Iran. So we've already made the concept of the deal." Now we are discussing commodity prices, and the reason, ladies and gentlemen, gold is spiking the way it has is because global central banks, not you and me, not mummy papa, not dadu dadi, have not doubled and tripled the gold prices. Let's listen into what Donald Trump has to say. Then I'm going to pick Navneetji's mind on this.
For a short period of time. Sir, do you think China's going to get their money back from all the money they lent to Venezuela for oil? I don't know anything about that, but I'll tell you what, China is welcome to come in and would make a great deal on oil. You know, we welcome China. We've already made a deal. India is coming in, and they're going to be buying Venezuelan oil as opposed to buying it from Iran. So we've already made that deal.
Okay, there you heard Donald J. Trump, and does he move the markets? Yes, we are at just under $70 a barrel for Brent crude. And let me get Navneetji back into the conversation into that context. Navneetji, let's pick on that subject point, oil first. $70 a barrel seems okay. Prices have been stable and in fact trending lower. That's generally good news for an oil importing economy. So in that segment of the global trade, is everything okay? In fact, perhaps good that Donald Trump has done what he's done in Venezuela?
Well, absolutely. It's a positive sentiment or positive step towards getting oil back on shore. Primarily, we were hit hard because of massive imports of gold and silver. But to saving grace, oil prices were down 17-18 points in the previous year. Start of this year, we've seen a couple of issues with Venezuela, then Iran, and prices have moved up by 10% in the last 20-25 days as we speak. So typically, any oil which is coming at a cheaper rate, which was predominantly coming from Russia, could now start to come from Venezuela or other parts of the world, will be a welcome move because we are largely an import-driven economy, and this could kind of balance the current account deficit at this point in time.
Okay, so let me put these things into context. The global petro-dollar economy, okay, the base price is Brent crude, okay. currently just under $70 a barrel. Now, we don't know the exact figures per barrel, but I can safely tell you that the Russian oil that was being procured, not only by us, but by a lot of countries, including the gas, which is still being procured by the European Union, was happening at a deep discount to the Brent crude rate. So, it was much cheaper. I am also drawing an assumption that the Iranian oil, which whatever amounts were being imported, it's not zero, was also much cheaper than the Brent crude rate. So, India was getting a good deal over here. Now, Donald Trump is saying that they are offering us a deal on Venezuelan oil and we've accepted. Whether we have or not, I don't know, because I have to take what Donald Trump says with a pinch of salt, given what's been going on. But yes, oil shock in the market doesn't seem to be the worrying aspect. But there is a worrying aspect, Navdeep ji, and it's related to gold prices, because the global wisdom seems to be that a fundamental reshift is happening, that central banks, including ours, are exiting US bonds, US treasuries, and instead procuring gold, and not only procuring gold, physically shifting gold into sovereign territories. That's a huge change that we've never seen in our lifetime, sir. Is that a worrying sign or is that a healthy sign?
Well, absolutely. Since the last couple of years, or ever since President Trump is on the hot seat, we've seen time and again that there is a tactical shift from US dollar, from US treasury bonds towards hard asset, which could help you in terms of inflationary concerns and probably in terms of geopolitical concerns. Today, Russia has been able to fight the war that it has been fighting because they've built a lot of ammunition over the last 10 years regards to having a lot of gold in their books. China also similarly has bought a lot of gold in their bank treasury. India typically has reasonable amount of gold in the treasury, but we've been one of the largest importer of gold, and that is the Indian women which is buying gold. It is not the central banks which are buying gold. Whatever shift we are seeing from abroad to India is typically our gold, our Indian dominated gold lying in the vaults of UK, which has been gradually getting migrated to India. It's not a fresh purchase that we are talking about. It's a already existing purchase many years back, where we were not competent enough to keep our gold safe, and it was lying in UK vaults, now getting back shifted to India. So from that perspective, gold prices going higher is definitely a concern as well as a boon for India, because we've been one of the largest importers for many years now. So we have a reasonable war chest in terms of gold reserves, but definitely it is impacting our current account deficit, our balance.
Okay, but are we heading, sir? Are we heading, as many people suspect, that in this de-dollarification, which isn't going to happen next year, it's not going to happen in the next 2 years, it's only going to be happening gradually, but are we heading into a place where our foreign exchange reserves, we would prefer, are backed by solid gold, not necessarily by dollars?
Well, Japan has done that in the last 1 year. China has done that. India, to an extent, have done that. That they've migrated from US treasury bonds to India, because President Trump is arm twisting these nations. And what better alternate to move away from their currency, their hard-earned assets towards something like gold and something like silver, which is actually having a currency exchange value across the globe. So that has been the trend for the last 6 months. And that will continue to be the dominating trend for the next few years as well.
So just hold your thought. Now, Sumit, let me get you in on this, because whether we like it or not, okay, I'm in fact very grateful to Donald Trump, because it is thanks to Donald Trump that India and Europe now have an FTA. It wasn't going to happen. 2 decades we've been negotiating it, because let me be honest, the Europeans were never interested in the FTA. Okay. European attitudes have dramatically changed. British attitudes have dramatically changed, and Donald Trump is to thank for that across the board. And the stunt on Greenland and what happened in Davos was that last, if anybody had any doubts, that was it. So all the FTAs have happened thanks to him. But Sumit, I have a fundamental question. We are now in the middle of the most dramatic global financial war. It's already started with the de-dollarification. The world system as we know it, established in Bretton Woods immediately after the Second World War in 1949, is going through a fundamental reset. Now, can we sit here and think that this fundamental reset is going to happen smoothly and no issues are going to take place and none of those issues are going to burn us?
I think, Rishabh the first and important aspect is, we are being slowly gearing up for that. The reset is evident it is going to happen. Now, if you look at, for example, in BRICS, India has proposed an alternate local currency system through a digital currency, through digital rupee, digital yuan, and everybody's digital currency. We are not talking of an alternate BRICS currency, but we are talking of a mutually settling mechanism with our digital currencies that Bharat is taking the lead on, India is taking the lead on. When this transition happens, I'll quote Donald Trump. He was very clear. He will not let the dollar dominance go, and they will go to any extent to stop that, because look at the cumulative debt. Look at how they have been kind of ruling the world with this dollar dominance. Still 70% of the reserves in the world are in dollars. Around 70% of the international trade still happens in dollars. Yes, the India local currencies have come up. India is trying to do a lot of business in the local currency. That is mitigating the risk, because if you look at the world, it's highly leveraged. $315 trillion of debt is the global debt, at $110 trillion of GDP. Now, all this debt is in US dollars. So if the American monetization policy of the dollar shakes, has the capability as on today to shake the financial systems of the entire world. So while you do this transition, you have to do it very slowly, very smoothly, and make sure that, we are not the eventual casualty. Because when you hold $700 billion of foreign exchange reserves, which are, I think, number 4th in the world today, so you are not the person who wants to, for the de-dollarization or anything to happen. You are the people who want these transitions to happen smoothly. And I'll quote Dr. Jaishankar. He went to US and he clearly said, we are not interested in a BRICS currency, or we are not interested in de-dollarization. But yes, India is pushing more of its local currency. India is doing a more of local trading and with its own currency, and with the opening of
that's sovereign security, and that lesson has been learned. And if you needed a lesson, it was learned immediately by Russia, that if you held monies in dollars, the Americans could wake up one fine day and say, we seize the money. Okay?
Correct.
The $300 billion, they just said, sorry, bank account closed. If your gold, you owned it, but it was lying in somebody else's, in this case, in a bank account in London, and the reason it's put in London because the argument was that it's held there, then it's easier to trade, it's easier to leverage, it's easier to monetize against. But then they can say, no, sorry, this is now our gold. We are seizing it until we decide to. So it's weaponization on the financial systems. All the international transactions, every one of them, whether they're government or you and I, happen through two servers. One is in North America and one is in Brussels. It's called SWIFT, okay, SWIFT. There are only two SWIFT servers. So all the money transactions happen through these two SWIFT servers. And then all the transactions that you and I do were happening either through Visa or MasterCard, with a couple of other companies, American Express, others, but mostly Visa and MasterCard. Now you got RuPay, okay. So your transactions don't go through American servers if you're on RuPay card. These are major pivotal changes here that are taking place, and that is more about security and diversification, practicality, sovereignty, than perhaps anything that we will see tangibly change. But there is a global context here. So let me put that context and put that to Gaurav Agarwal. Gaurav Agarwal, one other thematic, I mentioned this when we started this conversation. If you look at the US markets, currently stable, Nasdaq is pretty okay. But Microsoft down $400 billion in a single day of trading. The assumption is that there is some bubble which is formed in the US. Are you concerned?
Of course, see, we are an economy that we are being obviously in the world. So obviously, it is a major concern for the Indian economy. But I don't see that's a long-term pressure which would be there, and there will be certain checks which will be coming up. And I think it is a short-term pressure which is building up, and it should be rectified in the going months to come ahead. So that is what I can believe, that the Indian market will, with a good, as you already said, with a good performance we are doing. So Indian market is obviously as of now being impacted, but in the long term, I don't think there are long-term pressures.
So you're not expecting any shock. You're not expecting a dot-com bubble burst or a 2008 financial crisis. You're not expecting any shock right now.
I don't think so, because our Indian economy is strong enough to take all these stocks. We have already taken these stocks, but as of long term, I don't see that there will be any
No,
pressure.
I'm not. Yeah, but in the long term, we are all okay. But also in the long term, as the aphorism goes, we're all dead. So we have to think about this year. I've lived through 2008. I was that person who, when you turn 21, then you start your 5,000 rupee EMI in a mutual fund because that's the responsible thing to do, and saw the stock market boom all the way till 2008, and said the Indian GDP is going to do well. As it was then, we did grow at 7-8%, and then 2008 happened, and let's not kid ourselves. Everything crashed, including our stock markets, and it did damage our economy pretty badly. So is there a bubble? I can't predict it. Does it feel like one? Does doubling of gold prices feel like a bubble? Does tripling of silver prices feel like a bubble? Does $1.4 trillion of investment commitments by a single company which produces nothing profitable called OpenAI feel like a bubble? Yes, it does. Does it feel like a bubble? Yes, it does. But I'm not an expert. Sumit, I'm going to argue the other side of the picture, and I'm going to play devil's advocate. Donald Trump can tell you that oil prices are not only stable but have come down since he took over as president. That the US markets are not only stable, they have been near their record highs. That US GDP growth is pretty good for a large economy. That we might think it's erratic and madness, but the economic indicators are telling us everything is going fine. Are you skeptical of that assessment?
Rishabhji, honestly, what you have been saying is absolutely right. You see gold prices going down, silver crashing by 36%. Now we are talking of these American companies who are talking of these $1.4 trillion of investment and all. My apprehension is there is some kind of a bubble which is there, and we are worried that when it bursts, what is the kind of impact it's going to be? Because whatever you say and do, the impact comes to India. It might be this much or this much, it will come to India, because at the end of the day, if you look at the American tech, there are only 10 companies. Ginti ki 10 companies which are controlling the American stock exchange. The up and down of the stock exchange is done by these 10 companies mainly. And American tech and American arms are the only thing which they have left. Now they've got the oil, which is good for them. But at the overall level, looking at the volatility of the market and looking how the things are changing. So by the time your FTAs are all in place, by the time we kind of get more secured, the risk on the economy fundamentally increases. The risk on the liquidity in the market fundamentally increases.
No. So in that case, Donald Trump is absolutely right. That if we go up, everybody goes up, and if we go down, everybody goes down. It's the truth. This is one thing which he's saying correctly. Now that might change in 10 years, it might change in 20 years, but it's not going to change next year. Yeah. So let's be realistic. Jayajit Bhattacharya joining us in the broadcast. Bindu Dalmia joining us as well. Jayajit, I'll just pick up this reference to context, because everything looks great. Fiscal deficit looks great. GDP growth looks great. Forex reserves very healthy. Markets are not at record highs but are doing okay. Everything seems fine. Inflation, everything seems fine. The economy seems to be doing great. But there is a niggle that says that what the heck is going on with gold? What's been happening with silver all over the place? It's chaotic on the way up and chaotic on the way down. And what the heck do we do with Donald Trump, who has just spoken in the last few minutes and has been talking about Venezuelan oil? He said that India is going to come and buy Venezuelan oil, which I don't know whether we've committed to or not committed to. I don't know. And then we have Microsoft crashing $400 billion yesterday, Jayajit. Are we concerned? Is there a tech bubble? Is there, amid the global trade war, are there some systemic global risks?
No, there is clearly a problem brewing. We are basically waiting for the last straw on the camel's back in that sense. India per se has been resilient, but we have been fighting very hard to be that resilient. So there's a lot of struggle going in the back end. For all the wonderful figures that you just quoted, there's a lot of hard work behind it, because it is being done in the backdrop of multiple wars, including a war brought to our doorstep by our neighboring country, and including what is happening in the tech sector in AI, where there are two kinds of disruption happening in AI. One, obviously, is AI as a tool is leading to significant amount of job loss, and there is no questions about it. And the job loss is happening at a pace far more than what the new technology can replace with new jobs. So eventually there will be new jobs created, undoubtedly. But the difference between, and the timing difference between the job loss happening now and the jobs created in future is going to be significant. The second disruption that AI is bringing in is the fact that huge amount of funding is being sucked into AI, and there is a circular investment going on, which is AI companies investing into AI, increasing their valuation, and therefore showing that AI is working. That obviously is going to burst at some point in time. And those are the factors that we are seeing playing out with so much of both geopolitical and geoeconomic disruptions or potential disruptions. And it's not just the US. If you look at China, that is also waiting to fall off a precipice, although that's been said for the last 15 years. But it's looking more and more shaky, both their domestic figures and...
But Jayajit, how is it making sense? Practically to me, it makes no sense. You would have thought with all the trade wars that have happened, that there would be an economic shock, but there isn't. All the markets, I'm not saying are at record highs. We are probably 3-4% below our record highs, but they are doing okay. Oil prices are stable. US GDP seems to be growing just fine, and so is ours. You'd think so much disruption has been caused in just 1 year, because it's not 10, 15, it's 50%, 100%, okay, which gets thrown, then gets removed. There is uncertainty, there's chaos. How is it that it seems like the overall picture is pretty smooth?
Well, I think we need to look into the details, because obviously, as one said, the devil lies in the details. If we look at, let's say, the US, they have had the highest trade deficit ever in the month of November. So it's not that everything is hunky-dory with the US. The second point is that I'm very suspicious about their inflation figures. See, if there is an inflation, then obviously the nominal growth goes up, and therefore they had a stupendous growth of 4.2, 4.3% on such a large economy, which is hats off and fantastic. But the real growth, as you know, Rishabh, is the nominal growth minus the inflation. If you speak to any American, they will say that there is huge amount of price rise that has happened across everything that they're consuming. Then how come they have one of the record lowest inflation in the US? There is some kind of a data mismanagement, or if I can use the word fudging going on.
There's maybe, but then oil prices have come down. So inflation,
yes.
Oil is a large part of inflation. At the oil pump in the US, less than $2 a gallon now, which is significantly cheaper than it was a couple of years ago. So yes, Donald Trump can argue that there is a method to my madness, even though it seems like just madness to all of us. Who knows? So there is a larger context here. Ladies and gentlemen, here we are. I've already mentioned the visuals on your screen that have fundamentally changed. Let's just put them into context. Can we just break this up into two sides once again? So if you're watching this telecast 1 year ago, you would have seen the finance minister, who has been the same finance minister giving now 9 consecutive. This is the 9th budget speeches. That's a record, by the way. But within the optics of this, exiting from North Block, that's it on the left side of your screens. That's a photograph. That was last year, okay? And my producer will just put it on your screen. There we go, okay? And this is this year. That's telling you a story of India in photographs. On the left side, it hadn't changed since before independence. And this is the spanking new Kartavya Bhavan. And the finance minister is exiting a brand new finance ministry head office and going into a brand new parliament. And it's not only the stone has changed or the building has changed. The fact that all government departments and ministries will be just in 2 buildings now. All these bhavans all over the place is over. Biometric attendance will apply to government employees, where they can't sneak off into the nearest park to play cards in the winter sun. And we all knew that's exactly what used to happen. I'm not saying it fundamentally changes from tomorrow, but efficiencies hopefully will come in, and that's telling you a story of India changing. So is on paper everything seems to be great. We always wanted to be better, but everything seems to be great. But is there a niggle? I'm sure you're all wondering, okay, these FTAs, very nice, but they're going to take a year to kick in. has a disruption from the Trump tariffs happened? Yes, it has. But the global economy tells you everything's going fine. But the central banks seem to be getting out of US treasuries. It's such a large paradigmatic shift that we haven't seen it ever since the Second World War, something this dramatic taking place. Surely it can't be sensical that gold prices can double, the safest of all assets can double in just over a year, and that not be dodgy, that not be indicative. Surely it can't be. But there is a larger part to that puzzle. Let me open this up. As I mentioned, Bindu Dalmia is with us, Avneet Marwa joining us in the studio, as is Madhav Seth. Binduji, let me come to you from a different perspective in this. In the capacity formation of this country, in a world that we are being told is technologically going to be completely different, not in a decade, but within months, are we ready for it? Do we even understand what this AI is supposed to be doing, even if we are assuming that some of these companies are a bubble, but the technology is here to stay?
Not at all. We are not geared for AI. We need to leapfrog. As it stands, we are way behind the development curve, Rishabhji. And we always have been. Why? Because we have not adequately paid attention to our human development indices, which is upping our skilling, education, higher allocations towards health, and so on. So, in any case, we are behind the curve, and we don't know what the future portends in such an uncertain world. So I want to take this, steer this conversation more towards what I have in mind, away from AI. AI is a problem. We have a bigger elephant in the room, Rishabhji, which is not just the elephant in the room. This is an elephant at large. It is a new form of colonialism that has been unleashed on the world by America. Today, trade is not happening between two nations bilaterally upon mutually agreed terms without a countervailing and a coercive tariff imposed by the hegemonic powers. Now, you're talking about AI, I grant that. That is still not as such an imminent problem as what the world is facing after the Lehman Brothers, after COVID. Now this is the third inflection point. And I would hope that the FM would not miss this opportunity amidst the great global reset to take the lead in this budget to set right what needs to be set right, which is primarily points that the economic survey had flagged. It is an economic apartheid that has been unleashed on us. How do we cope? We have to bring back investment into the country. FI, FDI, and our own industrialists who have been shying away from capex expansion. And how long can government take the lead in infrastructure spending, which was its initial, it crowded in a lot of investment, supported 200 ancillaries, but that's how much of heavy lifting the government can do.
Let me break this down into subsets, because we've been having this conversation obviously since morning. There is a larger context to all of this, and the practicality is that yes, there have been sectors who have been deeply hit because multiple months of uncertainty of what is going to happen, and uncertainty means clients defer orders. Okay, then 6 months of actual tariffs. All right, the EU FTA, great, and I thank Donald Trump for it, because it would not have happened without him. The UK FTA would not have happened. The Oman FTA or New Zealand, Australia would not have happened if Donald Trump was not around. So I'm very grateful that he has at least banged the heads together of the rest of the world. But all of these realizations will take a year or so to kick in.
Absolutely.
The EU FTA has to be, for people watching, it's not the signing that's happened in Delhi. A ratification process has to happen. Even if the political will is there to expedite it, it's going to take a year. Then you have to go through their standards and the non-tariff barriers that the EU imposes. Then you have to build client relationships with a new set of firms. It is complex. So there is a gap. So there, in the primary sectors that are export oriented, ma'am, in which job layoffs have happened, what can we hope that happens from the finance minister today?
I think first of all, we'll go back to the cliche that every industrialist, every chamber of commerce has been talking about, which today is a cliche, and I hope it doesn't remain so. Improve on the ease of doing business, the speed of doing business, improve on the ease of living, which is so important, ease of finance, ease of dispute resolution. We need to make India a powerhouse for a more favorable investment destination of choice. It is a very competitive space, Rishabhji, that we are in, to get foreign capital into the country.
Yes.
Because they are like migratory birds.
You know, it's
not
across the
offer a
board.
stable-
Okay, let me put it this way. It is going to, it has not going to, it has taken a lot more effort, will take a lot more effort to reimagine the Indian economy because of the size and scale of it and the number of people here as
But we don't
compared
have
to
the luxury
reimagining
of
the
time.
UAE economy.
We don't have the luxury of time.
Yeah, so I know
Rishabhji.
we don't, but that's not the point. If you are the UAE and are sitting on oil and have cash, you can try to reimagine yourself with a very small population very fast. It's just in the end couple of
Absolutely.
cities.
Absolutely.
We can't do it at the same pace, but at the same time, if we get it right, then we are just in a different orbit than all these other countries. So we have to get it right. So let me put that to Madhav, who's joining us in the studio. Madhav, there is a huge opportunity, we are being told, okay, of a fundamental shift in human beings, and we've seen it before. I am of the generation that I remember my first computer and dial-up modem at 46 kbps, okay, and trying to download an MP3 at 0.001 kbps and spending 3 days to get a 3 MB file. So I have 1 Gbps at home now, okay. We've seen smartphones come and become ubiquitous. So fundamental changes have already happened. We've experienced them, so they can happen, and they do happen. We are being told another one is happening. But at the same time, Microsoft has fallen by $400 billion in a single night, yesterday night. What's the rub of this? What's the hype? What's the bubble? And what's the practice?
It's a very fair question, but I think I'd like to speak on the behalf of India at this point of time that all of this signals that India should have a policy which can make India as a strategic indispensable place, which means how India can be a part of a global value chain, how India can be irreplaceable in the global value chain. I think that is going to be one of the most key factors deciding in the next 1 decade, because everybody is talking about China plus one, while how can India replace this and become the part of the global value chain and become more indispensable? I think that is where.
So has that happened? Okay, for people watching the broadcast, last 1 year, $20 billion of Apple products were manufactured in India. Okay, in the sense that they were assembled in India. So we are now part. China plus one has already happened, at least in the case of Apple. It's already happened. They have diversified. This is despite the fact that the Trump tariffs were kicked in and a special exemption of 1 year was found for Apple. Plane loads of iPhones 17s which launched left India so that they've been sold before the tariffs kicked in. So a bit of the China plus one has happened. 8 major semiconductor plants are under construction. By the end of the year, they'll kick in. But that's not, Madhav, the whole story, because all the tech entrepreneurs, the trillionaire entrepreneurs, are telling us that the game is about GPUs and data centers, and trillions of dollars are being pumped in. Our semiconductor plan is roughly worth $10-20 billion, okay, which is what we can cough up. Okay, they are talking about $1 trillion, and they are saying they're going to control the world by just pumping money into these data centers. Is that true?
See, it might be true, but I think while India is at a right stage at this point of time, and initial stage, like a lot of people said that we are at the initial stage of doing this, but I think we are at the right path. The reason why I believe is that India should be focusing more on high use cases and even on the semiconductor side. The way I would say is that how we can make sure that probably we can fulfill the consumption of India market and fulfill the global consumption also starting from India, which may be use cases for smartphones, it may be use cases for semiconductors in smartphones or other areas, or AIoT products and the home products. But I think that's where the high use cases we should be using in the semiconductors.
Okay, so for people watching the broadcast, even if you are good enough for your washing machine and for your for your fridge, and stuff like that. That takes care of at least 60-70% of the consumer market. It's only when you get into the smartphone and you want to make that Qualcomm chip that you need to get to 4 and 3 and 2 nanometers, which is the cutting edge. You can't go lower than that pretty much. So you're at the fine edge of the thing. But let me get Mr. Marva in. Mr. Marva, as a person involved in this China plus one manufacturing sort of electronics part of it, where we accept that our manufacturing capacity is limited, our assembling capacity has really boomed, that we are now become the assembler, the smartphone assembler of the world. We are becoming the television assembler of the world. But are you seeing it pivot? Is it, how many of your parts are you able to locally source that are actually made in India?
So good morning, first of all. I think you're absolutely right and bang on that we have become an assembler. So the assembling capacities have gone up, but the real value addition that needs to happen hasn't happened in last about 1 decade. And that's where India needs to work. When you talk about semiconductors, the new plant that is coming, I think that is for solar and electric. The chips will be made for that. So we need to add on value addition. That's not happening. Today we have overcapacities of assembling, but when it comes to making an open cell plant, if we got a PLI scheme, industry is on back foot. We didn't get one, all the 2 organizations which were there in this race have backed out. So we need, a value addition, a backward integration. Currently, 70 to about 80% of the raw material comes outside India.
Okay, so practical question, as a business person and both direct to consumer or selling to wholesalers and to retailers, how much did GST before Diwali help? Has it made a difference?
Yeah, it has to be honest, but that too, there was a lot of confusion in the market from 28% to 18%, especially in smart TVs and in large sizes, because India is going towards not towards OPP, that's the opening price point, it's going towards the mid-range. So mid-range, there is a disruption. So all your 43s and 55 inches made a difference in festive, but there was a confusion of GST. Retailers were not buying at festive and everybody held up sales for about a month or 45 days. So I would say, yes, it made little difference, but yes, we can see on after the tax reduction, the larger screens have started going up.
Okay, so people are upgrading.
Yes.
Okay, all right. Okay, Jayajit, let me bring you in here. So, I mean, there's a whole scope of things that a budgetary exercise gives us an opportunity to discuss. But the themology is roughly where I began. On all your macroeconomic indicators, as we sit, it's all looking good. Okay, everything is as desirable within the ranges that you want. Inflation, fiscal deficit, GDP. Maybe you want an extra percentage of GDP growth to be a little bit greedy. So we've discussed where's the risk. Okay, that's what I wanted to focus on. This is the risk. Where's the opportunity now, Jayajit Bhattacharya?
In fact, I would also add one more dimension of the risk, which is climate change, and I will leave it at that. There will be significant amount of black swan happening because of climate change, and we need to be prepared for that. That's going to shave off some GDP growth for us. Now, here is the opportunity. We have already got into multiple free trade agreements and opened up new markets for India as the $40 billion hit that we took from losing the US market. And we have still been able to grow our exports, which means that as and when we close the US agreement, we are going to have a windfall in terms of exports. We're going to have a significant boost to our income. And that's a huge opportunity. And I'm really waiting for that because the writing is on the wall that's going to happen. So that's one big opportunity. The second is in terms of being able to get new technologies coming from India. Forever, the global economy has been driven by new technologies, and we need to come out with technologies in terms of food, in terms of climate, which is solar and so on and so forth. The third is to wean ourselves off from oil as fast as possible. We have taken large steps on that. We have been able to set up solar panels, nuclear plants. If we can accelerate that process and get ourselves off oil, and oil can only be used as a feedstock for the chemical industry and not as an energy source, that will bring a huge amount of relief to our trade deficit. and therefore it will have an impact on the cost of capital, as came out from the economic survey of this year.
Okay, but Jayji, do we have to accept that we are at the starting end of the Chinese curve? That yes, right now we'll just be in assembling, we won't be cutting edge. Then we'll do middle technologies, as I mentioned, the 100 nanometers, and be able to nail that. So Chinese did this 20 years ago, and now they are on battery technology. China is cutting edge. Okay, they are nailing it. Photovoltaics, cutting edge, nailing it. The only thing they are missing is the chips, is the semiconductor chips, and now is the GPUs and the machines that make the chips that come from TSML. They are missing that, but they are trying to catch up on that, because you can argue that even on AI, LLMs, they are pretty much caught up. So are we a decade behind that curve, Jaji?
The answer clearly is yes, and also the second point to it is that to China it came not as a sudden development. They have invested very significantly for 10 to 15 years in each of the technologies you're mentioning, including AI, and they are believed to be at par with US, if not ahead, even in AI. In terms of semiconductors, 2012 I had taken the then IT minister to the west coast of US to pick up very, very cheap semiconductor fabs, which were cutting edge, but they were being sold off by Fujitsu. At that point in time, he agreed that yes, that's what India needs, because it was being sold at $100 billion, while we were prepared to spend $5 billion. That's a difference. And there was a buyback and so on. I'll not go into the details. He wanted it. While on his way back, somebody told him that India does not need old fabs, we need brand new ones. Each of the fabs that were being sold was picked up by China in 2012. And that is what has really led China to be the powerhouse of semiconductors. Another 5 to 10 years, they will be the leaders. And on top of it, obviously there's a Taiwan question, whether it will be an independent or part of China. I'll leave that, but they have made significant investments in each of the areas.
I'm sorry to interrupt, but let me put this into context as well, because this is important for viewers. You'd think that the Taiwanese are more than happy to go, if not to India, to the United States of America, and make their companies invest in semiconductor fabrication there. But the answer is no. They don't want it. We've been trying. I personally have been trying, I promise you. Okay? And the Americans have pumped in 10x the amount of money. But the Taiwanese, if they lose their monopoly on frontline semiconductors, have a strategic fear that they become irrelevant to the rest of the world, and the Chinese simply walk in and take over, and nobody will come to defend them. So
absolutely, and China is exactly looking for that. I mean,
ironically, no. So the Taiwanese don't necessarily want to share their technologies, even though they might consider that my enemy's enemy is my friend. Even that they don't want to, because that's their strategic asset. So there is a conceptualization. But yes, Jayajit, at least we are making the semiconductor chip plants now, which we've been sitting on for I don't know how many decades. I mentioned a bit earlier, we've started our first lithium mine for the first time. We're doing lithium mining prospecting. The Australian geologists are roaming around in Leh Ladakh trying to find more lithium resources, because the second largest lithium resources outside South America are in Xinjiang. And what does Xinjiang border? Leh Ladakh. Now you can have the environmental argument separately, but can we at least find it if it's there? The answer is yes. So we are going to have to go through the mid-range of the tech sector. That's the macro picture. Now let's come down to the base level picture. Mr. Seth, explain to us what is the startup that you're running? What are you working on?
Okay, so I've started my own brand in India, which is AI plus smartphones. I think smartphone market is more than about 4 lakh crore rupees in India. While this is 100% controlled by the foreign brands, which is out of which 80% is Chinese brands in terms of volumes, which is like 150 million handsets, and 80% is controlled by Chinese, and the rest of them by Korean and US, but none of them are the Indian brands.
Yes.
I think the biggest pain point right now is what I understood, being in the other side of the brands, where I've been a start on the brands like Realme in the past, and where I was the founder also. I figured out that bringing the global supply chain in India is extremely important, until unless it will not happen when the brand originates from India. So I have seen that if the brand has the negotiation power and if the brand is originating from a particular country, the supply chain clusters also forms around it.
But again, isn't it a dependency? So I'll give you an example. Again, thanks to Donald Trump, we saw our Prime Minister go to China for the first time in several years. Okay, he met with President Xi. Somebody who would be celebrating that would be somebody like you, because you will still have to go to China. Now the visas will become easier, the direct flights will resume, which were all shut, as you know, since Galwan. So there was a problem for people who were still dependent upon getting their product from China. You are still going to be dependent upon finding a Chinese manufacturer. So you can come up with the IP, you can come up with the design, but they are the ones who are going to have to make it. Isn't that the case?
See, all of these things remains independent on the terms of the supply chain. The supply chain ecosystem has been developed in China from last 40 years, which was developed in Japan in 1950s to 1980s. From 1980s, it moved down as an assembly line to China because of the cheap labor.
Have you traveled to China before?
Yes, multiple times.
So,
yes.
so can you explain to our viewers that it's literally cities are dedicated to just building one thing?
Yes.
Okay.
So
at all price points you can think of.
Exactly. So 1980s, Shenzhen, which is a shipping village, which was exactly a shipping village opposite Hong Kong, and now is one of the most swankiest city, and in 40 years where they have invested into research, development, innovations and IPs, is one of the biggest electronic exporters of the country from China. And I think the biggest billionaires, or the maximum number of billionaires are coming down from China, are from Shenzhen and from Beijing. So that's how the electronic exports has helped. By the way, just putting that into perspective, $550 billion worth of electronic hardware exports are happening, and this is apart from the AI hardware. I'm talking about electronic hardware exports are happening from China, which is mainly from Shenzhen.
No, we are all dependent on Chinese products. It's
Right.
across the board. Everything that you're buying has some component that's come from China. You can have the argument of strategic risk, security risk. Right now, it's an irrelevant argument because right now we are friends. Okay. But do I still trust every single chip that comes from China? No, I don't. Can you trust TikTok now that it's been sold in the US? Maybe not. What you're seeing on your screen, ladies and gentlemen, are formalities that are going on. It's the constitutional duty of the finance minister to brief the president before she presents the budget in parliament. So that's a formality that's been concluded. It happens every year. Just a reference to context. Okay, Mr. Marwal. So in practical reality, assuming that we cannot copy the Chinese model, and here's the Chinese model. Elon, you want to build a car? Please come. Okay, here's the land, here's everything, we'll give you everything. Okay. No, you don't need any local partner, you just build your mega, giga, what does he call it, tera, peta, you build it here. Okay, he calls it a giga factory. You build it here. And then we're going to steal everything. All right, we'll literally take pen drives full of stuff and steal all your IP, and then we'll come back 2 years later and literally hoo-ba-hoo, exactly to the measurement, we'll take the Porsche and we'll copy it, but we'll make it better, and then we are going to flood the world that everywhere in the world the Chinese EVs are half the price with the best features. Now, assuming we can't do that model, what can we do?
I think the best way to put it is that, even China is dependent on a lot of IPs. The core raw material still China does not manufacture. It has, value addition, but the core IP still remains, I'm talking about electronic, with Japan and US.
Yep.
So we need to focus on core raw materials. The basic difference between India and China is most of the companies in China are government funded. There is a lot of government money in the companies. Government owns a lot of companies over there. I'll give you one of the best example. Global number 2 television manufacturer. The share price of that brand is only 3 RMB, by the way, and they are global number 3. And if you're below 1 RMB, you cannot be in the system. So, and that's completely government owned. So they have literally, I would say, burned a lot of money.
Okay.
In terms of...
Okay, you're being charitable. Charitable in the sense that you're saying good investment and monetary support. I can be less charitable.
Yes.
Jayjeet, the other strategy, of course, is that I send a bright young employee of mine to MIT on a scholarship, which is state funded. Okay. He then gets a job in Qualcomm. And then after working in Qualcomm for 5 years, he closes his laptop one day and boards a one-way flight to China and starts a startup there. It's called corporate espionage. They've been doing it for several years. We know that they've been doing it. Some of them have been caught doing it. It's littered with stories. Now, I'm assuming we can't do it. All right. Avneet can't send 2 of his employees and think, okay, 2 years later, they're going to steal all the technology from Qualcomm and bring it to me and I'll set up a factory in Greater Noida. So, assuming we can't do this, what is the other option we've got?
Well, clearly the other option is to buy out companies. There have been many companies that were available for India from a tech perspective. The classic case being Embraer. It was being available at $3 billion. The entire range of Embraer. It'll take us, decades and decades to replicate what Embraer has, and we could not get our act together to buy out Embraer. Now, obviously, we are partnering it now as a smaller player, but $3 billion versus spending about $200 billion in buying planes. Clearly, the math was very clear, but we need to have that ability and the killer instinct. Also, we are bound by some kind of a rule-based logic, which obviously after what the Canadian Prime Minister said in Davos is being torn apart and laid threadbare, that is not what the rest of the world is following. So we are caught up in our own world of following a rule-based engagement. If you look at China, their basically view is that what is needed for China will be done no matter what the route is. And therefore, innovation, investing into PhDs, getting them to develop new technologies, as well as going out and getting...
Well, I can tell you those PhDs aren't heading to the US anytime soon. They might be going to other countries, including Europe. Let me get Bindu Dalmia just on the larger picture. Binduji, just on this thread, okay, before I come back to capacity expansion here in India, you mentioned the hegemon, okay, so we've got the bullies and they have got their gloves off, okay, now making no bones about it, and let's not underestimate that the Chinese are not bullies either, they are fully capable of being bullying as well, okay. Now, in this slugfest that is already started and is going on, so much so that even Donald Trump could not slap too many tariffs on China because he was scared about the rare earths and so and so. In this global slugfest, the reality check is, and if you remember, our commerce minister, one of his speeches went viral last year, when he is saying that all the Indian billionaires can't be on consumer-centric firms, that you can't just be Zomato, you can't just be Nykaa, you have to become tech and R&D billionaires with frontline technology, which we don't have many of. Our billionaires, any company you take Zerodha, for example, that's not frontline technology, that's Robin Hood in India. Very good for these consumer-facing entrepreneurs who've done very well. But who are the people who are going to drive frontline technology in India?
You'd be surprised, Rishabhji, in the last year itself, the new vectors of growth that have emerged and the new propellers of growth. There are so many. If only we could, I would go beyond technology. You're being technology specific. Let's talk of how do we generate higher alpha? Because 7% rate of growth is inadequate. We need to get to 8 to 9% at least year on year to be a developed nation or a Viksit Bharat. We need to throw open the education sector. We need to support tourism much, much more. There is today marriage tourism, there is religious tourism, there is medical tourism. So there is the elder care sector that is emerging, which is huge. Do you know the kind of colonies that are coming up? Because life expectancy has gone up. It's a whole new vector of growth, the elder care sector, where people above 60 to 80 to 90 have spending power. So let's look at new vectors of growth to generate new alpha. It just doesn't have to be technology based. Everyone is not technology centric or can do a Q-commerce or whatever. There are family offices. There's so much happening. Till we do not increase our economic intensity all across the board.
Okay, so let me pose a practical question based on theory. And for people watching the broadcast, so socialism and capitalism, right? So what capitalism tells you that we work on trickle-down economics. If you create wealth at the top, eventually it will trickle down to the bottom. Okay, the Maharaja will want to make a throne, and the throne will require a karigar. so the karigar will also make money. Okay, so the trickle down that comes from the top. Socialism tells you, of course, that hang all of this, everybody should be at the same level. So everybody's house is everybody's house. That doesn't work, because if I'm working 18 hours and you're working 2 hours and we both get paid the same, what's my incentive to work 18 hours? Okay, so that's why socialism failed. We assume that trickle down doesn't work. And the reason for that is, and that was the basis of Marxism, that if there are two components in a capitalist system, raw material and labor, it is the job of the capitalist entrepreneur to ensure both are at the lowest level. Okay? In order for a laborer to work for you for nothing, which means literally just the food, there has to be a citizenry in such abject poverty that even working for just a meal seems like a luxury. Okay? So the two extremes of the two systems. Now, we are trying to operate a different form of economics. Partly it is based in FDR's New Deal. And as Binduji was mentioning, that the government goes out there and makes infrastructure. Okay, roads.
It has been a winning formula
okay.
from COVID time.
Yeah, and the logic of that was that, okay, you build the roads, that gives the labor employment, creates an engineer, etc., etc. The second aspect of this is, which is what I'm coming to, Binduji, is that we have always claimed we are one of the world's largest markets, but most entrepreneurs will tell you that only 100 million Indians actually have buying capacity. Okay. Now, in the past few years, Binduji, by creating the bank accounts, which means injecting people into the formal economy, these people, 370 million of them now have a credit history, now earn interest on savings. By having done all of this, have we, by providing insurance to so many people, by providing a pakka ghar, by providing a light, a tap, have we created a segment of a rising lower middle class in this country?
Rishabhji, I wish just by opening a bank account that was adequate for savings and earnings to augment our economy. We need to lower taxation, whether we have the limits or not. We cannot keep looking at the rear window and seeing what happened in the past. It's a great feat that we have stuck to the fiscal deficit target year on year, and it's very commendable. But till you do not increase the buying power and the saving power, per capita saving power of people, this is not going to happen. One GST cut here or there, it happened during the festive season. How can you say that reflects incremental growth? By opening a bank account, coming to what you said, or UPI or whatever, it's not increasing our buying power. You need to make the middle classes and across the board increase the buying power of people for FDI, FI and your investor, your domestic India Inc. to invest. One of the biggest complaints has been India Inc. doesn't expand its capex. Why is it not expanding its capex? The demand has to be there. Backwards, how is the demand going to be there, Rishabhji? We need some tax tweaks year on year. It is not an unreasonable demand by people. It doesn't mean if it happened last year, it can't happen again. And another thing I want to just be a little contrarian about is about sticking to the fiscal deficit. When we have been so responsible in the way we have dispensed the money or used the money, I think a percentage up or down won't matter. Don't large industries need to borrow to build an economy of our size? Our debt to sovereign debt to GDP ratio is just 57%. So what if we borrow a little more?
Okay.
Put more money in the hands of
let me
people.
ask Avneet a very practical question. Okay. Now, for the better part in the industry that you are involved in, okay, the business model has been, first it was we simply go and put our logo on a brand that comes from China. Okay. Now it is that the components some come from Korea, some come from Japan, some come from Taiwan, some come from China, and we value add, which means we have skilled labor in sanitized plants, okay, to global standards, assembling this. So you've done one level of value add. Do you as an entrepreneur now think A, that maybe I can take this value add and go to foreign markets, or B, maybe I need to be investing in some R&D and trying to improve the technology which I currently have?
To be honest, I'll just brief you, what exactly is happening. So, as you said that buying raw material and then stamping and putting some brand into it. So, we did some deep diving about 5 years back, and we were the first one to get a OS, operating system license for Google. And that was first in India. If this factory would have been somewhere else or would have been in China, we would have been exporting to more than 50 countries. But the exposure of exports are pretty low in India. Therefore, we could not capitalize on that. And that's a big miss in India. Plus, as I told you, the kind of policies that needs to come from manufacturing, especially for exports. You're talking about FTAs. We don't have any clear picture on electronics till today. That what will happen. Even we want to export to European countries, and we are in terms of pricing also, we are competitive currently, because that sort of pricing we are trying to achieve, but the clarity of policies are not there. So this is a big miss that's from
okay. So coming back to the domestic market, because then you can argue the other side that if India's got such a huge market, okay, I mean for electronics industry like you can sell forever in India and never really run out. So what has changed in the Indian electronics market? Because yes, there are people who are buying their first washing machine for sure. The people who are going from the cooler to the air conditioner, you can see that happening. But what scale is it happening at?
So I'll just tell you, as you mentioned, that India's actual buyers about 200 million, and that's very true. The problem with India is freebies. The aspiration of buying and the sentiments among this 200 to 250 million, rest of the Indians, the aspiration of buying are very relaxed. So that's where the markets are getting saturated very easily. There is a disruption that comes in. After COVID, there was a major disruption on screens because everybody was dependent on that. After that, you'll see the graphs being really flat. So because the rest of the population, I think the demand didn't happen at that point of view, and there is a lot of freebies. We need to cut on freebies and we need to focus on increasing the middle class. That's not happening. I think we are concentrating more on freebies, and therefore the aspiration is moving toward
so that's how economics works. Okay,
yes.
That's how it works in good times, and that's how it backfires in bad times. So if an industry like Mr. Marwa's is doing well, which means that his employees are also earning more, they're getting promoted, more people are being hired. So the earning capacity, that's the middle class, okay. Their earning capacity goes up, so they buy more, so there are more factories, and the reverse is also true, right? So we're doing okay, there's nothing wrong. Everything is healthy in the Indian economy, just where it should be. Inflation, fiscal, everything is exactly where it should be. So let me get Mithali into this conversation. Mithali, I've been discussing risks and opportunities because on face value we are not in a crisis. Forex reserves, fiscal deficit, GDP growth maybe could be 1% more on there. Well, we would want that. Inflation, everything's fine. Even the global trade wars are seeming to be not really devastating us. So we are okay. But as we speak, the big story has been gold prices, silver prices, which I've just been told a lower circuit in futures trade they've hit. And this has got nothing to do with Nirmala Sitharaman's speech because it hasn't even started yet. Something odd is going on in the world. Have you put a finger to what is going on and how we should process it?
No, thanks a lot, Rishabh. And I totally agree with you. I mean, this is the analysis that came out in the economic survey as well, that we are somewhere in a Goldilocks economy. Today we see there are so many macroeconomic indicators which are very favorable. The inflation has been tamed to 1.7%. We see our growth is at an all-time high at 7.4%. And we're also seeing that our forex reserves are actually present for 11 months despite the rupee sliding to 92. So what is happening with the gold and silver prices? And I think that's the real question of the day, especially on silver. We've seen that since morning, since the trade opened, silver prices have declined for the futures by 6%. So, what is exactly happening here is on silver and gold, the stories are different. On silver, I believe the story is more of supply corrections. So what has been understood by global suppliers of silver is that there is a shift in the silver demand because of increased consistency in the demand for industrial silver. So there were shortages in the last quarter, but now those shortages have been corrected by the suppliers, and we now see that the global supply of silver has increased. And that's why we feel that the silver prices will not rise as much. On gold, the story is a little bit different because gold has always been the sort of asset that you go to for safety. And even now, that safety, imperative is there. But the amount of the number of investors who feel that they need to do that has reduced because people have already purchased gold, they already have gold holdings in their portfolios, and they feel that they are sufficiently hedged against risks. So I think that a lot of the movement on gold is definitely cyclical, whereas in the case of silver it's
no,
a
but
correction.
it's not. I mean, a doubling of gold prices in a couple of years is certainly not cyclical. That is
No, of course,
it's strange. But so Mithali, my question is that traditional wisdom would tell you that people go to gold when they're worried, when everything and the kitchen sink is hitting the fan, but nothing has been hitting the fan other than Donald Trump. Markets have been fine. Everything seems GDP growth, everything seems to be fine, and yet gold prices are going the way they are. It shouldn't make sense, but somehow it's happening. Why is that weirdness there?
Exactly, Rishabh, because there is a dichotomy between what is happening domestically and what is happening geopolitically when we look at the global scenario. So in the global scenario, it's a large number of global foreign institutional investors rushing to gold for safety, and that's what we saw over 2025. And the late 2024 that change began. They knew that Donald Trump was going to get elected. There would be some amount of uncertainty. The gold rush began, and we saw it heighten and speed up and really peak
it would
in
be a truism
2025.
to say, and I suspect it because this is not published. Certain figures are published. The Chinese publish them, so do we. You can watch our forex reserves to give you an asset of what we hold as sovereign gold, which we do. A percentage of forex reserves, I think it's 11% now, are calculated in gold or are backed by physical gold. But Mithali, for sure, the Chinese sovereign funds have been buying gold. For sure,
All
so have we.
sovereign funds.
And we have not given
All
figures, but I
sovereign
know for a fact that we are as well.
Yes.
This is being driven by institutions, it's not being driven by individuals.
No.
Absolutely. It is all foreign institutional investors, as I was saying. And of course, the sovereign wealth funds are part of this entire gold rush because we are looking at, a very, very uncertain time ahead. I mean, if we look at the economic survey, clearly outlining that geopolitical risks and this level of uncertainty in global trade, in global relationships, in defense risks increasing, it all adds up.
Chalo, okay. Like I said, there's no problem if you're not feeling ecstatic, yay budget, because last year it was yay budget, okay, then GST was definitely yay, something that was unexpected. And it happened because we were concerned about the trade impact. We needed to bolster our domestic consumption. Otherwise, yes, our industries, including what Mr. Marva is very, very works in and runs companies, would have been in trouble. And that's not what he wanted. So that GST thing was very good, well timed. It served the purpose it was intended to serve. It was dramatic. Everything came down. And I've been mentioning since morning that when I was young, this morning all I would be showing you is onion prices. All right, प्याज का दाम क्या है? And we have not discussed onion prices even once. That's how much India has changed. We are now discussing सोने का दाम क्या है? Okay, that's a good thing to discuss. But within this, like I said, lie conundrums and lie issues, and there are fundamental concerns that still remain within everything going gold, systemic risks. So let me go back to Jayjeet. Jayjeet, now here's something to feel good about. Last year, when terror attack took place and then Operation Sindoor was launched, within a few days of Operation Sindoor, in fact, during the confrontation that was happening, the IMF, led by the US, granted a bailout of just over $2 billion to the Pakistanis. Okay, and there's a purpose to this story. $2 billion bailout the IMF gave to the Pakistanis, of which $1.13 billion Donald Trump has taken in his crypto fund a few months ago, and further $1 billion he has taken for Board of Peace. So वो $2 billion तो वहीं चला गया, okay, जो बेल आउट था उसे वापस ले लिए, ठीक है, एक हाथ से दिया दूसरे हाथ से ले लिया. So if you are the Pakistanis, you are feeling much worse about that deal. It hasn't worked out well. Jayjeet, has he done whatever he had to do? Because you can accuse him of market manipulation. You can accuse him of openly taking money. This Board of Peace is not to the government of the US. It's to Donald Trump, this $1 billion. It's to himself, to his own foundations. Heads up, for in case you thought the US government ne kuch shuru kara hai. So can he do anything else? Canada, Mexico, global trade, tariff, Venezuela, Greenland, anything left? Any surprises left?
No, there will be more surprises coming. There is no end to it because he's got a larger geopolitical view and a larger appetite of what he needs to achieve because he is obviously at the fag end of his career from an age perspective. If you notice, all that the US president has done was being done earlier also, but with a fig leaf of USAID, a fig leaf of helping, and so on and so forth. That fig leaf has been thrown out because the current US president does not have the time for these niceties. And therefore, he is doing exactly what US has been doing for last so many decades, but in a much faster way without the fig leaf. In terms of further shocks that can come in, we can see Cuba looming over the horizon. The president's eyes are clearly set on Cuba. We don't know what else his eyes are set on. Clearly, Canada or breaking up of Canada and gobbling it in pieces is also part of the US vision for the last 200 years. It's not a recent vision. This has happened multiple times. In fact, its conflict with England in 1812 was also largely fueled by the hegemonic push between the two nations and also the trade conflict that happened between, again, Britain and US. So this is not a new creation. Trump wants to finish off this agenda during his tenure and become known for pushing the American cause forward. And one can have all kinds of niceties around it. In fact,
but is he wrong in saying? Is he wrong in saying that, listen, if we go up, all of you go up?
Well, for now, yes. Between US and China, that's almost 50% of the global GDP, and US is a significant part of the global GDP. But if you look at how the global economies are splitting, earlier it was a Cold War. During the Cold War, there was a communist economy led by Soviet Union and the non-communist Western economy. And then there was obviously the unaligned ones, which is India and so on. The same thing is happening in a different manner. There is the American economy and then there is a non-American economy. There is that split happening. And if you look at the India-EU FTA, that's a axis on which the rest of the non-American economy is kind of coalescing. So in the short run, obviously a few months is a very, very short time in predicting how the global economy will move forward in terms of structuring.
Okay.
But the indications are that it's going to split on these lines.
Okay. One quick question, Mithali, before I come back to Amit and others in the studio. Mithali, just a practicality, US visas and immigration. This is very real. Okay. It affects a lot of Indian companies, and for individuals, it is life changing. If you were banking on that H1B, or if you had it and it's all under review now, even business visas, everything under review, okay. And we've been seeing this problem for several years. Even under Joe Biden, it was what, 2 years to get an appointment, okay. Yeah. It had become ridiculous, and that's not because they couldn't find staff members, okay. That was deliberate. So even in Trump, so this is a disruption now. Again, does this disruption have an impact, or do we move on and we go to Germany, no problem?
No, Rishabh, these are very real disruptions, and I advise a number of companies who are actually helping kids go abroad. My own team members, always trying to prepare to go abroad for either working or studying. So I think it affects the all of where you plan to study, because studying in the US has also become extremely expensive. We've seen that with the rate increase, of course, with the dollar strengthening, we've seen that, a lot of people simply putting off that decision by a year or deciding to go to Europe because that's much cheaper. But the second reason, of course, is, am I going to get a job in that country after I study there? And frankly speaking, the scenario is complicated not only because of the processes, but also because of the strength of the economy. Today, in the US economy, it has become so hard even for college graduates to American college graduates to even find jobs, because you just don't have jobs for younger people, and you're expecting an entry-level person to have
I
4 or
don't know.
5
They
years
say
of
that
experience.
employment numbers are great. The employment rate is under control. I mean, it like I said, on face value, looks perfectly okay. So I don't want to deride the fact, because oil prices are below 70. The US, I mentioned Microsoft fell $400 billion in a single day, but the NASDAQ remained stable. That means other stocks went up. I don't know what's going on. So let me change tack a little bit. Gautam Mukherjee also joining us in the broadcast. Madhav, let me come to you first, okay? So now let's just come back to the specific sector that you are now taken an interest in working towards, okay? Now, all the big guys, which is Zuck, Elon, Ortman, okay, Nadella, Pichai, all the big guys who are controlling this game, and let's not kid ourselves, they're controlling this game right now. Maybe the Chinese have a hat in the ring. They are telling you that this is now about compute, and there is a race on. And the people who build the compute, literally is like the British ruling the seas. They will control the future of the next 100 years, 200 years, okay? Now, how much of that is true? That is just, and the Americans are so far ahead that there's no catching up for the rest of us.
I think it is very true. They are investing very heavily on AI, very heavy investing on the GPU servers and everything. While I think the game is still on and people are moving to the cloud GPUs, like Amazon and Google have already started working on it from physical memory. So if you see, this industry currently is facing a huge crunch on memory prices. The reason of this is only because the AI companies are buying at 4x the prices, all of this memories, and they're pumping money to make sure that they lead the race. So this is probably a bubble where they are spending money 4 times.
They're spending money. Okay. Maybe Zuckerberg has the money. Maybe Google has the money. Okay. Sam Altman does not even have the money. Okay. He's not got any other company other than the AI company. Okay. So he doesn't have the money, yet he's got $1.4 trillion in spending commitments. That is, ladies and gentlemen, is 20% of more than 20% of India's GDP is what one company says is going to spend. Now, assuming that some of these will survive, that's the argument that even Jeff Bezos puts, that okay, dot-com bubble, many companies went under, but the ones that survived did change the world, accept it. But some of these that do go under, and they go under with $1 trillion of debt, how do we get out of that? That's going to be a few years of pain.
See, I think the way we look at it is that these failures are not a failure. Their failures are learning for the country. That is what I think the country should be looking upon. Also, it is more about the patient capital on learning. Somebody has to invest on their patient capital and a long-term investments, because they will learn from it. There will be a lot of IP creations out of it. There is a lot of design creation out of it, wherein the industry will thrive, and that's where the industry will grow from there. Right?
Okay, so let's look at the criticisms of the AI industry. The criticism of the AI industry is that the AI companies will tell you that 1 billion people are using LLMs now. Okay. And the critics will say that most of them are using nonsense videos, nonsense photographs, memes, jokes, what's called AI slop, that the vast majority of computing power is being spent on useless thing. Now you can counter the argument, because you can argue that when the internet started, the vast majority was pornography, the vast majority was copyright infringement, that it was all nefarious purposes. Nothing practically good was coming out of it. But not anymore. Right? It has changed the world. So you can argue it both ways, that yes, 40% of the internet in 10-15 years ago was just pornography, the worst possible thing that you can use a technology for. And AI is going through the same thing. You saw what happened with Grok, trying to create pornographic images on X, and the LLM did it. So Madhav, do we have viable business cases, use cases, where other than subscription, that these companies can make money? Because I warn you, 6-7 years ago we were told the future is crypto, Bitcoin, and if not crypto, Bitcoin, certainly the technology that supports them. Okay, that didn't happen. Then the same Mark Zuckerberg came and told us, no, the future is metaverse, and he spent $70 billion trying to build it, and it went nothing. Even Meta employees don't use the metaverse. Their average monthly user is 200 or 300. Okay, so that bust it as well. How is this real? Why is it different?
See, I believe that probably yes, there's always going to be a myth around this as well. There is a bubble of AI as well, as I believe so. Because what I think is a lot of things out of which are just purely and purely nonsensical, because it does not make sense for the real use case scenarios in the real world. A lot of them are just using it as a hype rather than a real use cases. So yes, definitely what I see in the near future is that there needs a proper regulations around on the AI and the infrastructure, where India can also have the protection against their own users and the own users data, which people being used as a product, because our users data has been used by all the foreign companies to make sure that probably they can monetize it over a period of time. They capitalize over a period of time because all our IPs have been used and they've been created outside India, while India has been used or the consumers demand has been used to use it as a benchmark and create a network out of it. So I think probably using an AI infrastructure needs a proper regulations around in every country.
Yeah, but then there's X we can do about it. So yes, all your smartphones and your tablets and your computers and laptops are likely to become more expensive in the next 6 months or 8 months, as he mentioned, because memory prices, forget GPUs, memory prices are going up. Everything is being sucked up by this massive AI investment, which may or may not result in anything. The metaverse was nothing. Okay, it came up with nothing. Nobody bought on, and Zuckerberg really tried hard and told us that's the future, that by this time we'll all be in those virtual reality glasses and having this virtual meeting somewhere. Okay, let me get Gautam Mukherjee in. Gautam Mukherjee, we are running in a very strange world, because every morning somebody wakes up in the White House and grabs us all by the collars and tries to shake us down for every penny we've got. I was just putting the story of the poor Pakistanis who made $2 billion from an IMF emergency loan, then had to pay $1 billion to Trump in his crypto fund and $1 billion for his peace board. So that money went away. So he's shaking everybody down. But despite this, the global economy, the US economy, the markets, ours, everything seems to be okay. So is there a method in the madness? Are we actually okay? This is just par for the course and it's fine. We are all doing okay.
Well, we're doing okay, Rishabh, because of our domestic market. And we are doing okay also because we have, in a very short time, despite the tariffs, managed to diversify our export markets. So this is a good thing. But having said that, where is the engine for India? In my opinion, it is government capex spend on infrastructure. This is a certainty and has been used very effectively by the Modi government for its entire tenure from 2014. It underpins the 7% growth, and whatever may go up and down, this can be the main engine. The other thing I think is we have made some mistakes, in my opinion, on capital gains tax. And if we take it off, and if we take off withholding tax from foreign entities, I think you're going to see a flood of foreign investment.
Okay, so let me take that point for a second. Let's address it because we are all partakers in the capital gains process. Jayajit, why does this still make sense? Capital gains tax. Why in the level and the form it is?
Was well said by Gautam. This is not how things work elsewhere in the world. It basically holds back investments, or even it tries to put investments through foreign routes, which again we have been trying to clamp down on it through various regulations, including the retrospective step that was taken by Pranab Mukherjee in 2010 on the Vodafone case. So we are continuously playing a cat and mouse game. It's almost like saying we'll have a high tariff on imports and then you enable smuggling to happen. It's kind of similar. We are creating a set of regulations which are punishing for capital inflows. If somebody invests into India, there are already many challenges in this country and they expect a decent return out of that investment. If you're putting such a large tax on that return, then it's going to play a deadening hand on the inflows that are coming into the country. So that's where it's not really appropriate from an Indian environment perspective.
Okay. All right. So, to the best of possible, we've had a larger picture scenario. I just want to touch base on one thing we were discussing, and then I just want to discuss expectations for everyone, because today is about devil in detail. The big ticket item, which you all remember from last year, direct taxes cut, very unlikely to be repeated this year. Some change might happen, but let's be practical. After that and the GST cuts, nothing there, but some tweaking might happen. But I want to come back to this because it's relevant. Let me get a different perspective. Gautamji, let me come back to you. So gold prices have crashed today as we speak, down 9% in just a few hours. So that's obviously a hype cycle that is coming down to reality. I'm not suggesting it's going to go down to some lows, but it is coming down to reality. I mentioned the $400 billion stock crash of Microsoft yesterday on the basis of their earning numbers. And Microsoft has a business. 1 billion people, by the way, now use Windows 11. Okay, so they've got a business, but people are skeptical about their AI outlook because Copilot ain't doing as well as Gemini, for example, is. So it hasn't looked good. So there are bubbles in place. What do we make of the gold prices, the silver prices? Are you a buyer, seller? What are you doing with the stuff under your bed?
Well, I'm a profit taker and I keep my investment, my base investment intact. I do believe that Trump will roil the whole world and back it will go up. I've seen it fall 10% in recent times in the last 2 weeks. It fell 10%, climbed 10%. I took a profit both times and it has fallen 10%. It'll go back up. Gold in particular, silver, since it's something of a commodity as well as a precious metal, is really half or less than half of what gold can return for us. So this is definitely part of it. The other thing, just taking on from what you said, is that the American stock market, I mean, the American economy is shut down again. It'll open on Monday. God knows what they're up to every few months. They run out of cash. But the American stock market floats on its own power, and it will continue to, thrive simply because it isn't, as other people have also said, just a matter of American investment in the American stock market.
Yeah, but the American stock market is being floated by companies at a scale that we've never seen before. Many of us are selling products which are not yet to be built. Elon Musk is telling us that he's going to be building humanoid robots. Let's be real. That's a bit far away to happen. We were told that we'll all be in self-driving robo-taxis. That hasn't happened yet. It's still a work in progress. I'm not saying it's never going to happen, but the time it takes is a long difference because you have to worry about your earnings for next year. These are all publicly listed companies. They have to file returns on investment next year, not 10 years from now. There are companies who can work with that kind of timelines. If you're investing in nuclear fusion, you can sit on a 50-year timeline and work on it forever, but not if you're sitting as a shareholder of Google. Let me take a last thought on this. Anjan Roy joining us. Anjanji, before we pick up directly on the budget, there is a surround sound and has to be gold and commodities prices which are all over the place. What do you make of them, sir? What do you make of what's happening in the gold markets? It's I won't say unprecedented, but very unusual.
This is a reflection of the overall uncertainty that there is in the global economy, because Donald Trump is totally unpredictable and people are rushing into gold thinking that this is the ultimate safe haven. But even safe havens get inundated if too many people invade it. So gold prices are sometimes going down. I suppose it is very rational that gold will go up and in this manner. There are other precious metals also nowadays. I mean, platinum is, for example, very much undervalued. Compared to silver, gold, silver is also undervalued. But I'm not much bothered about what is happening about gold globally, because it's their business. They are coming in, they will get out. But gold is a major issue in India because people in general in India have a strange fascination for gold and they keep on buying gold. They virtually never sell it, and they sell it only in very great distress. So countries buying gold. Years back, I remember we had suggested that gold should be taxed so that the imports of gold is somewhat moderated.
Yeah, I remember Arun Jaitley. That didn't work out very well, sir, and exactly the reasons you've just enumerated.
It backfired. And still we are importing gold. I mean, what is happening is we are sending out our country's savings out of the country and propping up gold prices, gold companies and all that. Now, the strange fact is that, and the economic survey has referred to this, our country is burdened with very high rate of interest. That has something to do with the availability of savings in the country also.
Yes.
And the economic survey has referred to this basic dichotomy or weakness of the Indian economy. See, the Indian economy is propped up mainly by domestic consumption, nothing else. Single engine driver of Indian economy. And the economic advisor is saying that he has quoted some Upanishad and saying that only the wise people defer present consumption for future gratification. Now, if you do that on any scale, then the Indian economy will get into a recession. But underlying all these factors, he is also referring to a basic disbalance in the Indian economy, availability of savings and investment. You cannot grow without investment.
Okay. But cost of capital, I'll distill that into the cost of capital. Okay, we are about half an hour away. So let me now just get back into the rub of it, because as I mentioned, we've discussed the larger picture. Now let's come back to the devil in the detail. That's what's going to matter in a couple of hours. The larger picture will take care of itself in the larger scale, because Donald Trump ain't going to go away. The AI spending craze isn't going to go away. That'll continue tomorrow, even after the budget speech. So, okay, so let's come back to Jayjeet. Jayjeet, this budget, what are you hoping for? What are you expecting?
A domestic industry perspective, I hope that there are enough sufficient basic custom duties put in areas which are required, which is, BCD is called as tariffs for the Americans, so I'll use the word tariffs now. There are areas where India has a structural cost disadvantage. If you look at, let's say, ammonium nitrate, India's cost is 7 times what's the cost in Russia or China and elsewhere. And therefore, all downstream to ammonium nitrate, such as isopropyl alcohol or other explosives, those are become 7 times more expensive. So we need to have a level playing field. And isopropyl alcohol is very critical for pharmaceuticals. Similarly, nitric acid is about 2/3 more expensive in India than elsewhere. So things like paranitrochlorobenzene, which is important for paracetamol, are far more expensive here. So we can't shut down our downstream. So there is a sentiment of reducing tariffs, but I think in these specific cases, and there are many more, we need to make sure that there is adequate support. Also, the campaign for fixing inverted duty structure, I hope that continues. There are many areas where, such as viscose filament yarn and so on, there is a need to reduce the inverted duty structure. So those are some of the things that we need from a domestic industry perspective. There are many more that is needed from a consumer perspective, and probably I'll come back.
Okay, let's come back immediately. Avneet Marba, what are you hoping for?
So from TV industry, I think the basic custom duty on open cell, which was extended last year, as the memory prices have gone up and there is a 7% increase month on month on the products related to memory. So FM told last year that they will extend for 1 year. I think 2 years of extension is needed in that. Apart from that, there should be anti-dumping on SKD PCBs. I think if we want to do structure the global supply chain, we need to have our own components. So the duty should be added on SKDs. Apart from that, more on capex, the MSMEs and the electronic PLI scheme for television. I think that's needed. We only have for air condition and smartphones as of now. So I think that needs to be done so that more of manufacturing comes to India.
Okay, Madhav, what are you hoping for?
I think the most important thing which I would expect is the RDI framework, which is for more than 1 lakh crore rupees, which is our research development investments which government is planning to do it, and 20,000 crore rupees which has already been put into this 2026. How does that capital remain within the India, and how it helps India or the India supply chain to become the part of the global value supply chain. Though money may look less, but I think that money should not be flowing out of the country back to the other global brands, but how can it remain within India? That's point number one. Point number two, PLI, which is one of the most important thing. How can it definitely benefit the Indian supply chain ecosystem, because it has not benefited to that highest extent in PLI 2.1 or 1.0. How can it benefit in 2.0?
Okay, so let me reverse the question and get Avneet back. Avneet, what has actually worked? Because UP, in terms of the assembly of smartphones and even electronics, okay, where one has a PLI, one doesn't, has been a boom. It's completely changed. I mean, Noida is almost full. Now you're in Greater Noida and people are heading off into Faridabad to build new factories now. So how is the PLI, for example, actually worked in smartphone assemblage? What has gone right?
I think the cost of operating and the expense, I think that has favored the manufacturers, and the kind of saving that a manufacturer, obviously government has incentivized that. So government in PLI has lost a lot of money, let's be honest, and which has benefited the manufacturers. I'll put it in this way. So only the companies which have PLI has little more advantage than the other manufacturers. So that's how the PLI 1.0 has till now figured out. We have created couple of big stories in PLI, but I think it needs to be reworked. There has to be some more policies, strict policies that needs to come in. And as Madhav said, we need more of Indian brands to come up. So no Indian brand have flourished in this PLI 1.0. There's only benefited
But why is that? I remember the days of Micromax, which in the end was an Indian brand but was sourcing its products directly from China with the Micromax logo on them. What's it going to take? What is an Indian brand? Is it because the consumer is wary of Indian brands?
I can't comment behalf of that company, but I know the whole story is R&D. I think they didn't invest in R&D. They were completely dependent on one of the OEMs in China, and that OEM is today's world's largest manufacturer of their own brand. So, that's where the whole Indian ecosystem didn't flourish, because they were not spending, good amount of money in their R&D. They were not doing product development. As Madhav said, the R&D, that's, the amount is going there. We need to focus in India. That's very important. Plus the royalties. I think that's an issue where, you're paying royalties in you're importing goods in India, but you're paying royalties over there. Okay. You need to pay royalties.
So let me explain this to people how this works. And that was the reference to context that Jayjeet was mentioning in the case of Vodafone. What happens is that the international major, company X from China, will set up an Indian subsidiary, company X India, and they will sell their product in India. Then what they'll say is that the licensing of the name, because I'm selling this brand, I have to pay the royalty for the copyright, which can be billions, can be a large chunk of change. So the company actually shows a loss in its Indian balance sheet because of these royalties, and therefore pays no taxes. And that was the case in Vodafone, which was a retrospective tax withholding complication, which also didn't work. Not good news for Vodafone, and which is also created. If you were worried about a duopoly in the airspace, well, you have a duopoly in telecom as well. Hopefully nothing crashes and nothing goes wrong, because otherwise we're in a lot of trouble, because you're pretty much dependent on Airtel and Jio, with Vodafone in perpetual trouble, and BSNL. By the way, BSNL is going to be offering satellite phone services, if that's going to cheer you up without being overly critical. Okay, so before I get Gautam Mukherjee back in for his expectation. Jayji, let me come back on that thought. So what's the value add here? Like I said, do we accept the middle manufacturing kind of position? Or are we seeing some examples somewhere that frontline R&D product are being developed in India? I can give you some examples in the pharma sector, but maybe not in the electronic sector so much.
No, there are plenty. There are plenty that's happening. There's plenty of deep tech being developed in this country. We are the first ones in the world to have a 3D printed rocket which is ready to go to space. We have developed our own satellites, which are one of the best in the world in terms of wide spectral or hyperspectral pictures. So there is a lot going on. Obviously, we are not at the same league as a China or a US, but I would say the bright green shoots are showing up. And obviously a path towards it is creating the larger ecosystem for which what is very deridedly called as screwdriver manufacturing is actually very, very important. And it takes a lot of skill and a lot of effort to even do that screwdriver manufacturing, especially in an ecosystem like India, where we are smothered by inspectors, we are smothered by inspections, smothered by tax demands, and so on and so forth. So it is critical that we have what we already have, which is the assembling part of it. It provides a very solid base to then move to the next step, while in parallel we are also developing our own deep tech, which is disruptive for the entire world. Our rockets will be costing much less than the SpaceX rockets once these 3D manufactured rockets come up.
Yeah.
So the reality is in the middle of everything that we're talking about.
Okay, so watch out for Pixel, Bellatrix and Agnicool is what Jayji they're saying. Some of the founders sit with us very regularly. But on the brass tacks, Gautam Mukherjee, I know I've been saying since morning that there's going to be no indirect tax cut. But can we be hopeful? Who knows? Maybe.
Well, it's not so much tax cuts, which I'm not very hopeful about, except, as I mentioned before, I'd like to see the capital gains tax go in its entirety. Perhaps they could also take off the TDS on bank deposits, bank FDs, because this is, costing the banks most of its deposits, which are going into debt funds instead. But, broadly speaking, with a 12.5% share of the GDP for manufacturing, when we have been talking of 25% for quite a few years, I think the time has come with 8 FTAs and maybe a 9th one with Chile about to be signed, maybe Canada as well, 10, 11 like that, to ally with the global value chain. We need hand-holding. If Apple is selling billions of dollars of phones assembled in India, it is because they're holding our hands and making sure it happens. Now, the same thing has to happen because we can't compete with China. They built this over 30 years. We can get a share of it, provided the people who want us to manufacture help us. Plus, of course, the government with its PLIs and incentives. This is crucial. We cannot have such a low proportion of the GDP coming from manufacturing and say, we are a service-led economy. Fair enough, but service-led economy is, as you mentioned, going to face headwinds till we learn how to adopt AI technology.
But is that the case? Madhav, the latest trend from Salesforce and everybody else is that all the companies that went all in on AI, which said that AI will do all our coding and all our back end and all our customer service, haven't fared well because it's still not working. There have been some bad case studies that have come out from a new technology as well. So is there a risk that AI just destroys? It destroys TCS and it destroys all Infosys and all of these global icons of ours?
See, I think with AI we all have to evolve. Let's be honest with one thing. India has been a service export market which is generating surplus for us. But from that, I think probably moving to the hardware exports is going to be the currency form for us. So I think all of this has to be evolved. We cannot be stagnant. We cannot be just a service export economy. We have to move from a service export economy to a hardware export and a multiple other options where we can create multiple avenues of revenues to come down to back to India. So that's where I believe that it's not just dependency on one sector. We have to segregate it into different sectors as well.
Okay, and speaking of sectors, if you were to think about frontline sectors, and if we have dumped crypto, which Nirmala Sitharaman certainly has, they don't want you trading crypto anytime soon. You'll pay tax and more tax on it. And we are assuming the metaverse is happening. So what are the frontline technologies? The frontline technologies, ladies and gentlemen, are going to be in 3D printing. It's going to be in space. It's going to be in AI. It's going to be in quantum computing. It's going to be in deep sea mining. Okay, these are the frontline sectors, and deep sea mining will have to be done therefore using unmanned vehicles. So in drones. Drones in defense is now everything, as we've learned from Ukraine. Okay, that scale is going to be unimaginable. Even if it's not delivering pizza to you, warfare is certainly become drone based, almost entirely drone based now. So these are all frontline sectors. We have companies that are doing work on this. We have for the first time exporting in defense. So let me pick up that sector with Jayajit. Jayajit, we've done about 26,000 crores of defense exports, and this now includes from the lowest level of technological things to the BrahMos, which we are selling to the Philippines for the first time. A second tranche of missiles has gone that way. If the assumption is made that most of the R&D in America happened through the military industrial complex, through not only the wars that developed the jet engines and the rocket engines and everything that we take as ubiquitous these days, that space flight and all of that came from the military complex. How crucial is this industry?
No, it's very important, just plain from the strategic defense perspective, because nobody will give us the best of technologies. Unlike in the civilian world, in the where the exports constitute the best product, in the military world, the exports constitute a degraded product. And therefore, just from a plain defense perspective, we need to continue to build our own technologies for defense. Would that lead to a flow of technologies and new technologies in the civilian sector? Because our industry, in the sense that it's Atmanirbhar industry, is quite recent and nascent, it hasn't yet happened to the scale that we would like it to happen. DRDO has obviously tried quite a bit, and some successes has happened, but has that translated to large commercial success? That is still going to happen in future. But it's going to be a significant source of cutting edge technology for India as we move forward, and dual use technologies which can be adopted from military sources and be deployed in the civilian world. I think there will be a lot of use case of that, especially in terms of material sciences, in terms of new materials, in terms of new ways for managing traffic using the radar technologies, and so on and so forth. There will be a plethora of technologies that we can use from the defense side, as long as we own and control it, and that technology is provided from the defense side to the civilian
Okay,
side.
so now we got a snippet of this. You're seeing it on a day-to-day basis in Ukraine. If you're still following what is happening there, one should. But Gautam Mukherjee, we saw a snippet of this post Operation Sindoor, and the exchange of fire that happened across our borders. And the snippet of it was that asymmetrical warfare was tried by Pakistan against us. That they did try to send the $200 drones so that we waste our $10 million S-400 missile on them. Now, this is a whole new world, and certainly our defense manufacturing has to be on the cutting edge of this now.
Well, the daisy chain that we formed with all our little air defense systems linked to the S-400 and so on is unique. The Russians themselves have not been able to do it, neither has any other country. As a consequence, the Turks, with their technology people in Pakistan, 400 drones, not one hit, not one did any damage. So we have very big advantages in the way we use information technology. and down the road, this will be a major asset. Now, we are talking of the Su-57 manufacturing and integrating it with Indian armaments. Now, once that happens, it becomes a formidable plane and a formidable item, mainly because we are not having to buy it off the shelf with whatever they have developed. We have, in many cases, and we're doing the same thing with Rafale, we have in many cases developed better armaments to place along with the fighters. So, yeah, we are
Okay, now in case you're wondering why is he saying Su-57, why more Sukhoi, why can't we buy a nice F-22 or F-35? The reason is because when Americans sell you planes, they have a kill switch in them. And if one day they don't like what you're using the planes of, they can just switch them off, ground the planes. So therefore, you have to be skeptical about buying American planes. And if you're an American, this is the reason you know, this is why we're not doing it. It's not like we don't want to. We could definitely use them, have the money to buy them, but we're buying French and Russian for this reason. But on that thought, and I don't want to digress, but it is a fundamental, anecdotal, but core example. Mr. Roy is in the Second World War that the jet engine was developed. And after many years of sabotage of all our plans to develop one of our own, here we are in 2026 and we can land on the moon, but we can't make a airplane engine. What do we do about this?
Airplane engines are not standalone stuff. You cannot manufacture airplane engine all of a sudden. Rolls-Royce evolved over a century before it was really manufacturing airplane engines. Pratt & Whitney, GE, they have all such ecosystems for this. Now, aircraft manufacturing in itself is a very big challenge for us because we have not been able to manufacture aircraft. And compared to us, China has developed stealth bombers and stealth aircraft which are at par with Americans. So as many of you have referred already, this defense industrial combine, this is a major growth engine for an economy and development of best technologies. We don't have any collaboration so far effectively. We should try to do something about Airbus or Boeing.
So again, assuming, so you know, I can't use certain language on air, but I was dissing the Chinese to say that they went and sent their corporate spies and stole the technology from the US. Let's face it, it's not like the Americans didn't hire half of Nazi Germany and put them into their rocket program. That's exactly how it happened. Werner von Braun, Oppenheimer, we all know where they were working before that. So they also stole it from someone else. Perfectly fine, that's how the world works. Now, assuming, Mr. Roy, that we are not in a position to steal it, that we can't kidnap the GE engineers or, you know, steal a couple of aircraft and try to reverse engineer them. What are the options here? Do we have to, again, we are in 2026. What are the options we have on frontline tech like this?
I mean, there is no harm in trying reverse engineering. We are buying the aircraft, so we can, if we can, we will do it. I mean, it's a power world. I mean, if you can do it, do it. Go ahead. Japan had done that. China is doing that now. America has done it. So we should also be not that compunctious about not stealing or not. We are.
Okay, all right.
Everybody does.
Okay, so yeah, please.
But the point is, we have to develop that base which will be able to steal or re-engineer. And that comes from basic science. We have neglected basic science.
No, so this is the thing I don't get it. We've nailed it in ISRO. Okay. I mean, at 1/10 the cost, with relative surety, familiarity and success rates, but we can't nail it here. And I know, of course, it's been a sabotage program, okay? You can read for yourself what happened to Homi Bhabha when his plane crashed into Mont Blanc, okay? Not the brand Mont Blanc, the mountain Mont Blanc. So of course it was sabotage, and of course they didn't want us to build the plane. But so be it, we now want to build the plane. So there are three components in aircraft manufacturing. You have to have material science, because you have to make a fuselage. You have to be able to do avionics, which is software, and you need to make an engine. Design is not the difficult part. Design is well known on how an aircraft flies. Okay, so material science, avionics, and engine. We have become better at the material science, because we now even make submarines, okay, and ships, which we are okay with. We are becoming better at the avionics, but we don't have the engine. And if you can't make Tejas, then you can't make Boeing and Airbus. And then you can claim that you're buying 500 aircraft, but you're buying them from either Boeing or Airbus. And Boeing is also crashing planes these days, believe it or not. So Jayjeet, I didn't want to circle back, but there is a devil in the detail picture, which does matter. As the finance minister, who was aware, as a prime minister leading the government, as all the bureaucrats and the economic advisors who are all aware of the conversation they are having, and I'm sure one of their primary concerns is, number one, the trade wars and their impact. Number two, the stability of the global economy, which we don't know what's going to happen. And number three, these potential AI bubbles being built by these just a handful of trillion-dollar companies. Okay, that if they are aware of this, and their assessment was that one safeguard was the GST cuts last year, do we need to preempt something in this budget?
One of the things I always keep saying is that, when you talked about the trickle-down effect, the way the trickle-down will happen only if the rich spend. Now, the rich can only spend that much. They can only buy 2 cars and, a few things. But by putting in or treating such spends as luxury and putting additional tax on it, just reduces that spend. Now, imagine if a Mercedes is costing 20 lakhs lower, there will be that many more people buying it, and therefore there will be trickle down of the money, and people who are building it in Pune and Chinchwad will get more jobs.
But Mercedes doesn't want to sell you cheap cars. They've told us that they won't cut the prices of their cars. Okay,
that's
FTA or not, because if everybody owns a Mercedes, then nobody wants to buy a Mercedes. Now you understand luxury goods, how they works. Avneet is smiling a little bit. Huh?
Yeah, no. So that's a different aspect.
Then you'll have to buy Rolls Royce to stand out.
My larger point is that on many luxury items there is significant tax. I think we need to take the word luxury out. Luxury may be a corporate pricing strategy, but should not be a taxation strategy, so that more people consume, and especially the rich consume more, so that the money trickles down. Otherwise, capitalism fails. So we are neither socialist nor capitalist, because we are not allowing the flow of money. Let the rich buy bigger houses, so that money can be spent in construction and people can get the jobs.
And so let me come back since you mentioned the rich. Gautam Mukherjee, we are saying in the same breath that the neo middle class of India has not come into the fruition that we would want it to. But if we look at what an apartment now costs 50 kilometers from where I'm sitting in South Delhi, okay, in a Dwarka expressway, is gone into crores. Now is that all speculation? Is because you bought yourself 5 flats because you are speculating that the value will go up, or is there actual demand that people are or can afford crores? I mean, if you look at the number of Fortuners on the street, even if you buy them second hand, okay, it's the guy who sold a piece of land because the value of land has gone up quite a lot. So is this just GDP growth? Today, I was in Abu Dhabi last year, and it was cheaper for me to go to Abu Dhabi and stay in the finest hotel and go to the finest restaurants than to go to Shimla. Shimla was more expensive, some 40,000-50,000 rupees a night to get a room in Shimla. It was cheaper for me, including a business class ticket, to go to Abu Dhabi and come back with the family. So somebody is spending the money. There's clearly some money that is going into all these hotels and the Goas and all the places and the properties.
Well, we've had a scarcity economy from the year dot. Under socialism, that's what it was. In Russia, they had to queue up for loaves of bread. Here, we had to book things that came 18 years later. You needed an MLA or an MP to get a phone, a gas connection. From there, we've come to a better version of the scarcity economy. Land is a case in point. It costs tremendous amounts because one, there is a pressure of demand and supply, and the second part is that there is a plethora of laws that that distinguish between, let's say, agricultural land and commercial land and institutional land and licenses and permits and so on, which make everything, each stage of this, very expensive. That plus natural inflation, the cost of construction has gone up tremendously over the last few years. So now every flat, however small or large, is in the crore plus bracket. But another reason why people are able to afford it is housing loans, EMIs. It is possible. So that is the good part of the economy.
Okay, let's assume that a house is the most expensive thing you'll ever buy, and even if it's an investment property, you're looking at it from some return. But just from a consumer interest, Mr. Roy, if you go to the markets of India, they are buzzing. The shopping malls are buzzing. People are buying expensive things and they're consuming expensive materials. India is becoming brand conscious. Foreign brands are making a killing over here, selling ridiculously expensive things. So clearly there is a boom happening. Now I'm not suggesting that this is only some 1%, some HNI question. All markets are booming. These hotels are booming in not exotic locations. Mussoorie, Shimla, which are very normal destinations for any person in North India to head to. Everything is booming. So clearly there is something happening in the country which is telling us that consumerism has arrived, especially post-COVID.
When the water level rises, all boats rise. So something like that is happening. Much before, when I would go to the Himalayas, I will find hardly any nice buildings or children going to school. Now, if you go to the hills, you see in the morning scores of children very well turned out. They are going to the school. Throughout the country, this is happening. This is not only in one place or other. Some pockets are there where there is still poverty, but the overall level, and that is what is holding up the Indian economy. That is what Economic Survey has referred to, that Indian economy is rising, growing on the stream of its domestic consumption. Many economists had pointed this out as one of the weaknesses, single engine economy. But today, in the context of global turmoil, this is turning out to be the sheet anchor for the Indian economy to grow on. So I expect that the budget should do something to prop up this mood. Okay. One point has been made repeatedly, that is capital gains taxation. Now, the capital gains taxation on sale of house property has been so changed that it has affected the housing prices. Prices are high, but there could have been even better housing market if the indexation part of it has not been scrapped. So what happens is that when house prices rise, there is a compounding effect on the entire economy, because this gives a wealth sense of wealth, and the wealth effect leads to greater consumption, especially of value-added stuff.
Yes, but now, of course, there is a contrarian price that if house prices go up, the people who actually genuinely want a house can no longer afford it or indebt themselves to get it. But what Mr. Roy is mentioning, if you're the finance minister of the country, you want consumerism. You would want people to go out there and spend. That's what Avneet Marwa also wants, that if you have one TV, now you want to put a TV in the bedroom also. Then you want a second TV, then your third TV. And then eventually if you have one washing machine in the entire house, then you have one per floor, because if there are three families living in the 3 floors. You want consumerism to happen, okay, within balance. You don't want people to indebt themselves with credit card debt with what's happened in America. So all within balance. Okay, last subject, we've got 10 minutes. Let me kick this off with Jayjeet. Jayjeet, here we are talking about all good things that hopefully shall come to pass, and ghee shakkar they will, okay. But we have to assess the last major risk, and the last major risk is indeed that for a significant part of the last 3 months, much of North India for human beings had become nearly unlivable. Now, that is atmospheric factors which are above and beyond the control of government and you and me. So, what is in our control? What do we do with the fact that by the time we have these gains, we will have a very serious economic cost of several cities not being able to function? Imagine the economic cost of all construction being banned in Delhi repeatedly, so many different cars being banned in Delhi, transport being banned in Delhi. There's obviously an economic cost, Jayjeet.
Absolutely, yes, Rishabh. If you recollect, after every single budget in the last 4 years, I've been saying that the budget is great, but nothing on pollution. In addition, after the elections, also I've been saying that nobody raised the issue of pollution. In a democracy, it looks like people are not bothered about pollution. I think that is changing now, because the basic necessity of being alive is to be able to breathe. Forget about water pollution, because people have figured out a solution to that. But you can't step out without having fresh air, and if that's killing you, that's something people can't bear. Now, the point that it is atmospheric and not under human control, well, pollution is being generated by humans. It's not being generated by anyone else. And let's not get into the methane being emitted by the bovine lot as one of the reasons. It is human pollution which is created by the humans, and therefore the solution has to be coming out from the humans. And clearly what we see is that if you look at China, the pollution was industrial in nature. In India, largely the pollution is agricultural in nature, especially if you look at the Korean satellite data, which fly after 2 p.m. It is very clear that there is huge amount of farm burning that continues to happen till the end of Jan, and that exactly maps with the levels where pollution goes up.
So Jayjeet, is it then simply the curve that the Chinese went through, that rapid? I'll put it into context, ladies and gentlemen. Context helps. In 1857, when we were having the first war of Indian independence, this is Rani Jhansi time, okay, the United Kingdom was burning 250 million tons of coal a year. So places where I've been to, Manchester and Birmingham, were dirty hellholes, and the people working in those factories didn't have a long life expectancy. So they went through that curve and then got past it. The Chinese also have recently gone through the curve of completely polluting their rivers and cities and are now getting past it. You go to Shanghai, everything is electric. Everything is electric. You can't find a petrol or diesel vehicle. Delhi has been at the front line of this. We were the first to get CNG buses and CNG autos. You go to Bombay and other places, there's still no CNG. Okay, that controls a bit of the particulate matter. Doesn't solve everything. We've been in the front line of you can't use more than 10-year-old car and more than 15-year-old car. Front line of all of this. Even then, the core problem remains. So, Jayjeet, are we in we are just in a bell curve and eventually we'll cross it? Or is it something more endemic, that we are stuck in the farm fires and there's no getting away from it?
We are stuck in the farm fires for quite some time in the foreseeable future, because because of the political compulsions, one cannot really force the farmers. And even educated farmers that I've been talking to, they need to clear up their field very, very quickly. They can't wait for any of the technologies to step in. And there are many technologies which takes care of the parali. But what they're saying is that they don't have the time. They need to have 3 to 4 crops in a year. They need to clean the fields immediately, and fire is the only way to do it. Unless there is a penalty, and unless, I'm happy to be taxed more and that money be given to the farmer so that they do not burn the parali. But some mechanism has to be brought into place. We are spending money in air purifiers. I might as well give it as a tax. But the flip side of having food and food security, if it's not having air security, then that's not
okay. So thumbs up on food security. Okay, water security, we are in a whole host of trouble, and air security has been a new last 5-6 years, a new conundrum our way. So are we just wearing emperor's new clothes? Are we trying to hack the system? And that's all we've achieved, Gautam Mukherjee. That the hack of the system was that advise certain people to light the fires a bit later in the evening, so that we can claim the fires are not being lit, or is it genuine that actually we are controlling all of this and things will be better this year?
It's lack of political will, Rishabh. What we have to really do is stop this paddy crop in Punjab, Haryana and Western UP, the last one that comes in winter, where you also have air inversions over the NCR. So if you stop this last crop, it wasn't there a few years ago. It was introduced as the final crop. And then you wouldn't have the parali, you wouldn't have the problem. You just don't allow paddy to be grown in winter.
Okay, there is no political will. Let's assume for a second, okay, because none of us can see it. As far as we are concerned, of all the official data published, this is not the problem. Okay, this does not exist as the problem. The problem is construction, is the cars, it's anything but this. So let's assume that there is no political will. Is there an economic cost to be borne of us having to seriously consider whether we can still live in the cities that we've called our home, in my case, birthplace?
Well, there's a huge, this GRAP 1, 2, 3, 4 is a joke. It doesn't achieve anything except stop-start economics, the construction industry, people are put out of work. I'm talking about the worker. He just put out of work, no money, no compensation. Again, they start 3 days later. Again, they stop 6 days later. This is nonsense. This should not be allowed.
This
is theoretical.
It's achieving nothing. So yes, good things are coming out of it. India, Delhi as the capital will have an all-electric bus fleet, I'm told, by the end of this year. I know a lot of people, including myself, who are now driving electric cars. Electric two-wheelers have become ubiquitous in Delhi. So are we heading in that direction in terms of vehicular pollution? I can see an end, that yes, there is something that you're going into. But everywhere else, I don't know. So Mr. Roy, are we living in a fool's paradise, head buried in the sand, and we are assuming that there is no economic cost to unlivability?
Actually, we are not head buried in the sand. We are very much looking around and seeing the pollution. It's a question of, as has already been said, it has been repeated, that it's a question of political will and technology. Actually, this is also part of the development process. Now people are talking about Chinese dominance in rare earth materials. Now, there is a report which shows that rare earth bearing areas, these have become totally unlivable in China because the mining and processing causes such pollution that in those areas it is totally unlivable. But still they are doing it for strategic reason of dominating the world. China apart, China has polluted very badly. They are polluting even the top of the Himalayas. But we can afford to introduce technology and control this. It is not that rampant as in Manchester at the time of Industrial Revolution. It is still controllable, provided there is some bit of pollution is actually offshoot of lack of development or poverty. When people burn firewood for cooking, then it causes pollution. But if you are not using firewood for cooking, you cut down pollution of that to that extent. Electric vehicles are a useful gadget, but then why not mass transit systems? Very effective.
No, so Delhi has the best mass transit system in the entire country. Okay, which is the OG, the Delhi Metro, and it's genuinely good. It's used by record numbers of people every day. We are just 3-4 minutes away, and Ms. Singhania joining us this morning as well. Ms. Singhania, good morning. Couple of minutes away. So I know we've been discussing macro picture during the course of our conversation. My question to you straight: what are you hoping happens in the next 1 hour?
Yeah, very exciting 1 hour to go, and my expectations are threefold. First of all, my expectation from the finance minister is that she continues to demonstrate the same kind of discipline which she has done over the last 2 years in terms of fiscal deficit control. So kudos to her. So I want the same momentum to continue.
Yeah, go ahead, we can hear you.
About the infrastructure spending. So the capex done, capex allocated last year was around 11.21 crore towards infrastructure. So if she can top it up by another 10%, 15%, then definitely India has a great story coming forward in the next year as well. And third one, coming from the manufacturing and the industry background, the industry is really battling with getting industry ready manpower. So skilling is a huge issue. Some steps have been taken in the past, and but those are not sufficient. We still are grappling with this problem. We want a one-time and a great solution to this, and the industry is always there to support the government. But yes, these three are the areas which I say are the ones which we as an industry are looking forward to.
It is ironical that you mentioned that. I have jobs available in case somebody is out there interested in the mass medium, which is here to stay, by the way. All right, we are still here. The number of people who volunteer to want to study or want to work in the mass medium and one day interview the finance minister of India, if I tell you how many of them can even tell me what India's GDP is, it's 1 in 100. And I take these many interviews every month. Can't tell me what India's GDP is. So skilling is a major issue. So the NAP is supposed to fix that we've all graduated by memorizing and passing our exams, but is it serving a purpose? We don't really know. Countdown clock to Parliament is there on your screens. We'll be seeing the speaker take over in just a few seconds, after which we are not expecting any delay whatsoever, and the finance minister will be presenting the union budget for 2026. We are expecting the speech to be just over or just under an hour long, after which we'll get a chance to analyze it. There it is. Over to Parliament.
Item number 1, माननीय वित्त मंत्री श्रीमती निर्मला सीतारमण जी. Item number 1.
Sir, with your permission, I rise to lay on the table a copy each of the following papers, Hindi and English versions, under Article 281 of the Constitution, Report for 2026 to 2031, Volume 1, Main Report of the 16th Finance Commission. 2. Report for 2026-2031, Volume 2, Annexures of the 16th Finance Commission. Number 3. Explanatory memorandum as to the action taken on the recommendations contained in the above report.
Item number 2, माननीय वित्त मंत्री निर्मला सीतारमण जी.
Honorable Speaker, sir, on the sacred occasion of Magh Purnima and the birth anniversary of Guru Ravidas, I present the budget for the year 2026-2027. Since we assumed office 12 years ago, India's economic trajectory has been marked by stability, fiscal discipline, sustained growth, and moderate inflation. This is the result of conscious choices we have made, even in times heightened uncertainty and disruption. Our government, led by Honorable Prime Minister Modi, has decisively and consistently chosen action over ambivalence. reform over rhetoric, and people over populism. We have pursued far-reaching structural reforms, fiscal prudence and monetary stability, whilst maintaining a strong thrust on public investment. Keeping Atmanirbharta as a lodestar, we have built domestic manufacturing capacity, energy security, and reduced critical import dependencies. Simultaneously, we have ensured that citizens benefit from every action of the government, undertaking reforms to support employment generation, agricultural productivity, household purchasing power, and universal services to people. These measures have delivered a high growth rate of around 7% and helped us make substantial strides in poverty reduction and improvement in the lives of our people. Today, we face an external environment in which trade and multilateralism are imperiled and access to resources and supply chains are disrupted. New technologies are transforming production systems while sharply increasing demands on water, energy, and critical minerals. India will continue to take confident steps towards Vikasit Bharat, balancing ambition with inclusion. As a growing economy with expanding trade and capital needs, India must also remain deeply integrated with global markets, exporting more and attracting stable long-term investment. As I begin part A, I want to express my gratitude to the people for standing firmly with us as we forge our way together towards becoming one of the largest economies of the world. Our aim is to transform aspiration into achievement and potential into performance as we ensure that the dividends of growth reach every farmer, the scheduled caste, the scheduled tribes, the nomads, the youth, the poor, and the women. In Vikasit Bharat Young Leaders Dialogue 2026, several innovative ideas were shared with our Prime Minister, which have inspired many of the proposals, making this a unique Yuva Shakti-driven budget. Our government's sankalp is to focus on our poor, underprivileged, and the disadvantaged. To deliver on this sankalp, and given that this is the first budget prepared in Kartavya Bhavan, we are inspired by three Kartavya. Our first Kartavya is to accelerate and sustain economic growth by enhancing productivity and competitiveness and building resilience to volatile global dynamics. Our second Kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third Kartavya, aligned with our vision of Sabka Saath, Sabka Vikas, is to ensure that every family, community, region, and sector has access to resources, amenities, and opportunities for meaningful participation. This threefold approach requires a supportive ecosystem. The first requirement is to sustain the momentum of structural reforms, continuous, adaptive, and forward-looking. Second, a robust and resilient financial sector is central to mobilizing savings, allocating capital efficiently, and managing risks. Third, cutting-edge technologies, including AI applications, can serve us as force multipliers for better governance. Reform Express. Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. After the Prime Minister's announcement on Independence Day in 2025, over 350 reforms have been rolled out. This includes GST simplification, notification of labor codes, and rationalization of mandatory quality control orders. High-level committees have been formed, and in parallel, the central government is working with the state governments on deregulation and reducing compliance requirements. The Reform Express is well on its way and will maintain its momentum to help us fulfill our kartavya. I now move to specific proposals. Under our first kartavya, to accelerate and sustain economic growth, I propose interventions in 6 areas. 1. Scaling up manufacturing in 7 strategic and frontier sectors. 2. Rejuvenating legacy industrial sectors. 3. Creating champion MSMEs. 4. Delivering a powerful push for infrastructure. 5. Ensuring long-term security and stability. And 6. Developing city economic regions. Scaling up of manufacturing in 7 strategic and frontier sectors. Biopharma Shakti, meaning biopharma strategy for health advancement through knowledge, technology, and innovation. India's disease burden is observed to be shifting towards non-communicable diseases like diabetes, cancer, and autoimmune disorders. Biologic medicines are key to longevity and quality of life at affordable costs. To develop India as a global biopharma manufacturing hub, I propose the Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. This will build the ecosystem for domestic production of biologics and biosimilars. The strategy will include a biopharma-focused network with 3 new national institutes of pharmaceutical education and research, popularly known as NIPERs, and upgrading 7 existing ones. It will also create a network of 1,000 accredited India clinical trials sites. We propose to strengthen the Central Drug Standard Control Organization to meet global standards and approve timeframes through approval timeframes through a dedicated scientific review cadre and specialists. India's Semiconductor Mission 1.0 expanded India's semiconductor sector capabilities. Building on this, we will launch ISM 2.0 to produce equipment and materials, design full-stack Indian IP, and fortify supply chains. We will also focus on industry-led research and training centers to develop technology and skilled workforce. The Electronics Components Manufacturing Scheme, launched in April 2025, with an outlay of 22,919 crores, already has investment commitments at double the targets. We propose to increase the outlay to 40,000 crores to capitalize on this momentum. A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research and manufacturing. To enhance domestic chemical production and reduction import dependency and reduce import dependency, we will launch a scheme to support states in establishing 3 dedicated chemical parks through challenge route on a cluster-based plug-and-play model. Strong capital goods Strong capital goods capability is a determinant of productivity and quality across different sectors. Towards building this capacity, I propose the following. High-tech tool rooms will be established by central public sector enterprises at 2 locations as digitally enabled automated service bureaus that locally design, test and manufacture high-precision components at scale and at lower cost. 2. A scheme for enhancement of construction and infrastructure equipments will be introduced to strengthen domestic manufacturing of high value and technologically advanced CIE. This can range from lifts in a multi-storied apartment or firefighting equipment in multiplexes, large or small, and to tunnel boring equipments for building metros and high-altitude roads. I also propose a scheme for container manufacturing to create a globally competitive container manufacturing ecosystem with a budgetary allocation of 10,000 crores over a 5-year period. For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for self-reliance in natural fibers, such as silk, wool and jute, man-made fibers and new age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further, I propose to set up mega textile parks in challenge mode. They can also focus on bringing value addition to technical textiles. I propose to launch the Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom and handicrafts. This will help in global market linkage and branding. It will streamline and support training, skilling, quality of process and production. This will benefit our weavers, village industries, one district, one product ODOP initiative and also our rural youth. India has the potential to emerge as a global hub for high quality, affordable sports goods. I propose a dedicated initiative for sports goods that will promote manufacturing, research and innovation in equipment design as well as material sciences. Rejuvenation of legacy industrial clusters. I propose to introduce a scheme to revive 200 legacy industrial clusters to improve their cost competitiveness and efficiency through infrastructure and technology upgradation. Creating champion SMEs and supporting micro enterprises. Recognizing MSMEs as a vital engine of growth, I propose a 3-pronged approach to help them grow as champions. Equity support. I propose to introduce a dedicated 10,000 crores SME growth fund to create future champions, incentivizing enterprises based on select criteria. I also propose to top up the Self-Reliant India Fund set up in 2021 with 2,000 crores to continue support to micro enterprises and maintain their access to risk capital. Liquidity support. With TREDS, more than 7 lakh crore has been made available to MSMEs. To leverage its full potential, I propose 4 measures. 1. Mandate TREDS as the transaction settlement platform for all purchases from MSMEs by CPSEs, serving as a benchmark for other corporates. 2. Introduce a credit guarantee support mechanism through CGTMSE for invoice discounting on TREDS platform. 3. Link GEM with TREDS for sharing information with financiers about government purchases from MSMEs, encouraging cheaper and quicker financing. 4. Introduce TREDS receivables as asset-backed securities, helping develop a secondary market, enhancing liquidity and settlement of transactions. Professional support. Government will facilitate professional institutions such as the ICAI, ICSI, ICMAI to design short-term modular courses and practical tools to develop a cadre of corporate mitras, especially in Tier 2 and Tier 3 towns. These accredited para-professionals will help MSMEs meet compliance requirements at affordable costs. Infrastructure. During this past decade, our government has undertaken several initiatives for large-scale enhancement of public infrastructure, including through new financing instruments such as Infrastructure Investment Trust in WITS and Real Estate Investment Trust REITs, and institutions like NIIF and NABFID. We shall continue to focus on developing infrastructure in cities with over 5 lakh population, that is Tier 2, Tier 3 cities, which have expanded to become growth centers. Public capital expenditure has increased manifold from 2 lakh crore in 2014-15 to an allocation of 11.2 lakh crore in BE 25-26. In this coming year, that is financial year 2026-27, I propose to increase it to 12.2 lakh crores to continue the momentum. To strengthen the confidence of private developers regarding risks during infrastructure development and construction phase, I propose to set up an infrastructure risk guarantee fund to provide prudentially calibrated partial credit guarantee to lenders. Over the years, REITs have emerged as a successful instrument for asset monetization. I propose to accelerate recycling of significant real estate assets of the CPSEs through the setting up of dedicated REITs. To promote environmentally sustainable movement of cargo, I propose to 1. Establish new dedicated freight corridors connecting Dankuni in the east to Surat in the west. Operationalize 20 new national waterways over the next 5 years, starting with National Waterways 5 in Orissa to connect mineral-rich areas of Talcher and Angul and industrial centers like Kalinga Nagar to the ports of Paradeep and Dhamra. Training institutes will be set up as regional centers of excellence for development of required manpower for these waterways. This will benefit youth in the entire stretch of the waterways to train and acquire skills. Further, a ship repair ecosystem catering to inland waterways will also be set up at Varanasi and Patna. And C, launch a coastal cargo promotion scheme for incentivizing a modal shift from rail to road to increase the share of inland waterways and coastal shipping from 6% to 12% by 2047. To enhance last mile and remote connectivity and promote tourism, I propose to give incentives to indigenize manufacturing of seaplanes. A seaplane VGF scheme will be also introduced to provide support for operations. Carbon capture, utilization and storage. Aligning with the roadmap launched in December 2025, the carbon capture, utilization and storage technologies at scale will achieve higher readiness and in end-use application across 5 industrial sectors, including power, steel, cement, refineries and chemicals. An outlay of 20,000 crore is proposed over the next 5 years for this purpose. City economic regions. Cities are India's engines of growth, innovation and opportunities. We shall now focus on Tier 2, Tier 3 cities and even temple towns which need modern infrastructure and basic amenities. This budget aims to further amplify the potential of cities to deliver the economic power of agglomerations by mapping city economic regions based on their specific growth drivers. An allocation of 5,000 crore per CER over 5 years is proposed for implementing their plans through a challenge mode with a reform cum result based financing mechanism. In order to promote environmentally sustainable passenger systems, we will develop 7 high-speed rail corridors between cities as growth connectors, namely Mumbai to Pune, Pune to Hyderabad, Hyderabad to Bengaluru, Hyderabad to Chennai, Chennai to Bengaluru, Delhi to Varanasi, Varanasi to Siliguri. Financial sector. The Indian banking sector today is characterized by strong balance sheet, historic highs in profitability, improved asset quality, and coverage exceeding 98% of villages in the country. At this juncture, we are well placed to futuristically evaluate the measures needed to continue on the path of reform-led growth of this sector. I propose setting up a high-level committee on banking for Vikasit Bharat. High-level committee on banking for Vikasit Bharat to comprehensively review the sector and align it with India's next phase of growth while safeguarding financial stability, inclusion and consumer protection. The vision for NBFCs for Vikasit Bharat has been outlined with clear targets for credit disbursement and technology adoption in order to achieve scale and improve efficiency in the public sector NBFCs. As a first step, it is proposed to restructure the Power Finance Corporation and Rural Electrification Corporation. I propose a comprehensive review of the foreign exchange management non-debt instruments rules to create a more contemporary, user-friendly framework for foreign investments consistent with India's evolving economic priorities. Corporate bond market. I propose to introduce a market-making framework with suitable access to funds and derivatives on corporate bond indices. I also propose to introduce total return swaps on corporate bonds. Municipal bonds. To encourage the issuance of municipal bonds of higher value by larger cities, I propose an incentive of 100 crore rupees for a single bond issuance. 100 crore rupees for a single bond issuance of more than 1,000 crore. The current scheme under Amrit which incentivizes issuances up to 200 crores only, will also continue to support smaller and medium towns. That will also continue to support the smaller and medium towns. Ease of doing business. Individual persons resident outside India, PROI, will be permitted to invest in equity instruments of listed Indian companies through the Portfolio Investment Scheme. It is also proposed to increase the investment limit for an individual PROI under the scheme from 5% to 10%, with an overall investment limit for all individual PROIs to 24% from the current 10%. Emerging technologies including AI. 21st century is technology driven. Adoption of technology is for the benefit of all people. Farmers in the field, women in STEM, youth keen to upskill, and Divyangjan to access newer opportunities. The government has taken several steps to support new technologies through AI Mission, National Quantum Mission, Anusandhan National Research Fund, and Research and Development and Innovation Fund. Our second kartavya is to fulfill aspirations and build capacities. Close to 25 crore individuals have come out of multi-dimensional poverty through a decade of our government's sustained and reform-oriented efforts. Our government has therefore decided to place a renewed emphasis on the service sector to provide a pathway to fulfilling aspirations of a youthful India with the following measures. I propose to set up a high-powered education to employment and enterprises standing committee to recommend measures that focus on services sector as a core driver of Vikasit Bharat. This will make us a global leader in services with a 10% global share by 2047. The committee will prioritize areas to optimize the potential for growth, employment, and exports. They will also assess the impact of emerging technologies, including AI, on jobs and skill requirements and propose measures thereof. To create a range of skilled career pathways, a new range of skilled career pathways for our youth, I propose interventions in the following sectors. Health. Existing institutions for allied health professionals will be upgraded and new AHP institutions established in private and government sectors. This will cover 10 selected disciplines, including optometry, radiology, anesthesia, OT technology, applied psychology and behavioral health, and add 1 lakh AHPs over the next 5 years. A strong care system covering geriatric and allied care services will be built. A variety of NSQF aligned programs will be developed to train multi-skilled caregivers, combining core care and allied skills such as wellness, yoga, and operation of medical assistive devices. In the coming year, 1.5 lakh caregivers will be trained. hubs for medical value tourism. To promote India as a hub for medical tourism services, I propose to launch a scheme to support states in establishing 5 regional medical hubs in partnership with the private sector. These hubs will serve as integrated healthcare complexes that combine medical, educational and research facilities. They will have Ayush centers, medical value tourism facilitation centers and infrastructure for diagnostics, post-care and rehabilitation. These hubs will provide diverse opportunities, job opportunities for health professionals, including doctors and AHPs. Ancient Indian yoga, already respected in several parts of the world, was given a mass global recognition when Honorable Prime Minister took it to the UN. Post-COVID, Ayurveda gained a similar global acceptance and recognition. Exporting quality Ayurveda products helps farmers who grow the herbs and youth who process the products. To meet growing global demand, a few more steps are being taken. I propose to 1. Set up 3 new All India Institutes of Ayurveda. 2. Upgrade Ayush pharmacies and drug testing labs for higher standards of certification ecosystem and make available more skilled personnel. 3. Upgrade the WHO Global Traditional Medicine Center in Jamnagar to bolster evidence-based research, training and awareness for traditional medicine. Animal husbandry. Livestock contributes to close to 16% of farm income, including of poor and marginal households. To scale up availability of veterinary professionals by more than 20,000, I propose to roll out a loan-linked capital subsidy support scheme for establishment of veterinary and para-veterinary colleges, veterinary hospitals, diagnostic laboratories, and breeding facilities in private sector. Collaboration between Indian and foreign institutions will also be facilitated. Orange economy. India's animation, visual effects, gaming and comics sector, AVGC sector, is a growing industry projected to require 2 million professionals by 2030. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up AVGC content creator labs in 15,000 secondary schools all over the country and 500 colleges. The Indian design industry is expanding rapidly, and yet there is a shortage of Indian designers. I propose to establish, through Challenge Route, a new National Institute of Design to boost design education and development in the eastern region of India. Education. Our government will support states through Challenge Route in creating 5 university townships in the vicinity of major industrial and logistics corridors. These planned academic zones will host multiple universities, colleges and research institutions, skill centers and residential complexes. In higher education, STEM institutions, prolonged hours of study and laboratory work pose some challenges for girl students. Through VGF, viability gap funding and capital support, 1 girls' hostel will be established in every district. To promote astrophysics and astronomy, via immersive experiences. 4 telescope infrastructure facilities will be set up or upgraded. The National Large Solar Telescope, the National Large Optical Infrared Telescope, the Himalayan Chandra Telescope, and the Cosmos 2 Planetarium. Tourism. The tourism sector has the potential to play a large role in the employment generation, forex earnings, and expanding the local economy. I propose to set up a National Institute of Hospitality by upgrading the existing National Council for Hotel Management and Catering Technology. It will function as a bridge between academia, industry, and government. I also propose a pilot scheme for upskilling 10,000 guides in 20 iconic tourist sites through a standardized, high-quality, 12-week training course in hybrid mode in collaboration with the Indian Institute of Management. A national destination digital knowledge grid will be established to digitally document all places of significance, cultural, spiritual, and heritage. This initiative will create a new ecosystem of jobs for local researchers, historians, content creators, and technology partners. India has the potential and opportunity to offer world-class trekking and hiking experience. We will develop ecologically sustainable mountain trails in Himachal Pradesh, Uttarakhand, and Jammu Kashmir. Also in Araku Valley in the Eastern Ghats and Podigai Malai in the Western Ghats. Turtle trails along key nesting sites in the coastal areas of Odisha, Karnataka, and Kerala. And 3 bird watching trails along the Pulikat Lake in Andhra Pradesh, Tamil Nadu. It's on the border. Under the visionary leadership of Honorable Prime Minister, we established the International Big Cat Alliance in 2024. This year, India is hosting the first ever Global Big Cat Summit, where heads of governments and ministers from 95 range countries will deliberate on collective strategies for conservation. Heritage and culture tourism. I propose to develop 15 archaeological sites, including Lothal, Dholavira, Rakhi-Gadi, Adichanallur, Saranath, Hastinapur, and Leh Palace into vibrant experiential cultural destinations. Excavated landscapes will be open to the public through curated walkways. Immersive storytelling skills and technologies will be introduced to help conservation labs, interpretation centers, and guides. The sports sector provides multiple means of employment, skilling, and job opportunities. Taking forward the systematic nurturing of sports talent which is set in motion through the Khelo India program earlier, I propose to launch a Khelo India mission to transform the sports sector over the next decade. The mission will facilitate an integrated talent development pathway supported by training centers which are foundational, intermediate, and elite levels. B, systematic development of coaches and support staff. C, integration of sports science and technology. D, competitions and leagues to promote sports culture and provide platforms. And E, development of sports infrastructure for training and competition. Our third Kartavya aligns with our vision of Sabka Saath, Sabka Vikas towards Vikasit Bharat. This requires targeted efforts for 1. Increasing farmer incomes through productivity enhancement and entrepreneurship, with special attention to small and marginal farmers. B. Empowering Divyangjan through access to livelihood opportunities, training, and high-quality assistive devices. C. Empowering the vulnerable to access mental health and trauma care. D. Focus on the Purvodaya states and the Northeast region to accelerate development and employment opportunities. Fisheries. We will undertake initiatives for integrated development of 500 reservoirs and Amrit Sarovars. 2. Strengthen the fisheries value chain in coastal areas and enable market linkages involving startups and women-led groups together with fish farmer producer organizations. Animal husbandry. To provide quality employment opportunities in rural and peri-urban areas, we will support the animal husbandry sector in entrepreneurship development through A. A credit-linked subsidy program, B. Scaling up and modernization of livestock enterprises, C. Enhanced creation of livestock, dairy and poultry enhanced creation of livestock, dairy and poultry focused integrated value chains, and D. Encourage creation of livestock farmer producer organizations. High value agriculture. To diversify farm outputs, increase productivity, enhance farmers' incomes, and create new employment opportunities, we will support high value crops such as coconut, sandalwood, cocoa, cashew in the coastal areas, agar trees in northeast, and nuts such as almonds, walnuts and pine nuts in our hilly regions. All of them will be supported. India is the world's largest producer of coconuts. About 30 million people, including nearly 10 million farmers, depend on coconuts for their livelihood. To further enhance competitiveness in coconut production, I propose a coconut promotion scheme to increase production and enhance productivity through various interventions, including replacing and non-productive trees with new saplings or plants or varieties in major coconut growing states. A dedicated program is proposed for Indian cashew and cocoa to make India self-reliant in raw cashew and coconut production and processing, enhance export competitiveness, and transform Indian cashew and Indian cocoa into premium global brands by 2030. Sandalwood. Sandalwood is closely linked to India's social and cultural heritage. Our government will partner with state governments to promote focused cultivation and post-harvest processing to restore the glory of the Indian sandalwood ecosystem, to rejuvenate old, low-yielding orchards and expand high-density cultivation of walnuts, almonds and pine nuts. We will support a dedicated program to enhance farmer incomes and in bringing value addition by engaging youth. Bharat Vistar, that is virtually integrated system to access agricultural resources. I propose to launch Bharat Vistar, a multilingual AI tool that shall integrate the AgriStack portals and the ICAR package on agricultural practices with AI systems. This will enhance farm productivity, enable better decisions for farmers, and reduce risk by providing customized advisory support. She-marts for rural women-led enterprises. Building on the success of Lakpati Didi program, I propose to help women take the next step from credit-linked livelihoods to being owners of enterprises, self-help entrepreneur, she, marts will be set up as community-owned retail outlets within the cluster-level federations through enhanced and innovative financing instruments. Empowering Divyangjan. Divyangjan Kaushal Yojana. Information technology, AVGC sectors, hospitality and food and beverages sectors often offer task-oriented and process-driven roles which are suitable for Divyangjan. We will ensure dignified livelihood opportunities through industry-relevant and customized training specific to each Divyangjan group. Divyang Sahara Yojana. Timely access to high-quality assistive devices for all eligible Divyangjan is a fundamental need. I propose to 1. Support the Artificial Limbs Manufacturing Corporation of India, Alimco, to set up and to scale up production of assistive devices, invest in R&D and AI integration, strengthen PM Divyasha Kendras, and support setting up of assistive technology marts as modern retail style centers where Divyangjan and senior citizens can see, try and purchase assistive products. Reaffirming our commitment to mental health and trauma care. There are no national institutes for mental health care in North India. We will therefore set up a NIMHANS 2 and also upgrade national mental health institutes in Ranchi and in Tezpur as regional apex institutions. Emergencies expose families, particularly the poor and vulnerable, to unexpected expenditure. We will strengthen and increase these capacities by 50% in district hospitals by establishing emergency and trauma care centers. Focus on Purvodaya states and northeastern regions. Purvodaya. I propose the development of an integrated East Coast industrial corridor with a well-connected node at Durgapur, creation of 5 tourism destinations in 5 Purvodaya states, and the provision of 4,000 e-buses. Buddhist sites in northeastern region. The northeastern region is a civilizational confluence of Theravada and Mahayana or Vajrayana traditions. I propose to launch a scheme for development of Buddhist circuits in Arunachal Pradesh, Sikkim, Assam, Manipur, Mizoram and Tripura. The scheme will cover preservation of temples and monasteries, pilgrimage interpretation centers, connectivity and pilgrim amenities. 16th Finance Commission. On 17th November 2025, the 16th Finance Commission submitted its report to the President. As mandated under Article 281 of the Constitution, the government is to lay the report along with the explanatory memorandum on the action taken report on the recommendations of the Commission in Parliament, which, Sir, Honourable Speaker, you've allowed me to do at the commencement of this session. The government has accepted the recommendation of the Commission to retain the vertical share of devolution at 41%. As recommended by the Commission, I have provided 1.4 lakh crores of rupees to the states for the year 2026-2027 as Finance Commission grants. These include rural and urban local body and disaster management grants. Fiscal consolidation. Government has been delivering on our fiscal commitments consistently without compromising on social needs. To strive towards accepted standards of fiscal management in Budget 25-26, I had indicated that the central government would target reaching a debt to GDP ratio of 50 plus or minus 1% by 2030-31. In line with this, the debt to GDP ratio is estimated to be 55.6% of GDP in BE 26-27, compared to 56.1% of GDP in RE 25-26. A declining debt to GDP ratio will gradually free up resources for priority sector lending and expenditure by reducing the outgo on interest payments. One of the main operational instruments for debt targeting is the fiscal deficit. I am happy to inform this august House that I fulfilled my commitment made in 2021-2022 to reduce fiscal deficit below 4.5% of GDP by 25-26. In RE 25-26, the fiscal deficit has been estimated at par with BE of 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. The revised estimates of the non-debt receipts are 34 lakh crore rupees, of which the centre's net tax receipts are 26.7 lakh crore. The revised estimate of the total expenditure is 49.6 lakh crore rupees, of which the capital expenditure is about 11 lakh crores. Budget estimates 2026 to 2027. Coming to 26-27, the non-debt receipts and the total expenditure are estimated as 36.5 lakh crore and 53.5 lakh crore respectively. The centre's net tax receipts are estimated at 28.7 lakh crore rupees. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.7 lakh crore rupees. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 17.2 lakh crore rupees. I'll now move to Part B. Part B, direct taxes. Honorable Speaker, sir, I now present my proposals on direct taxes. New Income Tax Act. In July 2024, I announced a comprehensive review of the Income Tax Act 1961. This was completed in a record time, and the Income Tax Act 2025 will come into effect from 1st April 2026. The simplified income tax rules and forms will be notified shortly, giving adequate time to taxpayers to acquaint themselves with its requirements. The forms have been redesigned such that ordinary citizens can comply without difficulty. Ease of living. I propose that any interest awarded by the Motor Accident Claims Tribunal to a natural person will be exempt from income tax, and any TDS on this account will be done away with. I propose to reduce TCS rate on the sale of overseas tour program package from the current 5% and 20% to 2% without any stipulation of amount. I propose to reduce TCS rate for pursuing education and for medical purposes under the Liberalized Remittance Scheme, popularly known as LRS, from 5% to 2%. Supply of manpower services is proposed to be specifically brought within the ambit of payment to contractors for the purpose of TDS to avoid ambiguity. Thus, TDS on these services will be at the rate of either 1% or 2% only. I propose a scheme for small taxpayers wherein a rule-based automated process will enable obtaining a lower or nil deduction certificate instead of filing an application with the assessing officer. For the ease of taxpayer holding securities in multiple companies, I propose to enable depositories to accept Form 15G or Form 15H from the investor and provide it directly to various relevant companies. I propose to extend time available for revising returns from 31st December to up to 31st March with the payment of a nominal fee. I also propose to stagger the timeline for filing of tax returns. Individuals with ITR 1 and ITR 2 returns will continue to file till 31st July, and non-audit business cases or trusts are proposed to be allowed time till 31st August. TDS on sale of immovable property by a non-resident is proposed to be deducted and deposited through resident buyers and his or her PAN-based challan instead of requiring a TAN, which is a temporary accounting number. To address practical issues of small taxpayers like students, young professionals, tech employees, relocated NRIs, and such others, I propose to introduce a one-time 6-month foreign asset disclosure scheme for these taxpayers to disclose income or assets below a certain size. This scheme would be applicable for two categories of taxpayers, namely A, who did not disclose their overseas income or assets, and B, who disclosed their overseas income and or paid due tax but could not declare the asset acquired. For category A, the limit of undisclosed income or asset is proposed to be up to 1 crore rupees. They need to pay 30% of fair market value of asset or 30% of undisclosed income as tax and 30% as additional income tax in lieu of penalty, and would thereby get immunity from prosecution. For category B, asset value is proposed to be up to 5 crore rupees. Here, immunity from both penalty and prosecution will be available with a payment of fee of 1 lakh rupees. Rationalizing penalty and prosecution. Multiplicity of proceedings are hindrance to the ease of doing business. I propose to integrate assessment and penalty proceedings by way of a common order for both. There will be no interest liability on the taxpayer on the penalty amount for the period of appeal before the first appellate authority, irrespective of the outcome of appeal process. Further, quantum of prepayment is being reduced from 20% to 10% and will continue to be calculated only on core tax demand. As an additional measure for reducing litigation, I propose to allow taxpayers to update their returns even after reassessment proceedings have been initiated, and an additional 10% tax rate over and above the rate applicable for the relevant year. The assessing officer will then use only this updated return in his proceedings. There is already a framework for immunity from penalty and prosecution in the cases of underreporting. I propose to apply this framework for immunity to misreporting too. However, in such a case, the taxpayer will need to pay 100% of the tax amount as an additional income tax over and above the tax and interest due. Penalties for certain technical defaults, such as failure to get accounts audited, non-furnishing of transfer pricing audit report, and default in furnishing statement for financial transactions are proposed to be converted into fee. I propose to rationalize prosecution framework under Income Tax Act while maintaining a careful balance for deterrence in some serious offence. Non-production of books of account and documents and requirement of TDS payment where payment is made in kind are being decriminalized. Further, minor offences will attract fine only. The remaining prosecutions will be graded commensurate with the quantum of offence. They will entail only simple imprisonment with maximum imprisonment reduced to 2 years and power to courts to convert even those into fines. There is no penalty. There is no penalty presently for non-disclosure of non-immovable foreign assets with aggregate value less than 20 lakh rupees. I propose to also provide them with immunity from prosecution with retrospective effect from 1/10/2024. Cooperatives. Deduction is already allowed to a primary cooperative society engaged in supplying milk, oilseeds, fruits or vegetables raised or grown by its members. I propose to extend this deduction to also include supply of cattle feed and cotton seed produced by its members. I propose to allow inter-cooperative society dividend income as deduction under the new tax regime to the extent it is further distributed to its members. I further propose to allow exemption for a period of 3 years to dividend income received by a notified national cooperative federation on their investments made in companies up to 31/1/2026. This exemption would be allowed only for dividends further distributed to its member cooperatives. Supporting IT sector as India's growth engine. India is a global leader in software development services, IT-enabled services, knowledge process outsourcing services, and contract R&D services relating to software development. These businesses and their segments are quite interconnected with each other. All these services are proposed to be clubbed under a single category of information technology services with a common safe harbor margin of 15.5% applicable to all. The threshold for availing safe harbor for IT services is being enhanced substantially from 300 crore rupees to 2,000 crore rupees. Safe harbor for IT services shall be approved by an automated rule-driven process without any need for tax officer to examine and accept the application. Once applied by an IT services company, the same safe harbor can be continued for a period of 5 years at a stretch at its choice. For IT services companies who want to conclude advanced pricing agreement, APA, I propose to fast-track unilateral APA process for IT services and endeavor to conclude it within a period of 2 years. The period of 2 years can be extended by a further period of 6 months on taxpayers' request. I propose to extend the facility of modified returns available to the entity entering APA to its associated entities also. Attracting global business and investment. Recognizing the need to enable critical infrastructure and boost investment in data centers, I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. It will, however, need to provide services to Indian customers through an Indian reseller entity. I also propose to provide a safe harbor of 15% on cost in case the company providing data center services from India is a related entity. To harness the efficiency of just-in-time logistics for electronic manufacturing, I propose to provide safe harbor to non-residents for component warehousing in a bonded warehouse at a profit margin of 2% of the invoice value. The resultant tax of about 0.7% will be much lower than in competing jurisdictions. To provide fillip to toll manufacturing in India, I propose to provide exemption from income tax for 5 years to any non-resident who provides capital goods, equipment or tooling to any toll manufacturer in a bonded zone. To encourage vast pool of global talent to work in India for a longer period of time, I propose to provide exemption to global, non-India sourced income of a non-resident expert for a stay period of 5 years under notified schemes. I propose to provide exemption from minimum alternate tax, the MAT, to all non-residents who pay tax on presumptive basis. Tax administration. I propose to constitute a joint committee of Ministry of Corporate Affairs and Central Board of Direct Taxes for incorporating the requirements of income computation and disclosure standards, the ICDS, in the Indian Accounting Standards, IND AS itself. Separate accounting requirement based on ICDS will be done away with from the tax year 27-28. To support Prime Minister Modi's vision of homegrown accounting and advisory firms to become global leaders, I propose to rationalize the definition of accountant for the purposes of safe harbor rules. Other tax proposals. Change in taxation of buyback was brought in to address the improper use of buyback route by promoters. In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. TCS rate for sellers of specific goods, namely alcoholic liquor, scrap and minerals, will be rationalized to 2%, and that on tendu leaves will be reduced from 5% to 2%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. We reformed the taxation landscape for corporates in 2019 by providing them a simplified regime with lower tax rate so that they could productively focus on business rather than on claim of deductions and exemptions. To encourage companies to shift to the new regime, set-off of brought forward MAT credit, minimum alternate tax credit, is proposed to be allowed to companies only in the new regime. Set-off using available MAT credit is proposed to be allowed to an extent of 1/4 of the tax liability in the new regime. MAT is proposed to be made final tax, so there will be no further credit accumulation from 1st April 2026. In line with this change, the rate of final tax is being reduced to 14% from the current MAT rate of 15%. The brought forward MAT credit of taxpayers accumulated till 30th March 2026 will continue to be available to them for set-off as above. Indirect taxes. I shall now take up proposals related to indirect taxes. My proposals for customs and central excise aim to further simplify the tariff structure, support domestic manufacturing, promote export competitiveness, and correct inversion in duty. To continue weeding out long-continuing customs duty exemptions, I propose to remove certain exemptions on items which are being manufactured in India or where the imports are negligible. Similarly, to further simplify the process of ascertaining the rate of duty applicable on a particular item, I propose to incorporate certain effective rates in various customs notifications to the tariff schedule itself. I shall now take up sector-specific proposals. Promotion of exports of marine, leather, and textile products. I propose to increase the limit for duty-free imports of specified inputs used for processing seafoods for export from the current 1% to 3% of FOB value of the previous year's export turnover. I also propose to allow duty-free imports of specified inputs, which is currently available for exports of leather or synthetic footwear, to exports of shoe uppers as well. I propose to extend the time period for export of final product from the existing 6 months to 1 year for exporters of leather or textile garments, leather or synthetic footwear, and other leather products. Energy transition and security. I propose to extend the basic customs duty exemption given to capital goods used for manufacturing lithium-ion cells for batteries to those used for manufacturing lithium-ion cells for battery energy storage systems also. I propose to exempt basic customs duty on import of sodium antimonate for use in manufacture of solar glass. Nuclear power. I propose to extend the existing basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035 and expand it for all nuclear plants irrespective of their capacity. Critical minerals. It is proposed to provide basic customs duty exemption to the import of capital goods required for the processing of critical minerals in India. Biogas blended CNG. I propose to exclude the entire value of biogas while calculating the central excise duty payable on biogas blended CNG. Civil and defense aviation. I propose to exempt basic customs duty on components and parts required for the manufacture of civilian training and other aircrafts. It is proposed to exempt basic customs duty on raw materials imported for the manufacture of parts of aircraft to be used in maintenance, repair, or overall requirements by units in the defense sector. Electronics. To deepen value addition in the consumer electronics sector, I propose to exempt basic customs duty on specified parts used in the manufacture of microwave ovens. Special economic zone. To address the concerns arising about utilization of capacity by manufacturing units in the special economic zones due to global trade disruptions, I propose as a special one-time measure to facilitate sales by eligible manufacturing units in SEZs to the domestic tariff area at concessional rates of duty. The quantity of such sales will be limited to a prescribed proportion of their exports. Necessary regulatory changes will be undertaken to operationalize the measures while ensuring level playing field for the units working in the DTA. Ease of living. To rationalize the customs duty structure for goods imported for personal use, I propose to reduce the tariff rate on all dutiable goods imported for personal use from 20% to 10%. To provide relief to patients, particularly those suffering from cancer, I propose to exempt basic customs duty on 17 drugs or medicines. I propose also to add 7 more rare diseases for the purposes of exempting import duties on personal imports of drugs, medicines, and food for special medical purposes used in their treatment. Customs process. India's role and share in the global trade is poised for a major leap in line with our ambition and journey towards Vikasit Bharat. In this regard, I propose many measures for custom processes to have minimal intervention for smoother and faster movement of goods and greater certainty to the trade. Trust-based systems. I propose to enhance duty deferral period for Tier 2 and Tier 3 authorized economic operators, known as AEOs, from 15 days to 30 days. I propose to provide eligible manufacturer importers the same duty deferral facility. This should encourage them to get themselves accredited as a full-fledged Tier 3 AEO in due course. To provide greater certainty and for better business planning, I propose to extend validity period of advance ruling binding on customs from the present 3 years to 5 years. In the spirit of the whole of government approach, government agencies will be encouraged to leverage AEO accreditation for preferential treatment in clearing their cargo. Regular importers with trusted long-standing supply chains will be recognized in the risk system so that the need for verification of their cargo every time can be minimized. Export cargo using electronic sealing. Export cargo using electronic sealing will be provided through clearance from the factory premises to the ship. For import of goods not needing any compliance, filing of bill of entry by a trusted importer and arrival of goods will automatically notify customs for completing their clearance formalities. This will enable goods to be released immediately on arrival. The customs warehouse framework will be transformed into a warehouse operator-centric system with a self-declarations, electronic tracking, and risk-based audit. These reforms will move away from the current system of officer-dependent approvals and reduce transaction delays and compliance costs. Ease of doing business. Approvals required for cargo clearance from various government agencies will be seamlessly processed through a single and interconnected digital window by the end of the financial year. Processes involved in clearance of food, drugs, plant, and animal and wildlife products accounting for about 70% of interdicted cargo will be operationalized on this system by April 2026 itself. For goods not having any compliance requirement, clearance will be done by customs immediately after online registration is completed by the importer, subject to the payment of duty. customs integrated system will be rolled out in 2 years as a single integrated and scalable platform for all customs processes. Utilization of non-intrusive scanning with advanced imaging and AI technology for risk assessment will be expanded in a phased manner with the objective to scan every container across all the major ports. New export opportunities to support Indian fishermen to fully harness the economic value of marine resources beyond our territorial waters. The following measures will be taken. A. Fish catch by an Indian fishing vessel in exclusive economic zone or on the high seas will be made free of duty. Landing of such fish on foreign port will be treated as export of goods. Safeguards will be put in place to prevent misuse during fish catch, transit or transshipment. To support aspirations of India's small businesses, artisans and startups to access global markets through e-commerce, I am pleased to announce complete removal of the current value cap of 10 lakh rupees per consignment on courier exports. In addition, handling of rejected and returned consignments will be improved with effective use of technology for identifying such consignments. I propose to revise provisions governing baggage clearance during international travel to address genuine concerns of passengers. The revised rules will enhance duty-free allowances in line with the present-day travel realities and provide clarity in temporary carriage of goods brought in or taken out. There are honest taxpayers who are willing to settle disputes by paying all their dues, but they get deterred due to negative connotation associated with penalty. They will now be able to close cases by paying an additional amount in lieu of penalty. Honorable Speaker, sir, with this I commend the budget to this august House. Jai Hind. One and a half hours.
आइटम नंबर 3 माननीय वित्त मंत्री जी.
Item number 2, sir.
3.
Sir, with your permission, I rise to lay on the table of the following statements under Section 3(1) of the Fiscal Responsibility and Budget Management Act of 2003. Medium-term fiscal policy cum fiscal policy strategy statement and macroeconomic framework statement.
Item number 4, माननीय वित्त मंत्री जी.
Sir, with your permission, I move for leave to introduce the Finance Bill 2026.
प्रश्न ये कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए. जो सदस्य इस पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में हाँ वालों के पक्ष में अनुमति प्रदान की जाती है. माननीय मंत्री जी, अब विधेयक पुनर्स्थापित करें.
Sir, I introduce the bill.
माननीय सदस्यगण, आपको सूचित किया जाता है कि माननीय वित्त मंत्री जी के बजट भाषण की कॉपी पब्लिकेशन काउंटर पर ली जाती है. बजट भाषण और बजट से संबंधित दस्तावेज आपके मोबाइल फोन और मेंबर पोर्टल्स पर ही उपलब्ध है. सभा की कार्रवाई कल सोमवार दिनांक 2 फरवरी 2026 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है.
All right, so that's the budget 2026-2025 that has been announced by our Finance Minister Nirmala Sitharaman. Of course, there is a budget outlay that has been announced, which is an increase of 9%. The budget outlay for 2026-2025 is 12.2 lakh crores. It is an increase of 9% since 2025-2026, which was an announcement that was made last year. at 11.2 lakh crores. Major focus, of course, has been in terms of the development of the MSME sector. Pharma sector has received a massive chunk in the capex that has been announced by Nirmala Sitharaman. In terms of the outlook that had been presented just 2 days ago during the economic survey, it has been projected that the GDP of the country is going to rise to the tune of 6.8% to 7.2%. So those are the big ticket items that have been announced in the budget 2026-2027. And of course, talking about artificial intelligence, that has been brought into focus by the minister. Of course, keeping in mind that the India AI Impact Summit is also going to take place in February. So the massive focus of the government in building supply chains and building an institutionalized indigenous artificial intelligence infrastructure to compete with the developed countries of the world. In fact, there have been, if you take a look at these figures, what are the items that are getting cheaper, which includes leather, microwaves, seafood. There has been a heavy expenditure that has been announced in all these sectors that has led to the reduction in prices, availability of these goods at a cheaper rate. That is the indication that has been given by the Foreign Ministry, by the Finance Ministry, by the Finance Minister herself in that budget. I'm being joined by Nakul Sharma. He's a tax expert. Nakul Sharma, quickly seeking your takeaways from the big budget announcement earlier. In fact, let me get in Saurabh Derua. Saurabh Derua, what are the big ticket items that have been announced by Nirmala Sitharaman? What are the key takeaways?
Yeah, I think this is more of a infra and fundamental budget. Some of the big ticket item is the increase of the expenditure from 11 lakh crore to 12.2 lakh crore on the basic infra in the country. Plus, there are numerous announcements around job creation from health to even tourism. And from a personal tax point of view, I think the simplified tax structure, once known better, can really make life simpler for all the salaried and middle class employees and the people in the country.
Right, absolutely. Talking about the markets, you know, they were subdued earlier ahead of the budget announcement. How do you think the markets are going to react?
I think since there are no generous or non-fiscal decisions taken, I think market should respond positively to this because there are not a lot of freebies. And this is more of a positive infra building budget, which is looking at a long-term horizon. And it's not looking at, say, pleasing people in the short term by giving some more tax breaks, but rather investing for the future of the country by investing in the rail network, waterways, institutes around health and other corridor building. So I think market should look at this very positively.
Right. And talking about, you know, the fluctuating gold prices reaching record levels, so was witnessed in the silver prices as well. We saw a slight diminishing of that record prices. You know, it fluctuated by about 15% on Friday. How do you think that is going to move forward?
That will be an interesting setup. It's very hard to comment. I think since this is a strong budget, like from a national point of view, commodities might get temporary setback, but I think those are driven more by global outcomes and how forex is moving, and eventually NRIs also have more ways to invest in India. So it'll be interesting to see how the entire metal industry performs.
Okay. Oh, also talking about the AI bubble, is India at this point of time strengthened and has the capacities to fight global competition? And do you also think this is a bubble that India has insulated itself from?
First of all, I think AI is very, very real, and that is also reflective in the finance ministry's decision to set up a committee to assess its impact on the employment and how do we adopt to the movement of AI. And I think India has taken a bit of a wait and watch approach here while we are kind of moving in this direction. But instead of taking a hard call, it is actually waiting for a committee to probably set something up. But what was interesting was the 2,000 crore IT sector care program for the entire tax side of things. So that can be interesting because as we are a very IT heavy country, and AI is looked at a parallel option to that. So it will be interesting that how government is supporting this entire industry by increasing the IT sector care program from 300 crore to 2,000 crores.
Right. Nasir Salim also on the telecast with me. He's the managing partner, Flexi Capital. Nasir, your key takeaways from the budget.
Good morning. Great to be back on Newsx. Megha, thank you very much for having me. So, first few thoughts, we had, before I got into the discussion on the budget, one of our key expectations was some rate rationalization on STTs. Now, obviously, that has not gone really well in the markets. Because you may have seen the markets right now are down 1,000 points on Sensex and Nifty. And PSU banks have also taken a bit of a hit. So, I wish... that kind of punitive action should not have been proposed, I guess. But it's a little positive also by and large in certain other sectors. I mean, we're seeing this good amount of allocation in the pharma sector, which has been adequately been addressed. I think the other very good one is on capex. It was expected that capex would eventually continue to be the center stage of budget announcements for this for the next fiscal. So I think that is again something which alludes and bodes well with this entire manufacturing PLI linked incentive schemes, and also employment generation at some point of time. I think clearly.
Also, talking about, do you think India at this point of time stands as a healthy economy? Inflation at below 2.5%. We've taken a look at a capex that is a healthy increase of 9%, as you said. And also, are we at this point of time, the announcement being made also complement the number of trade deals that India has been finalizing, whether it is European Union or United Kingdom or New Zealand?
So, Megha, you asked very important, pertinent questions. I'll address them one by one. I think let's start with the last. I think the need of the hour is, of course, to ensure that we have a separate window for all tariff-related sectors that have been hit really hard, right? And I think the impact that we are seeing, whether it's in gems and jewelry, textiles, I think all of them have been hit really hard, and I think that's where I would have been happier to see some extension of credit guarantee options. Some intervention, a dedicated intervention by the budget announcement today, which I think, I would have been happier to kind of see. So to answer your question on competitiveness as far as exporters are concerned, we need to do a little bit more perhaps. Number two, on your question on the shape of the economy, I must tell you, as per the latest economic survey, we are expected to grow between 6.8 and 7.2. For FY26, I don't see any shocks to that number. I think the only issue that remains, of course, is geopolitical pressure and tariff-related issues, which we will hopefully address as we go along.
Okay.
And as far as the economy is concerned, on inflation numbers, I must tell you, core inflation is looking good. It is much below and within the RBI tolerance band of plus minus 2% from 4% as the base. So that continues to augur well, and does also give us some legway and headroom for fiscal expansion as well. Even that number seems to be contained to 4.3% for next fiscal. So I think broadly to your point on the economy, we look from a macro perspective very stable with a positive outlook.
Okay, all right. Stay on with me. I'm also being joined by Pallavi Dinodia. She's the co-chair, Direct Taxes Committee. Pallavi, thank you very much. And of course, the first question is very direct, very specific. Your key takeaways from the budget announcement.
Thank you, Megha. Thank you for having me on your channel. So the budget seems to be following its path of reform, simplification and certainty. The key sectors that we all expected some impetus to be given, some framework to be given, like AI, like critical earth minerals, skilling, MSME, all these sectors have got the year of the FM, and we have seen that we are getting some sort of framework in these sectors. So I'm happy, and also the youth of India, we have been given that impetus as well. Health, mental health, these things are forward-looking things we are not shying away from. The new committee for the banking reforms, or the new what banking needs to do for the next fillip that needs to come to our economy, that's a very forward-looking step in my view. So overall, I think reformist, progressive, simplified and a trust-first budget.
Right, absolutely. When we talk about infrastructure building, and pharma has been at the core, there has been 1,000 crore rupee budget that has been allocated, outlay that has been allocated for this sector as well. How does it perform vis-a-vis the number of deals that are being signed between India and other countries, and pharma being the main focus area?
So I think that's what we needed, so the 1,000 crores, I think maybe we are hoping for even more in biopharma, because as the population of the world grows, and like the FM said, the non-communicable diseases are growing far more rapidly than the communicable ones. So I think the strides that we need to make in biopharma, like we made in the ITES or in the service sector, I think if we can strengthen our biopharma and increase our manufacturing competitiveness, I think we can be the next sort of hub to the world for that as well.
Talking about capex, it has been increased by another 9% this year. 12.2 lakh crores is the budget allocation capex. Do you think that's enough?
Megha, is it ever enough? We always want more. But it is higher than what we did last year. I think the last year number was 11.1 or 11.2, and this year we're at 12.2. So I think the government is increasing its spending in capex year on year, and we are seeing the gains. The capital formation as a percentage of GDP is now at 30%. So, and the private sector has also seen revival. So the impetus that was given in the last few years by encouraging manufacturing and capital intensive manufacturing is, I think, now here to stay. So now I think in the next 2 years we should see that gain. And as the government continues its capital spending, for every rupee that it spends, we see 3x the gain. So next 3 to 5 years, if the capex remains like this, our growth trajectory can be, can exceed what our expectations have been.
Also talking about the gold prices, quite the fluctuation. Gold, in fact, hit record numbers in the last week. It has come down to 15%. What is going to be the impact of the budget on the gold and the silver market?
So it's hard to say, because as I was seeing the stock market, it's actually going down. But I think that as a traditional Indian, we see gold and silver as safe bets. So I think the rally now, I think it was already, the gold had risen substantially. So it remains to be seen what happens with the gold and silver prices now given this budget. But I'm expecting some correction, frankly.
Okay, and talking about the rumored AI bubble, if there is one, India at this point of time through the budget has also made strong allocations. How are we placed vis-a-vis international market against United States and China particularly?
So Megha, I think that they definitely have the first mover advantage over us. But like if anything, you see our UPI stride. The world was at credit cards and we leapfrogged to UPI, and today our digital payment system is the best in the world, and we are teaching other countries. So maybe we've come into the AI framework a little later than US and China, but I think that we have the ability, given our our largest strength is our population, our young minds. I think we have the ability to leapfrog in that area as well, and hopefully give the other two economies good competition.
All right, thank you, Pallavi, for joining us. Coming back to you, Nasir, you wanted to make a point.
No, I just wanted to quickly add, Megha, that gold and the expectation from a lot of bullion people that we've been speaking to for the budget was that there's an import duty currently at 6%, and the anticipation, or the expectation rather, not anticipation, was that it can come down to 4%. Now, that is where, we are seeing, I think there has been a bit of a mismatch in terms of expectation. Gold and silver, on the contrary, I must tell you, has gone through its fundamental price points much beyond what it was supposed to be available at now. We had done at Flexi Capital that I work with, we had done a simple analysis of what should be the gold and silver prices. I think that today continues to be in FOMO pricing, which is fear of missing out. There's a gush of retail investors now participating in that. I think the only industry demand that I clearly said was that, because gold and silver, if the import duty was to be reduced from 6 to 4%, it could actually augment, the price to kind of correct a little bit, because inflation in gold and silver continue to hit that entire industry. In addition to already that they've been hit in terms of the US imports, tariff imports that have come in, and they've been hit the hardest, whether it's the jewelry, gems, sector. And I think that's where one of the expectations was, which was baked in, because purely from a price perspective, Megha, I must tell you, gold and silver are far beyond their fundamental price.
Okay, all right. And also, do you think there are going to be, how soon do we see the benefits of the FTAs that have been signed? And this is particularly when we talk about, you said gemstones, we're talking about leather industry, we're talking about the handicrafts, the handlooms, the textiles and the apparel. And at this point of time, it's being perceived that we are going to be stronger vis-a-vis our competitors in Vietnam and Bangladesh and Pakistan as well. So how soon do we see this offset benefiting Indian exporters?
You see, Megha, right now, I think the intention behind the announcements today, as far as the exporters are concerned, are predominantly to diversify their risk. So you de-risk your business by getting into other geographies, work in, aggressively with, do FTAs with certain other economies, and de-risk your business. Because I think, the biggest challenge right now is that we are very dependent to the US for a lot of our exports. And I think, so to answer your question, I don't think it will happen overnight. This is going to take its own time. I think more than timing, Megha, what's more important is directionally what we are trying to achieve is to say that, the direction in which we're trying to diversify our exporters and reduce the difference between export and imports as far as the US is concerned with India. I think that is a step in the right direction. Clearly, again, the expectation that was built in or baked in was some kind of a rebate, tariff rebate scheme that could be brought in for some of these players that have been hit hard, in addition to an extension of capital guarantee, an extension of credit guarantee schemes that may have been made available to them, to offset some of the losses.
Okay. Nakul Sharma, tax expert, also on the telecast with me. Nakul, your key takeaways, particularly with regards to clearly not a populist budget?
Yeah, actually, first of all, as the income tax act is going to be applicable from 1st April, so the government wants to simplify the income tax act for all the people, for the SSEs and for the taxpayers. In current budget, the way things have changed is they have nationalized the TCS rates for foreign tours and for educational purposes, which was 5% or 20% earlier. It is brought down to 2% for the income tax returns. The due date, which was for non-business people, it was 31st July for everyone. Right now, they have divided that into two parts.
Nakul, I'm sorry, I will have to interrupt you. There seems to be a network connectivity issue. We are not able to hear you clearly, but sorry, coming back to you. I do want to focus on artificial intelligence. Artificial intelligence, do you think what has been announced by the government is enough at this stage? And how does it complement India's goals and aspirations? Like I said, the AI Impact Summit that is coming up very soon in February.
Yeah, so I think in the budget, the whole announcement has been more about forming a wait and watch approach and forming a committee to assess it. But at the same time, we have announced that we will come up with our own LLMs. We have an AI summit right around the corner. So I think government is looking at AI. from this budget point of view, there are less announcement than what at least I expected on the AI side. But I think we'll see a lot more in the coming year, and it will be interesting to see the details of what the committee that they makes and what do they come up with. But I'll still go back to the point that 2,000 crore increase on the IT sector side, in the care side. I think that is something is an indirect way to complement the AI building setup, and also the tax breaks that they have given for setting up cloud infra in India with having distributors in India till 2047. That can be very, very powerful because a big part of AI is building infra locally. At the end of our country like India, we have DPDPA. We don't want data to go outside the country. So unless we have the right cloud infra, no matter how good an LLM we develop, we'll not be able to scale it with the population that we have. So it's a very important step. Probably it will not be as highlighted as other steps. But if we talk about 5 years impact, this will probably have bigger impact than anything which can be more direct.
Okay. Nakul, coming back to you, if you can hear me now. Again, like I said, no changes in tax slabs. There have been no cuts that have been announced in direct taxes as well. How do you view the budget? Clearly, like I said, not a populist budget.
Yeah, so as speaking, they've brought a new income tax act from 1st of April. Many of the rationalization in rates were done in the previous budget as well. In current year, it was expected for rationalization for short-term and long-term capital gains taxes. But right now, what they have done is the TCS rates have been rationalized for a few products like overseas tours packages and the education purposes, which have been brought down from 20 and 5% to 2%. Again, in this budget, there has been more compliance-related rationalizations rather than the rate rationalizations. So considering that the income tax return filing has been divided into two parts up to 31st July and 31st August. So the business returns can be filed up to 31st August. They've got an extension of 1 month for annual filing returns. So more of the rates rationalization has taken place in TCS part, and in this budget, the compliance has been reduced rather than rates.
Okay. All right. Let me also introduce our fourth guest of the day, Manoj Dhanda, founder and CEO, Uto Cloud. Manoj, again, key takeaways and particularly focused on infrastructure, particularly focused on technology and artificial intelligence. How does it fare for the Indian economy?
I noticed that something announced for data centers for the foreign companies specific, and that is something not good for Indian organizations who build their own Indian infrastructure for sure, because that is specific. If foreign companies put their own infrastructure inside Indian data centers, and Indian players or the resellers that basically selling these top 3 hyperscalers to India, basically these foreign providers will get the benefit. The builders like us and others who building the cloud platforms within the India and building inside the data centers and then selling the services, helping the Indian economy. Because nowadays it's time not to war on the field. Time is on the war in the digital economy. And now more than 80% of our digital economy is running on the foreign infrastructure. No matter that is inside hosted in India data center or not, but control is always foreign. So what we exactly believe as Indian players, this is something hitting player like us and the others who building in India.
Okay.
This is completely in directions to the foreign providers, not to the Indian one.
Okay, interesting.
Something a big risk for Indian economy.
Okay, all right. Now, Nasir, I do want to touch upon this electronics outlay increased to 40,000 crore rupees. This is going to help in the manufacturing, sustainability and innovation of the electronics, building rare earth corridors, chemical parks, strengthening India's semiconductor ecosystem. That has been the sustained push of the government with a number of semiconductor plants that have been set up in Uttar Pradesh. We take a look at that happening in the southern part of the country as well.
So Megha, we've been continuously saying this, that if you really wish to compete with the rest of the world, we need to see how you can bring in manufacturing and real manufacturing as far as India is concerned, not just assembling, right? I think the challenge has been, for the last few, ever since the last few years, and we've been trying to focus on this, is that the idea is that how do we become from a services, industry to a manufacturing industry, right? And I think that is, comes in with very, very important points. And I think the government is trying to somewhat address that, right? By saying that, look, can we become a manufacturing hub and take certain specialty pockets, right? Where we can, whether it's in semiconductors, which again, for now, is directionally the right thing to do. But how much will it actually come down to execution? I think that is something which is very, very important. I think one of the few things that we need to look at when you're looking at this entire space on manufacturing and small scale manufacturing to start with is also to make sure that credit is available to them at comparative rates. If I go back to history, Megha, you look at China, for example, they've created this, they've come in and given huge extension of credit guarantee schemes, right? They've given them tax holidays. So can we afford, the question is today is that while we're maintaining continuity in policy and we're maintaining a sense of fiscal prudence by containing fiscal deficit numbers to 4.3% for FY 26-27, are we taking enough risk on capital to ensure that it is being given for manufacturing boost? I think that's another very, very big question that does come to my mind repeatedly. While I do see the direction which the government is trying to push forward, but I think some more, clarity should help us, get to that manufacturing boost at least.
Saurabh, I will come to you. Talking about a large, fastest growing economy, we have been wearing that tag very ambitiously. We are proud of the fact that we have been growing at the rate of 7% and above for the last few years. How challenging do you think it is going to be to retain that tag? Like I said, the projection at this point is 6.8 to 7.2%. Can we sustain it? Or do you think there are other economies in the world that would give us a stiff competition?
Yeah, I think the global environment that we are living in, it's very hard to be predictable. But if one country can sustain this, it is India. Because somehow over the last year as well, we are able to manage the growth in spite of all the pressure that we saw from specifically from US. And I think all the FTA deals we have done, my view is that whatever surplus, people are not able to kind of sell in the earlier economies like US. Some of these FTAs, once they kick in maybe in the next few months, those will get deployed there. So in that context, there's a high chance that we are able to kind of sustain the growth. From a global market point of view, I think I don't see any other country to be rightly positioned of large scale. Like there might be smaller economies who can grow at the same rate or even faster than us. But among the large economies, I think people have made big changes. Like if you look at US, there are big changes. If you look at Europe, they are not in the right step to grow even close to this percentage. China is playing more conservative game right now and not really coming on offense on the growth side. So I think at least for next couple of years, India will probably outgrow everyone. It will be interesting to see whether we're able to sustain 7% or maybe 0.2, 0.3% here and there. Given there's no very big surprises on US side and Europe actually follows through on the deal which has gone through.
Nakul, coming to you, it's also interesting what the government has done, announcement that has been made in the budget that the civil and defense aviation sector duties, custom duties are going to be waived off. Keeping in mind there has been yet another massive purchase that has been done by Air India to procure those Boeings, to increase their infrastructure, to increase their capacities when it comes to civil aviation. And of course, I think almost all of our defense aviation infrastructure is imported from United States of America or France. How do you, and Russia as well, how do you see this impact our defense outlay, our aviation outlay?
Yeah, so as informed,
due to the reduction in the duty of the imports of the defense or other procurements in aviation sector, it will obviously give a boost to import of all the necessary equipments for our required for our defense, also for the private aviation sector, and it will definitely be helpful to the India's growth.
I'd like to add something to that.
Yeah, sure. Yeah.
Yeah, so I believe this is a two-pronged approach. One, from a global infra procurement point of view, we all know about how the critical aircraft deals and others are for India from defense point of view. I think especially what happened with Indigo a few months back, government has also have already made it public that they want to diversify. They don't want a single airline to have 62% market share in a country like us. And I personally think this has also been done keeping that in mind. They want probably Air India to have a larger supply and the new airlines to also have a larger supply. And this has been done to boost both domestic diversification as well as, of course, defense procurement.
Absolutely. Okay, Manoj, let's hear it from you as well. I will focus on the nuclear small reactors. There have been a number of deals that there are talks that are continuing. United States, of course, topmost in the rung. But there have been a number of these provinces in Canada. There has been a deal on which talks have been continuing between Russia and India. But the custom duty exemption on nuclear power imports, what does this indicate in terms of India's future when it comes to energy sustainability?
To be honest, this is something out of my experience, my specific industry. So better if someone else can answer on this.
Sure. Nasir, would you like to take that?
I can definitely come on the data center.
Nasir, would you like to take that question? Of course, nuclear small reactors is something that has been the talk of the town.
See, Megha, as far as, the nuclear, all of these defense announcements are concerned, clearly the expectation was that, as far as the capex part is concerned, defense is going to take the highest pie, right? Whether it's in terms of, and it's about 10 to 15%. So, again, I think given where we are in terms of geopolitical pressures today, it is but obvious that the government needs to look at procurement, also look at, what we call is protection of the infant industry, get in technology transfer, get in strategic partnerships, and promote, a conducive environment for production of these defense equipments and defense, materials. I think, to your original point, it is something which while maintaining fiscal prudence, the government is looking at doing this. The first thing is what they've done is they've reduced imports and duty, right? And I think that is something which is going to bode well in just transfer of technology today. I think the need of the hour right now is to get access to technology, get exposure to technology, so that you can actually start making a case of make in India to work for yourself in the defense sector, whether it's through defense corridors that are being announced by certain states. Again, if you look deep, if you deep dive, Megha, a lot of announcements have come in there in terms of MOUs that may have been signed, but we're hoping that those will actually start to get executed on the ground to execution. And that is what will also help, kind of complete the entire space on the defense sector, defense spending, transfer of technology, synergy between larger players and domestic players, so that they can also compete with global platforms.
Absolutely, and you're absolutely right. Custom duties, waivers that have been done in various sectors, rare earth, electronics, defense, nuclear, is ease of doing business. This is allowing for foreign investments to come into India. Definitely a boost for foreign players to come and collaborate with Indian importers. It's a win-win situation. And like I said, when you have these deals that have been signed, tariffs that have been reduced, and in addition to that, non-tariff barriers that are also being eased out in this open multilateral economy that India is looking to build with its partner countries and resilient supply chains, alternative supply chains that are being also looked into, being kept into account. Okay, all right. Let's take a quick short break. We'll come back and we'll take a look at all the big highlights of the budget announced by the Finance Minister Nirmala Sitharaman.
शिव प्रसाद जी को बीमारी के कारण 15 बार हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने उनका लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
MDH की देगी मिर्च का तड़का, अंग अंग फड़का। MDH की देगी मिर्च।
यार सोच रहा हूँ पॉलिसी बाजार से टर्म लाइफ इंश्योरेंस ले लेता हूँ ताकि मेरे बाद फैमिली को पैसों की कमी ना। तू भी ले ले
यार, अभी तो यंग है यार, बाद में देखते हैं। आजा
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
कभी खेलों के मानचित्र पर उत्तर प्रदेश सिर्फ संभावनाओं का नाम था, पर 2017 के बाद संभावनाएं संरचना बनी। जनपदों में स्टेडियम, ब्लॉकों में मिनी स्टेडियम और गांव में मैदान। खेल अब शहरों तक सीमित नहीं रहे। लखनऊ से मेरठ, वाराणसी से अयोध्या, ग्रेटर नोएडा से गोरखपुर। मैदानों पर सिर्फ खिलाड़ी नहीं, अंतर्राष्ट्रीय इवेंट्स उतरे। खेलो इंडिया, यूनिवर्सिटी गेम्स, मोटो जीपी, डेविस कप, बैडमिंटन से लेकर खो खो तक। उत्तर प्रदेश अब मेजबान भी है और दावेदार भी। प्रतिभाओं को मिला मंच, प्रशिक्षण और सम्मान। आज उत्तर प्रदेश खेलों में सिर्फ भाग नहीं लेता, दिशा तय करता है। यह है बदलाव की कहानी, मेहनत की पहचान और भविष्य की स्वर्णिम उड़ान। यह है आत्मविश्वास, लगन और विजय का गूंजता संदेश। ये है नया उत्तर प्रदेश।
इम्तियाज जी के फादर को बीमारी के कारण अचानक हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
MDH कसूरी मेथी लाजवाब है, लाजवाब है। स्वाद और सुगंध इसकी लाजवाब है, लाजवाब है।
अगर MDH कसूरी मेथी नहीं डाला
तो खाली हाथ मलते रह जाओगे।
एक एक पत्ता हाथ से चुना, स्वाद और सुगंध जगाए कई गुना।
MDH।
Hello and welcome. You're watching Newsx. I'm Megha Sharma, and the Finance Minister has announced the budget. Capital expenditure at 12.2 lakh crores. That's the big figure. But let me get in my panelists and get their perspectives on how the budget stands for 2026-2027. Mukul Bagla is the Chair, Direct Tax Committee of PhD CCI. Mukul, let's hear it from you. What are your key takeaways from the budget? All right, we'll be joined by Mukul Bagla of the PhD CCI in a very short moment. But like I said, you know, India looking very healthy in terms of its GDP growth rate. We have reached the target of over $4 trillion as our GDP, looking at a healthy GDP growth rate of 6.8 to 7.2% as projected in the economic survey, and at the same time a number of these custom duty waivers that have been announced by the finance ministry, whether it is about critical minerals, whether it is about the aviation industry, civil as well as defense, or for that matter nuclear power imports. So very important focus on the modular reactors, the nuclear module reactors, on which there are going to be in fact a number of negotiations, collaborations, deals that are going to be struck between India and the rest of the world. In fact, we have the Union Home Minister who has also tweeted out, he speaks about Vikas Bharat budget. He says the Vikas Bharat budget embodies Bharat as a nation forging its new identity as an emerging economic power, center with resolute trust in its own strengths. Post-COVID, Prime Minister Modi's visionary economic policies have fueled the Indian economy. The Vikasit Bharat budget turbocharges the momentum to bolster India's position on the global stage as the most attractive investment destination for a wide range of sectors, from traditional to the new age ones. So clearly that is a summation of all that has been announced by the finance minister today in budget 2026-2027. Brian on the telecast with me. Brian, shed more light into the the key takeaways. Of course, when we have custom duty waivers, there has been an increase in capex. We've seen focus on rare earth minerals, building our pharma as well as electronic sector, critical minerals, artificial intelligence, nuclear power imports. All these are the big ticket items in the budget.
Well, Megha, clearly, yes, just a while back, the union budget has been announced, and we're joined by the panel, the PhD panel, all industry leaders, and I think it will be very important for them, their reactions to come in front, to come forward, and we are joined by them. I'll like to introduce them. On the right, we have Ashok Batra, who is the chair indirect taxes for PhD CCI. Then we have Mukul Bagla, who is the chair direct taxes PhD CCI, followed by Dr. D.K. Agarwal, who is the former president PhD CCI Capital Market. And then we have Anil Parashar, who is chair tourism committee PhD Indigo. Sir, I'll start with you. My very first question, your reaction. We've heard the budget, we've heard the finance minister. She presented the budget. Your first reaction on the budget, how do you react on the very budget that was announced?
Not up to my expectation. I was thinking there will be certain sweeping reform in GST also, in spite of the fact that there is a GST 2 which was introduced in September 2025. But yes, after income tax and GST 2.0, now they have made sweeping changes so far as custom is concerned. And even in the case of tariff war with the US, they have given one-time concession to the SEZ unit also. But I was expecting there will be much more changes in GST. But yes, some good changes have been made. Whatever has been suggested by the GST Council in 55th GST Council, everything has been done. With regard to the liquidity, they have made refund procedures more easily, even in the case of inverted duty structure. And secondly, they have also made certainty with regard to the taxation policies. And more importantly, if I look at it, discount, these FMCG companies, they have been giving post-sale discount, that litigation was there, that will come down. And more importantly, it is a big boon for the tour operators and also the marketing agent who are procuring orders for the foreign companies, because their services have become export because of the change in the definition of intermediary. So those who are falling in the definition of intermediary, they have got a big boost. Not only their cost will reduce, they will be able to get the ITC credit, whatever they are likely to get, whatever they incur that GST on their expenditure, they will get refund for that also. So overall, good budget, but yes, falling short so far the ease of doing business is concerned.
Sir, Mukul sir, I would want to give it to you as well. You chair the Direct Taxes Committee. How do you see the tax exemption that have been displayed on the budget that the finance minister presented today? How do you see it, especially in the sector of tax exemptions? There were TCS, exemptions also. So how do you see that?
So last year's budget was more of a blockbuster budget, wherein we saw a lot of reduction in tax rates. So as we all know that this cannot happen every year. And there was the tax collections this year have not increased at that great a ratio. The increase in tax rates at a gross level is only about 4%. At the net level, it is about 8%. So with the tax collections not being as robust, you can't expect the tax cuts to happen in every budget. So that I think, but overall, this budget was more about tax administration, about how ease of doing business could happen. And I would say that a lot of our chamber's demands were met in this budget. We had requested the finance ministry for reducing rates of TCS on foreign travel and on education expenses. So that has been reduced from 5% to 2%. We had, for ease of doing business, we had recommended that the ICDS should be removed. So that has been done. Of course, it's very difficult to comment on the finance budget right now without looking at the fine print. But I would say overall, a lot of things have changed. The way the amount received on buyback of shares has been changed from into capital gain tax is a very welcome change. The due dates for filing revised returns has been extended, which again is very welcome. So I would say all in all, it's a budget in the right direction to make it more ease of doing business, to make it more in favor of consistency in the policy. So that is what I think is my take on the budget.
And sir, you also, if you can also just put ahead, we had a conversation also pre-budget regarding your expectations. If you can also speak about your reaction.
Yeah, well, I'll say the budget is overall a balanced budget, which will ensure the stability in the economy, which will ensure growth in the economy, and also the fact that fiscal deficit prudence has been maintained. The target has been set at 4.3%, which will ensure that inflation is under control. Having said all this, there are
the vision for NBFCs for Vikasit Bharat has been outlined with clear targets for credit disbursement and technology adoption in order to achieve scale and improve efficiency in the public sector NBFCs. As a first step, it is proposed to restructure the Power Finance Corporation and Rural Electrification Corporation. I propose a comprehensive review of the foreign exchange management non-debt instruments rules to create a more contemporary, user-friendly framework for foreign investments consistent with India's evolving economic priorities. Corporate bond market. The vision for NBFCs for Vikasit Bharat has been outlined with clear targets for credit disbursement and technology adoption in order to achieve scale and improve efficiency in the public sector NBFCs. As a first step, it is proposed to restructure the Power Finance Corporation and Rural Electrification Corporation. I propose a comprehensive review of the foreign exchange management non-debt instruments rules to create a more contemporary, user-friendly framework for foreign investments consistent with India's evolving economic priorities. Corporate bond market. The vision for NBFCs for Vikasit Bharat has been...
All right, I'm being joined by Sanchita Mukherjee, Senior Business Economist, Managing Partner, Talk the Walk. Sanchita, thank you very much. And of course, what are your key takeaways from the budget?
I think it's a very strategically well-placed budget. For a lot of people who are saying there's nothing really for the common man or take home immediately in the short term, I wholeheartedly disagree, because I think this is the time when we stop asking about nitty-gritties and exactly what we can get, which makes us penny wise, pound foolish. Rather, I think the budget is very well poised on how to make the Indian economy very, very resilient, with something in it for everyone. It actually benefits the common man to the core. For example, there's so much of a reform which has happened in the IT sector, right? The incentive to make data centers, businesses in cloud to have tax-free businesses up to 2047, the focus on animation, gaming, the focus on creating 5 universities, which will help the youth, the whole education to employment, which addresses the skilling gap which the industry is facing right now. Then the entire focus on khadi, handicrafts, textile, even urban infrastructure, the whole capex push to capture carbon capture and storage, public capex, which is up by 9%, the intent to do financial sector reforms in banking, in how we approach credit, given that, banking sector, the bank balance sheets are in pristine health at this point in time, the SME fund, all of this, there is something in it for everyone. In fact, there is a lot even in healthcare. I was very pleasantly surprised. There's so much that has happened in terms of medical tourism, the incentive, the removal of customs duties on 17 drugs. If that does not benefit the common man, who will it benefit?
Right,
so
absolutely.
I think it's a very strategic budget.
Okay. Dr. Jayajit Bhattacharya also on the show with us. Dr. Bhattacharya, 3 big takeaways from the budget.
Clearly it's focused on next generation of industries. As we see, it's focused on nuclear, it's focused on data centers, as Sanchita mentioned, and a few other next generation of industries. And it's showing the intent by either reducing the duties on the capital expenditure needed for those industries, or giving tax holidays like what they've done for data centers. So future industry oriented, that's one. Second is a significant fillip to attracting women into the workforce, either as skilled workforce or even as entrepreneurs, as small entrepreneurs. And I think that's a big shift that has happened, which is getting missed out in the larger discussions. So it's clearly a woman-oriented budget. And third is sticking to the guardrails of fiscal discipline. We are back to the pre-COVID days in terms of the fiscal glide path for reducing the fiscal deficit, which actually then helps in freeing up the capital and therefore the cost of capital coming down, which is good for everybody, because then you can have the private sector getting into investments because of the reduced cost of capital. So these are the 3 big takeaways of this budget, and very, very game-changing in that sense, not in terms of one single announcement, but in terms of the way it'll move the ecosystem in the country for domestic investments, as well as getting the next generation of industries and women into the workforce.
Right. Let's get in Anil Parashar, Chair of Tourism, PhD, CCI. Big ticket items for tourism growth, tourism development, a number of trains that have been launched, new 7 of those train routes, but not just that, creation of the National Institute of Hospitality, upgrading the National Council for Hotel Management and Catering Technology. How do you think this is going to impact the industry?
Focus has been clearly on job creation and skilling, also bringing focus on some new areas of tourism like ecotourism, adventure tourism, and continuing to focus on our heritage. If you look at the skilling, the IHMs have been upgraded, as you said, to National Institute of Hospitality, training of 10,000 guides in the 20 tourist destinations, and that too, the tourist guides are going to be trained by none other than IIMs, as well as the 5 medical hubs that have been spoken about, and the creation of 1.5 caregivers. Now, if you look at the focus on eco and adventure tourism, the development of the mountain trails, hiking trails, aspects like bird watching in Orissa and all of that is a clearly new focus area for the inbound tourism. And then, of course, like I said, the focus on the heritage, development of 15 archaeological sites with respect to experiential tourism, as well as the development of the Buddhist circuits in certain states. So all in all, new aspects, focus back on tourism in a big way, skilling, job creation, and of course the reduction of TCS on outbound travelers.
Do you also think, what is the potential for tourism industry to be a sustainable backbone for India's economy?
You are aware that tourism contributes to more than 6% of the GDP, 7 to 8% of India's job creation. If we can build on this India story, the world is watching India. If we can build on the aspects like our National Institute of Hospitality, provide more skilling opportunities, I feel there is no stopping inbound tourism. Of course, we need some look into the visa, which is being looked into, and if we can just support with some visa regime and e-visa, it will greatly help.
Right. And these are the announcements that have been made. What more could have been done? What more would you require the government of India in supporting the tourism industry? Keeping in mind, it has been a long time since COVID. Has the industry rebounded?
Industry is clearly rebounded. As you know, domestic tourism is at very big highs. International tourism to India needs some more push. That of course requires other aspects. In respect of your question, I think India is clearly becoming a hub where people are transiting to and fro India. So if a visa support can be provided to the travelers, especially making a short-term stay or transiting in India, that will greatly boost. Let me give you an example. People coming from, say, Amsterdam to Bangkok, they are flying over Delhi or Mumbai. Now, if this is given as a short-term visa support and the other tourist elements combined together, that can become a low-hanging tourism growth. Besides that, I think the so this is one clear element of promoting inbound tourism. And then, of course, you are aware that there's a continuous focus on new aspects like culinary tourism can be a big thing.
Right,
people
absolutely.
come to India. If you see different surveys,
Yeah.
people are looking at India food.
Absolutely.
So that can become a big opportunity.
Absolutely. Aniparasha, thank you very much for joining us, sharing your views. Coming back to you, Jaijit, talking about tourism, the big impetus that has been given by the government in the budget, I think there was something similar that was announced in terms of expansionism, infrastructure, sustainability. There has been a dedicated push to build tourism infrastructure in the country. How does this help?
Absolutely. This was a crying need with a country with the potential like India. We were attracting less tourists than even much smaller countries. So, and not only that, we have got huge cultural potential in terms of the Buddhist circuits and specific such cultural circuits, which the budget clearly calls out. So there was a crying need to really leverage our tourism sector. And this budget has gone in very deep into, in fact, almost micro-stated some of the things that needs to be done, and that is backed it up with budgetary support. So it's very, very supportive of an explosive growth in tourism.
Talking about India's infrastructure, capex, innovation, capex has been increased by 9%, 12.2 lakh crore rupees. Do you think that is going to help sustain India's GDP growth of 7.2%?
Absolutely, it will. To put things in perspective, in the last 5 years, the capex has gone up by 3 times, which is humongous. And if you see, the revenue deficit is around 1.3, 1.4%, whereas the fiscal deficit is targeted at 4.3%. The difference is actually what's going into capital expenditure, which is infrastructure, largely speaking. Every rupee of infrastructure spend leads to 2.1 rupees in terms of returns. And so it's got one of the highest multiplier effect. So the reason why we are steadily on the path of growth since the year 2000, when the then Prime Minister Vajpayee ji started building roads, is because an immense amount of investment has gone into infrastructure, which opens up this economy for private sector. It opens up the economy for reduced logistics cost. We've been able to reduce the logistics cost to less than 8%. And the investment into infrastructure itself creates jobs directly because of the number of people involved in building that infrastructure. So it has got a tremendous amount of impact on the economy.
Absolutely. And we were talking about, these custom duty waivers that have been given in different sectors. How does this complement India's, building open alternative supply chains, resilient supply chains, vis-a-vis the trade deals that have been signed in the recent times?
If you notice the sectors mentioned specifically, were also sectors which were kind of next generation industries, which included civil aviation, nuclear, energy storage, electronics, cancer drugs, biologics, and so on. So we are now pivoting towards the next generation of industries. And I think that places India very well for the next 10 to 15 years in terms of growth, because we want to claim that space. Even data centers, which is the future of IT, there is being given a tax holiday. So the focus has largely been on next generation of industries, as well as next generation of infrastructure, such as the inland waterways and the sea-based transportation, the shallow sea transportation. So those are the focus areas that will reduce the cost of logistics and bring in the next generation of industries that India badly needs.
All right, stay on with me, Jayjit. Rajiv Juneja, President of the PhD CCI, is on the telecast with me. Rajiv Juneja, let's hear it from you. What are the three big takeaways of the budget?
The first is that the policies, whatever has been defined in the past, have been continued. I mean, just don't look at the budget only. I mean, look at this. GST is one, reforms are there, labor reforms are there. We have an expectation that on a budget day, some big bang announcements would be there. These are not there. Yes, whatever good things are to be done have been done. One, I'll say that capital expenditure has been increased. That's an amazing thing, because every country needs better infrastructure. The second basically is what this fiscal deficit has been controlled, is only 4.4%, rather reduced. Third basically is that so much of money has been put on technology side, whether it's a rare earth, whether it is giving tax soaps to those companies, foreign companies, those who are setting up their shops for cloud services, whether it's electronics or semiconductors. And of course, I'm from pharma side, we'll talk about this pharma, because these are 4-5 points.
So why do you think the government is focused on pharma so much? Do you think it has also got to do with India's export capacities?
I feel, just don't look at from the business point of view. Look at the point of view of health of a country. If a country is healthy, diseases are controlled, everything is good. With a lot of experience, you gain some kind of a brain power. If in the absence of good health, that is lost, it is wrong. So health is the first thing. Every health, education, skill. These three things are always and should be there.
Okay.
It's not only business.
Do you think GST cuts, sustained GST cuts ever since the evolution has happened under the government, they have paid dividends?
Yes, why not? I mean, cannot you look at the growth, 7% plus? Some kind of, I mean, this cut was required. It really makes so much of logic. It's a very logical kind of a cut. GST is one. Labor should not be forgotten. Labor reforms. You need to be very brave to really bring all these things. And when this geo disturbances are happening, I tell you honestly, sometimes these are blessings. Certain things which were in a slow pace have become on a fast lane.
Okay.
These are good things.
Do want to focus, there have been, like I said, custom duty waivers that have been announced on various sectors in various industries. I do want to focus particularly on the civil and defense aviation sector, where the custom duty waivers have been announced. How does this help bolster the aviation economy in our country?
Why not? It's a very right kind of a decision, because going forward, we have seen that we are living in a very disturbed world. We need to have great defenses, arms and ammunition, and this is first step forward. I mean, you need to really bolster your arms, your defense expenditures, and for that you need, better technology. Gone are the days that you can fight wars with people and with tanks and planes. You need, different kind of drones. Technology is required.
Right, absolutely. Even talking about, building our critical minerals, infrastructure, electronics, 40,000 crore rupees that has been allocated from the budget outlay. How is this going to impact the economy?
See, whether it's a company or whether it's a country, those countries, those who are spending and having advanced technology have become big economies. Look at China, look at US, of course look at this look at Europe. And the second side basically is what those companies and countries, those who are technology enabled. So once you talk about technology, once you talk about advanced technology, once you talk about semiconductors, you will definitely think backward and think about the rare earths.
Okay, all right.
And 4 or 5 things have been shown over there.
Right, absolutely. Thank you very much for joining us. I am also being joined by Mr. Sudipta Mukherjee. He is a member of FICCI, Managing Director, Texmaco Rail and Engineering Limited. Thank you, Mr. Mukherjee. And of course, the first question, the 3 big takeaways for you from the budget.
Good afternoon, Meghna. The first one, I would like to tell you that I'm impressed on the fact that so many points have been touched upon, because it was not an easy budget per se. One way the momentum of growth was supposed to be maintained. At the same time, considering the geopolitical situation. And of course, the third portion is on the capability. And I would like to add one more point, is the intent. So I think the intents have been shown by the government, and various new sectors which we normally think as a jargon may translate into starting contributing to the economy in a big way.
Right. What do you make of all these custom duty waivers in various sectors, various industries, whether we talk about defense aviation, civil aviation? We've taken a look at the nuclear small reactors, the nuclear power import, which I'm assuming is going to include the deals that are going to be struck between India and United States of America, Canada, Russia, when it comes to nuclear small reactors. What is going to be the impact of all these custom duty waivers?
So it's a very logical correlation between all, because we as India does not possess all the technology today, but we have few ingredients of the various layers, like when we talk about data center as one of the major contributor towards our economy and to create employment generation, and we want to go for a self-reliant country. So it calls for a lot of power requirement, and we know that we are one of the largest coal power nation, coal generation, coal power generation nation. But the new micro or nuclear reactor on that segment is going to be very beneficial, and is going to be one of the path-breaking initiative if we, as Indians and the industry, can translate into a business opportunity, and is going to create a very good upward impact to the economy.
What is it that the rail industry is going to gain from the budget? There have been 7 special rail corridors that have been announced, integrating India's domestic tourism as well. How do you view this?
So you have used a very good word, integration. So we find we have been talking about and suggesting to the government of alignment and integration of the various infrastructural initiatives. Particularly to talk about rail, if you see, if I have to translate into layman's language, that infrastructure for a dedicated high-speed passenger corridor, then having additional dedicated freight corridor, then having another corridor towards rare earth. Then we are talking about the last mile when we are emphasizing on incentivizing the container manufacturing, and also road, water, and the rail linkages. So these talks are huge, and it has a multiplier effect towards the whole progress. We as a company, we work right from track laying to signaling to supplying to rolling stocks and maintenance of it. So it throws a ocean of opportunity for us for the coming 5 to 10 years if we can dovetail into reality.
Yeah, pharma and health has also been key focus. I think that was one of the first announcements that was made by the finance minister. How is that going to impact the overall well-being and therefore reflected in the economy of the country as well?
When we talk about Viksit Bharat 2047, so one of the focus is towards the per capita income improvement, and I'm happy to note that this budget, as I have in my opening remark has mentioned, that it has a future industry, it has a legacy industry, it has farmer, it has common people, it has some stuffs for everyone, and this focus has to continue if you really want to be a developed nation with such a population and such an opportunity and resources within our country. So the points are very well taken, and I feel that this initiative has to continue, and boosting and bringing in technology in and around it, and also the skilling part of it is going to determine that where we actually reach and how fast we reach towards our goal to Viksit Bharat. So it's a very, very good
how about,
initiative.
What's your view on the record gold prices that have been witnessed, not just within the country but across the globe? The gold and silver prices have fluctuated in the last couple of days. Do you think the budget announcement is going to impact?
So it has to, one has to see to it as a very good bold statement in the present context, where we have shown all intentions and somewhere we have quantified a kind of a willingness of allocation. But we have to ensure our execution much better to achieve all of this, and one has to believe on the intent. Maybe because it is too much of a theme, sometimes we get confused, because we have some focus industries and some new is coming in. So one cannot stop the new, but we should be happy that those together can make the economy as one of the largest in the world. So we as a contributor, as a participant to that, have to believe in that, and I feel that rather than having very small term knee-jerk reactions of or expectations of return, we should more look towards solidarity and a maturity, and have faith to have a big impact globally.
Okay. All right. Thank you very much for joining us, sharing your views. Let's quickly take a look at some political reactions coming in after the budget has been announced.
साथ केंद्रीय मंत्री शांतनु ठाकुर हैं। शांतनु जी, बजट पेश हो गया है, क्या कुछ बजट में मिला बंगाल को?
देखिए, हर सेक्टर में बढ़ावा हुआ है। ऐसे खास करके बंगाल के लिए जो है मैं मानता हूं कि हर डिस्ट्रिक्ट में जो महिला लोगों का जो हॉस्टल बनेगा उसमें बंगाल का भी लाभ होगा और दूसरे जितने सारे मतलब मिनिस्ट्री हैं उनमें भी बहुत सारे प्रकल्प के घोषणा किया गया है, उनमें भी उससे भी बंगाल का लाभ होगा मैं मानता हूँ।
बंगाल को बुलेट ट्रेन कॉरिडोर बनारस से सिलीगुड़ी तक मिल रहा है, दुर्गापुर में भी कॉरिडोर
वो भी तो मिल रहा है, वो भी तो मिल रहा है।
आपके मंत्रालय को क्या कुछ मिला?
हाँ, हमारे मंत्रालय में शिप बिल्डिंग में मिला है, फिर पोर्टलेट इंडस्ट्रियलाइजेशन जो होगा उसमें बढ़ावा मिलेगा, फिर इनलैंड वाटरवेज में भी बहुत सारे नया उद्योग ला रहा है, तो अच्छा है।
लेकिन टीएमसी के नेता और सांसद ये कह रहे हैं कि बंगाल को कुछ मिला ही नहीं, नाउम्मीदी वाला बजट रहा।
बंगाल को मिलेगा क्या? बंगाल तो कुछ एक्सेप्ट नहीं करते हैं, जब एक्सेप्ट नहीं करते हैं तो क्या मिलेगा?
धन्यवाद। मनोहर केसरी, इंडिया न्यूज़, दिल्ली। हमारे साथ टीएमसी सांसद शत्रुघ्न सिन्हा है। शत्रुघ्न जी, आम बजट पेश हो गया, ये आम बजट कहा जा रहा है कि युवाओं का बजट है, लेकिन क्या ये आप लोग को खामोश किया?
कौन सा आम आदमी का बजट है ये? कौन सा बजट है ये? नाम नारा दिया है विकसित भारत का बजट 2047, कल दे देंगे 2097 का, 2026, 2027, 2028 के लिए क्या किया? युवा का ये है। अगर आपसे ही बात जाने तो युवाओं के रोजगार के लिए क्या क्या अवसर इन्होंने प्रदान किए इसमें या प्रावधान दिया है, आप ज़रा उसको बताइए। स्पोर्ट्समैन के लिए कुछ किया है? स्पोर्ट्स के लिए कुछ किया है युवाओं के लिए? युवाओं को कोई डायरेक्शन दिया, कोई मार्गदर्शन दिया है? मार्गदर्शन मंडल तो बना देते हैं, ला के सामने क्यों रखते हैं? मध्यम वर्गीय परिवार के लिए क्या किया? महिलाओं के लिए क्या किया? जो किसान थे, हमारे किसान परिवार जो हैं, आपने कहा था कि 2022 तक उनकी आमदनी डबल हो जाएगी। आज 2026 हो गया, कहाँ हो गई डबल? देख लीजिए आप। आपके देश के ऊपर आज जितना कर्जा है, देश भारतवर्ष का एक एक इंसान कर्जदार है। आज यहाँ पे जितने प्रधानमंत्री हुए हमारे, उन तमाम लोगों को मिलाकर जितना कर्जा नहीं था देश के ऊपर, आज इन प्रधानमंत्री के हमारे माननीय दोस्त नरेंद्र मोदी जी के टाइम पे 4 गुना से ज़्यादा टोटल से कर्जा हो चुका है। एक एक आदमी कर्जदार है। कई लोग कहते हैं कि बीमार है भारत, कई लोग कहते हैं कि बेरोजगार है भारत। अब बीमार है भारत, उसके लिए कुछ किया है? हेल्थ पॉलिसी में कुछ अपने बदलाव लाया, कुछ सुधार किया आपने? हेल्थ इंश्योरेंस की बात की आपने, कवरेज बढ़ाने की बात की। सिर्फ आयुष्मान भारत से काम चल जाएगा क्या? अभी आज के हालात को देखते हुए कम से कम कुछ स्टेट्स भी 10 लाख कर रहे हैं, आपने यहाँ पर 25 लाख क्यों नहीं किया? या पूरा तो ये सब किया नहीं, कह रहे हैं कि विकसित भारत का बजट है। सही मायनों में मैं इस बजट को तो कोई नंबर देने के लायक भी नहीं समझता हूँ, कोई नंबर देने लायक नहीं समझता हूँ, और साथ ही साथ ये सही मायनों में फेंकू बजट है और लपेटू बजट है।
कह रहे हैं बंगाल को।
All right, Mr. Adil Shetty, co-chair, FICCI FinTech Committee and co-founder and CEO of bankbazaar.com. Mr. Shetty, again, 3 big takeaways from the budget.
So I think for the common man, there was a change on the TCS side. So if you've been sending money for your child's education or for tourism or for medical purposes, I think the monetary change was there was a change of 5% to 2% in the TCS rate. Essentially, what that means for someone sending 20 lakhs on education is there's 40,000 less in TCS, which I think is positive. We'll look at the fine print as it comes out. I was very excited also on the digital infrastructure push. We've talked about over 12 lakh crores for physical infra, but it was good to see that they're really pushing on data centers. So there's a tax holiday for multinationals setting up data center services in India. And this is important because for most startups in India, most digital companies in India, the cloud data center service is 80% of their infrastructure cost. So the two things will happen. The cost will come down and the data will be stored in India, which is AI data sovereignty. She spoke about AI app. She spoke about a Bharat Vitsal app for farmers, no less. Farmers to use AI in their work. So I was excited to hear all these things.
Right, particularly the banking sector. What do you make of this sustained change, reviewing the banking sector under Vikasit Bharat is what the government calls it, the finance minister said, to bolster growth in terms of technology and the last mile reach for the banking services, the NBFCs that are required, that are mandatory to build the entrepreneurial ecosystem in the country?
Yeah, we feel this banking committee creation is quite exciting. We'll need to see the scope and what the banking committee is looking at. But I'll tell you why it's exciting. So banking is one of these areas where 98% of Indian villages and towns have been covered. We've really invested deeply in technology, and I'd say the AI wave is deeply, deeply impacting financial services in India. But there's a lot we can do in terms of easing the cost of doing banking, in terms of easing the access to innovation. So I think the banking committee hopefully will look at how does India become a technology leader in financial services. We've made big strides in video KYC, but how do we take it to the next level with agentless video KYC? We've made big strides in Aadhaar, but how do we do the same thing with DigiLocker? How do we do the same thing with account aggregator? So I think there's an incredible amount of innovation possible in banking, which will both take the cost down and will make services accessible to the common person. And this banking committee, when it's formed, right, I'm sure it's going to have very experienced thinkers who will help set an agenda for innovation in banking in India.
Right, and also, the custom duty waiver on in a number of industries and sectors. Whether we talk about the aviation industry, which is growing at a breakneck speed in our country currently. When we talk about the waivers that have been given in nuclear power imports, also, the key disease drugs where custom duties have been completely waived off. What does this indicate?
I think this indicates that India is taking a mature, sophisticated approach to global trade, right? At a time wherein I think the US has ratcheted up a tariff war globally. And there was a really good piece that the economist Dr. Panagria from Columbia had written, saying we should use this opportunity to cut customs tariff and to allow our industries to grow faster with access to the best quality raw material. So I think India is being mature. We're not knee-jerking. We're trying to see what do we need, right? Let's take nuclear energy as an example. So if India is going to become a global hub for data centers for AI, we're going to need energy, right? And there's no point burning more coal to drive that energy. Today, 50% of data center energy consumption is green energy. So we need more nuclear energy, we need more solar energy, we need more wind energy. And I think it's good that for the sectors we need to grow, we're being very mature, and unlike some other countries which are fighting a trade war, we're approaching it with a mature, sophisticated mindset.
Okay, all right. Thank you very much, Adil Shetty, for joining us, sharing your views. Let me also get in Sandeep Jhunjhunwala, partner, Nagya Global Advisors, also on the telecast with me. Sandeep Jhunjhunwala, your key takeaways from the budget?
I think I'll just maybe talk from a tax standpoint. I think no headline news for individuals because the tax rates as well as the standard deductions remain the same, though there has been a lot of procedural relaxations that the finance minister has announced, say for instance in terms of reduction of TCS rates for LRS remittances on overseas tour packages, which is now kind of reduced to 2%, also on any remittances which are made for the purpose of education as well as for any medical purposes, also streamlined and brought down to 2%. So a lot of smaller announcements on some of this TCS kind of rate reductions, which I can talk, but nothing has a headline tax reduction in terms of what maybe the middle class was expecting, that maybe in order to make the new regime a little more attractive,
Okay.
There be some allowance on, say, for instance, ATC kind of deductions covering PF or insurance, or if there is no, cap on the housing loan interest, etc., under the new regime, so that there are more and more people. I think, any which case, the new tax regime is, kind of being made as a default. But for the fewer ones who are still under the old regime, maybe there could have been some pull factor for them as well, but nothing changes on that. Other than this, I think the increase in the STT rate on futures and option is very clearly meant to, discourage any sort of a speculative kind of trading. So that is something that I'm sure is going to impact the market a bit, especially for all the players in the FNO segment. Also, the reclassification or recharacterization of the buyback again now to capital gains. It was switched over to dividend regime few years back, and now I think again it's brought back to capital gains regime. I think it's going to largely maybe give some benefit to the non-promoters group, but at least based on what I could quickly read in the finance bill, for the promoters group, it may probably be a little more detrimental in terms of the tax rate, which is going to
but
get
do you think, like you said, there was, according to you, an expectation from the salaried class for an income tax rate revision? We saw that happen, a massive rejig last year as well. Do you think there is, at this point of time, yet another need to rejig this? And was the public, was the middle class really expecting something of this sort to happen?
Yeah, I think if not a rejig, there were two important things that obviously the middle class salaried taxpayers were expecting. One is that the standard deduction currently is a very small amount of 75,000. Now, looking at the cost of living and inflation, at least from a middle class salaried taxpayer perspective, maybe a little bit of relief could have been given by increasing the standard deduction, and maybe a little bit of tinkering on the slabs per se.
Okay.
Right. So I think these were the two expectations on the tax slabs and increase in standard deduction from a salary taxpayer perspective, which definitely don't see or don't find a mention in the current finance bill.
Okay, all right. K. Yatish Rajawat, CEO, Center for Innovation in Public Policy, is on the telecast with me. Mr. Rajawat, what are the key takeaways from the budget today?
So there are three broad things that come out from this budget, and they're consistent with previous budgets. One is, of course, that the government is very clear that there is a path to consolidation, and they continue to go on that path. The second is that the government is increasingly getting concerned about the way the geopolitics and the global trade is shaping, and hence their expenditure is now geared towards one, driving investment, and second, attracting investment. And the third part is that they're not levying any additional taxes on the common man. Most of the expenditure is now focused towards subsidies, as we know.
Okay.
The largest subsidy scheme, which is the free food subsidy scheme, the allocation for that is again gone up this year. So, and it is the largest food subsidy scheme in the world. And if you finally dice the expenditure budget downwards into the ministries and departments, you will notice, and this is important to know, that, where is the money being spent? It is fine to focus sometimes on the minor changes in taxation, but, a change in STT on futures does not, impact 95% or 97% of the Indian population. But what does impact them is the way that the government is going to spend the money that they have collected. And there are a couple of causes for concern, and that shows the state of the economy also. One is that the interest payment of the central government is going up continuously. It is now the absolute growth number there is almost 1,31,000 crores. But where is this money being used? You see, this increase in interest payment is going towards the states. It's going either as grants or special assistance to the state for capex. And this is a challenge in the current economic situation, that most of our states are actually bankrupt. They are not able to raise their own revenues, but their expenditures on subsidies and social schemes is continuously going up. So they don't have money, but they're spending beyond the limit, So the grants to states, so basically the central government is stepping in and it is bridging that gap and it is trying to keep these states afloat so that at least they don't default on the primary revenue expenditure, which is the salaries and pensions.
Okay, all right. I do want to get your analysis on a number of sectors that have been the key focus in the budget announcement, whether it is the pharma and the health industry, or we talk about the nuclear power import on which custom duties have been waived completely. When we are taking a look at the rare mineral corridors that have been created, special railway corridors that have also been announced, and for that matter, talking about the waiver on the critical drugs that are imported into the country.
So, briefly here, you see, again, we have identified 7 industries where we think that we need manufacturing scale, and that is where most of the incentives have been almost consolidated in that sense in this budget. And these, there has been a thought through not only in terms of the specific industry getting the incentive, the thinking is more about incentivizing the whole supply chain, and hence the incentives are geared now in building the supply chain, and that is where both the rare earth and the critical earth incentives come in.
Right.
The amounts may not be very large in the sense that, but these are critical incentives because they are basically, in the case of rare earth and critical earth, they affect the supply chain right up to the automobile sector, and where we didn't have capacity till now, and we suffered during COVID when these rare earth magnets were basically stopped by China. And the endeavor there is to build manufacturing capacities, and even in the pharmaceutical area, the thinking is that we need to build the supply chain and reduce our dependence, particularly on certain pharmaceutical wholesale products which come from China.
Right.
We need to create our own capacity, and we need to invest. The private sector is being incentivized to invest in the R&D. Now, this is.
All right. The Prime Minister is now making a speech. Listen it.
भारत के उज्जवल भविष्य की नींव को सशक्त करता है। ये बजट 2047 के विकसित भारत की हमारी ऊंची उड़ान का मजबूत आधार है। साथियों, आज भारत जिस रिफॉर्म एक्सप्रेस पर सवार है, इस बजट से उसे नई ऊर्जा, नई गति मिलेगी। जो पाथ ब्रेकिंग रिफॉर्म्स किए गए हैं, वो एस्पिरेशन से भरे हुए भारत के साहसिक, टैलेंटेड युवाओं को उड़ने के लिए खुला आसमान देते हैं। ये बजट ट्रस्ट बेस्ड गवर्नेंस और ह्यूमन सेंट्रिक अर्थरचना के विजन को साकार करता है। एक ऐसा यूनिक बजट है जिसमें फिस्कल डेफिसिट कम करने, इन्फ्लेशन कंट्रोल करने पर फोकस है, और इसके साथ ही बजट में हाई कैपेक्स और हाई ग्रोथ का भी समन्वय है। साथियों, ये बजट भारत की वैश्विक भूमिका को नए सिरे से सशक्त करता है। भारत के 140 करोड़ नागरिक फास्टेस्ट ग्रोइंग इकोनॉमी बनकर ही संतुष्ट नहीं है। हम जल्द से जल्द दुनिया की तीसरी सबसे बड़ी अर्थव्यवस्था बनना चाहते हैं। ये करोड़ों देशवासियों का संकल्प है दुनिया के एक ट्रस्टेड डेमोक्रेटिक पार्टनर और ट्रस्टेड क्वालिटी सप्लायर के रूप में भारत की भूमिका लगातार बढ़ रही है। हाल में जो बड़ी-बड़ी ट्रेड डील्स भारत ने की है, मदर ऑफ ऑल डील्स, उसका मैक्सिमम बेनिफिट भारत के युवाओं को मिले, भारत के लघु और मध्यम उद्योग वालों को मिले, इस दिशा में बजट में बड़े-बड़े कदम उठाए गए हैं। साथियों, इस बजट में मेक इन इंडिया और आत्मनिर्भर भारत अभियान को नई रफ्तार के लिए महत्वाकांक्षी रोड मैप प्रस्तुत किया गया है। इस बजट में नई उभरती इंडस्ट्रीज यानी सनराइज सेक्टर्स को जिस मजबूती के साथ समर्थन दिया गया है वह अभूतपूर्व है। बायोफार्मा शक्ति मिशन, सेमीकंडक्टर मिशन 2.0, इलेक्ट्रॉनिक कंपोनेंट मैन्युफैक्चरिंग स्कीम, रेयर अर्थ कॉरिडोर का निर्माण, क्रिटिकल मिनरल्स पर बल, टेक्सटाइल सेक्टर में नई स्कीम, हाईटेक टूल मैन्युफैक्चरिंग को बढ़ावा, चैंपियन एमएसएमईज तैयार करना, ये फ्यूचरिस्टिक है, देश की वर्तमान और भविष्य की आवश्यकताओं का ध्यान रखती है। एमएसएमईज को, हमारे लघु और कुटीर उद्योगों को जो समर्थन इस बजट में मिला है वह उन्हें लोकल से ग्लोबल बनने की नई ताकत देगा। साथियों, बजट में इंफ्रास्ट्रक्चर को मजबूत करने के लिए कई बड़े कदम उठाए गए हैं। डेडिकेटेड फ्रेट कॉरिडोर, देश भर में वाटरवेज का विस्तार, हाई स्पीड रेल कॉरिडोर, टियर 2 और टियर 3 शहरों के विकास पर विशेष ध्यान और शहरों को मजबूत आर्थिक आधार देने के लिए म्युनिसिपल बॉन्ड्स को बढ़ावा, ये सारे कदम विकसित भारत की यात्रा की गति को और तेज करेंगे। साथियों, किसी भी देश की सबसे बड़ी पूंजी उसके नागरिक होते हैं। बीते वर्षों में हमारी सरकार ने देश के नागरिकों के सामर्थ्य को बढ़ाने पर अभूतपूर्व निवेश किया है। हमारा प्रयास स्किल, स्केल और सस्टेनेबिलिटी को निरंतर बल देने का रहा है। जैसा कि आज पार्लियामेंट में निर्मला जी ने कहा है, यह युवा शक्ति बजट है। उसमें युवा की सोच भी है, युवा के सपने भी हैं, युवा का संकल्प भी है और साथ साथ युवा की गति भी है। बजट में जो प्रावधान किए गए हैं उससे अलग अलग सेक्टर्स में लीडर्स, इनोवेटर्स और क्रिएटर्स तैयार होंगे। मेडिकल हब्स के निर्माण से, एलाइड हेल्थ प्रोफेशनल्स के माध्यम से, ऑरेंज इकोनॉमी यानी ऑडियो विजुअल गेमिंग को बढ़ावा देकर, पर्यटन को प्रोत्साहन देकर और खेलो इंडिया मिशन के माध्यम से युवाओं के लिए नए अवसरों के द्वार खुलेंगे। भारत को दुनिया का डेटा सेंटर हब बनाने के लिए टैक्स में बड़ी छूट की घोषणा भी की गई है। मैं भारत के युवाओं को विशेष तौर पर इस बजट की बहुत बहुत बधाई देता हूं, क्योंकि इससे एम्प्लॉयमेंट जनरेशन को बड़ा बूस्ट मिलेगा। मुझे बहुत खुशी है कि इस बजट में टूरिज्म और विशेषकर नॉर्थ ईस्ट में टूरिज्म को बढ़ावा देने के लिए भी ठोस कदम उठाए गए हैं। भारत के अलग अलग राज्यों को ताकतवर बनाकर संतुलित विकास की नींव भी इस बजट में मजबूत की गई है। साथियों, हमारे देश में 10 करोड़ से ज्यादा महिलाएं सेल्फ हेल्प ग्रुप से जुड़ी हैं और बड़ा सफल अभियान रहा है। महिलाओं द्वारा निर्मित, महिलाओं द्वारा संचालित सेल्फ हेल्प ग्रुप्स का आधुनिक इकोसिस्टम बने, बजट में इसे प्राथमिकता दी गई है। कोशिश यही है कि हर घर लक्ष्मी जी पधारे। हर जिले में छात्राओं के लिए नए हॉस्टल बनाने का अभियान भी शिक्षा को सुलभ बनाएगा। साथियों, भारत की कृषि, डेयरी सेक्टर, फिशरीज, इन्हें हमारी सरकार ने हमेशा सर्वोच्च प्राथमिकता दी है। इस बजट में भी नारियल, काजू, कोको और चंदन की पैदावार से जुड़े किसानों के लिए अनेक अहम कदम उठाए गए हैं। भारत विस्तार एआई, इस टूल से किसानों को उनकी भाषा में जानकारी मिलने से उन्हें बहुत मदद मिलेगी। फिशरीज और पशुपालन में उद्यमिता, उसको बढ़ावा देने से गांव में ही रोजगार और स्वरोजगार के और ज्यादा अवसर बनेंगे। साथियों, ये बजट एम्बिशियस भी है और ये बजट देश की एस्पिरेशन को भी एड्रेस करता है। मैं एक बार फिर निर्मला जी और उनकी पूरी टीम को इस फ्यूचरिस्टिक बजट के लिए, संवेदनशील बजट के लिए, गांव, गरीब, किसान का कल्याण करने वाले बजट के लिए बहुत बहुत बधाई देता हूं। बहुत बहुत धन्यवाद।
So, Prime Minister Narendra Modi there, of course, breaking down the takeaways of the Union Budget 2026. PM Modi speaking about what the focus areas were, what the thrust areas were, and how this budget is really going to, of course, help further build our GDP and further, of course, accelerate the pace of Viksit Bharat. PM Modi speaking about the opportunities that have been unlocked for youth, for the middle class, and of course also for exporters, also for entrepreneurs, and to further talk about the Union Budget of 2026, we are now being joined by Sunil Sanghai, Chair, FICCI Capital Markets Committee. Welcome. Thank you very much for being with us today, Mr. Sunil Sanghai on Newsx. Let me quickly, in fact, also ask you first about your first takeaway of the Union Budget 2026. What has stood out for you? What do you believe has been your biggest takeaway from what the FM presented today?
I would say we need to put the budget in context. The budget now is not the same as budget a few years ago. A lot of things are now done outside budget. If you really see, direct tax was an important area. Last year, the direct tax has been taken care of. Indirect tax is now dealt with outside budget, which is GST. So the budget has a very limited role to play. Now, in that context, if you say the one, since you asked me what is one thing which stands out, is the balancing. Fiscal deficit 4.4 is on track. 4.3 was in line with the market expectation going forward. And with that, the capex increasing the capex around 8%, that is a good balancing act. We all know that this year there was expected to be, and rightly so, a larger allocation to defense, which has happened. And at the same time, the capex increase has happened. So that is actually a really remarkable balance. Apart from that, there are areas, if I can just talk about the capital market, bringing back buyback. The buyback was really a good step. We should have brought it back. We brought back buyback now in the real sense. The two important, I would say, going forward, once we get the details, will be a big reform. One in the banking sector. The committee, setting up of the committee to review the entire banking sector, which happened long back. And with the growth of the economy, with the growth of the market, we need more stronger banks and their ability to lend. And therefore, we need to review the ownership, review the voting power. We need to review the structure of the banks. And that it's actually a positive move. The second one, non-debt foreign investment. FEMA regulation for not debt investment. There is a RBI guideline under FEMA, which actually deals with multiple things, including valuation and all of that. And that is being reviewed. That was again something which should have happened. So on the whole, a number of things which are very balanced. In general, it has not met expectation. Market is down.
I was just going to ask you that. I was just going to ask you that on the market reaction. What did you make of how the indices reacted, in the red to, of course, the budget? Sharp falls, stabilized a bit, but overall, how do you react to the market reaction and response to the budget, and what has caused this?
See, again, let's just put the market in the context. There are three markets: equity market, bond market, and FX. Now, we had only one market operating today, and that's not really the summary of everything. Equity market really reacts when you are trading on the news flow, which is when Honorable Finance Minister is reading the budget and you are trading. It's an immediate reaction without really going through the fine print. So market actually reacted on STT, increase in the STT, and there was expectation that rationalization of the capital gains will happen. I think the call, I don't know, I'm not the insider, but I guess the call was made that we don't want to keep changing the tax rate. So that whatever has happened on the capital gain, we just continued. So it's more like a continuity. But the buyback has come back. That's a positive. So we need to really look at in balance. Hopefully the market will read the fine print and tomorrow would be different.
Now, what about the sunrise sectors? That's something that Prime Minister Modi was also speaking about. Would they be happy with the announcements today? Also, for exporters who have been hit by the tariffs, do you believe the budget has today things to mitigate the tariff effects? Also, interestingly, a rare earth counter to China as well. Relations may have stabilized, but we cannot rely solely on them for our rare earth needs. So rare earth counter as well to China in today's budget.
Yeah, you are absolutely right. I think that is one area which has been taken care of. But I would give another example. I think where we have done a really substantive thing is data center. So on data center, what we have said that anyone who wants to set up a data center, even for global, for the world, we will facilitate, and there will be zero tax for up to 2047, which means all the tax treaty, all of that, whichever through whatever vehicle you come, there is no tax. So you can come direct, straight. FDI will be facilitated. You set up a data center here, there is no tax up to 2047. So this is the way actually one particular sector was picked up, and clearly a substantive decision was made in that. Likewise, you saw semiconductor phase 2, the biotech scheme, because we didn't have much biotech actually. So that was actually a requirement. Rare earth, as you talked about. So those 7 industries which have been covered, those are all very welcome move.
Yes, let me also, in fact, quickly, before we let you go, Sunil, just talk a bit about also, how this budget has also been a balancing act. It had to be a fiscally prudent budget. It's coming as the Modi 3.2 government nears its halfway point, although it's still a few months short of that, which is why, things don't need to be very populist at this point of time. So do you believe it was also a sort of a fiscally prudent budget? It was a bit of a balancing act. No big headline worthy items, but tried to encompass as much as they could today.
See, it could not have been. You are absolutely right. See, one is we had a significant tax cut, both direct, indirect earlier, corporate, personal, and GST. Number two, on the defense increase, which was known. The number three, which is very important, is that our tax revenue is going to go down because that is calculated on the basis of generally when you calculate for the future, it's on the nominal growth. You have inflation coming down, so the nominal GDP actually is coming down. So we have taken approximately 10.4%, I believe that's the number which has been taken in the budget for the growth for the next year. If you compare that with the previous year, it was 15%. So the overall tax revenue is coming down. And we need to maintain the fiscal deficit and maintain the capital expenditure. So this was the full 360 view. If you take all of that in consideration, it is definitely a very balanced budget.
All right, Sunil Sanghai, Chair, FICCI Capital Markets Committee and founder and CEO, Nova One Capital Private Limited. Thank you very much for joining us on Newsx with your takeaways of the budget. Let me join now more guests who are joining us live. Sandeep Jhunjhunwala is live with us, partner Nangia Global Advisors. Also K. Yatish Rajawat joins us live, CEO, Center for Innovation in Public Policy. Sanchita Mukherjee is also live with us, business economist and managing partner, Talk the Walk. Thank you all for being with us today on Budget Day. Let me quickly draw you in here first, Sandeep Jhunjhunwala, on the market reaction. What did you make of our equity indices reacted to FM Sitharaman's budget speech today? Do we expect this volatility to continue in this coming week as well in the market?
I would think so, because largely, the expectation was that there could be some realignment or rejig on the capital gains tax, given the massive FPI outflows. But that aspect has remained unchanged. Though I would say that the way the announcement has been made on PROI, which is person resident outside India, to also participate in the Indian listed securities, by maybe increasing the general cap from 10% to 24, though that 24 was already there in the system subject to some special resolutions by the company. I think that probably will reduce an over dependence on the FPI route for investment in the Indian listed securities. So I think that's one thing that's opening probably an additional door in some sense, by increasing that threshold from 10 to 24%. But obviously, the market's expectation of some sort of a rejig in capital gains tax regime for long-term investors, I think that's something that has not been called out for clearly in the finance bill, and I think that's something that's probably going to keep the equity market on the toes, at least in the coming few days.
Right, Mr. Rajawat, if I can draw you in here now for the innovation industries, since that, of course, is your expertise, be it AI, be it, of course, the nuclear energy field, which again is something which is, fast emerging, and the recent bill passed by Parliament also is unlocking this sector's potential. Would these industries be happy with today's budget? What were your main takeaways, Mr. Rajawat, for these futuristic sectors for our Indian economy?
So let me just put this into context. You see, the budget has looked at it as a continuum. So, the government wants that India should have its own sovereign AI capability. And for sovereign AI capability, data is an important component, especially if it has to be sovereign in nature. Hence, there is an incentive that they have offered for data centers. We know that the three large big tech companies have already announced their data center plans. Google in Visakhapatnam, Microsoft has announced, and Facebook has also announced data centers. But they have been given a tax incentive till 2047. If they build the data center and if it is used and resold by local resellers, not by global resellers. The third component here, data centers are large consumers of power and large consumers of water. Now, in this case, that's why the nuclear energy opening up and the nuclear energy investment has to be seen in this context, that while we are surplus in power and most of our state electricity boards are now just coming aboard in terms of their profitability, these data centers will put an enormous pressure on the local grids. Hence, nuclear power at this point in time is very important. Renewables do not meet the needs of these data centers because, as you know, renewables can only supply, solar can only supply for 12 hours a day, and the other renewables are also time dependent. These data center need very high reliability, which is only possible through either coal or nuclear. So this has to be seen in that continuum, that they are thinking about the whole supply chain, and they're trying to rebuild that supply chain through very targeted incentives in terms of, now this is a whole of government thinking, which is interesting and important.
Yes.
I also wanted to point out to two very important things which has happened and which has not been discussed, particularly by all these business channels too. The focus has always been on taxation and these micro changes in taxation, which don't really affect 96-97% of the population. Now, what does affect the population is jobs. And
yes.
The largest increase in the budget has been in the labor, employment and the skilling ministry.
Okay.
The jump is almost 166%. The budget has been doubled from something like 10,000 odd crores to 28,000 crores. And this is the first time in the last almost 10, 12 years that I've seen such a large jump.
No, point taken. Point taken. I want to quickly bring in Sanchita Mukherjee as well at this point to also talk about your main takeaways of the budget, what you believe has stood out for you today, and also Sanchita Mukherjee, the tourism sector, culture, heritage, tours and travels. This was a sector that has been complaining in the last few years that particularly after COVID, that nothing substantial has been done for them. But today's budget did see a lot of announcements for this sector in particular, Sanchita.
Yes, absolutely. Very heartened to see that, and thank you, Uday, for having me on your show. In fact, I think the budget was very, very well structured, very responsible, with a very strategic focus on medium to long term. And it is not about what will the common man get, because eventually it is the common man who benefits from all of these initiatives. So the way I look at it is, yes, definitely big push to capex. It's almost 9%. So continued capital public expenditure on infrastructure, on various measures, on futuristic companies. For example, the reforms in IT sector, what we were just talking about right now, I'll just add on to the fact that, KPO, contract IT services, then a whole lot of KPO related data centers will all come under information technology services with a safe harbor of 15.5%. And within this, mid-tier IT firms has been sharply raised in the definition of mid-tier from 200 crore to almost 1,000 crore, right? Which is a big relief for IT and futuristic opportunities within IT. If one were to look at what's given out for women, now women have traditionally always been a part of the economy which have held on to getting credit guarantee schemes. Today you have a She-Mart which is being announced, right? Which is incredible. So for women, for youth, the diverse announcements that have happened for youth in terms of gaming, animation, 5 university hubs, education to employment, which talks about particularly addressing the skilling gap. For example, we're all aware and we've talked at length on how the industry demand is there.
Yes.
But the skilling gap is just not being met. So I think this entire initiative, which is education to employment, largely focuses on plugging this skilling gap. And then, of course, like you said, 15 archaeological sites, heritage tourism. It's quite magnificent, if you ask me.
Absolutely. All right, I'm taking a short break at this point. We continue our focus on the union budget on the other side. Don't go anywhere.
यार सोच रहा हूँ पॉलिसी बाजार से टर्म लाइफ इंश्योरेंस ले लेता हूँ ताकि मेरे बाद फैमिली को पैसों की कमी ना। तू भी ले ले। यार अभी तो यंग है यार, बाद में देखते हैं। आजा।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
MDH कसूरी मेथी लाजवाब है, लाजवाब है।
स्वाद और सुगंध इसकी
लाजवाब है, लाजवाब है।
अगर MDH कसूरी मेथी नहीं डाला
तो खाली हाथ मलते रह जाओगे।
एक एक पत्ता हाथ से चुना, स्वाद और सुगंध जगाए कई गुना।
All right, with that, let me go across to my colleague Uday Pratap Singh for the latest news from Maharashtra.
Hello, my name is Uday Pratap Singh. You're watching Next in Maharashtra, a special segment where we bring you the latest from India's financial capital. Here's what's making the headlines in Maharashtra this week. In a massive economic triumph at Davos, Maharashtra has sealed MOUs worth 30 lakh crore rupees with preliminary talks for another 10 lakh crores, set to create 40 lakh jobs and build India's first innovation city near Mumbai. Watch this special report.
Maharashtra has achieved a massive milestone of the World Economic Forum 2026 in Davos, with Chief Minister Devendra Fadnavis announcing that the state has signed MOUs worth Rs 30 lakh crores, with preliminary talks completed for an additional 10 lakh crores. This landmark haul is set to create up to 40 lakh jobs across the state. Highlighting the global appeal, 83% of these agreements involve foreign direct investment from 18 countries including the US, UK, Singapore, Japan, Switzerland, Germany, UAE and more. The remaining 16% focus on foreign technology partnerships spanning sectors like AI, quantum computing, data centers, green steel, health, food processing, fintech, logistics and urban development. In a game-changing announcement, Maharashtra will partner with Tata Group with an investment of over 1 lakh crores to build India's first innovation city near Mumbai, a future-ready hub for AI, semiconductors, GCCs and innovation. Detailed planning begins in the next 6 to 8 months.
पुढच्या काही वर्षांमध्ये आपण मुंबईला एक सर्क्युलर इकॉनॉमीचं शहर म्हणून त्या ठिकाणी पोर्ट्रे करू शकू आणि हेच टेम्पलेट आपण सगळ्या मोठ्या शहरांमध्ये पुण्यामध्ये नागपूरमध्ये सगळ्या मोठ्या शहरांमध्ये आपण नेऊ शकू अशा पद्धतीनं ही गुंतवणूक आपण या ठिकाणी केलेली आहे.
In other news, the Maharashtra government and MMRDA have signed deals with 11 global giants for the Raigad Pen Growth Center, the first city in 3rd Mumbai and a hub for tech, fintech and data centers. Unlocking over 1 lakh crore rupees in investments. Here's a report.
At the World Economic Forum 2026 in Davos, the Maharashtra government and the Mumbai Metropolitan Region Development Authority have signed MOUs with 11 leading global companies to develop the Raigad Pen Growth Center, envisioned as the first city in 3rd Mumbai and a next-generation hub for technology, fintech, data centers and global capability centers. Chief Minister Devendra Fadnavis, who was present for the signings, extended a warm invitation to international investors to make Raigad Pen a premier business and investment destination. This strategic project, located just 15 to 20 kilometers from the Navi Mumbai International Airport, will be modeled after Mumbai's Bandra Kurla complex as a world-class international business district.
A lot of foreign companies have already shown their interest to invest in this new city, whereby it will host a lot of GCCs, it will host fintech, it will host. So it will be a very inclusive business district.
Meanwhile, at the Bombay High Court, Deputy CM Eknath Shinde honored CJI Justice Suryakant, highlighting Maharashtra's conviction rates soaring from 9% to 45% and pushing for 60%, while stressing justice, democracy and judicial infrastructure upgrades. Take a look.
In a grand felicitation ceremony at the Bombay High Court, Deputy Chief Minister Eknath Shinde honored Chief Justice of India Justice Suryakant, emphasizing that as long as justice-loving people hold the highest positions, our constitution and democracy remain secure. The event celebrated India's robust judicial system and Maharashtra's strides in delivering swift justice to the common man. Deputy Chief Minister Shinde highlighted Maharashtra's remarkable progress in conviction rates, rising from a mere 9% to 45% under the current government, with ambitious plans to push it to 60%. He stressed the focus on bolstering judicial infrastructure, technology, and manpower to ensure faster trials and greater accountability in the system. The Deputy Chief Minister urged Justice Surya Kant to grant full bench status to the Kolhapur Circuit Bench during his tenure, fulfilling a long-standing demand that would bring quicker access to justice for people in Western Maharashtra. He praised Justice Surya Kant's inspiring journey from a middle-class Haryana family to the Supreme Court, calling it a beacon for youth through hard work, honesty, and dedication.
Emphasizing green energy leadership, CM Devendra Fadnavis has announced at the World Economic Forum 2026 that Maharashtra is on track for 16 gigawatts solar power by year-end through Asia's largest decentralized program, slashing farmer costs, cutting emissions and powering a sustainable future. Here's more.
Maharashtra is scripting a global success story in the renewable energy. Chief Minister Devendra Fadnavis, speaking at the World Economic Forum 2026 in Davos, announced that the state is on track to achieve 16 gigawatts of solar power generation by the end of this year through Asia's largest decentralized solar energy program. The Chief Minister presented Maharashtra's transformative model, which has solarized every agriculture feeder independently, creating a dedicated company to supply clean power to farmers. This initiative has drastically reduced electricity cost for the farmers from rupees 8 per unit to less than rupees 3, easing the burden on industries and domestic consumers while saving billions in power purchase cost over the coming years. The Chief Minister emphasized how Maharashtra has reshaped its entire energy sector in under a decade, from just 13% renewables a few years ago to ambitious plans for 52% renewable power by 2030 and 45 gigawatt additional generation, including 70% solar generation by 2032.
These are this week's updates from Maharashtra. You're watching our special segment Next in Maharashtra. Stay tuned for more news. Welcome back. I'm Uday Pratap Singh. You're joining us on Newsx's coverage of Union Budget 2026. Our big focus remains on the takeaways of Finance Minister Nirmala Sitharaman presented budget for the year. It's been called a budget of opportunities. Prime Minister Modi has said it will unleash a reform express in the road to Viksit Bharat. Joining us now to decode today's budget is Hardeep Singh Brar, President and CEO, BMW Group India. Mr. Brar, welcome. Thank you for being with us today.
Thank you for having me on this show.
What did you make of today's budget? What has stood out for you in the Finance Minister's address?
Overall, the budget has been very good from automotive perspective. There's a lot of spend on infrastructure capex, which is expected to support road networks, better connectivity, which will benefit us in cars distribution and after-sales operations. Another very technical point from our perspective is there is an advanced ruling validity, which has been extended from 3 to 5 years since we are importing a lot of CBUs. So it helps us in greater policy predictability from long-term planning. Also, the continued government emphasis on manufacturing and Make in India initiatives also encourages localization, and which again really helps us. There was another very important point on electric vehicles. There was a murmur about taxes going up because it's at 5% today, and thankfully there has been no hit on that, which is a very, very strong news for us. Also, there's a lot of focus on tier 2 and tier 3 cities development, and from automotive perspective, and especially from luxury cars, standpoint, it will really help us in growing into these smaller markets. And last but not least, a lot of focus on enhancing the charging infrastructure in India, which is very, very critical for the further growth of electric vehicles. So overall, a very, very good budget from automotive industry standpoint.
Okay. Also now with the new income tax rules officially rolling out from the 1st of April, that's when the Income Tax Act comes into effect. Are you hopeful that that will further increase demand, consumption, with more money in the pocket of individuals?
Of course. I think the two big factors last year were the income tax exemption, which came in the last budget, and of course getting implemented now, and also the GST reduction last year in September. These two are the big benefits which came in last year, and hence we never expected that there would be further tax reductions or income tax exemptions. So I think implementation of this, I think, will show a big benefit to the consumer as well as the industry in the upcoming fiscal.
Have you seen that already? Have you seen the GST reforms increase increase interest and demand for your group, for others in the auto sector after the GST reforms were announced and introduced end of last year?
Of course. If we see the first 8 months of last calendar year, let's say January to August, the industry was just growing at about 2%. And after in the last 4 months, which was September to December, the growth was to the tune of 17 to 18%, as a result of which the overall growth ended at about 9 to 10% for the calendar year. So a huge impetus, and there has been growth. And of course, for BMW as well, we were growing at about 13% pre-GST, and we grew at about 17% post that, ending with about 14.5% growth rate for the full calendar year. So overall, a huge benefit for the industry.
Yes, and also, Mr. Brar, for the EVs in particular, because your group has embraced this sector with a lot of energy and as much euphoria as you do for other vehicles in your umbrella. Are you happy with the incentives so far by the government for this sector? What more would you want from the government? Also, charging infrastructure, development, has it been adequate, or is more needed to be done?
So I'll divide this my answer into two parts. Firstly, let's look at the GST. I think government is bang on. Today, the electric vehicles are costing about 50% more in terms of manufacturing cost, the cost of material, etc. And the benefit for the EVs, the GST on EVs is just 5%. And if you compare with a normal car or an SUV, which is at 40%, it's a 35% delta, which kind of compensates for the higher manufacturing cost for the batteries. So I think it is spot on. Coming to your second point on the charging infrastructure, I think there's lots to be done on that side. And I understand, I don't have data on top of my mind, but I understand about 2,000 crores are going to be invested in the charging infrastructure, which will really bring in a lot of focus on the charging infrastructure. Of course, as OEMs, we have to keep on increasing the range of the cars by getting higher kilowatt batteries.
Yes.
But if we have charging infrastructure in place, that will be a big boost to the electric vehicles. And this 2,000 crores investment is a step in the right direction. And the last part would be, while I would say, while the charging infrastructure, there are about 30,000 chargers across the country, but my understanding is about 30% are not working.
Okay.
Now, who solves for that is a big question mark. I think both government and the industry has to play a role in making sure they are up and running. And that's a big question
Yes.
because everybody will invest into chargers, but who will take care of them is what we really need to solve for.
All right, my final question to you, Mr. Brar, is on, to offset the US tariffs. There have been many measures announced by the government, also new trade agreements signed with new markets and, other countries. we, of course, have seen the most recent one amongst them being the FTA with the EU. What effects of that are you going to see for your group and for your sector in India? Have you studied, the agreement now in detail, and what is really going to be the impact of that on your group and on vehicle prices and on the auto sector as a whole?
Firstly, let me tell you, because there is a lot of euphoria, which is, I think, rightfully so, it should be. But this effect is going to come by end of 2027. There are still about 2 years to really reach that level. And the reason for that is that currently just a sign off, it has to be signed more across all the 24 countries in Europe, which is not going to be an easy thing. I think by end of this year, they will be able to get all the 24 countries on board, and then the ratification will happen, and the likely implementation is by end of 2027. So it's still 2 years away. The second part is it is only going to impact the CBUs of the luxury market. And what I understand is the CBUs across the luxury market is just about 5%. 95% of the cars in luxury segments are actually manufactured in India. So there is not going to be much impact, because even today, the cars that we are assembling in India attracts just 15%. And the best case import duty reduction after 5th year is just about 10%. So no impact on the cars which are being manufactured in India. And for the battery electric vehicles, the benefit will start from the 5th year to the 10th year. So the first 5 years, there is no benefit on the electric vehicles. Yes, on the CBUs or the cars which are running in Europe, which we are not importing, yes, we will be able to get those cars now without really worrying about how do we assemble or how do we manufacture them locally. And for those high-end cars, yes, so the plan is that the duty will come down from 110% to 40% when the implementation happens, let's say beginning of 2028. And then till 2033, it will come down to 10%. For those 5%, or maybe it may increase to 10%, then there will be a real benefit. But for rest of the 90% of the cars, there is not going to be any benefit. In fact, because of the forex fluctuation, the prices for the remaining 90% of the cars will actually go up, because the components are getting more expensive. The forex is having a real impact on the business.
All right, Hardeep Singh Brar, President and CEO, BMW Group India. Thank you very much for joining us with your expert analysis. Also with us live now is Amul MD, Jayan Mehta. Mr. Mehta, welcome. Thank you for being with us today on Newsx. It's the big budget day on a Sunday this time. What did you make of the Finance Minister's address? What stood out for you in the Union Budget of 2026?
Thank you so much. We would like, on behalf of the dairy sector and the cooperative sector, thank Honorable Finance Minister for a very visionary and a futuristic budget. Milk is the largest agricultural crop of India, and cooperatives is one of the biggest sectors. There are 8-9 lakh cooperatives in the country with about 30-32 crore members. So any intervention in that would benefit a large number of people. That is what we have seen in this budget. Talking about dairy and the taxation part, we have this Amul model in which all the villages form a district milk processing union. All the state district unions form a state marketing federation. The taxation of dividend was not fair in the earlier times. Now that has been corrected, and it will encourage the cooperatives to come into the new tax regime, pay lower taxes, no double taxation on dividends, and it will benefit them. Similarly, cattle feed is what we make for ourselves, the farmer makes for themselves and sell to themselves. Now that income also will be not treated separately. Like milk income, it will be a part of the farmers' total kitty of the cooperative services they provide to each other. We sell about 10,000 crore rupees of cattle feed every year, and that will mean a significant saving and the simplification in taxation process for our village cooperative societies. India is undergoing White Revolution 2.0, which means all the benefits which we get in Gujarat also will get similar benefits. All the states across the country will also benefit by that. Veterinary services have been given a lot of emphasis this year, talking about 20,000 new veterinary doctors and institutions to actually set up, new colleges to be set up to produce a large number of force to serve our cattle. That will give a lot of benefit under the White Revolution 2.0 also. A related dimension to that is a focus on reduction in the treatment of excise for the compressed biogas. Like we are in business of producing milk, there is dung also which we have started processing. And India has a target of up to 5% blending of CPGs, this is compressed biogas, with the CNG. And that will not be taxed under the excise thing coming forward, which means it will make the fuel more efficient and also cheaper, and it will encourage more and more CBG units to come across the country. Talking about the cooperative sector, India has set up a new multi-state cooperative under the guidance of the Ministry of Cooperation called the National Cooperative Exports Limited. It's mentioned in the budget details of the ministry, wherein about 450 crore rupees grant in aid has been given to NCEL. And that export cooperative will promote the exports of the products of the cooperatives globally, and that will mean a big support to the farmers in the years to come. Similarly, a new cooperative university has been set up last year, Tribhuvan Sahakar University, and government has given a generous 300 plus 200, about 500 crore rupees grant in aid to create capital assets, a new university, state-of-the-art, world-class university, with the focus on cooperatives also coming up. And there is NCDC, the National Cooperative Development Corporation, which supports cooperatives across the country, and they've been also given 500 crore rupees grant in aid. So these are the things which will holistically support. An additional thing government also mentioned about supporting the cocoa producers of the country. Again, it's largely under the cooperative sector in Camco in Karnataka, Kerala, and larger focus on producing more and more cocoa beans along with coconut nationally will make us more Atmanirbhar in this particular sector also. So this is an all-round support which the government has outlined, apart from other initiatives like the infrastructure development projects. The food processing ministry continues to support the PLIS, production link incentive scheme budget this year also with about 1,200 crores. About 10% of us comes to us as the largest food processing investor in the country. So this is also a welcome step, and that's where we are seeing all of the government approach. 500 crore rupees given to animal entrepreneurship development in the dairy sector, which again will lead to more and more number of farmer cooperatives and women members being encouraged by this. And a new dedicated freight corridor from Surat to East, Dankuni, Calcutta, Bengal, will also lead to more movement of goods in a very fast manner. Like, thanks to the dedicated freight corridor in the western side, our milk tankers are moving on train, or within 10 hours, they reach Delhi from say North Gujarat of Mehsana. So this is where, all in all, it will give in a good support to the dairy sector of the country and the cooperative sector also.
Do you believe women, farmers and the youth would be particularly happy with today's budget, Mr. Mehta?
Absolutely, because once you are not charged, I mean, there's no double taxation on dividend, which means money will directly reach in hands of every single farmer of the cooperatives associated with Amul in Gujarat and also the rest of the country. So yes, there is a lot to cheer with this budget and the kind of steps they have taken and announced today, in addition to all what has happened over the last 1 year.
Yes.
If you look at it, last budget, we saw the tax component reduced on the consumer.
I was just going to come to that. Mr. Mehta, on consumption and demand. Do you believe those tax breaks given, which are going to now be implemented from the 1st of April, the implementation will begin because the new Income Tax Act kicks in, then will lead to further demand, further consumption? Also, the GST reforms unleashed in the last quarter of last year. What have been those impacts on demand and on consumption for you as a group?
That's very true, because the GST reduction brought in very, very low rates of GST across most of the food product categories. In our case, with a turnover of about 1 lakh crore rupees this year and growing at double digits, we are already witnessing a big jump in demand of all the products in which GST cut has happened. Like ghee, butter, cheese from 12% to 5%, ice cream from 18% to 5%, chocolates also slashed down significantly. I mean, we've never seen such a spike in demand and a growth and consumption across multiple categories over the last several quarters. So this has been a welcome step. And more importantly, last year's budget also reduced the income tax on the consumers, which means more purchasing power and lower cost of goods, which means higher demand. And obviously, it will benefit everyone, all the producers and also the consumers. And the market will move from unorganized to organized to loose to package and branded. And that will give a fillip to the overall food processing industry of the country as well.
Yes, and the dairy and livestock sector, you know, has been touched upon, spoken about today like it hasn't been, you know, earlier in a few years, isn't it, Mr. Mehta? The kind of specifics for these sectors.
Yes, you are very right, because it's been a good treatment given looking at the overall dimension and its impact to the masses. And really, that's why we are all thankful to the Honorable Minister for a very, very futuristic budget. And we are very sure that these things, as they get implemented, we'll see very good results for the farmers and all the members of the country.
Are you also hopeful that these new rail corridors which have been announced, these new rail corridors also, of course, hopefully further infrastructure improvement with the increase in capex will also help in transport and on the logistics front as well for groups like yours?
Yes, very true. I mean, we are already seeing very good benefits of the dedicated freight corridor, which has already been commissioned in the western part of the country, almost from north to east. Also, it's giving us very good speed in transportation of very perishable items like fresh milk across the country. And historically, milk has moved from Gujarat to Calcutta under the Operation Flood for the last 30-40 years. And now, if it moves on a dedicated freight corridor, you can imagine in 12 to 14 hours, if a tanker of milk traveling on a train will start from Gujarat and end up being in Bengal in the shortest possible time. So yes, it will give a massive fillip to movement of goods both sides and really benefit the perishable product sector.
All right, appreciate you joining us, Jayan Mehta, with your perspective on this story. MD Amul, thanks indeed for being with us. Let me join Dr. T.R. Kesavan now, Director and Group President, TAFE, is also, of course, head of the FICCI Agri Committee. Thank you very much for being with us today on Newsx. Let me ask you first, Mr. Kesavan, what do you make of the budget 2026? What has stood out for you in today's budget? What have been your big takeaways, your big highlight items?
See, as far as this today's budget is concerned, I always believe that the budget announcement actually is reflecting a strong commitment to a technology-led, inclusive and diverse agricultural growth. Because I am going to talk about agriculture because I really spend a lot of time on this agricultural area. I will also say that this budget is not a populist budget, but a budget is actually looking for long-term growth, long-term sustenance, and also increasing the farmers' income by enhancing specific productivity areas. Let me stop here at that, and if you have any other questions, let me continue.
Absolutely, because Dr. Kesavan, you know, in particular for agri, because you head that committee as well for FICCI, and as you said, you spend a lot of time in this sector. We have seen, you know, the government focus on this sector in numerous budgets, but in today's budget, we saw, of course, a focus on livestock, dairy, other, of course, incentives for farmers. How you know, crucial has today's budget been for farmers and for the agri sector as a whole? How much of a fillip has it given, you know, for dairy, for livestock, and other, you know, aspects of the agri sector?
See, this budget is actually a very important aspect in this budget. This is the first time I am seeing an agri budget moving away from the subsidy focus to actually productivity increase focus. And we have been talking about it. We said this is very important that we create a productivity focus in agriculture rather than living every time with a subsidy. And I'm happy that the...
Dr. Kesavan, can you hear me? Okay, I think we've lost him there, unfortunately. All right, let me quickly draw you in here now, Sandeep Jhunjhunwala, on, you know, Sandeep, can you hear me? Sandeep Jhunjhunwala, are you there with us? Okay, I think we've lost him there. Do we have Mr. Rajawat with us? All right, we are just going to be joined shortly by some other guests as well. But this, of course, is the big budget of 2026. we've seen numerous announcements, of course, cutting across all sectors, a lot of reforms, of course, announced, a lot of tax proposals. Okay, I'm being joined now by Manish Gupta, in fact, finance and market expert, to talk about the big tax takeaways also of the budget. Manish Gupta, just talk us through the big tax incentives. Some of them have spooked the market as well, but other taxes announced, the tax component of today's budget. Just decode things for us. What did you make of today's announcements by the FM?
See, after going through a lot, I tried again. And then I tried again, and then I found that this time Nirmala Madam has said, middle class, please do some sacrifice for us. Because I don't want to confuse you, so I am holding all the tax benefit till next year, because on 1st April 2026, you will be getting new tax law, that is Income Tax Act 2025. So let us discuss there. So apart from some small changes, there is nothing done for, especially for the income tax assessee. Yes, there are changes. There are the discussion where they have given the benefit that you can now revise the return with less penalty. Yes, they have given one big relax, considering the both side impact. Then in case you have any property with any of the country outside India and you have not disclosed till 20 lakhs, you can now disclose and we will not charge penalty, but you do investment here. So this way we have made some good relation with the outside country. One, we have given the relax to the Indian people who have done some wrong without disclosing, but now we have given the relax. And on the other end, we are getting the money back to India. This is like black money we are getting from Switzerland in Swiss money.
Yes.
So this is of course a relax, but yes, you can ask whether how can we get the property in 20 lakhs? So yes, this amount should be at least 50 lakhs. Then it should be a handsome amount. But anyway, whatever is there. So yes, one big change is the TCS reduced from 20%, 5% to 2%.
Yes, for specific sectors.
Yes.
For specific sectors that's happened. Yeah.
For medical and for tourism.
Yes.
What they have done, government understood that people are getting penalized because they hard-earned money, they save every month, and then after 1 year they go for travel, and for a year of saving they go for the education.
Okay.
So by deducting TCS, they have to claim, and within 6 months government has to refund it with interest. So there is no benefit.
Right.
So just to keep a track on the people who are sending money on these accounts, they have reduced till 2% so that people will be under track, but they are allowed. So people is feeling relaxed.
So smart announcement by the government is what you're clearly saying. All right, I'm taking a break at this point. We continue our coverage on the other side of the Union Budget 2026. Viewers, don't go anywhere.
शिव प्रसाद जी को बीमारी के कारण 15 बार हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने उनका लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
कभी खेलों के मानचित्र पर उत्तर प्रदेश सिर्फ संभावनाओं का नाम था, पर 2017 के बाद संभावनाएं संरचना बनी। जनपदों में स्टेडियम, ब्लॉकों में मिनी स्टेडियम और गांव में मैदान। खेल अब शहरों तक सीमित नहीं रहे। लखनऊ से मेरठ, वाराणसी से अयोध्या, ग्रेटर नोएडा से गोरखपुर, मैदानों पर सिर्फ खिलाड़ी नहीं, अंतर्राष्ट्रीय इवेंट्स उतरे। खेलो इंडिया, यूनिवर्सिटी गेम्स, मोटो जीपी, डेविस कप, बैडमिंटन से लेकर खो खो तक उत्तर प्रदेश अब मेजबान भी है और दावेदार भी। प्रतिभाओं को मिला मंच, प्रशिक्षण और सम्मान। आज उत्तर प्रदेश खेलों में सिर्फ भाग नहीं लेता, दिशा तय करता है। यह है बदलाव की कहानी, मेहनत की पहचान और भविष्य की स्वर्णिम उड़ान। ये है आत्मविश्वास, लगन और विजय का गूंजता संदेश। ये है नया उत्तर प्रदेश।
सोच रहा हूँ टर्म लाइफ इंश्योरेंस ले लूं ताकि मेरे बाद फैमिली को पैसों की कमी ना हो।
तू भी ले ले। अबे जल्दी क्या है, बाद में देख लेंगे। आराम से। अब तक कुणाल को हार्ट अटैक आ गया यार।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
इसको तो फुटबॉल खेलना भी आ गया और इसे तो पियानो बजाने भी आ गया।
चंद्रयान भी उतर गया चांद पर हमें
अब तक टेस्टी राजमा बनाना नहीं आया।
बिना MDH राजमा मसाला के टेस्टी राजमा कैसे बनेगा?
स्वादिष्ट राजमा के लिए MDH राजमा मसाला।
क्या स्वादिष्ट राजमा बनाए?
MDH।
इम्तियाज जी के फादर को बीमारी के कारण अचानक हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
Welcome back. I'm Uday Pratap Singh. You're joining us on Newsx's special coverage of the Union Budget 2026. Finance Minister Nirmala Sitharaman has presented yet another budget today, which many are calling the budget of opportunities. Prime Minister Modi has said that this is going to unleash a reform express in the path ahead to Viksit Bharat. Joining us now to decode the Union Budget of 2026 is a special guest. He understands, of course, how these budgets are presented year after year. And for the significance of today's budget, we're going to go straight across to Amitabh Kant, former CEO of Niti Aayog and G20 Sherpa. Mr. Kanta, welcome. Thank you for being with us today on Newsx. What did you make of today's budget? What has stood out for you as the biggest takeaways of what the Finance Minister presented earlier this morning?
So first and foremost, I would say that it's a very fiscally responsible budget in the midst of very complex geopolitical circumstances. I mean, there's a breakdown happening across the world. There's disruption. Global supply chains are broken. And therefore, it was very important that the finance minister ensured that the fiscal deficit comes down to 4.3%. The debt to GDP ratio comes down to 55.6%. And yet the capex goes up to 12.2 lakh crore, which in effect means 4.4% of your GDP goes into infrastructure. The important thing is that she's laid a lot of priority on manufacturing, on cutting edge technology, and on infrastructure. But this is in many ways a budget of fiscal consolidation. It is a budget of great focus on manufacturing and infrastructure, and this focus on 7 high-speed rail corridor between cities as growth center, the focus on cities with 1 lakh crore fund, 5,000 crore per city, which will be the economic region for Tier 2, Tier 3 cities, should drive urbanization in a very big way. But if you ask me, one factor, the smartest move in the budget is to give this 22-year tax exemption for data centers, because worldwide almost 75 to 80% of the investments are happening in artificial intelligence. If we are able to attract AI, computing power, and data centers, India will be able to leapfrog.
Yes. So clearly data centers is something that this announcement for data sectors is something, as you're saying, is the need of the hour, and is something that is, of course, going to help us vis-a-vis our global competitiveness. Also, of course, in this, really volatile geopolitical situation, do you believe today's budget also, Mr. Khan, has enough to mitigate the effects of the tariffs? Also, interestingly, the announcements on rare earth, even though relations with China are stabilizing, but today's announcement for the rare earth sector also is very, very important as a counter to dependence on China for this.
So the budget lays a lot of emphasis on sectors which have been impacted by Trumpian tariff. It lays a lot of emphasis on textiles, on footwear and leather, on marine sector. It also lays emphasis on another very critical sector which is important for job creation, and that is travel and tourism. The budget lays emphasis on some cutting-edge areas of growth: nuclear power, lithium, ion cell, critical mineral. And on critical mineral, the challenge is not about availability of critical minerals. It's the processing ability, and for processing you need technology. You need good machinery. So she brings down the costs of machinery in many of these areas to zero rates of duties. So you can then bring in cutting edge technology into India to become a processing champion. And that, to my mind, in the long run is important, because China, what it does is it raises the price of its raw materials, which makes it impossible for manufacturing anywhere else. It reduces the prices of the end product, but maintains a monopoly by this manipulation, which it does all the time. So it's important to become actually a processing champion, which this budget should help us to go forward on.
Yes.
But these four critical mineral corridors where lithium, etc., are available in Kerala, Orissa, Tamil Nadu, Andhra, will help us push this in a big way.
Indeed. And now, to tourism. Now, this is another sector that you personally have also contributed a lot. And the tourism sector often, feels disappointed that nothing big is announced for them ever in the budget. Since COVID, they were looking for that since post-COVID. Today's budget actually has a lot for the tourism sector, also the heritage and culture space, even the orange economy. Mr. Kant, because again, this is sectors, animation, creators, and gaming, which comes under the orange economy. They also often feel that the budget doesn't have enough for them. But today's budget has a lot for the orange economy. Today's budget has a lot for tourism and heritage and culture, doesn't it?
Yeah, it has. So tourism is a very big multiplier to the economy. It has a big driver of growth. It creates vast segments of job. So it lays a lot of emphasis on regional sites to be developed, on a whole range of new areas of growth, including trekking, mountaineering, etc., etc. And I think it's a good emphasis on tourism because it can lead to a lot of job creation in India. States have to be the drivers of growth in tourism because it's essentially a state sector. My view is that, eventually our aim is that we should be growing at rates of 8 to 9% over a 22-year period. This would require states to do a lot of heavy lifting now in many of these areas of growth. Critical mineral will not happen, tourism will not happen. Many of these areas will not happen without states driving growth. You need 12 champion states to grow at 10% plus for India to grow at high rates.
Yes. Markets, though, reacted, in a negative manner. Markets seem spooked downward quite a lot, then did rebound, but I think are finally ending or about to end in the red. What do you make of the stock market's immediate reaction to today's budget?
So, stock markets look at short term because there's a challenge with FII because dollar is strengthened against the rupees. There's a challenge on FDI. They tend to look at short term, not the long term. But I think in the long run, the budget will correct its, the markets will correct themselves. Once they have a better analysis of the budget, the markets will pick up. I have no doubt on that.
Okay.
Infrastructure sectors, tourism sector, biopharma sector, many of these sectors will pick up in due course.
My final question to you then is on today's budget. Do you believe it is going to further ease of doing business also for foreign investors? Do you believe these incentives today will help as well?
Well, not the incentives, but I think some measures announced in totality, if you look at it, because what you need is predictability and consistency of policies. So this reform of FEMA, the non-debt instrument rules, the custom reforms, which the finance minister said will be trust-based, the rationalization of duty, the financial sector reforms, and the new Income Tax Act, which will come into effect on 1st April, all this should help us to have greater confidence in our economy.
Okay, and lastly, not on today's budget in particular, but on the GST reforms, because now it has been, several weeks since they've kicked in finality. Do you believe their effects have been visible? Their positive effects in increasing consumption, demand of the GST reform rollout? Are we seeing that in today's economy already?
Well, they were helpful in pushing the demand for automobile sector.
Yes.
My view is that India has to grow on the back of the private sector, so consumption demand has to pick up more and capacity utilization has to go up. And in the long run, it's important that the private sector growth kicks in. India can't keep growing on the back of government sector. That's not possible. But public capex is not the way. The way forward is private sector making a drive for them.
Amitabh Kant, former CEO, Niti Aayog, appreciate you joining us with your perspective on the Union Budget 2026. Let me join Niranjan Hiranandani, co-founder and managing director, Hiranandani Group. He's also live with us now. Mr. Hiranandani, welcome to Newsx. Thank you very much for being with us today for your expert analysis on the budget. What has stood out for you? What did you make of the FM's announcements this morning, Mr. Hiranandani?
I think the entire focus has been what the Prime Minister wanted to do long ago, which is Atmanirbhar Bharat. And I think in the Niti Aayog, Mr. Amitabh Kant laid the foundation of that. I think this year's focus has been in order to see that every sector which is required to become Atmanirbhar should be a focus on it. So internal economy, external economy, manufacturing, import substitution, data centers, requirement to put manufacture chips, important materials. And the second part of it, I think the importance of investment by the government cannot be undermined. Because look at the various multiplier effect that it has happened. Whether it is in terms of the Prime Minister's Awas Yojana, 1 crore houses, the multiplier effect has benefited 260 industries. We are the second largest employer in the market, that is infrastructure and housing, after agriculture. So I think the growth which has been stated at 7.4 and still be able to see that the deficit financing is put under control are two parameters which are there. The one thing which I don't understand, to be honest with you, is the fact that why is it that in spite of all the international parameters working for us, why is the rupee falling to the extent it has already done? Not able to understand. It just can't be because the FIIs have moved out. That cannot be the one segment that answers that story. But having said that, we do see a focus on the multiple sectors that really taking place into the whole thing. Second point is the focus on minutiae. You know, every segment is taken to its logical end, whether it is hospitality, talking about the various centers that is there, including Ayurveda centers, whether it is freight corridors and the details relating to that, also the kind of industrial parks that we need to do, medical tourism in terms of it, girls' hostels and stuff like that, education campuses. I think first time I'm hearing from the budget speech, such detailed emphasis in various segments that is there.
True.
Obviously, one thing which I found missing was the reforms are taking place outside the budget. Normally, what happened in the past was that many times the budgets was the time of announcement of all the reforms that were taking place. Now, a large number of reforms are taking place outside the budget format. And this time too, we don't see any major reform announced in the budget. This is a follow-through of Atmanirbhar Bharat and actually announcing to that extent. So I think good budget, but the point is I was expecting a lot of reforms to take place and a little more focus on real estate in terms of growth, because affordable housing is certainly getting challenged in spite of Prime Minister's Awas Yojana, and a little more emphasis on these 2 points was what I was expecting. But I guess overall, if you look at it, fantastic budget.
Okay. Let me also, ask you, Mr. Hiranandani, on, of course, the GST reform effects. Have those kicked in now? Have you seen an increase in interest for the real estate sector in particular as well after those reforms? Also, today's further push for capex and infrastructure upgrade, particularly in tier 2, tier 3 towns? Are you also hopeful that that will further, the real estate sector and, other sectors as well, which are, attached to the logistics and infra sector?
Two parts to that answer. Number one is, if you look at the kind of inputs that have been given by the finance minister, they are all long-term. You can't set up all these units, infrastructure, etc., that we talk about, schools, hospital, enterprise, universities, tourism centers, freight corridors overnight. So all the things that she has talked about in terms of the direction is long term. So, that's why the reaction of the markets was that it doesn't look like the next 2 quarters will benefit tremendously by what she has said. So I think that is why the downturn has taken place, because there is no immediate positive story in the budget to be able to give the benefit that is there. So all the things that have now come onto the budget is long term. And that is fantastic for the economy and over a period of time. So I think 2 angles to it. Long term, fantastic. Short term, we are not seeing any new thing which will come up which says that tomorrow morning. Things like FTA with Europe also is long term, because it will take at least a year to get manifested by both the governments, both in the European economy and here. So we see lots of long term.
A quick intervention then. That will be my final question to you, Mr. Hiranandani. Do you believe that was because it had to be a fiscally prudent budget as well, looking at this geopolitical volatility and the need to control the fiscal deficit? Do you believe it was a fiscally prudent budget, which is why these immediate short-term measures haven't really been announced? Also, it's nearing the midterm of this Modi 3.0 government. Obviously, there is no need for populism at this point as well.
True, but we have to understand, we have to thank Trump. We have to thank Trump that because of him, that Atmanirbhar movement has gone much faster. So I think the European Union free trade agreement, fantastic because of all that. So ours also has been a responsive budget to what is happening with America not being as reliable as a partner, and we looking that we should rely on ourselves, and the growth story has to be more demographically dividend ourselves internally also, and with new relationships which are there. I think this budget is very clear in that direction, that it is responsive to what America has done to India. So I think it's a responsive budget, not a reactive budget, which is good, because we didn't want any sharp reactions to America, but we wanted to respond to them. And I think both the European deal as well as this budget clearly indicates to us that it is responsive to the world, that we will be Atmanirbhar and we will deal with those countries which are friend and are open to do trade with us, and we will become self-sufficient and stronger. Yes, balanced budget and fantastic.
Niranjan Hiranandani, thank you very much for joining us with your perspective on the budget. Let me join Gautam Mukherjee, senior journalist, who's also live with us. Gautam Mukherjee, what has stood out for you in today's budget? What's been the big hit of this budget and a big miss for you?
Well, there are just 3 areas which are something to do with the here and now, as opposed to the long term up to 2147, and that is the 40,000 crores for electronic manufacturing, more specifically chip manufacturing, the 7 high-speed railway corridors between major cities. Now, what they've done is taken a major metro and an emerging metro and linked them. So that is a very good thing, because you need a lot of business between such large cities. The third one is, of course, the 1 lakh crore increase in the capital expenditure budget, which is what is going to underpin the growth at 7% or more. You've also got a modest increase in the defense budget. It is a modest increase. It's 15.3% overall, but only about 2.15 of that will go into capital outlays, the rest being consumed by the size of the existing military and the pensioners. So that disappoints a little bit because given the volatile circumstances geopolitically, we could have done with a bigger defense budget. Apart from that, almost everything else is to do with the future. A lot of them are commendable. Data centers, customs duty exemptions to boost both civil and military aircraft manufacturing on spares and components, many things of that order, which are all to do with the future. The ones which are talking of creating more and more cities and more hospitals, these remain a little bit gray when it comes to implementation, judging from the past. Uday.
Yes, so those were the hits of today's budget. What have been a miss for you in the budget, Gautam?
Well, I don't know why the government insists on stepmotherly treatment to the stock market, as if it has nothing to do with Viksit Bharat 2047, to be dismissive and say, the stock market is short term, as, Amitav Kant just did. I don't think that makes sense. Why didn't they do something about capital gains tax, withholding tax? Why did they decide to raise STT for futures and options to get no more than a paltry 25,000 crores is what is estimated. But it really gave a kick to the market sentiment. And look at it, it's down. And going to take some time for it to recover. The whole year has been fragile for the stock market with extensive FII selling, almost continuous. Even in the first month, it's over 5,000 crores of January. Last year, it was 15,000 crores or so. We are only staying afloat because of the domestic investor. And, this is not being acknowledged. And to treat the stock market as some kind of adjunct that doesn't matter, I think is very short-sighted and a leftover from the babus of, perhaps they still exist, the babus of the socialist era. Uday.
Professor M.K. Agarwal, economist, is also in fact joining us now live on the broadcast. Professor Agarwal, has this been a pretty balanced budget in your opinion, a fiscally prudent budget? How would you sum up today's budget in your first initial assessment, Professor Agarwal?
Uday, what I find that this budget is fiscally definitely forward-looking because capex is being maintained, fiscal discipline is there, and moreover, indebtedness shows to decline so that burden of interest is quite down. If we are looking at the primary deficit, it is quite manageable. Therefore, I can say that in terms of fiscal prudence, it is quite good. With regard to overall, in terms of development and growth-oriented approach, I find that this is highly growth-oriented. And if you are looking at the Modi's economic behavior, you'll find that he believes in big push and saturate any sector that you take up. That's why this time, if they are taking a tourism sector to a lot, data to a lot, and similarly manufacturing and MSME that we discussed on this channel itself yesterday, that my forecast was that manufacturing and MSME will be a highlight because the way things are moving, this requires a big push, particularly in the given current geopolitical situation and given the opportunity that India is getting in terms of several FTAs. So I believe that this is a good growth oriented and it has touched up our opening the new growth engines, growth centers in terms of tourism, in terms of you can say, you can call sunrise industries also, but I believe that they are already there, but they need to be promoted. And moreover, there is a much emphasis on MSME sector. Simple reason is that if you have to grow in a sustainable manner, inclusive manner, then when there are big stones, you require to fill up the gaps with the smaller stones. So here lies the role of the MSMEs. And here the role of the government is not very much. They have a limited support that they are providing in terms of corporate mitras or in terms of growth funds or other types of things that they are providing. And moreover, if you are developing the service sector in India, definitely it is not possible without MSME. And even the agricultural modernization that is being envisaged by this budget or the earlier budgets. So there is also role for MSME to a large extent. So that's why I believe that this budget is moving in a consistent manner, growth oriented, inclusiveness and sustainability. You'll find environment, climate change. They are also being addressed to a large extent.
Yes.
And one more thing here, that tier 2, tier 3 cities already we know that they have become the new growth engines of the Indian economy, and
Absolutely.
that's why that is being emphasized in this budget.
Emphasized on as well. Okay, let me also join in fact at this point Nirmal K. Minda, President ASSOCHAM and Chairman UNO Minda Group, who's also live with us. Thank you for being with us today, Mr. Minda. What is your first reaction to Union Budget 2026? What has stood out for you? What did you make of the FM's address and the announcements made today in the budget by the Government of India?
So, thank you very much. I am not only the chairman of UNO Minda, I am also the president of ASSOCHAM now.
Absolutely.
And from ASSOCHAM, we have collected, the various suggestions into 5 pillars from all the sector, almost 17 sector, and then there were 40 recommendations. I am very happy to say, out of 40, almost 24 recommendations have been considered and accepted in a manner. And the 5 pillars were Make in India, and for Make in India, which is Atmanirbhar Bharat, we know that we need to continuously reduce our import and increase our export and trade deficit in each sector. And for Make in India, we need ease of doing business in all sector and MSME growth. My earlier colleague was also mentioning that MSME is linked in all sector. And then digitization and sustainability. So to take it on the today budget, in the MSME growth, you have seen the 10,000 outflow, and then the tier 2, tier 3 cities, which has been focused an outlay of 5,000 crore in tier 2 and 3 cities. Thereby, in tier 2, 3 city, the job creation will be more, and people don't need to come to the rush to the main urban city for the job. For Make in India, the ECMS schemes of outflow of 22,000 to 40,000 is one of the great initiative, and Semicon 2.0, again a very great initiative, and ease of doing business. In the pillar, you must have seen the simplification of the tax regime, whether it is custom duty or income tax. And again in the manufacturing, the rare earth metal, which is the 5 states where, the rare earth, there is an opportunity of localization of raw material. So all these initiatives, I would say, will enhance the economy. There are many more in each sector segments, but this will enhance our economy, boost our economy. We have already, in the last 11 years, we have crossed from a position of 10th to 4th largest economy, and I see that we are moving towards Viksit Bharat 2047 with 35 trillion economy.
Mr. Minda, now there has of course been a big push for Atmanirbharta and this Swadeshi movement, to offset the tariff impact. Do you believe today's budget also has a lot for us, for the sectors and domestic manufacturing to go Atmanirbhar? In today's budget, do you believe there were measures that will help offset this tariff impact and the geopolitical uncertainties that you're seeing in the world today? One definitely is the rare earth aspect that you spoke about to counter China, but what else, sir?
The MSME growth I mentioned, the outlook for the MSME growth is one of the major, input. And again, I said we have to reduce our cost. We have to be cost competitive. And our quality had to improve. Our Honorable Prime Minister have also mentioned about quality. As far as the tariff, you can say the tariff regime, we are 61.5% of our GDP come from the domestic demand. Yes, of our dependence on the export is good. And with the FTA coming in, this will open more opportunity for export as long as we are, cost competitiveness and our productivity and quality continuously to improve. And I would say it is the onus on the entrepreneur and the industrialist also. How can we, use the different kind of benefits and regime government incentives are giving. But we also requested to speed up government. They have also done this, they have requested states to disburse all the incentives and subsidies, whatever has been committed. I think all that in place, if it is happen, I see no doubt that, we will be net surplus in each sector with the import versus export trade deficit.
Your company's, your company's sector now, as far as the auto sector is concerned, were you happy with what today's budget contained? Also, the GST reforms unleashed last year, towards the end of last year. Now the impact of that is also being felt, particularly in the auto sector. Are you seeing that, sir? And are you hopeful of that in the days ahead as well, as this sector continues to grow?
Yeah, I would, first of all, I would say that we are far behind the developed nation of per capita car or per capita two-wheeler. We are 1.4 billion people and our per capita car 48 car, per thousand. So we have huge opportunity. We are 4 million today and we can easily go to 8 to 10 millions in the years to come. So, and auto segment will grow, whether it is two-wheeler, passenger car and all that. If the consumer will be more, if the more people will get more money in their pocket, either by the tax reduction, government have already done 12 lakhs last year, or by the income. If the industrial growth happens, if all sector growth, common man can increase his earning and then can spend on roti, kapda, makan and vahan, I would say. And then the GST benefit has definitely benefit the rationalization and the reduction of the GST in auto sector has really benefited us and the production is increasing and thereby auto components.
Okay, my final question.
Yes, please complete. Yeah, there are three announcements which is helping auto industries today. One is that, you have seen the capex reduction, capex duty zero on the lithium-ion battery and the ECMS scheme which I told you.
Yes.
That will also increase our localization and reduce cost.
Yes.
And the third one is the Semicon 2.0.
Okay. Final question, 30 seconds to you, sir. On the aspect that you mentioned at the start in your role as President ASSOCHAM, that the industry's requests and, engagement with the government is obviously proving to be fruitful. If your suggestions are being taken on board, does this show that the government is engaged and is actually onboarding suggestions actively of industry as well, which shows a very, all-encompassing budget in a way today?
Yeah, you are absolutely right. I have been meeting various ministries, various secretariats of different sector, and we have been giving, in one pager, what is our pain area, sector-wise, what is the solution, what is the industry best practices or a benchmarking in the different countries.
Yes.
And then we are, requesting government by when, target date. It is unusual, but we are requesting. And then we are communicating back to our membership so that the whole cycle, of ease of doing business and, make in India, we can grow together. But government and secretariats answer to your questions is very positive. and the willingness to improve and take it to Viksit Bharat 2047.
Nirmal Minda, Chairman Uno Minda, and of course President ASSOCHAM, thank you very much for joining us with your analysis of the budget 2026. Sandeep Chofla is also joining us live now, partner PwC and Chairman Direct Taxes Committee. Appreciate you being with us. You of course are also a chairman of a key committee of ASSOCHAM. Mr. Chofla, let me draw you in here first on your overall assessment of the budget today. What did you make of the announcements by the FM, Nirmala Sitharaman, and also the tax aspects of the budget? What did you make of that?
Thanks. So my analysis and view of the budget, it's a very balanced budget. I'll not repeat what my predecessors have already said, Mr. Kant, Mr. Minda. So they have already elaborated on the various sectors which were touched upon by the Honorable Finance Minister. And in a very balanced way, whether it is the semiconductor or it's a manufacturing or education and other sectors have been, infrastructure have been touched upon, and various schemes and various areas have been spoken of, including what all needs to be done in the next year. So it really lays down a roadmap for the years to come. And as my predecessor, Mr. Khan, said that in the era that we are living in, which is very uncertain with all the geopolitical challenges, I think India is holding its flag high as a growth area. It's 6.5 to 7%, and some of the announcements made today are really geared toward that. One thing which I noticed and which is very prominent is that a logical way in which the whole fiscal policy has been looked at, including taxation as one of the policy, which is very important in trying to drive home the various points and the sectors which have been touched upon. For instance, if you look at the whole new technology, IEA, etc., AI, artificial intelligence, and the new technology, data center as an infrastructure is one of the key components there. And there to attract investment, foreign investment from the hyperscalers, very clearly the exemption has been provided. And not only that, in order to allay any fears of the Indian data centers, safe harbor rules have been devised. In order to, and you spoke about manufacture. So one other area from a tax perspective, which has been touched upon, is that foreign companies who provide capital equipment and tooling. So there's an exemption for 5 years.
Yes, very quickly, I want to quickly intervene there by asking you, though, what spooked the market according to you? We saw a downward spiral today. The markets have ended, I think, in the red. What spooked the markets today?
I think one is that, there is a lot of fine print that has to be gone into. And one thing which may have spooked the market is introduction of STT, the Security Transaction Tax on Options and Futures. So increase in there. So maybe that was one of the points, because otherwise, if one looks at it from an overall perspective, I think it's a very balanced budget. And clearly, all the other announcements are linked to the tax policies. Announcements are linked to that. Now, the other would be that maybe, as a salaried taxpayers, people were expecting some relief on the standard deduction, etc., which has not happened. But having said that, last year itself, there was a rationalization of the slab rates and the tax rates. So to expect that again, I think was asking for a little bit of too much. But TCS rates have been brought down, whether on overseas travel or overseas education, etc. So I think on an overall basis, one clearly geared towards and the tax policies aligned with the other fiscal policies geared towards manufacturing, attracting foreign direct investment, and also in the services sector. If you see for GCCs, there's always been a question that how would India attract foreign talent, because somebody who comes in from abroad to India and then has to pay taxes. So there also there's a exemption provided for 5 years for any non-resident who would come in on any income which is not sourced or not deemed to accrue or rise in India. So I think it's a matter of time where people
Yes.
go through the fine print, and
Right.
then possibly the market would look up.
All right, all right. Let me also draw in another special guest at this point. Raksha Khatse is live with us, Minister of State, Government of India for Youth Affairs and Sports. Ms. Khatse, thank you very much for being with us today on Newsx. Your first reaction to today's budget, आपकी पहली प्रतिक्रिया आज के budget पर, what did you make of the announcements today? आज के budget का push, focus क्या रहा आपके नजरिए में? Okay, I think we've lost Raksha Khatse there, but Sandeep Chawla, quickly coming back across to you now on the the Income Tax Act, of course, also rolling out from the 1st of April. Implementation begins, of course, with this in the new financial year. How has that really contributed to increasing demand and increasing consumption?
See, the demand and increased consumption, from an income tax perspective, would not be based on the new Income Tax Act, but it's based more on the rationalization of the tax rates and the slabs which happened in the last year, which really which increased the disposable income by reducing the taxation burden on the common person. So that really.
Mr. Chawla, can you hear me? Okay, I think we've lost him there. All right, I'm being told Raksha Khatse is back with us now as well now. Raksha Khatse, if you can hear me now on the broadcast, क्या आप मुझे सुन पा रहे हैं मैम?
हाँ, मुझे yes, मुझे आ रही है आवाज.
Raksha Khatse is live with us now, Minister of State for Youth Affairs and Sports,
Hello.
Government of India. Welcome, thank you very much for being with us on Newsx. आपका स्वागत है. आज के केंद्र बजट का बड़ा फोकस क्या रहा आपके नजरिए में? What has been the big thrust of today's budget according to you? आज के जो ऐलान किए गए वित्त मंत्री द्वारा क्या सबसे बड़ा और फोकस रहा आपके नजरिए?
तब तक फिर मैं उनका तो भी करवा लूं.
रक्षा जी, आवाज आप तक पहुंच रही है? लगता है दोबारा उनसे संपर्क जो है वो टूट गया है. हम कोशिश करेंगे दोबारा हम रक्षा खादसे के पास जाएं. वो केंद्र राज्य मंत्री हैं यूथ अफेयर्स और स्पोर्ट्स का पोर्टफोलियो इनको दिया गया है मोदी सरकार द्वारा, और ये बड़े अहम मंत्रालय हैं क्योंकि आज हमने देखा है कि स्पोर्ट्स के लिए, खेलो इंडिया के लिए काफ़ी कुछ रहा आज के बजट में. युवाओं के लिए भी काफ़ी कुछ रहा, महिलाओं के लिए भी काफ़ी कुछ रहा. इस सब के बारे में चर्चा करेंगे हम रक्षा खादसे जी के संग. रक्षा खादसे जी बहुत जल्द जुड़ने वाले हैं हमारे संग. वी आर ऑफ कोर्स decoding today's budget with experts from across walks of life, from industry, from government, from bureaucracy, and of course from corporate India. They're all commenting on today's budget, decoding of course what has been the big thrust today, and of course what has also been the big focus areas. So we will be joined very shortly by the Union Minister of State. These are, of course, the big announcements being made today. And, another very key aspect, Gautam Mukherjee, if I can bring you in here, which, Mr. Amitabh Kant referred to as well, was that incentive for data centers. Now, data is something which we need to become globally competitive on. And India has been striving to try and become the data hub for the world. In that aspect, then, how important has today's announcement been for the data sphere?
It's a nice carrot because it is tax exempt till 2047, provided the foreigners come in and provided they use our data centers, help to set them up, and use Indian intermediaries for storing data, particularly in India. So there are ifs and buts as usual.
Yes.
And, I
think
it's...
But you do believe it's a good carrot, so it possibly could be a big incentive for this sector and industry. All right, Union Minister Dr. Jitendra Singh is also, in fact, joining us now live on the broadcast on Newsx. Dr. Jitendra Singh, welcome. Thank you very much for being with us today on Budget Day. It's a Sunday, sir, but a power-packed Sunday We're getting reactions, of course, from all quarters of corporate India and industry who are welcoming.
Well said, Uday, well said.
Yes, today's announcements. Your standout areas, sir, your focus areas of today's budget, what stood out for you in your opinion? What was the thrust of today's budget?
Yeah, Uday, at the outset, I must compliment Nirmala ji for presenting consecutively so many budgets, 8, 9 budgets, and then that too. And also the other coincidence is that under the same Prime Minister, which has not happened very often earlier. So having said that, yes, I am also personally feeling gratified that most of the provisions brought in this budget and most of the announcements made, the declarations made are related to one or the other department that I am connected with. So I think this is a budget which is driven by certain structural reforms targeting the futuristic parameters or the benchmarks of economic growth anywhere in the world. And this is hugely driven by technology, the cutting edge technologies. And if you ask me, I think one of the most important announcements is that of the Gati of the Biopharma Shakti. Now, Biopharma Shakti, because the view held across the world among the economists is that the next industrial revolution across the world is going to be biotech-driven, biotechnology-driven. It will be the recycling, waste to wealth, gene-driven, circular economy. So there's going to be a huge paradigm shift. Like the earlier revolution was the IT-driven. And therefore, India is already into it. We are not late beginners. We already have a dedicated biotechnology policy called BioE3, which means biotechnology for employment, economy and environment. And this is in the same spirit to encourage indigenous health devices, vaccines. And let's also remember that it's also addressing other issues, which are very fundamental issues, like, for example, the increasing prevalence of non-communicable disease. We have about 11 to 12 crore of known diabetics in India today. We are detecting almost 12 lakh cancer patients every year. So keeping that. Now, mental health is a new issue which has come to, come to the visible notice only the recent few years in India. We have only one NIMHANS in South, so NIMHANS 2 in North India. The second important announcement, which of course you reported very well, the Shanti Act, the Shanti Bill is in keeping with that.
Yes.
There will be exemption on duty for the components or equipments to be imported for use in the construction of the nuclear plant. So that's going to be a huge incentive and also encouragement for the potential investors, both domestic as well as international. Similarly, the rare earth corridors in the 4 states. Thirdly, then again, the geospatial mission, national geospatial mission. Though some people may not be able to comprehend this immediately, but they are going to realize the long-term effects. Look, we are now faced with the issue of rapid urbanization happening in India. Even where you and I are sitting right now, were actually village till a few years ago. Now it's a part of the larger city called the NCR Delhi. So how to manage this urban planning with the modern methodologies, using satellites, using drones. We already have a geospatial policy in place, so it is going to be. Then for carbon utilization, we have again 10,000 dedicated, 10,000 crore dedicated allocation, because that will address the environment issues, that will address the reduction of carbon emission, and therefore also has a lot of to do, yes, with the circular economy. So a whole lot of technology-driven provisions which would take some time to realize, but they are for the larger benefit and longer benefit of the society across the sectors.
And these are all futuristic sectors, Dr. Singh. These are all futuristic sectors that have been spoken about and touched by the budget today. You know, be it nuclear energy that you spoke about, be it biopharma, of course. Yes. The Shanti Act had introduced that in Parliament, had passed that in Parliament just in the last session. Now this will further build on that. You know, given the fact that this comes so soon after the passage of the Shanti Act. Also the orange economy, you know, content creation, animation, gaming. These are again a very futuristic sector that has also been spoken about in today's budget.
AI. And it it's also a matter of satisfaction that now we are not late beginners. We are not followers. Like, for example, the simplest example is that in IT we were left behind by about 1.5 decades. Television happened in US in 1950s. We got to see first Chitrar only in 1970 in the capital city of Delhi. It's no longer so. We are ahead of others in circular economy. We are almost at par as far as our gene cycles are concerned. So all that is related to, we are already, which is a lesser known fact, we are already number 3 in biomanufacturing in the Indo-Pacific and number 12 or 13 in the world. So we are already rapidly growing. So this is going to be a huge push even to the future economic growth of this country.
Okay, you know, the opposition though is critiquing and criticizing the budget. Dr. Shashi Tharoor is saying it seems to have missed the ball in a cricketing analogy. The union budget will just help BJP's own people, says Akhilesh Yadav. Rahul Gandhi and Mallikarjun Kharge have also hit out at the budget, the leaders of opposition in the Lok Sabha and Rajya Sabha respectively. What did you make of opposition's criticism?
No, I think, see, today we live in evidence-based era. So opposition has to oppose. That is their mandate. So we don't expect them to pat our back. But now look here, if you say it is meant only to please our people, whatever that means, or a section of people, now tell me, how is the gene therapy going to help only one section of people? How is biopharma? If somebody gets cancer, somebody gets sick, regardless of the disease, going to avail of the same, these units which are being set up. So this is, or clean energy for that matter. Then somebody says this budget is blind or something like that. Now there's a famous English adage, the eyes see what the mind knows. So if the mind doesn't know, eyes go blind. So that's what I say. If you just go into the depth of it, this budget is addressing some of the fundamental issues, the fundamental areas which have a long-term bearing in the futuristic growth universally for any country for that matter. But it is glad that India is already into this.
Yes. Dr. Jiten Singh, also, you know, there has been a big Swadeshi push as well, a big Atmanirbhar push by the government of India. Now, as far as this push is concerned, how much is today's budget going to further help domestic manufacturing, this Atmanirbhar push, further increase consumption and local demand, also offset the tariffs and the geopolitical uncertainties that we've seen in the world of today?
No, of course, when we move ahead in the biopharma sector, when we move ahead in the nuclear sector, we are also improving our position geopolitically vis-a-vis other members of the World Committee. So, and this indigenous manufacturing in the bio sector, we are already into it. This 10,000 crore is just going to give it a push, and then aligning it with private sector, which is also a new initiative by the Modi government itself. So I think there is going to be a huge amount of Atmanirbharta, reduction in the reliance on imports, and also geopolitically, because we are now dependent on the petroleum products, which are also to a large extent right now imported. So as we move on to these alternative sources, this is going to increase our independence and also our level of confidence while dealing with the other nations of the world.
My final question to you, Dr. Jitendra Singh. We were just speaking with the president of an industry body, ASSOCHAM, a few minutes ago on the show, and he was saying that this is a government which engages with industry, which listens to feedback, listens to suggestions and incorporates it. He said this is a very healthy government, this is a very healthy mechanism that the government has adopted, be it the finance ministry or other ministries as well. For you, sir, after the Shanti Act implementation, before it and after it, how has been the industry outlook and industry reactions to this proposal and proposition?
No, immense, huge. And also, this is a part of a larger ecosystem.
Yes.
Along with the Shanti Act, just before that we came out with the RDI fund, Research Development Innovation Fund, 1 lakh crore. And I think this is one of the rare examples where government has come forward to fund the private sector. Because we know even the private sector is taken by surprise. They never thought that one day we'll suddenly open up the nuclear sector for their participation or space sector to participate. So to give them an initial boost, this fund is meant to be created to catalyze their initial, undertaking into this, and finally then in the noble hope that they will then be on their own in a bigger way and become healthy partners with the government. So as Prime Minister said right in the beginning in 2014, the mantra of maximum governance and minimum government, I think that is reflecting in this also. This is a government which is there to facilitate economy and also to facilitate the extensive participation of the non-government sector, be that the private sector, the philanthropists, the non-government entities, the trusts, etc. And government would be just facilitating that so that it's a more of a whole of government and a whole of nation endeavor towards that Viksit Bharat goal.
All right, Dr. Jitendra Singh, appreciate you joining us with your perspective on Union Budget as always, putting it out very, very clearly and lucidly. Let me join Rajiv Gupta in at this point as well, co-chair insurance and group president PB Fintech Limited. Appreciate you being with us on today's special coverage. Rajiv Gupta, what did you make of today's budget 2026? What is the biggest takeaway for you? Also for your sector, you are of course part of the industry body, so you will speak about all industry, but for your company sector as well, how pleased were you with what today's budget had in store?
I think the takeaway is clearly fiscal reforms. Prudent fiscal deficit of 4.2% and a capex of 12.3 lakh crores is certainly a welcome move, because this will give a boost to the manufacturing sector and the MSME segment, which is the need of the hour. When we move towards Viksit Bharat, I think while we are good on the service side, manufacturing space has been an issue. This budget will certainly give boost to that sector, and I believe this will really help us in our objective of becoming Viksit Bharat by 2047. As far as insurance sector is concerned, while there is no specific announcement on the insurance sector as of today, but I think just before the budget, the Insurance Amendment Act was passed, and prior to that, we also had a nil GST relief given a few months ago by the Finance Minister. Now, certainly, those two acts have helped the industry and it will really boost growth. But what is happening today is there is a bigger challenge. 25 years after the sector has been opened up, one of the biggest challenges that I see in this sector is how do we bring in financial literacy in this country of 140 crore people. Unless we educate people, about why buying health insurance, why buying term insurance, and why investing in pension plans is crucial for their life, the middle class and the lower middle class are going to be the most impacted. So creating awareness through financial literacy programs by the state government and central government with the help of private sector and regulators becomes very crucial for long-term planning, particularly when we are aiming at insurance for all by 2047. So I wish that government intervenes in this space and some kind of budget is allotted for building awareness and creating financial literacy in this country.
Okay.
The second part I would say is that we have 15 crore senior citizens, and as of today, and by Viksit Bharat, we will have 50-60 crore senior citizens. Now, unfortunately, 80% of the senior citizens today don't have a health insurance plan and don't have an income plan. Now, imagine the scenario in 2047 if this continues, the social impact it will have on our country.
Right.
So I think clearly today's 40-year-olds will have to be, educated to buy basic requirements of health insurance and an income plan for themselves so that they can live a life of dignity post 60.
Okay, so more awareness needs to be created, more financial literacy as well as what you're saying. Now, Rajiv Gupta, as far as, of course, now the sunrise sectors and the other, frontier sectors which have been hit by the tariff impacts as well, do you believe that the GST reforms now their impact is being felt, is being seen already in the economy in terms of the increase in demand and consumption? Also, today's budget's announcements for the sunrise sector, will those further help as well in this Atmanirbhar push?
100%. Yeah, 100%. I think GST relief has been one of the best reliefs ever announced, because today products are expensive. If consumers in the middle class and lower middle class who live hand to mouth have to invest or have to buy products, such relief in GST has been a welcome move. But as I told you, it is not only the tax benefits. So for example, pension in this country is not so popular. But today people have to start thinking that how will I live my life post-retirement when I have to live for another 25-30 years, because longevity is increasing. Now, unless there are tax reliefs granted for encouraging people to invest in pensions, because these are long-term investments,
absolutely,
people will not come forward to invest in pensions. At the same time, senior care is going to be a huge problem. So when I grow old, I need a caretaker, my medical expenses will go up, my hospitalization expenses will go up. Now for me to survive, I think senior care should also be included in the insurance products that come out, and that can only come if government announces some tax reliefs for planning for senior citizen lives.
Yes. Okay. Okay. Rajiv Gupta, appreciate you joining us with your perspective on today's budget. Your big takeaways there. We will, of course, be continuing our coverage of the Union Budget 2026 on the other side of this very short break. Don't go anywhere.
सोच रहा हूँ टर्म लाइफ इंश्योरेंस ले लूं ताकि मेरे बाद फैमिली को पैसों की कमी ना हो। तू भी ले ले।
अबे जल्दी क्या है, बाद में देख लेंगे। आराम से। अब तक कुणाल को हार्ट अटैक आ गया यार।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
शिव प्रसाद जी को बीमारी के कारण 15 बार हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने उनका लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
This week on the roundtable, we are taking a look at the danger our country faces from the number of Chinese imports that have been literally dumped onto our country. Our economy is at great risk. What can the budget do about it?
The budget is like an iron dome. It protects our factories, it protects Indian capacities, and we need to defend them from the onslaught that the Chinese economy is doing on India. And it has reached huge proportions, so there is a need for an urgent step to be taken by the union budget.
What I feel is not single measure, there can be multiple measures, but the best way to stop Chinese imports is by raising tariffs. History has shown it. We must raise tariffs as per the WTO agreements, and we have the limit of 50.4% average weighted tariff, whereas we are imposing hardly 6%. So there is a huge gap between what is the bound rate and what is the actual effective rate.
I think we should strengthen our industrial policy and see to it that our PLI scheme also is interweaved with quality in a very strengthened manner, so that we are back on the path of having the QCOs into the country to a great extent of sectors and pushing them very hard.
Thank you.
इम्तियाज जी के फादर को बीमारी के कारण अचानक हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
Hello and welcome. You're watching our rolling coverage of Budget 2026. Finance Minister Nirmala Sitharaman has presented her 9th consecutive budget today, inspired by 3 kartavyas or responsibilities to accelerate and sustain economic growth by enhancing competitiveness, fulfilling aspirations, and ensuring every family, community and region has access to resources and opportunities for participation. Income taxpayers who were expecting tax rebates or standard deduction changes did not get that relief, but the overall focus of this budget, it seems, has been on taking the nation forward as a whole. We're living in slightly troubling geopolitical times, and what India requires really is a sustained effort to move forward together, and hopefully that's what this budget gives us. Joining me on the broadcast is Mr. Sukanta Majumdar, Minister of State for Education. Mr. Majumdar, thank you so much, sir, for joining us on Newsx. I, of course, have to begin by asking you, how do you expect, sir, this very high-powered committee that has been announced in the budget this time around for vocational training to actually be implemented in some of our tier 2 and tier 3 cities? Because that's been a conversation for a long time, sir. How do we uplift the tier 2 and tier 3?
See, in case of education, as mentioned by the Honorable Finance Minister, this is the E to E, that means from education to employability and employability to enterprise. So this is the target. As for the several years, it was a debate whether our education system is adequate enough to impart the education that can make a person skillful, because nowadays the economy is driven by the skills, not by the number of certificates you have with you. So I think this is an initiative which will, this high power committee, obviously it will come into existence within maybe within few months, and then it will it will do a study, or they will do their course of work, and they will suggest what to do to make our young generation more employable, because it is a gap between our educational institution and the market, because our products, the human resource, that is our product, and that is not ready for the market, and this was the overall kind of perception we are getting from the employers. So that's why I think it is very important, and it will create a change in the education system of the country.
Dr. Majumdar, speaking of gaps, sir, there's of course a lot of focus once again in the budget on AI and AI education. How are you foreseeing, and how are you foreseeing your ministry specifically now implementing the larger vision of bringing AI to each and every individual in India, especially the youth of India?
Yes, it is a continuous effort, and AI already it has become the integral part of the education. And from the CBSE school books, or it may be the AICT curriculum, which is the guideline for the engineering colleges and the other technical educational institutions. But AI is an integral part, and we cannot avoid this. So from the school level, our child are getting exposure towards the AI. Even in this time also, a new initiative has been taken by the government, as mentioned by Nirmala Sitharaman ji, that this animation, visual effects and gaming and comics, that is the AVVGC centers will be opened in the schools, and as well as 500 colleges. The total school that we are planning to cover, it is 15,500 colleges, and this will give an exposure to these new skills directly from the school as well as in colleges also, and it will be helpful for the students, and our students will be much more skillful in these areas.
Okay, Dr. Majumdar, I must ask you, for some of the younger audience members who are watching, or their parents who are watching, if there is one key takeaway or one key scheme that you'd like to mention and really inform our viewers. Of course, everyone's watched the budget speech, but in the overall picture, we sometimes miss out on the specific nuances of certain sectors. So since I have the privilege of having you with us, and education is such a critical part of taking India forward, any specific scheme or anything that you'd like to highlight, sir, for parents as well as young India to really look out for and maybe check out online as well?
See, there are several things, those have been announced in this budget. It may be the 5 university township, the opening of 3 new NIPERs. That is another aspect, and not only so, the 7 pre-existing or existing NIPERs to be upgraded also, that has been mentioned in the budget. But the most importantly, the thing I want to mention in this budget, that is the girls' hostel will be opened in each and every district of the country. That will, improve the GER in girls in the education system of this country. And when a girls get educated, the whole family will get educated. And special stress will be given on the girl child, those are engaged in STEM education. that is the science, technology, engineering, this kind of education, the girls, because they sometimes, they don't have the hostels, so they, face the difficulties to achieve their dream. This initiative, when we will open this girls hostel in every district, then it will help those girl child to touch their dream. So this is the, I think, kind of a initiative which is very unique and will be, you will be path-breaking in the education system of India.
And Dr. Majumdar, of course, this budget also comes, as I've mentioned earlier as well, during very interesting geopolitical developments that are taking place. So I must understand from you, do you feel that we have now set the stage for India to deal with Donald Trump's trade war?
So I don't want to mention anyone's name. It is maybe your arena. But India is trying to become a self-reliant, that is Atma-Nirbhar. And that's why it's maybe Bio-Pharma Shakti Mission. We have allocated this in this budget, 10,000 crore rupees has been allocated. Or it may be the pre-existing this 40,000 crore has been allocated in the IT and all these things, semiconductor mission, AI, innovation. So India will become the self-reliant. Without becoming self-reliant, we can't be the Viksit Bharat. So this is the motto, and this budget is just nurturing those things.
Dr. Majumdar, one last question, sir, before we thank you. I have to understand from you, very interesting announcements have also been made for the education sector, and especially the youth of India, in some of the recent FTAs that we have signed. How soon do you think that those will come into implementation, and how soon will we start benefiting from those?
Yes, we have signed a very good deal with the European Union. So it will create a huge market for us. And in most of the cases, especially in case of textile industry, we will have a huge market. And in Asia, within few years, we will become the leaders in especially areas also.
Absolutely. Thank you so much, Dr. Majumdar, for joining us on Newsx with that perspective. Appreciate your time, sir, on an important day such as today. Joining me on the broadcast now is Mr. Kalyan Chakrabarti. He is the CEO of Emaar India. Mr. Chakrabarti, thank you so much, sir, for joining us on Newsx. I have to, of course, begin by asking you your biggest takeaways from today's budget, sir.
Thank you very much for having me on the show. It has been a terrific budget. To me, I think there is a strategic aspect of continuation of the 2047 Viksit Bharat vision, which keeps getting doubled down on by the government with each budget, and every time they come up with a policy, it kind of links to the larger picture. So I think at a strategic level, a 25-year vision kind of a statement keeps on repeating, so that's a good one. At a tactical level, quite a few things have come. Obviously, the allocation to the infrastructure of almost 12.2 lakh crores is a big deal. Creation of economic zones, city economic regions and things like that, which was hitherto unheard of. Earlier, we used to talk about lots and lots of roads getting made. Now we are talking about big quality infrastructure, which will make a huge difference to the numbers. Obviously, the ripple effect of all of that is going to be significant. I think for a rupee of infrastructure spent, about 3 rupees in the economy is what one tends to see. So I do see a positive for all the infrastructure linked sectors, including, of course, labor, but cement, steel, all of that should ideally see the benefit. I also see the vision wherein the universities and for women, the girls' hostels and all of that, which got talked about, that gladdens my heart. I think for the long-term growth of the country, that added with the focus on tier 2s. So, and that I'll probably reserve for your next question or otherwise. I see a significant pattern there, the tier 2, tier 3. And as a real estate professional, I get excited by that announcement.
So speaking, Mr. Chakrabarti, of tier 2 and tier 3, we've heard today an announcement in the increase in national infrastructure spending, as you've also mentioned, to 12.2 lakh crores now. how does MR somewhere plan on aligning some of its future projects? And is there something coming up for tier 2, tier 3 cities of India as well? What are some of the sectors and areas you'd like to focus on?
So I think tier 2, tier 3 are automatic growth engines for the economy as such, and hence any good developer would like to be present in those places. I think what the budget has done is, by very clearly articulating that tier 2, tier 3 will be a focus area, is unleashing something big. Otherwise, if you were to see the country as such, from the British days till the independence times, we had 4 urban areas practically, or metros, which ran the show. Subsequently, we grew it post economic liberalization. We added 3 more, maybe Hyderabad, Pune, and Bangalore. So ended up having a 7 metro drive, so to say. The urbanization happened practically in 7 to 8 metros. With this, I think we are jumping out of the mindset to have 7 or 8 metros driving the urbanization plan down to, let's say, 100 more, because 5 lakh and more cities, I don't know the number at the top of my head, but will be close to about 80 to 100. And that's a lot. So urbanization getting decluttered, going to different places, will also reduce the urban pressure. It will also create lots and lots of pockets of growth, and real estate developers will, of course, look at that. Added to this, the high-speed corridors, which have been talked about, 7 of them at different places, they will go through specific smaller towns. And when they do, that will unleash its own little growth phenomenon.
Mr. Chakrabarty,
and hence, I do
yes.
see us going to some of those places. I do see us exploring and growing enough in some of these tier 2, tier 3 cities.
All right, I also have to understand from you, the budget this year has introduced a scheme for advanced construction equipment as well. Do you feel that this would encourage MR to perhaps accelerate the adoption of precast or AI integrated building technologies in some of your launches that are coming up?
See, precast is something we already look at, and I'm pretty sure with AI, technology is moving at a speed faster than light nowadays.
Yes.
And integration of AI into almost every walk of life is almost becoming a reality. With India also encouraging the industry through this budget on semiconductor, AI and all of that stuff, the adoption, I'm pretty sure, is waiting to be snowballing into something large. We are excited. We are, of course, one of the industries which is slightly more traditional with respect to vis-a-vis other industries, but I do expect it to be a major fillip. We are looking forward to that. Robotics in particular, for example, in our space, I expect that to take off in the next few years. And AI, precast technology is a very old technology now actually, but printing, for example, 3D printing and all of that, I think will take off. This decade should turn out to be that defining decade as far as technology use in real estate is concerned.
And I must also understand, your perspective on some of the larger conversations that are taking place in our country. Do you feel that we've somewhere set the stage for India to deal with some of the trade wars that have been ongoing and that have really kept people guessing and wondering what tomorrow will look like?
I think India's strength has been and continues to be domestic consumption, and this budget proves it again. We double down on our infrastructure spend and we keep our economy going with our own consumption and with our own investment. That story is going to be our security or our mitigation against any of these tariff wars. Having said that, I think in the last 1 year, India has done very good with respect to the tariff situation, closing the mother of all deals with EU, or before that New Zealand, Australia. There are quite a few FTAs that they have closed, and it is commendable. So I think in the turbid waters, internationally speaking, we as a country are doing as good as we can. And our economy, the strength of it, the size of it, the pace of growth cannot just be ignored by anybody. It's a matter of time.
Right, absolutely. Thank you so much, Mr. Chakrabarty, for joining us on Newsx with your thoughts on Budget 2026. I have to move on to bring in Mr. Surinder Kumar Jaiswal, President of the Federation of Hotel and Restaurants Association of India, joining me on the broadcast. Mr. Jaiswal, thank you so much for speaking with Newsx. My first question, of course, to you, sir. Your big takeaway of this budget?
First of all, I would like to congratulate the central government, the Prime Minister and the Finance Minister, because this is encouraging that the tourism has finally come into the government's agenda. It's a key pillar of employment and economic growth in the Union budget of 2026 and 27. placing tourism at the center of the growth strategy. The union budget linking it directly with the job creation, foreign exchange earnings, and local economic development. That's a long-awaited shift. The emphasis on cultural, spiritual heritage, and medical value tourism, skilling, nurturing young storytellers, destination development, and last mile connectivity can unlock India's true potential as global tourism hub. This is the one of the main things which we felt after this budget.
Mr. Jaiswal, a pilot scheme, sir, has also been announced, and we've been reading about it since the finance minister made this announcement to train and upscale 10,000 tourist guides across 20 iconic tourist sites. And this will be a 12-week hybrid course which is going to be developed in collaboration with IIM. How do you view what is now being called a very radical shift in skilling India and creating employment through these sort of jobs that earlier perhaps were not on our radar as much?
Yes, I have already told you that about the job creation which this budget has gone into. You see, if you look the budget, it can be divided, as far as tourism sector is concerned, it can be divided into two parts. One is the indirect. For the indirect, I can say that now the declaration has come that new economic zones in certain cities will be created. Then high-speed train corridors, then 20 national waterways development, improvement of tier 2-3 cities infrastructure, and some GST rationalization also. Besides that, then we come to the direct impact which the tourism industry is going to have it. One of the points which you raised is about the 10,000 guides, upskilling of guides and training of these. Now, why it is being done? This is a job creation because the government intent is to create the new tourist spots. So when you create something, new tourist spots, your cultural values, your cultural sites, your heritage sites, then you need certain people to guide them. So that is a good move, and I think besides these guides also, we will be generating a lot of more employment also.
Right, absolutely. Mr. Jaiswal, thank you so much, sir, for joining us on the broadcast with that perspective. I have with me now Dr. Partha Chatterjee, Professor of Economics at Shiv Nadar University, Dr. Ranjit Mehta, CEO and Secretary General of PhD CCI, and Mr. Navneet Goyal, former Principal Chief Commissioner of Custom and CGST, with us on the broadcast as well. Let me begin this conversation with Dr. Partha Chatterjee. Dr. Chatterjee, I'm being told Dr. Ajay Dua, former Commerce Secretary, also with us on the broadcast. Thank you so much to everyone for joining us on Newsx. Dr. Partha Chatterjee, I must begin by asking you, sir, I'm not sure if you were there when we were just having a conversation with MOS Education, but your big takeaways, sir, for the education sector, and how do you expect particularly higher education in India to be impacted by the budget?
Well, thank you for having me here. And so I think thinking from the perspective of the education sector, right, there were a few things that were there in the budget, mostly related to very specific sectoral needs, right? And I think one thing that we have to realize that India has a large base of young population that we need to educate. And we have a very small window, maybe about 25 years now, when the demographic transition will be completed. So we have to do things within that window. And while we have been doing a lot in terms of setting up new universities, new private universities, new international universities, setting up campuses here, I think we need to do a lot more. And therefore, one area where the government has focused a lot more is to create skill sets needed for specific industries, whether it's the pharma or the tourism or other sectors. So that is a welcome thing. Also, as the minister mentioned, that setting up hostels for the girls in each district, that's absolutely a great move, because in India, we really need to harness the power of women. The participation of women in workforce remains low, It's increasing over time a little bit, but it remains low. And if we can bring them to higher education sector and eventually to the workforce, that will increase India's economic output by a lot. So I think there are certain things by which we can expect the education sector to benefit. There was also a mention of setting up education cities, which will have different universities, different training centers, and so on. So I think that's also something that's going to be very, very helpful for the education sector. Yeah.
And Dr. Partha Chatterjee, I also have to understand from you as an academic leader, of course, do you see that, the 500 crores, I believe, that has been allocated to the AI Center for Excellence will act as a genuine research catalyst? And is there anything else that has stood out for you in the budget as far as AI education is concerned? Because I know that the integration of AI into the education sector is something that educationists such as yourself, academics such as yourself, are really now dealing with. This conversation on a daily basis, that what is the right balance to strike as far as giving people access to AI and educating the youth in AI use is concerned, versus, of course, continuing their education in a more traditional manner as well. So anything that stood out to you in that matter, sir?
Yeah, look, I mean, today we live at a time when things are changing, every day. Right now, for example, everyone is talking about AI agents creating a website for themselves, right? I mean, that's where we are right now. So we absolutely have to educate our students, expose our students to that reality, right? So we have to do that, and therefore any allocation towards that is definitely welcome. But more than that, I think, we need not only allocation, but also people. And that's where I think we need to focus on that. How can we get people not only within India, but also from outside India to relocate maybe and to come back? And that's something that we have to work on today. As you also mentioned at the top of the show, that we live in a time when the geopolitical situation is such, the global uncertainty is very high. And as an economist, I'm very concerned about that. But that also gives us an opportunity to kind of attract talent. And I think where I would have wanted a little more to see in the budget is on that front. That last budget, there were some announcements on that front. And if we could have focused on that how could we attract talent which is now much more vulnerable to all these visa issues and all things that's going on across the world, right? Having said that, there's another thing that I think will kind of have a ripple effect on the education sector, which is the announcement of the Semiconductor Mission 2, right? And the investments around that. Because again, it's one thing is to just say that we need manufacturing, but how do we get manufacturing? Capital is probably among the easier things to get, but we need that talent, we need that manpower, we need that kind of a workforce at all levels, right? From the scientists to the people who will create these factories and so on. So I think there's a large opportunity in the education sector to tie in to these kind of missions, particularly the semiconductor mission that I think a lot of money has been allocated to that. And we can definitely work together with the semiconductor firms which are setting up plants here or setting up their R&D centers here, as well as the government, and the universities can definitely come up with a collaborative effort to create that kind of a workforce that's needed to make these missions successful.
Absolutely. And so before I bring in some of our other guests into the conversation as well, I want to understand your perspective or your expectations rather from some of the recent FTAs that have been signed. And a lot has also been discussed as far as higher education is concerned or an exchange of students is concerned. What is your big expectation and how does that tie into some of the budget announcements?
Right. The FTAs, from an economics perspective, I think those are, again, something that are very important for India because we live in a time which is, very, very uncertain. The uncertainty index is very high. And in fact, one of the things about the budget is how does it address that uncertainty, right? And for the education sector, and particularly for individuals, this uncertainty has created many challenges, right? India has been one of the source countries for people moving into different countries. And partly that has helped us also, right? I mean, we talk about the brain drain, but the fact is that there is also a lot of exchange in terms of ideas, if not in terms of capital also, but in terms of ideas and things like that happen when we have a world that is mobile and where talent can move globally, right? So if the FTAs continue to allow that people can move to different countries and different universities and workplaces, that one, it reduces the misallocation of workforce globally, and therefore the whole world benefits. But also India in specific can benefit by getting these people back to India, or even otherwise through collaborative efforts and things like that. So I think the FTAs definitely help India even in the education sector. Yeah.
Okay, all right. Thank you so much, sir, for joining us in Newsx with that perspective. Let me also bring in Dr. Ranjit Mehta, CEO and Secretary General of PHDCCI. Dr. Mehta, I have to understand from you your biggest takeaway of Budget 2026, sir.
Oh, thank you very much. In fact, today's budget, if you look at it, I mean, this is the budget which strikes the right balance between the growth and stability. We have seen that in the last couple of months, government has already taken such steps like GST 2.0, and also last year there was a big boon for our taxpayers, indirect taxes. However, in this budget, it is a clear message from the government that they are focused on growth. The growth has been the center pillar of this budget. It is with the big push in infrastructure and for private capital investment, and also there has been fiscal prudence, which has been the top agenda of the government. So overall, if you just look at it, the best part of this budget has been that there has been it's very encouraging that there has been a very good step like having the MSME growth fund for small and medium businesses, as we have signed many FTAs with various countries. On the backdrop of US tariffs and how the disruption has been created in global economy through geopolitical challenges and tariff war and all those things, I think that we cannot depend on one economy. So Indian government has definitely taken the right steps. We have done FTAs like advanced economy like UK, then of course Oman, New Zealand, and the biggest FTA with the EU, which is a very recent thing which has happened. So when we are doing these FTA, it is very important that our MSMEs, they need to be prepared for the global economy. They need to have that competitive advantage. They need to have that competitive edge. And to do that, we have to create an ecosystem in our country. And how that can be created is, of course, by supporting the MSMEs. So one challenge for MSMEs is definitely the availability of the easy access to finance. And secondly, I think access to technology. Because today, if you really want to scale it up, and it is not possible without focusing on the technology. So I think this MSME or SME growth fund is an enabler, and this is a right step at the right time. And at the same time, the strong allocation to defense and that shows that government has priority in security also. Then if you just look at the infrastructure, 12.2 lakh crore of outlay for the infrastructure is definitely because this is going to create jobs in our country. And government capex is very, very important at the same time. And the focus on other cities, not only in big cities, tier 2, tier 3 cities, have been the focus of government in this budget. So the overall, if you just look at it, the kind of stability, the kind of inclusive growth the government is focusing on is commendable. And those days are gone when the budget was specific to certain products which are getting cheaper or getting expensive. So it is away from that. This budget is a long-term vision which is aligned with Viksit Bharat 2047. I think every step that we are taking today is that it goes towards Viksit Bharat. And to do that, I think stability in policy and structural reforms and also momentum in execution is very, very important. At the end of it is the ease of doing business and also the cost of doing business. If we just look at the kind of infrastructure.
Dr. Mehta, I must ask you a question on that. When you've just spoken about ease of doing business and cost of doing business. So do you feel that the 2026 budget has done enough to actually lower the cost of doing business, or is there still a lot of regulatory burden which could be the biggest bottleneck, which is something that we've been discussing for many years, right? When it comes to about we are moving up the ranks as far as ease of doing business is concerned. But when I do have conversations with some of the entrepreneurs, they do still talk to me about regulatory burdens. But in the 2026 budget, do you feel that it's done enough to actually lower the cost of doing business?
You see, cost of doing business cannot be lowered through a single budget. However, it is an attempt in that direction. Number one, if you just talk about cost of doing business or regulatory, burden that is on MSMEs, I think for that they have, given in this 10,000 crore fund that they'll be assisted by ICAI on these regulatory things. And secondly, we have a federal structure. We are the largest democracy in the world, and the land is a big cost in doing business. So that adds up to cost of doing business, and land is a state subject. At the same time, power is also a state subject. However, the government at the center can make the enabling environment and also create certain policies where these things can be addressed. However, the implementation part, the execution part remains with the state government. Here, I think that budget is one part. However, if we really want to reduce the cost of doing business, the contribution and support from the state governments will be very, very essential. Without that, we cannot do. And however, on part of ease of doing business, I think the best thing today about the government is whatever challenges that you have, if you just put it to the government of India, they are definitely going to look at it, and they make every effort. Whatever genuine problem is there, they are certainly ready to look at it, and most of the time they are addressing those problems.
Okay, all right. Thank you so much for that perspective. I'd like to bring in Mr. Navneet Goyal, former Principal Chief Commissioner of Customs and CGST, into the conversation. Mr. Goyal, thank you so much, sir, for speaking with Newsx. I have to ask from you as well, what's your biggest takeaway from Budget 2026?
Thank you for inviting me to your channel, madam. See, from the customs and GST perspective, I see the FTAs and the Viksit Bharat vision will mean more imports and more exports. This will need speeding up of cargo clearances, and FTAs would mean as imports would grow, the challenge would also grow that people should not divert their goods through these FTA countries. So what government has tried to do in this budget is, one is they try to encourage compliant behavior. They said if you are a trusted entity, then we'll give you benefits. The duty deferment period has been increased. The automatic goods registration and clearance for trusted clients have been voluntary payments up till now. People were not willing to pay because there were some penal charges if you break a law. And even if you are willing to pay customs duties, you were supposed to pay penalties also. Now government has said, okay, no penalty. We take this as a non-punitive charge. This will help in compliant behavior. Next thing that they have done is system-driven clearances and digital governance. What they have tried to do, a system would be laid out where the customs clearance work would be done through system, and the officers' touch points will be reduced. This should increase compliant behavior, and this should reduce delays. That is the major change which government has done. Besides that, there are some other changes also. For example, on the passenger side, a lot of passengers have been complaining that gold prices have, they've earlier a person could import gold worth only 50,000 rupees, and for male, and 1 lakh rupees for female. With the gold prices now touching almost 1.5 lakh for 10 grams. Now this has been liberalized as earlier. Now 40 grams by female and 20 grams by male have been. Similarly, duty-free allowances have been increased from 50,000 rupees to 75,000 rupees. So this was a genuine problem which was being faced. And similarly, some concessions have been given when somebody is transferring residence from abroad. And a uniform duty has been put on personal imports, has been reduced from 20% to 10%. Similarly, certain sectors have been given duty-free benefits. For example, exemption on capital goods for manufacture of lithium-ion cells, or leather and marine sectors have been given benefits. The duty exemption which was available to import specified inputs for leather and synthetic footwear will also be available now for shoe uppers. Similarly, fish which is caught in high seas will be allowed duty-free into Indian shores. And if they are exported out, it will be treated as exports. Similarly, duty-free imports of the specified inputs have been increased from 1% to 3% of FOB for marine sector. Exemption to goods for nuclear power projects has been given. Exemption on parts and components and engines for manufacturing aircrafts have been given. So government has tried to address many things. Specified sectors which are of high priority, they have been given duty-free benefits. Similarly, procedures have been relaxed to encourage compliant behavior and passenger facilitation measures. This is a great budget from that. On GST, we have already seen GST 2.0 in September, October. Yes.
But Mr. Goyal, I'd like to then understand from you, as far as GST is concerned, sir, how soon, or rather, do you think that the GST cuts have started paying dividends, or how soon do you believe that those cuts will pay dividends?
See, GST cuts should be understood in two ways. There were certain goods where 28% was brought down to 18%. These were big goods, like cars, air conditioners, those three. There, the duty cuts have already resulted into price cuts, which all of us have seen. And people have rushed in or buy these things. The goods from 12% to 5% were daily use items like biscuits and all those things. There, the things was not readily, visible initially, because if there is a biscuit packet worth 10 rupees, and if that had a, duty implication after SINVAT, which would take ITC credit, reduction would be hardly 10-15 paise. But now, what it has resulted in is, because you see, there is something called Laffer curve for in economics. In case you reduce duties, the tax compliance will increase. In normal these products, there were a lot of traders and manufacturers which we know were outside the formal chain. When the duty rates are 12% and profit margins in these businesses are hardly 5 to 7%, the duty rates were higher than the profit margins, and their propensity to evade was high. Yes. Now, when the duty has come down to 5%, we'll see a compliant behavior, which is slowly coming. A lot of registrations have increased. If you see the figures, the registrations in the month of December have increased drastically. And I'm sure this will gradually result as people will realize that getting yourself registered, showing your true returns will not really make your life difficult. I'm sure things will slowly.
Okay, before I bring in Dr. Ajay Dua as well, Mr. Goyal, I have to understand from you. We were just talking about the custom duty cuts So with the launch, sir, of the Bharat Trade Net and the new custom duty cuts, do you believe that Indian exporters are now truly shielded from this rising tide of international protectionism as well as the US tariffs?
You see, when the entire world is becoming protective, we have to stand on our own feet to face it. What government has been trying, as the previous speakers have said, is Atmanirbhar Bharat. We are also trying to encourage production of strategic goods as well as labor-intensive items. Labor-intensive items are textile, leather, marine sector. These are the items for which government is giving benefits. As far as strategic sectors are concerned, we are also like aircrafts and nuclear power to have a clean-based, clean energy. Those sectors are being encouraged. Electronics, industry, mobile, all those things are being encouraged, but it will take time. Yes. What government is trying to do is that procedurally, because our importers, exporters, as well as on the GST side, manufacturers and wholesalers, we are facing a lot of procedural issues. Government is also trying to relax those procedures so that the life becomes easier for businesses.
All right. Thank you so much, Mr. Goyal, for joining us. Let me bring in Dr. Ajay Dua into the conversation as well. Dr. Dua, my first question to you, sir, what is your biggest takeaway from Budget 2026?
Thank you for having me in this discussion. I think I would like to highlight that the Indian government, through its budget, by maintaining stability on projects which it had taken up, the emphasis which it was giving, it has sent a message down the line to the rest of the world that we are not perturbed by the geopolitical or the protectionism measures which are coming up in the developed countries far more than, say, in Southeast Asia or India. That we continue to be on our path of long-term vision of developing where our core competence lies. In this context, I like to give you two examples. One, while increasing our capex by about 10% from the last year to 12.25 crores from the earlier 10.6 crores, we have not chosen new sectors, but we have gone by where we have been putting in our money, highways, railways mainly. And we continue to do that. New rail corridors, new highways being talked about, new cities being talked about to be developed as centers of competence for various other issues. Second, we have highlighted in this budget that, look, we realize we are an economy with 55 to 56% GDP coming from services. We want to be, given our population, we want to be accounting for 10% of the global services by 2047. And towards that, a number of steps have been enunciated apart from the labor codes, which were earlier about 2 months ago, said that we will be making the rules for it and notifying them at the earliest, irrespective of what the state governments want to do. It's a concurrent list subject. The state governments fall in line, or if they do something, it has to be more liberal than what the central provisions are. And in addition, the centers of excellence being talked about. There was emphasis on Ayurveda, labor-intensive activity, plus emphasis on MSMEs, labor-oriented purposes, and at the same time, we are talking about high technology also in which we can play the role. We are not talking of increased R&D expenditure in, say, AI world, but we are saying we have identified semiconductors which go into reaching the state of AI. So we have started a mission for semiconductors and made a provision of 40,000 crores for it. So these kind of labor and skill development, sectoral emphasis is what I would say should be sending a message that yes, we are upset with what happened to us from the United States levy of 50% duty, but we can handle ourselves. We've shown that. We have signed 3 or 4 major FTAs soon after President Trump's trying to get us off the rails. And our exports are more or less where we were, and for the future we are making further provisions by going into other FTAs. These are bilateral, no doubt, they are not multilateral, but we are saying at the same time we are reiterating in these FTAs that we will continue to go by the WTO provisions of free trade as long as possible, and we will also respect the most favored nation treatment, saying if in one FTA we have agreed to give a duty concession to one country with which that FTA is there, that will also become available to all others, irrespective of whether we have an FTA with them or not. So, and as was mentioned by Mr. Goyal, in order to make sure that the customs regulations, custom rates do not come in the way, because we've been accused of having very high duty structures. Might be right, might not be right. I don't want to go into that. But we are preparing ourselves by gradually reducing the customs duties. Not one item today which the finance minister read out. It was all for saying downward revision. How to make imports, exports easier, as well as quantify them to a lower level so that the burden is less. All this, I think, is a step towards stability and continuing to have a long-term vision, but minimizing the risks of our money not being put to good use. So we are selecting the sectors where the risks are low and where the need is essential.
So speaking of long-term vision, Dr. Dua, I have to understand from you your take on the rare minerals corridor that has been announced today.
Absolutely important. We've seen how China has been able to live. China, over the years, cornering all over the world rare minerals, not just the 7 on which it is controlling in the magnet making, and 90% of the processed magnets come from China, and that's how they've been able to kind of leverage its strength vis-a-vis all the importers. We would not like to get into that oddity in the future. So we know that we could be having some of these rare minerals, whether out of those 23 which are usually called rare minerals, or the 7 which go into this magnet making, etc. So where the potential or exploration shows that there could be something, so we would go take the next step in those mining steps. Which are the 3 states? Andhra Pradesh, Orissa, mineral rich, both have borders also with one another, Tamil Nadu and Kerala. Yes. Reportedly, there are different kind of rare earths and minerals available. So this is long-term vision, saying yes, it might take 10 years for us to commercially exploit these. That's usually the time span for getting it to a stage from exploration to the end. We may be, with the provisions being made, may be able to reduce it from 10 to 5, 10 to 7 years or so each mining, but we would not then remain dependent upon one country, and we would then, if we are able to prove that we have exploitable, commercially viable reserves, you would see many countries of the world would want to come and partner with us and put in the money, which is money with technology to mine, which is required to make sure that the process hurries up, and all of them we will get plugged into their supply chains.
All right, Dr. Ajit, also speaking about China for just a moment, the finance minister has introduced the 10,000 crore SME growth fund. Do you believe that somewhere what's being called a cluster-based approach will finally enable some of our smaller units to actually compete with China in high-tech manufacturing? something that we've been discussing for many years now?
Yes and no, both. Let me put it this way. It is competing with China in terms of economies of scale is not really possible by a small-scale industry. The small-scale industry can be making niche products which are required for particular applications and in limited numbers. They are small, that is why they cannot do the mass-scale productions. Second, that doesn't mean if the scale is going to be small, that they should be inefficient. China today uses maximum industrial robots in the world in its manufacturing process. They are called, dark rooms. There's not even one person, but 24 hours these robots keep working. They are called dark rooms because then there is no need for the robots to see the windows are closed, the doors are closed, but the process continues. Now, to compete with these dark rooms, certain amount of technology inflow, which may be possible in small-scale industries when they specialize. Japan became a hub in the electronic industry post the Second World War, not through its trading houses, what they call zaibatsus, but by supporting small-scale industry, letting small-scale industry get into the, as far as possible it was for it, given its constraints, into the technology development field. And then the ancillarization was supported by the buyer. The buyer now, say, Maruti Suzuki in India itself, let me give you an example. A lot of its products are made by small industries and medium enterprises, but with technological help, and in certain cases also by, and all of them have buyback arrangement, and certain cases the Maruti Suzuki has taken an equity in them, these smaller enterprises. So that is why I said yes and no, that it was desirable to explore it, to see if there are potential candidates. Then this small industry growth fund of 10,000 crores can go a long way.
Okay, and Dr. Dua, before I let you go, sir, I also must ask you about some of the industrial parks and infrastructure. Now, with the record capex of 12.2 lakh crores, will some of the plug-and-play industrial parks that have been announced today actually help lower the logistical costs and improve our manufacturing competitiveness?
Surely, those should, because the very idea of plug-and-play industrial parks is that as soon as you are ready to get into a venture, you don't get into what is the common facilities of having to procure land, having to build a factory on top of it, get the utilities, the connections, and make it into an industrial kind of an establishment. You pay for it by way of lease, or some places even it could be sold to you. You save the time on it, and at the same time, you use that time for your core competence, what you are good at. Construction, somebody else can do. These are very common things. We've tried these in certain industries. These seem to have worked because there has been repeated demand saying that do not ask us to, particularly the foreigners, tell us that don't ask us to go and procure land, then start developing it, then run around to get all the permissions from the state governments, utilities. So this will reduce the interaction and the time which is required for getting regulatory approvals. You straight make a proposal. If it requires a licensing, if it requires any registration with any authority, you get into that rather than wait for 2 years for all the basic work to be done. So in 3 or 4 fields, we have seen that these industrial parks come in handy. Our solar parks are like a plug and play. The land is given to you.
Yes.
The common facilities are given to you. Tamil Nadu, if you see, etc. That is how the solar parks really developed there. We've also seen, now it's being talked of as chemical parks. Today's budget talks of it. I would think that in the chemical parks, one of the biggest requirements is making sure that the pollution and the affluent disposal arrangements are there. If every industry is to make it itself, again what I talked about, investment, expertise not being there and time taken, but these industrial parks, if all that you have to do is plug into the arrangements which they have made, internally you make sure that you are entirely, you are compliant with the pollution laws, air and noise, etc. Externally, the park takes care of disposing the effluent which comes, and you pay for these. So I am a supporter of these. We've had success in the electronic parks, whether it was Kandla Free Trade Zone, Santa Cruz Electronic Zone. So exactly the common utilities were given, plots were built upon and then leased out to the potential electronic assemblers of that time, because all these are models of 70s and the 80s, but certainly desirable, and the central government can play a major role in facilitating the states to do it, because most of these industrial parks will have to be set up in conjunction with the state governments, because they have the factors of production which are required for.
Right, absolutely. Dr. Dua, thank you so much, sir, for joining us on Newsx with that perspective. Joining me on the broadcast now is Mr. Harish Bijur as well. Mr. Bijur, thank you so much for taking out the time today. Important day for India. Everyone's eyes were on the union budget.
Yes.
More so because the government, Mr. Bijur, has already made a slew of announcements in the past 1 year that have been highly beneficial to the country. The GST 2.0 was announced. So, of course, one was not expecting really very large announcements to be made in this budget, because we thought that the government has already given a bit of a bonanza to the people. But keeping that aside, sir, what was your biggest takeaway from the budget this year?
Okay. So firstly, you are so right. The budget as an event has lost its zing. Fundamentally because, it used to be very, very important in the older days when most decisions would be showcased on one day. And, everything would happen on that one day. And that was budget day. But not anymore because, post the reforms exercise, we have seen budgets being more of a journey than an event. And therefore, this is yet another part of the journey. Firstly, of course, heartiest compliments to Nirmala Sitharaman ji for her 9th budget. And I think the budget puts together a set of philosophies. So I see a good philosophy at hand, but God is in its implementation.
Okay. But Mr. Bijur, I have to understand from you, because like I said, a lot of focus in the past 1 year has been also understanding the geopolitical shifts, the developments that are taking place throughout the world. India's focus primarily has also been on signing some of the FTAs and really managing our bilateral relations with many countries. Do you somewhere feel that have we at least set the stage to strengthen India to deal with some of the tariff wars that are going on?
Well, I think, the tariff wars, our relationship with the United States of America, and of course, our relationship with the rest of the world, our relationship particularly with Europe, the European Union, and of course, very importantly, our relationship with Russia. And, the Russia-Ukraine, the NATO versus the rest kind of an issue. These are things which are outside the ambit of the budget. And if I really look at it, I think we're talking about reorganizing ourselves to face a re-energized, unpredictable world. So US tariffs not incorporated into the budgets at all. Preparation to ensure that we act differently, particularly on Russian import of oil, etc. I think that's totally outside the ambit of it all. What I see today is a set of statements that says that this is the ethos of the government which runs this country, and these are the things which will happen over a period of time. And I think achieving each of these things is going to be milestone based. So I'm really, again, repeating the same thing. The budget is not an event, it's a journey.
And Mr. Bijur, I have to understand from you, sir. Now, the 2026 budget is focusing also heavily on MSME liquidity as well as tax rationalization. Do you see somewhere any of this reviving the middle India consumption enough?
There is an effort to rev up middle India consumption, but it's not going to happen overnight. It's going to happen over 3 to 4 years. For instance, the MSME category, we have a total of 64.6 million MSMEs in this country. The kind of stuff that they require, is institutional. The thing is, many of them produce trade products, but there are two issues. The one is financial and the other is marketing. Now, both these are gaps. Now, filling those gaps, the financial gaps, filling them up is far easier than filling the marketing gaps. So I think the marketing gaps continue. Until the marketing gaps continue, the best of Indian MSMEs will still struggle and still suffer. And that is a key issue that needs to be tackled in the days ahead.
All right. And, your perspective, sir, there was a very interesting announcement today. And again, this is in a much larger global context. And it seems as though at least India is now focused on, we have been saying that we've been focused on a very long-term vision. But there has been a criticism that there's not been much announcement as far as science, especially rare earths are concerned. Today, a rare earth corridor has been announced. Your thoughts on the same?
Yes, I think that's excellent. There are two aspects of it. One is the rare earth piece, which I think is an excellent set of initiatives. India wants to, if India wants to dominate, we need to ensure that we have rare earth security. And I think securing rare earth is one of the big mandates, and the government has recognized it. So hats off to PM Modi and Nirmala Sitharaman and the entire set of ministries which have gone and done that. The second big thing that I like is the 20,000 crores has been allocated, as a kind of an incentive for big industry on CCUS, and that is going to be big because, pollution is one of the biggest problems India faces. And just because we don't see pollution, particularly air pollution, we tend to neglect it. There are great companies in India which solve the pollution problem. There are great companies which, with retrospective effect are able to solve pollution. I think benefits need to go to them. But the bigger issue, this budget announces benefits, incentives, 20,000 crore to big industry. But what we also need is penalties. We have something called the Central Pollution Control Board, and then we have the State Pollution Control Board. There's a clear mandate to say that this needs to be implemented. But unfortunately, a lot of the state pollution control boards do not implement the norms. So the budget is saying, I'm going to give you 20,000 crores to big industry to sort out the pollution problem and get incentives, carbon credits. But at the same time, we need to invigorate our state level pollution control boards to, run behind the polluters. And I think if both these things go together hand in hand, we're going to see a cleaner future. Our aim and goal needs to be a pollution-free tomorrow. And I think running towards it is all our mandate.
Mr. Bijur, before I let you go, sir, I just have to understand from you. Somewhere do you feel that with some of the announcements that have been made, like I said, particularly for MSMEs, has this budget done enough to protect India from some of the current trends of protectionism that we're witnessing internationally?
Okay. Yeah. Okay, this is a tricky question, and it happens to be a last question. I don't think enough has been done as yet. There's lots more to be done. At this point of time, India is raising guardrails. So these guardrails are really very, very low at this point of time. We need to be building guardrails which go higher and higher and higher. And I think those guardrails, I don't see it. I think, again, I said it's a journey. And hopefully in the next 3 years, we'll build bigger and better guardrails. The world order is changing. The tariffs from the US have hit us very dramatically. It has hit exports out of India. It has hit export-oriented businesses. It has affected livelihoods of people. And that is the reality. And I think at one end, you have this business of us saying, must we import oil from Russia or not? So the sovereignty of countries is being questioned at this point of time. India is building its guardrails, but you can't build the guardrail as a big wall all of a sudden. This budget helps starts it but doesn't complete it.
Right, absolutely. Mr. Bijou, thank you so much, sir,
Thank you
for joining us
Thank
on
you.
Newsx with that perspective.
Thank you.
Viewers, you're now watching Newsx Explained. As the Union Budget 2026 was presented today, the country's attention was firmly fixed on numbers, policy signals, and the government's economic roadmap. But beyond the financial announcements and fiscal priorities, today marked a quiet yet historic shift in India's governance landscape. For the first time ever, the Union Budget was presented from the Kartavya Bhavan, a building that is fast becoming the new administrative heart of the nation. This single moment represents far more than a change in venue. It signals a transition in how India conceptualizes power, responsibility and governance in the 21st century. The image of Finance Minister Nirmala Sitharaman standing at the gates of the Kartavya Bhavan has already etched itself into the visual memory of the day. It is an image that captures both continuity and change, rooted in democratic tradition, yet pointing firmly towards a modern future. The name Kartavya Bhavan itself is deeply symbolic. Kartavya means duty or responsibility, and the Union Budget 2026 is conceived around three core duties: accelerate and sustain economic growth, fulfill the aspirations of the people, and ensure inclusive access to resources. This is the philosophy that underpins not just the budget, but also the idea of the Kartavya Bhavan. The Kartavya Bhavan is part of the Common Central Secretariat Complex, or the CCS, a series of 10 newly constructed office buildings in New Delhi. This complex has been developed under the Central Vista Redevelopment Project, one of the most ambitious urban and administrative transformation projects undertaken in independent India. The aim of this project is to replace aging, dispersed and increasingly inadequate government office buildings with a centralized, efficient and future-ready administrative hub. For decades after independence, India's governance was spread across multiple buildings and locations. The most powerful ministries include Home, Finance, Defence, External Affairs and the Prime Minister's office. They all operated from the iconic North and South block. Other ministries function from structures such as the Krishi Bhavan, Shastri Bhavan and the Nirmar Bhavan. While these buildings carried historical and symbolic value, they were designed for a different time and a different scale of governance. As the size and complexity of the Indian state is growing, these structures began to show their limits. Space constraints, outdated infrastructure, high maintenance costs, and the inability to support modern digital workflows made the need for a new administrative framework increasingly important and clear. It was in this context that the Central Vista Redevelopment Project was launched in 2019. The project envisions a cohesive and integrated governance district in the heart of New Delhi. At its core is the Common Central Secretariat, which will eventually house all central government ministries within a single high-capacity precinct. Kartavya Bhavan 1, 2 and 3 are the first of these buildings, and Kartavya Bhavan 3, the first to be completed, was inaugurated on the 6th of August 2025. Let's talk more about Kartavya Bhavan 1, the building that hosted the presentation of the Union Budget today. Located on Janpath, Kartavya Bhavan sits at the very core of the Central Vista. It is surrounded by landmarks to define modern India, including India Gate, Central Secretariat, Bharat Mandapam and the upcoming Yuge Yugin Bharat Museum. Neighbouring buildings such as Baroda House and Shivaji Stadium further place it within a tightly integrated administrative and cultural zone. This location is deliberate, ensuring greater coordination between ministries and a more streamlined governance ecosystem. The design of the Kartavya Bhavan reflects this modern administrative philosophy. The building has been designed by HCP Planning and Management Private Limited, the firm responsible for the overall Central Vista master plan. Architecturally, it strikes a careful balance between tradition and modernity. The colonnaded facades and symmetrical layouts pay homage to Lutyens style architecture, ensuring visual harmony with the historic precinct. At the same time, the building is deeply embedded with modern technology and sustainability features. Kartavya Bhavan is a 7-story structure with 2 basements spread across nearly 1.5 lakh square meters. It has been constructed at a cost running into several hundred crores, making it one of the most advanced government office buildings in the country. Its interiors are designed for flexibility and efficiency, as well as collaboration. Open plan work halls with modular furniture allow for adaptability and team-based work. Meeting rooms and services are consolidated into corner cores to ensure functional clarity, while individual offices along the outer edge benefit from natural light and ventilation. At the center of the building is a landscaped courtyard that acts as a climatic core, shaded by a perforated aluminium canopy and mature trees. This space moderates heat, filters natural light, and creates a comfortable microclimate for those working inside. Sustainability is a key feature of the Kartavya Bhavan. The building uses double glazed facades and noise insulating glass to improve energy efficiency and comfort. Energy efficient LED lighting, sensor based systems, and smart HVAC technology are expected to reduce energy consumption by around 30%. Solar power plays a significant role, with rooftop solar panels capable of generating over 5.34 lakh units of electricity annually. The building is designed as a zero discharge facility. It can treat and reuse 1.1 million liters of wastewater every day. Kartavya Bhavan is also equipped with extensive facilities. Each building in the complex includes multiple large and small conference rooms, team meeting spaces, a crèche, a yoga room, medical center, a cafe, multi-purpose hall, and parking for hundreds of vehicles. Security is, of course, fully technology driven, with smart ID cards, biometric access, and a centralized surveillance system. Employees have been onboarded through digital systems in coordination with the Ministry of Home Affairs. Connectivity to the complex is set to improve further with a 7-kilometer extension of the Delhi Metro Magenta line, which will include a dedicated Kartavya Bhavan station. This will further integrate the complex into the city's public transport network. Presenting the union budget from the Kartavya Bhavan was therefore a path-breaking move, because Budget Day is not just a financial exercise, it is a symbolic moment that reflects national priorities and the direction of the country. By choosing this venue, the government has signaled that the future of Indian governance will be efficient, centralized, sustained, and rooted in a clear sense of duty. On that note, let me introduce our guests with us on the broadcast right now. I have with me Mr. Dikshu Kukreja, architect and managing principal, CP Kukreja Architects; Nasir Salim, managing partner of Flexi Capital. With us is Mr. K. Yatish Rajawat, CEO of Center for Innovation and Public Policy, and Joyita Basu, editor of the Sunday Guardian, with us. Mr. Kukreja, let me begin this conversation with you. I've just explained to our viewers quite extensively the Kartavya Bhavan. Your thoughts on the same as well?
Yes, I was very carefully hearing your complete description on the Kartavya Bhavan and the Central Vista project. I think today is a very iconic day. It's a very important day where the union budget has been presented. Certainly, you're right. It's a first in the sense that it's been presented from a new venue, or a new facility rather, where the finance ministry has shifted to in Kartavya Bhavan 1. But I think it's historic more also in the sense how broad-based this budget announcement has been, how it's really touching the chord of every single Indian and every single aspect. So its broad-based, holistic approach certainly resonates with what we hear about Sabka Saath, Sabka Vikas being the ideology that we are moving with today. And from that point of view, whether it's about Yuva Shakti, or it's Nari Shakti, or it's things like the orange economy, it's about tourism, health, all aspects have been touched quite smartly. But what stands out to me the most is the fact that, the infrastructure, the investment into infrastructure, the capex that the government has put in of 12.2 lakh crores is a massive number, the highest ever independent India has seen. And when you compare it with a figure which was a fraction of it just a decade ago, which was not even 2 lakh crores. So from that point of view, it just goes to show to the world about the commitment that the government has towards making India a developed nation, about the kind of investment that we are doing, which has a ripple effect when you look at public-private partnerships coming on board, when you look at foreign investment then coming on board, because this is the skeleton of any healthy economy. And that has been spelled out by the kind of investment on infrastructure. The broad-based approach that I said, touching every aspect, every corner of the country, be it the northeast, be it the coastal part of the country, be it the mountains where we are talking about, even facilities like trekking and winter sports, etc., infrastructure for that. I think it's very, very holistic in that sense. But the one thing that I would say that we all need to be cautious about, while the policies and the vision is great, the execution is where it matters. And I think at the grassroots level, when you look at municipal authorities, when you look at, your previous segment of the program was talking with a guest who was talking about state pollution boards and central pollution boards. We need to very carefully look at it that if we are looking at sustainability and environment, corruption has to be thrown out of the window. There have to be really path-making policies and legislation that has to come in. Exemplary punishments have to be there where certain local bodies, municipal authorities, do not take that kind of an easy route of corruption. And I know of many, many international companies, foreign investments, which are coming into the country, but get stuck in the red tape. We talk about single window clearances, but those don't ever really happen. So those kind of things, along with the budget, need to be also see how they can be put into flawless execution.
Right, absolutely. But at the same time, they should moving beyond some of the, of course, the Kartavya Bhavan. I have to understand from you, as far as urban infrastructure is also concerned, you've always advocated for integrated city planning. With some of the new growth center focus for cities with 5 lakh plus populations, do you feel that somewhere the budget has addressed the issues of tier 2, tier 3 cities planning and urbanization?
Excellent question, Devika. I think this is something I've been also advocating for a long time, that if we want the country to progress holistically, if we want our cities not to choke under what we see, the quality of air and the scarcity of water and everything else that we see in Indian cities today, becoming situations where, you're just pumping endless money to solve the problem. I think the solution lies, and the budget today has addressed that you need to shift the focus from metropolitan cities to tier 2 and tier 3 cities. So this 5,000 crore allocation, I think, is just the beginning of something that will have to follow year after year if we need to spread development, progress all over in urban India. And this has a double effect, or a double bonanza, I would say, that when you are addressing tier 2, tier 3 cities, what you're also doing is you're controlling the migration, the urban migration that happens into the bigger cities. Needless to say that you are giving opportunities of livelihood and growth in those tier 2, tier 3 cities. One more thing that we should keep in mind is that where we have gone wrong in these urban sprawls that we have created in our metropolitan cities, which we are now trying to fix, this time around, the development that is going to happen in tier 2 and tier 3 cities must be far more progressive, far more holistic, and far, far more sustainable. If we don't address climate change and environmental issues in the prosperity or growth of these tier 2, tier 3 cities, then I fear we are really doomed as far as urban India is concerned. So great opportunity, great initiative, and I hope the people who are going to take this forward in terms of the states and the municipal authorities that take this show ahead for those tier 2, tier 3 cities, do it with that sense of responsibility.
Right, absolutely. Mr. Gugreja, thank you so much for joining us on the broadcast. Let me on that note bring in Mr. Nasir Salim, Mr. K. Rajawat and Joyita into the conversation as well. Nasir Salim, beginning with you, your biggest takeaway from Budget 2026.
Good evening, great to be back on Newsx. So, I think clearly, we represent the capital markets, if I can say so, the ones who track the capital markets. And, we've had a mixed opinion on this to say, because, fundamentally short term, it's looking a little, negative for the capital markets. Long term, medium to long term, it's very, very positive, I must tell you. There has been a STT increase in security transaction tax for futures and options, which will see, some downside in the near term as far as the capital markets are concerned. But what we've liked, and I must tell you, is what bodes well for the banking sector is this entire capex push. Clearly, I think the mandate that has been given is to ensure that we continue to build infrastructure, responsible infrastructure, whether it's in the railway development, or whether it is in fast tracking tier 2 and tier 3 cities, urban development, as I told you. And I think the other very big thing beyond that is that they've also been able to mention, to give a tax break up till 2047 for certain sectors and as far as IT is concerned. Now, obviously, from a vision perspective, it's looking good. How will it transform in terms of execution? Of course, needs to be seen. The other quick one, I think, which one was hoping was to, which was a expectation but not been addressed, was recalibration of long-term equity capital gains, right? That was something which was expected to be announced. We were all asking for that. The mass exodus of FPI is something that we need to, keep a very close watch on. As market experts, I can tell you this. It continues to put pressure on the rupee as against the dollar. Indian economy, I mean, by and large, the capital markets are not cheap. We understand that, but neither is the world. But we see money, flight of capital going out of the country consistently, and we were hoping for some changes there, some announcements there. Those have not yet been been addressed, or anything to do with that particular subject has not been mentioned. But I think the other quick positive, because I'm going one negative, one positive, or one neutral, and one positive. The other positive, of course, is that the way they have mentioned and clearly outlined fiscal prudence in terms of continuity of policy and maintaining to ensure that they remain within 4.3% as outlined for 26-27 also bodes well for the fixed income or the debt market favorably, right? I think that is something which has been well introduced. The other quick point that I must mention to you is about the municipal bonds that have been issued. I think, again, a good thought process there. They're looking at raising money there. Of course, the other quick point in that is how effectively can we manage the state's fiscal situation. I think today, if you look at the broader perspective, the union government continues to have fiscal prudence with continuity of policy. But as far as the states are concerned, that again needs to be checked in quickly. When you have these municipal bonds being pushed in, you'll see liquidity coming in, which is a favorable step as far as the bond market is concerned. But I think, again, any leakages, in that with possible political interference may also dampen spirits there. So I think, a bit of a cautious approach there, but it's a welcome step. I think overall, the budget is trying to attempt to bring in a sense of balance. And yeah, of course, the one thing that I live in Delhi, and so is your studio, and I can tell you this. I'm assuming most of your panelists also live in Delhi. I think I would have been happy to know and hear more about some dedicated fund for tackling this entire environment issue, right? They seem to have mentioned it very smartly, but it's not been addressed to its core objective. I think that is something, again, which we feel has been a bit of a miss. And my last final thoughts on capex, again, I'll go back to that because that remains the centerpiece of growth as far as India is concerned, and should continue, because it's a multiplier impact on jobs, productivity, production. And I think the outlay as far as defense is concerned seems to go up to 18%. So I believe the number is 2.13 lakh crores. The industry experts were estimating this to be about 25%, but that's again a welcome step. I think it's time that we, instead of just assembling in the garb of manufacturing, start actually producing. And I think that is again something which they've mentioned to say that they will reduce import duties on defense equipment. I think that is again something which is a welcome step and may bode well to the entire manufacturing space which is linked to PLI. And I think that should also be a positive step.
All right. Before I bring in Mr. Rajawat, Nasir, I have to also understand from you, the Finance Minister has introduced the 100,000 crore SME growth fund. Do you believe that this cluster-based approach will finally enable some of our smaller units to maybe compete with China in high-tech manufacturing? Or does it at least pave the way?
Sure. So to answer your question, that's a great question, I must tell you. But I think we're still far away from competing with China. I'm sticking my neck out and saying this. They have tax breaks, they give you huge incentives, they give you huge credit guarantee schemes. I think we're still a little away from that, but it's a step in the right direction because MSMEs are usually they lack credit. They don't get enough credit opportunities, and I think the banking system, by and large, is also very skeptical. So when I look at a private sector bank, they're very skeptical. They don't want to give out money to MSMEs easily. Credit offtake is not that simple for MSMEs to absorb and to get. I think to the fact, and MSMEs continue to be the engines of growth for at least an economy like ours. So I personally feel that we can't. I don't think we are close enough to competing with China at the moment. But I do still feel that getting the right capital to MSMEs, which has been the key note for the last few budgets, I must tell you. But again, I think the execution, by the time it reaches the last man standing as far as the MSME entrepreneur is concerned, does it actually reach him? Because there are systemic leakages between transmission of those loans and also transmission of rates, which now need to be more effective in execution. So I think it's not a bad step. It's a welcome step, but obviously, in terms of execution, we are very, very watchful and cautious.
Okay, Nasir, before I let you go, your thoughts also on some of the, another announcement on the plug-and-play industrial parks that have been announced today. Will that actually help in lowering the logistical costs for our manufacturers?
You see, when you build infrastructure, so to answer your point, yes, it does. It will, right? When you build infrastructure, you build parks around it, whether it's, we call it industrial parks or SEZs, and that's the name of the game. If you look at the West, if you look at Far East, that's what they've done. That's what China has done. That's what the US has done, for the last so many years, and that's how they've built their economy. So I think that's a good step. It does bring down logistical costs. Obviously, it will ensure continuity and of the entire supply chain of production of goods and services, and also it also brings in aids the very idea of employment. I think today one of the major economy problems that we're facing in the economy is a K-shaped recovery. There is economic growth. The top 10% continue to grow by a larger contribution, and as compared to the lower income group. Now, obviously, how do you address that? So if you build some of these manufacturing parks, IT parks, all of these put together, along with infrastructure, because there's a lot of money being put in infrastructure as we speak. If you look at the capex numbers, they're obviously looking very, very strong there, and that's a welcome step, right? And if you can add that and get this in addition to ensuring that you build along those infrastructure that you build, you have these dedicated parks. It obviously helps you in not only in pushing infrastructure down, but also getting employment, also reducing logistical costs, also making sure that credit offtake becomes easier, because a lot of the MSME and the SME sectors will participate in those dedicated parks. And therefore, I think it's definitely a welcome step.
Right, absolutely. Nasir, thank you so much for joining us on the broadcast with that perspective. Let me bring in Mr. K. Yatish Rajawat, CEO for Center of Innovation in Public Policy, with us on the broadcast. Mr. Rajawat, I have to understand from you on the aspect of the 100 million jobs catalyst. Now, with the 2026 budget's new incentives for MSME formalizations. How significantly will these measures actually help accelerate your 100 million jobs mission and empower some of the small businesses to become India's primary job engines?
So let me just quickly give you a context of this budget, and then I will place the context into how does it help on the job creation side. Fundamentally, you see this budget is consistent with the past 2-3 budgets that the government has presented. The focus is on building infrastructure, and the focus is also on building an architecture of sorts, which is, I was listening to you when you were talking about Kartavya, but the most important part of this budget, which is not understood well enough, is the architecture that the government is trying to build. The architecture in this case is that instead of looking at industries or companies as the beneficiaries of state incentives, they are looking at the supply chain as the state incentive, and they're trying to build that whole supply chain in a manner that incentives are given where you need to build infrastructure. And I'll give you a small example of that. So there is, in the tech space, they are looking at increasing investments in data centers. Now, so they have directly given an incentive till 2047 on the tax side for data centers. But what is the objective of building those data centers? The objective of building the data centers is to have a control over the sovereignty of the AI, which is the software part. So the incentive is not on the software, it is on the hardware, and it is on the infrastructure. Now look at the supply chain there. What is the supply chain that we can control? We cannot control the chip side, but we can certainly control the power side. Hence, there has been an incentive given for nuclear power, because data centers are the biggest consumers of two resources, water and power, and not to put an impact on the grid, they have chosen to supplement the build out of data centers through nuclear power, and that's where the nuclear power incentives come in. Now, on the taxation side, you see this budget has also fundamentally moved away from being a tax announcement budget. If you remember, the fundamental change in direct tax was done in September when the GST rates were rationalized, and the objective there was again to drive the consumption. So there has been a little tinkering on the import side and the taxation on the import side to align them with the recent FTAs we have signed, but there is no fundamental change there. There is a micro change there in terms of increasing the the STT on futures. Now, futures is a very small part of a very small part of the population, maybe 0.1%, which is investing in futures or which is benefiting from futures or which is earning from futures. It's largely a small community of brokers or advisors on the stock exchange. Now, as we have seen in the last 7 years, that particular segment has become increasingly inconsequential for policymakers, and there has never been a budget in the last 4-5 years where it has been geared towards the capital markets. It has been geared towards infrastructure and bonds, and that is where the focus remains. And you can further see this architecture if you look at how the spends have changed, and if you look closely at the spends, you will see that these spends have shifted quite a bit. There is a shift in the spends from revenue expenditure to capital expenditure. Capital expenditure, as you know, has gone up. It's this year is going to be close to 12.2 lakh crores. The revenue expenditure is coming down, and even in outlays like defense, you see, we see a rise in the capex side. We don't see a rise in the revenue expenditure side. So whenever a state or a government decides to invest in the infrastructure side or increases capital expenditure, it has a rollover effect in terms of job creations. It is not absorbed by one particular sector. So, like for instance, in the case of both roads, bridges, and railways, the capex has gone up by almost 25,000 crores in the case of railways. It has gone up by around 23,000 crores in the case of bridges. Now, these are the sectors that actually create jobs, because these are physical and tangible sectors. So whenever build-outs of railway tracks or build-outs of happen, they're very labor-intensive. Similarly, we know that construction is a highly labor-intensive industry. Hence, any increase of expenditure there, and here the expenditure is mostly controlled by the state. It is not dependent on the private sector investment, which, as we know, has been lagging for the last 3 years. Private sector is being pushed, encouraged, and incentivized to invest much more on the capital side, but they've not been doing that for their own reason. Maybe they don't see the consumption or the demand as robust enough, or their capacity utilization as robust enough to invest in the future. But the state's responsibility then, therefore, because the state is now the largest driver of capex in the country. So again, this budget basically continues that trend, and it actually increases the trend of capital outlay towards investment side. If you look at the largest schemes which have been where the actually expenditure is going, we know that the government started this large scheme called PMGKY, which was one of the possibly the largest social scheme in the world, basically giving food subsidy or food grains directly to almost 80 crore people in the country. And again, here the budget has gone up marginally from around 2 lakh odd crores to 2 lakh 35 odd crores. And there are other schemes like the rural employment scheme, which has been renamed, but the allocation of that still remains at 80,000 odd crores. Health and education in this particular budget has got a much higher allocation, and this allocation has basically come from some of the other social sector schemes which have now run their course or achieved their targets. For instance, the Jal Jeevan Mission has more or less achieved their target. You have potable water, or at least Har Ghar Nal, even in the rural areas now. So allocation for the Jal Jeevan Mission has gone down substantially, while the allocation for school education has gone up substantially up, you see. So there is that shift, and this shift is again important because the school education budget has gone up by 18%. Even the higher education budget has gone up by 8.5%. But the PMGKY budget, which is large in itself, it's largely almost flat in that sense. The growth is almost 16%. Again, on the fertilizer subsidy side, actually the budget has gone down by 8.5%. So there is a fundamental shift again happening from the social sector to the towards capital expenditure, towards building infrastructure, and that is substantially visible if you combine all the social sector investment or expenditure of the budget. It comes to around 4 lakh 35 odd crores, which is a growth of 10%, but the non-social sector growth is much higher. It's almost grown up by 80%. So so this is a fundamental shift, and this is now the numbers are large enough to be visible. So capital expenditure, as somebody else was saying, is now 12.2 lakh crores, which is a growth of almost 12%, which is much higher than the GDP growth estimated, or the nominal GDP growth estimated in the budget. So so the structure and the architecture of spend is fundamentally changing in the budget, and I think that another sign of that is that for the first time, when you opened the session or this particular segment, you talked about Kartavya. One of the fundamental changes that we've never had a budget on a weekend or on a Sunday. You see, you have these bunch of bureaucrats and parliamentarians who are actually working on a Sunday. So I think it's a welcome behavioral change also, which shows that the concern or the effort that is being put together to basically revive the economy to its growth path.
Okay, all right. Mr. Rajawat, thank you so much for joining us on Newsx with that perspective. Joyita Basu, bringing you into the conversation. Joyita, your biggest takeaways from Budget 2026?
Interest in when it comes to geopolitics, I would say the special emphasis that is being given to critical minerals the corridors that we are talking about, and semiconductors. Because you see, when you have to compete globally, we see, I mean, when it comes to critical minerals, the kind of emphasis that is being given to this particular area by people like Donald Trump. In fact, it is being said, not it is being said, we know very well that this whole harebrained scheme about, annexing Greenland has a lot to do with the presence of critical minerals over there. Trump's outreach to Pakistan, it is about critical minerals. So what China does right now is that there's a complete monopolistic control over critical minerals. Now, but without critical minerals, there is no future forward. So I would say, and at the same time, when you're looking at India, it has large deposits of it. But till date, even this government has not paid much attention to this sector. The very fact that one section was devoted to this, that itself shows that the government has woken up to the reality of what is happening in the world, and if it has to keep up, stay ahead of other economies, and given the kind of ambitions we have as Indian economy, we are talking about being a developed economy of 2047, but even otherwise, if you have to become a manufacturing giant, if you have to become, to make your mark industrially in the world, critical minerals are very important. Semiconductors, even now our investment is very small, compared to the other countries. I mean, this was actually raised earlier at some international fora, but the fact of the matter is that the very fact that we are looking at this and we are seriously working towards this growth, that shows that we have become aware of the new, if I can use that word, new age economy. And I would say that, at the same time, when I'm looking at, these are my two biggest takeaways. But you see, while we are talking about capex growth and the kind of infrastructure investment, what really bothers me is that, as one of your speakers earlier talked about, the implementation part of it. And you see, urban infrastructure, it is fantastic to have good infrastructure. You go out of the city and you see the kind of roads, even inside the city you have. But what about pollution? I think that is one of the biggest hazards, I would say, that is bothering all Indian cities, our urban infrastructure. In spite of everything, it is kind of creaking, I would say. Devika, I'm in Mumbai right now. I came today, and the airport that I saw over there, I mean, I have heard so much about the airport, and the arrival, it's so ancient. And especially, so if you're going to look at investment and all that also, there needs to be investment here. Just because we have had an airport, maybe whenever it was built, doesn't mean that it is still up to the standards. So I think more attention needs to be given. And for example, again, because I'm in Mumbai, I'm saying this problem of waterlogging here. The kind of waterlogging, and this is the financial capital. This is supposed to be the financial capital of India. And look at the kind of waterlogging. Look at Mumbai, the way it is. It may have very fancy buildings and all, but it's like it gives a very ancient, derelict look. Okay, so it is, frankly, for people who are coming in from outside, it's a kind of a shock for them that, that the financial capital of the country will look so inadequate. So I think these are the areas, and everything is related. Unless and until you are getting all these things in shape, your tourism is not going to pick up. All right? People, that is one of the reasons why Vietnam gets more tourists than India does. We don't have the kind of promenades they have. So when you are talking about infrastructure, and all these are different sectors, why is our tourism sector doing so bad? Everything is related. So I think there has to be better implementation, especially when it comes to our urban infrastructure, our city. Because if you're looking at smart cities, we all have become smart citizens, by the way, citizens. But do we have, I'm going to say that there's been a lot of development in the last maybe 10 years, 14, 11, 12 years.
Yes.
But can we call ourselves residents of smart cities? So what is happening in those areas?
Okay, all right, Joyita, thank you so much for that perspective. Meanwhile, my colleagues have spoken to a slew of leaders from different political parties after the finance minister's speech. Listen in.
देश के संस्कृति पर्यटन मंत्री केंद्रीय मंत्री गजेंद्र सिंह शेखावत जी साथ में। शेखावत साहब, बजट को अगर एक लाइन में हम अगर आपसे समझे तो ये बजट की दिशा क्या है, क्या इस पे विकसित भारत को ध्यान में रख के बजट बनाया गया?
देखिए, सन 2014 में जब देश की जनता ने नरेंद्र मोदी जी को पहली बार आशीर्वाद दिया था, तब पहले बार प्रधानमंत्री की कुर्सी पर बैठने से पहले उन्होंने कहा था कि हम भारत को समृद्ध, संपन्न और समर्थ देश बनाएंगे। पिछले 12 साल की इस यात्रा में हम सब ने देखा 12वां पायदान बजट का था। भारत विकसित होने की दिशा में आगे बढ़ा। और अगर एक पंक्ति में मुझे कहना हो तो मैं कहूँगा कि जो भारत घोर निराशा और अविश्वास में डूबा हुआ था, आज विश्वास के साथ में कुलांचे भरता हुआ जंप लगाकर जो है विकसित होने की दिशा में आगे बढ़ रहा है।
सर, 53 लाख करोड़ की अब इकोनॉमी हो चुकी है भारत की, और सबसे ज़्यादा फोकस इस बजट में अगर देखा जाए तो टूरिज्म पर काफ़ी बड़ा फोकस किया गया। मेडिकल टूरिज्म को बढ़ावा दिया जा रहा है, कई सारे कदम टूरिज्म के लिए उठाए गए।
देखिए, भारत में जिस तरह से स्थितियां बदली, भारत में हालात बदले, भारत में इंफ्रास्ट्रक्चर बदला, भारत की अर्थव्यवस्था बढ़ी, भारत में स्वच्छता का वायुमंडल बना, भारत में ट्रैवल करने का इंफ्रास्ट्रक्चर बढ़ा, भारत में की इकोनॉमिक ग्रोथ हुई। उस सब का बेनिफिशियरी अगर कोई सेक्टर था तो वो भारत का टूरिज्म था। भारत के लोगों ने जब भारत में गर्व करना प्रारंभ किया तो डोमेस्टिक टूरिज्म इन सब अनुकूलताओं के चलते हुए एक नई ऊंचाई पर पहुंचा। पिछले एक साल में 294 करोड़ लोगों ने यात्रा की। देश के टूरिस्ट डेस्टिनेशन पर, देश के स्पिरिचुअल डेस्टिनेशन पर माननीय प्रधानमंत्री जी ने के आशीर्वाद से जिस तरह से काम हुआ, चाहे काशी का कॉरिडोर बना हो, चाहे उज्जैन का महाकाल लोक बना हो, चाहे जगन्नाथपुरी के धाम का डेवलपमेंट हुआ हो, सोमनाथ का डेवलपमेंट हुआ हो, या ऐसे जितने भी जगह पर ऐसे काम हुए, उन सब का परिणाम यह है कि आज एक तरफ इकोनॉमी की ग्रोथ, दूसरी तरफ आवागमन के साधनों की सुगमता, इंफ्रास्ट्रक्चर की ग्रोथ, और तीसरी तरफ लोगों के भारत के प्रति गर्व के भाव के उदय के चलते हुए आज सब जगह पर ऐतिहासिक फुटफॉल हुआ है। 7 करोड़ से ज़्यादा लोग उज्जैन के महाकाल लोक का दर्शन करने के लिए गए, 6 करोड़ से ज़्यादा लोग अयोध्या धाम का दर्शन करने के लिए गए, और लगभग इतने ही लोग काशी बाबा का दर्शन करने के लिए गए। तो इसलिए ये संख्या जो है सभी जगह इसी गुणात्मकता के साथ में, इसी मल्टीप्लिकेशन फैक्टर के साथ में बढ़ी है, जो भारत के लिए निश्चित रूप से एक अत्यंत उत्साह का विषय है। और इस सब को संज्ञान में रखते हुए माननीय वित्त मंत्री जी ने टूरिज्म एज ए ड्राइवर ऑफ इकोनॉमी, टूरिज्म एज ए जनरेटर ऑफ एम्प्लॉयमेंट, इसको पहचान देते हुए टूरिज्म सेक्टर को आगे बढ़ाने की बात की है।
15 ऐसे शहरों की बात की गई है जो कि पुरातत्व महत्व के हैं, उनका भी डेवलपमेंट, संरक्षण की बात कही गई है।
देखिए, अब तक ऐसा होता था कि आर्कियोलॉजिकल सर्वे ऑफ इंडिया उत्खनन करता था, अपने एक पुरातात्विक महत्व के अध्ययन उसमें करता था, और बाद में उन साइट्स को सील करके बंद कर दिया जाता था। वडनगर में जब इस तरह की खुदाई हुई, उसको माननीय प्रधानमंत्री जी के मार्गदर्शन में, उनकी प्रेरणा से एक हॉलिस्टिक एक्सपीरियंस सेंटर के रूप में डेवलप किया गया। जब उसको देखा तो देश भर में ऐसे पुरातात्विक महत्व के ऐसे स्थान जहाँ खुदाई हुई है, उनकी डिमांड थी कि वहाँ उस तरह के, और आवश्यकता भी थी, लोगों का इंटरेस्ट भी जनरेट हो रहा था। और जैसा मैंने कहा, लोग अब भारत को उस दृष्टिकोण से भी देखना, पहचानना चाहते हैं, समझना चाहते हैं। तब 15 ऐसी साइट्स जहाँ भारत में उत्खनन हुआ है और आइकॉनिक साइट्स हैं, उन सब साइट्स को हम हॉलिस्टिकल एक्सपीरियंस देने वाली साइट्स के रूप में डेवलप करें। इसके लिए एक देश नाम से परियोजना माननीय वित्त मंत्री जी के श्रीमुख से जो है संसद के पटल पे आज रखी गई है।
आखिरी सवाल है सर, राहुल गांधी कह रहे हैं कि पूरा बजट खोखला है, रोजगार की कहीं बात नहीं है।
जिनकी विचार खोखले हैं, जिनके विचार शून्यता की स्थिति है, जिनकी दृष्टि जो है वो बाधित और बंधित है, उन लोगों से इसके ज़्यादा अपेक्षा नहीं की जा सकती।
ये थे गजेंद्र सिंह शेखावत, जिनका कहना जिनकी खुद की दृष्टि में दोष है, उनसे ज़्यादा अपेक्षा नहीं की जा सकती। कैमरामैन दिनेश के साथ संजय शर्मा, इंडिया न्यूज़। केंद्रीय विधि और न्याय मंत्री अर्जुन राम मेघवाल जी हमारे साथ में मौजूद हैं। मेघवाल साहब, अगर एक लाइन में अगर हम पूछें कि इस बजट की दिशा क्या है और ये आपको क्या लगता है, क्या विकसित भारत को ध्यान में रखकर बजट बनाया गया है?
देखिए, इसमें जो हमारे भारतीय नागरिक हैं उनका जीवन आसान करने के लिए ये बजट है। विकसित भारत हमारा एक लक्ष्य है, उस दिशा में बढ़ते हुए कदम है। इकोनॉमी की साइज बढ़ाने वाला ये बजट है, लेकिन ये सिटीजन सेंट्रिक बजट है। अब जैसे कोई बिजनेस करने वाला है, कोई एंटरप्रेन्योर है, उनको कोई तकलीफ आ रही है तो उसकी तकलीफ कैसे दूर करें, इस बजट में वो भी उपाय किए गए हैं। कोई ग्रामीण क्षेत्र में रहने वाला कोई नागरिक है, उसको अपनी खेती के साथ साथ इनकम और बढ़ानी है, दूसरे जो सहायक उनके धंधे होते हैं उसके लिए महात्मा गांधी जी के नाम से एक स्वरोजगार की स्कीम, ग्राम स्वरोजगार की स्कीम लेके आए। तो उसकी खेती का काम करने वाला जो हमारा नागरिक है, किसान है, उसकी इनकम भी बढ़ेगी। फिशिंग करने वाला, उसको कई तरह की अड़चने आती थी पहले डीप सी को लेकर के, वो अड़चने भी दूर की गई है।
सर, आप खुद ग्रामीण परिवेश से आते हैं, ग्रामीण क्षेत्र से आते हैं, बीकानेर से। आपको क्या लगता है, अगर ग्रामीण क्षेत्र की हम बात करें, किसानों की बात करें, तो उनको इस बजट से कितना फायदा हो?
देखिए, आमूलचूल परिवर्तन होने वाला है जी उनके जीवन में। जैसे मैंने आपको कहा कि स्वरोजगार का काम वो करना चाहेगा तो उसको लोन लेना भी आसान है, और उसके साथ अगर इंफ्रास्ट्रक्चर अच्छा मिलेगा तो बाजार की सुविधा भी उसको आसानी से मिलेगी, तो उसके तो जीवन में आमूलचूल परिवर्तन आने वाला है।
सर, कई सारी योजनाएं ऐसी आई हैं, लेकिन उसके बावजूद भी विपक्षी दलों के नेता, चाहे राहुल गांधी की बात करें, अखिलेश यादव की बात करें, ये कह रहे हैं कि बजट पूरा खोखला है, इसमें कुछ बोलने की बात नहीं है, न किसानों की बात है, न रोजगार की बात है।
रोजगार, किसान तो उसका कोर सब्जेक्ट है आज के बजट का। उन्होंने पढ़ा नहीं, ऐसे ही स्टेटमेंट दे दिया ना, पढ़ करके स्टेटमेंट देना पड़ेगा।
आपको लगता है कि इस बजट से रोजगार भी बढ़ेगा, साथ ही साथ मैन्युफैक्चरिंग सेक्टर हो चाहे सर्विस सेक्टर हो, दोनों में इसमें इसका फायदा होगा?
देखिए, रोजगार भी बढ़ेगा, मैन्युफैक्चरिंग सेक्टर में जो दिक्कतें थी उन दिक्कतों को दूर किया है। इवन हमारा जो एनआरआई सेक्टर का जो बाहर रहते हैं, वो यहाँ आकर के इन्वेस्टमेंट करना चाहते हैं, वो दिक्कतें भी दूर की है। कस्टम के क्षेत्र में कितने सुधार किए हैं, आने वाले समय में इसका असर आपको सकारात्मक असर नजर आएगा।
ये थे अर्जुन राम मेघवाल, जिनका कहना है कि रोजगार बढ़ने वाला है, किसानों को भी इस बजट का फायदा मिलने वाला है, और आने वाले समय में पूरे देश में इस बजट का फायदा नजर भी आएगा। कैमरामैन दिनेश के साथ संजय शर्मा, इंडिया न्यूज़ दिल्ली।
आज का बजट विकसित भारत और भारत की संस्कृति दोनों को मिलाकर बनाया गया है। भारत को बायो फार्मा हब के रूप में डेवलप किया जाए, मेडिकल हब के रूप में डेवलप किया जाए, खुद भारत के लोगों की हेल्थ की चिंता के साथ बाहर से लोग आकर यहाँ पर अपना ट्रीटमेंट कराना चाहें, इस तरह का प्रोसीजर किया गया है। टूरिज्म को बढ़ाने के लिए कॉरिडोर्स को डिक्लेयर किया गया है, और टूरिज्म के लिए अलग से ट्रेनिंग देने के लिए प्रोविजन किया गया है। इंफ्रास्ट्रक्चर की बात की गई है, आयुर्वेद की बात की गई है, टैक्स प्रोसीजर्स को सिंप्लीफाई करने की बात की गई है। तो मुझे लगता है 2047 के विकसित भारत को जिस तरह से आगे बढ़ना चाहिए, उसका पूरा रोड मैप इस बजट में।
I have joined Aparajita Sarangi, member of parliament from BJP. Ma'am, how do you say about budget?
I would say that this is a highly pragmatic, balanced budget, and this is the budget for Viksit Bharat 2047. Many of the untouched areas have been touched through this budget. We are talking of women-owned enterprises. This is something very interesting. We are talking of one girls' hostel in every district. This is interesting. And I would also say that we are talking of fiscal deficit at 4.3%, the lowest ever. So we are talking of growth in the economy. We are trying to become the third largest economy, very strong economy, and at the same time, we are trying to keep the fiscal deficit as low as possible. So this is the challenge which this budget has taken on. And I must say that we are talking of areas like designing, National Institute of Design, National Institute of Hospitality, and so this is very interesting. We are talking of pharmaceutical areas, talk about sports goods. So I think which area is there which is not touched? So I think this is the beauty of this budget, highly pragmatic, highly balanced, and talking about a strong economy and at the same time keeping the fiscal deficit at 4.3%. This is a challenge. This has been taken on very nicely. Again, I would say that untouched areas have been touched by this budget.
But opposition says that is a disappointed.
They would say cynicism is the disease that they suffer from. Do we care about them? The people of the country must say what kind of budget it is. And I'm very confident that today there would be very good positive reports from all over the country.
Thanks. Manohar Kesari for Newsx.
यार सोच रहा हूँ पॉलिसी बाजार से टर्म लाइफ इंश्योरेंस ले लेता हूँ ताकि मेरे बाद फैमिली को पैसों की कमी ना। तू भी ले ले।
यार अभी तो यंग है यार, बाद में देखते हैं। आजा।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
अब छोलिया हो या लोबिया, सफेद चने या काले चने, सब कुछ मजेदार बने।
लाल रंग इसका अपार, तीखा कम है फिर भी स्वाद। बेमिसाल बेमिसाल MDH कश्मीरी।
MDH कश्मीरी।
MDH।
शिव प्रसाद जी को बीमारी के कारण 15 बार हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने उनका लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
अब आया असली स्वाद।
अब आया स्वाद।
जब स्वाद के पड़े हो लाले तो MDH का चंकी चाट मसाला डालें। MDH का चंकी चाट मसाला।
MDH।
सस्ते वाले दाल मसाले स्वाद हुआ बेकार। MDH की हल्दी मिर्ची धनिया करे कमाल। ये रंग दे, ये खुशबू दे, ये तीखा, ये कम पड़े। क्या निराला MDH मसाला।
Hello and welcome to a very special edition of We Women Want. I'm in conversation with Lakshmi Puri, who's come out with her next book. It is about the sari called The Sari Eternal. What made you write this book?
Well, I wanted to express through this how the sari is India wrapped in its folds, how it is Indian womanhood expressed in all her magnificence and resilience and fluidity and intelligence and creativity.
It's not a book, it's a work of art. It really is. And the first thing it did, it made me want to wear a sari immediately. So I really do suggest you read the book, but first watch our show.
सोच रहा हूँ टर्म लाइफ इंश्योरेंस ले लूं ताकि मेरे बाद फैमिली को पैसों की कमी ना हो। तू भी ले ले।
अबे जल्दी क्या है, बाद में देख लेंगे।
आराम से आराम से आराम से। अब तक कुणाल को हार्ट अटैक आ गया यार।
पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
Welcome back. You're watching Newsx. My name is Vineet Malhotra. Finance Minister Nirmala Sitharaman presented her 9th consecutive budget today, inspired by 3 kartavyas or responsibilities to accelerate and sustain economic growth by enhancing competitiveness. Fulfill aspirations, ensure every family, community and region has access to resources and opportunities for participation. Income, taxpayers who were expecting tax rebates or standard deduction changes did not get much relief. We'll continue to talk about this with thought leaders and people who understand and want to in fact analyze what this budget was all about. First up, joining us at this point in time, we have on the show Nera Lal Kidwai, former Group General Manager and Country Head of HSBC India. Ma'am, thank you so much for joining us. First up, what is your impression of this budget? And of course, you know, to someone like me, this is more about continuity. It is about the grand scheme of things rather than nitpicking and boosting and free takeaways here and there. It does serve a number of sectors, although some sectors are being, you know, served very frugally, but that is what a continuing master plan is all about. Your thoughts, ma'am?
So you're absolutely right. I think why disturb what is working? And the commitment to the fiscal glide path is really noteworthy. India's benefited from credit improvements in terms of our credit ratings. and it is important that we stayed on that glide path. Although that commitment takes us to 4.3 in the next year, it is a 0.1% improvement over the 4.4 that we would apparently see by March, which is what the government's projecting. So to that extent, it's not going to be trying for us, and it also leaves enough scope for growth. And this fiscal commitment has happened even while infrastructure investments, which were already high, the budget for that has gone up, which is again very good to see, because it would have been easy to otherwise slash and cut there. In fact, the government's taken the tougher decision of current expenditure, rationalizing some of the subsidies and programs which they will cut back on, with a view to enabling the infrastructure spend to increase. So a good, very balanced budget. And there are some big, broad statements there that set direction in terms of certain industries and focus therein, which have not been mentioned in earlier budgets. And I do believe also the focus on urban infrastructure. But I can come back to this if you would like to hear more.
Right. In fact, that was going to be my next question to you as well. The capital expenditure and the increment that we have seen in its outlay is obviously encompassing a number of areas. Obviously, we also have to talk about the markets here. The STT, which is higher now, has not reflected well in the market. But first up, let's elaborate on what this capital expenditure means for the country. A lot of people are expecting that there will be minute investments or minute announcements related to roads, related to pollution, related to the environmental issues that India has been grappling with. But what is supposed to be understood here, ma'am, is that perhaps the capital expenditure would encompass the smaller issues as well.
And you're right there. So the overall capex is budgeted to grow 20% year on year when added across the direct budgetary allocation, which is 11.5%, the capex via state programs, which is 60% year on year, and the additional capex by the PSEs, the public sector enterprises, at 11.5%. So the budgetary outlays for defense and loans to states have seen large increases. And telecom itself, if we remove telecom, the 20% growth falls to 19% growth. So telecom also has a large chunk in there. What I'm particularly struck by, and it's an area I work in sanitation and water, that urban infrastructure has been given a renewed push. The Finance Commission grants to states for the year, next year, include grants for rural and urban local bodies. And each city economic region will get Indian rupees 50 billion over 5 years. 7 new high-speed rail corridors will connect major cities. Large cities will get an incentive of 1 billion Indian rupees if they issue municipal bonds worth more than 10 billion. So for municipalities to begin to fund themselves, the discipline that comes with raising money from the public markets is also very noteworthy. And I'm relieved to see that the allocations for big programs like the Jal Jeevan Mission, where government stays on the path of providing tap water to every home by 2028, builds on the existing successes in that direction. And there have been large allocations of infrastructure into water management, river basin management, the Ganga river cleaning programs, and also a big jump on programs to do with groundwater management and hydrology. So the whole area of water, which is so critical to our country, gets focus, and I'm glad to see is very much on government's agenda for the next year as well.
Ma'am, it's not always about looking at the peripheral gratification that a budget is supposed to provide to the people and the market. It's also about some of these deeper issues. You mentioned 7 high-speed railway corridors. Now, this is not only about infrastructure now, is it? This is also about connecting growth. These are growth connectors. This is something which is going to link labor markets.
You're right. And also decongest cities. I was very struck, for example, in China, how a city outside Shanghai, like Suzhou, which is, a couple of 100 kilometers away, has become like a suburb to Shanghai in that people there and work 5 days of the week in Shanghai. So the ability to spread a city, to decongest it, to enable people to commute from living in a comfortable, lower cost environment is also important. And the mobility that comes with these rail corridors helps both in terms of the local city development and also interconnecting cities and enabling faster movement of both people and goods. So yes, and it does lead to quality of life improvement, and railways in any case are very environment friendly and a great way of getting cars and trucks off roads. So excellent initiatives, and we can never have enough of it.
Ma'am, last question before we let you go. The fiscal deficit is under control. Growth is under control. We were not expecting a reformist budget. Do you think that this is perhaps a budget which can be summed up in one statement? Let's not rock the boat.
I think let's not rock the boat. It would be an unfair assessment in that it is good that we are not rocking the boat. But on the other hand, that would not recognize some of the big statements that have been made. For example, the 6 sectors for focus going forward, which include areas like rare earth minerals, the focus on electronics, nuclear. So across sectors, the focus that is to be seen, and biopharma, which has never seen mention before, comes right up there as well. So there are directional statements made which are quite important to recognize. I also believe that the whole area of job creation has got a fair bit of focus. So attention to the healthcare sector, skilling therein, creation of the care economy, tourism, and that has specific programs around the centers, the national architectural sites which will be developed. Tourism is a big employment generator. So we will see, again, skilling that will be required and will be provided there. Government's actually talking about guide programs, etc. And also universities and training centers, attention to the creative spaces, astronomy. So it's quite future looking in terms of what should we skill our people for, because we will lose the demographic dividend that we like to believe works in our favor if we can't prepare people for that next generation of industry that is required. And I think that is certainly worthy of mention here and goes and does rock the boat in that it creates a very good plan for the future as well.
Ma'am, appreciate you took out the time and spoke to us. Thank you so much for your insights.
Right, thank you.
All right, joining us on the broadcast at this point in time to talk more about the Union Budget, which was read out by the Finance Minister today, is Mr. Maninder Singh Hira, Chief Operating Officer, Binds Consulting, R.N. Bhaskar, Founder and Editor of AsianCoverage.com, Mr. Pathakrit Pine, Foreign Affairs Expert, also with us on the show, Mr. Vinod Raval, a finance and marketing expert, is also with us on the broadcast. Maninder, I'll come to you first. Of course, the first thing that we should pick up on is the fact that perhaps the public was once again expecting that there is going to be some more rationalization of the tax structure. But that has already been done last year, Maninder. And, too much of tax rationalization also disturbs, the fiscal discipline that this government has been known for. Borrowing goes up, interest rates go up. So obviously that has been kept in mind. At the same time, there are also other brownie points that this government has thrown at simplification of tax, extending the date. What did you make of the continuity of this budget in terms of facilitating the masses at a grand level and of course making life easier when it comes to taxation?
Thank you, Vinny. Thanks for having me on the show. See, it was known for us. It was known to be a long-term view budget. And I think there were very less expectations as far as the short-term relief or benefits were concerned. And I think we saw that in the budget. And I think a lot of it is owed to the current geopolitical situations, but also, as you rightly mentioned, some of these reforms from a short-term perspective, we've already seen in the last couple of years. So yeah, this was supposed to be more of a long-term viewed budget. And on the fiscal side also, it's, I think even though it is flat, it is considered to be positive because in general, the absolute investment in economy and infrastructure is increased. So that way, I think it's more of a positive sign that we are not getting more deficit and we don't have to borrow a lot to support all of these increased initiatives. If I reflect upon specifically about services industry and GCCs that we do, I think there have been relief in terms of redefining and rationalizing the safe harbor norms. I think a very good move to consolidate some of the related services as part of the IT services because there was a lot of ambiguity. And also the tax rates ranging from 14 to 24% because of this ambiguity. I think it is a very, very good move, which is conducive for services in general or services exports in general. Plus, a lot of these ambiguities had called us to go for independent studies to make sure that we are using the transfer pricing or the safe harbor correctly. I think with this change, and also it's been said that there wouldn't be a lot of assessments and reviews, it's a relief for the firms like us. Like I said, obviously they've capped it at 15.5%. Some of the firms would have been enjoying 14%, but like I said, a lot of them were actually because of the ambiguity were paying up to 24% safe harbor.
Okay.
In terms of the overall expectation, and I'll come to the individual taxation piece, but in terms of the overall expectation from the services industry, I think there could have been a little more stimuli. See, if you see the total export, higher than 45% comes from services. And there's no direct mention or a direct reference to how that can be leveraged further, especially knowing that there have been immigration changes in the US and that could be leveraged here to set up more GCCs and more foreign investments in the services side. I think that is one area which we feel could have been done a little better. Maybe redefining or relaxing the FEMA guidelines in terms of loans or direct investments. We didn't see anything on that sort. Advances from the foreign firms, nothing mentioned on that. But other than that, I think it was, as everybody's mentioned, it was more of a balanced budget with a future-looking initiatives, and all of these initiatives are definitely going to help us be more self-reliant over a period of time and to tackle the challenges that we have today, where we have dependencies on a lot of other external countries. In terms of individual taxations, I think this was very clear. We've never seen, year after year tax reliefs on the individual tax slab. We've seen it last year, marginal a year before. So it was not expected. And I think gradually majority of the people have been, they've already started to move from the old tax regime to the new tax regime. But some of the initiatives that have been taken, I think it's very clear that the focus is on, making it easier for people to be more compliant and collect higher taxes so that it benefits, the government in general in collection and then investment in the economy. So I think this was expected. And I think overall a balanced budget we need.
All right, Maninder, well said. Thank you for that analysis. Pathakrit, coming to you. All right, straight up question for you, Pathakrit. The defense allocation has not gone up as expected. Do you think, considering our geopolitical predicament, the outlay could have been more?
Well, I think the last year it was around 1.8 lakh crore for capital acquisition. This time it has been increased to 2.19 lakh crore. You may say that this is a process where you can always ask for more, but given that the different kinds of challenges, including the fiscal ones, I think this budget, if it is proficiently and prudently spent in terms of having the right kind of conclusion of deals within the defined specified time, I think 2.19 lakh crore itself will not be a small amount. And we have seen over the last few years that there has been a considerable increase in terms of capex expenditure. If you look at the entire budget for defense, it is 7.85 lakh crore, which of course includes the fund for pensions. The revenue expenditures will be quite a bit on the higher side, but around 2.2 lakh crore is decent. And I think some major deals are coming up in the next 1 year including a potential one for 114, a Rafale jets, a potential deal even for Sukhoi 57, and a few others, including a potential aircraft carrier, and Cabinet Committee of Security approval for far more numbers of nuclear submarines. But on the larger context, if you permit me, Vineet, I think I look at it as, as part of Atmanirbhar Bharat, a significant portion of this money will be spent within the country in terms of developing the ecosystem within the country for resilient supply chain, upgradation and development, creating an ecosystem for aerospace industry. And overall, if you look at it, the infrastructure sector itself having a 12 few lakh crore in terms of infrastructure spending, in addition to the railway capital expenditure of 2.9 lakh crore almost. I think this is decent. And last but not the least, if you look at the focus that has been there this time on enhancing the proficiency of the manufacturing sector, including the strategic sectors and the frontier sectors, which would include the semiconductors or critical minerals and several other areas, including electronics. I think we have been pretty decent in terms of focusing on areas where traditionally India had lagged, because manufacturing had a mere around 22 to 23% share of the entire GDP. So manufacturing, focus on skilling in the services sector, capex expenditure on defense, which most of it will be spent within the country. It would definitely help in the long run in terms of employment generation, developing your self-sufficiency, and invariably it will help you to be far more geopolitically stronger, because your economy is the biggest pivot for you becoming geopolitically far more stronger. If India is respected today globally, it's because in difficult times it has gone through and ensured that the economy did not suffer beyond a point. Remember, we were among the fragile 5 economies of the world as per Morgan Stanley in 2013. And by 2024, we became among the major 5 economies of the world. So geopolitically, it is not just defense. I believe that your economic proficiency, your economic development, your economic resilience eventually defines how strong and how respected you are in the global arena. And if you see from European Union to United Kingdom, if other countries are willing to have trade deal with us, primarily because of the resilience of the economy. Of course, you're right that defense itself is a very important aspect, not just for security of the country, but for employment generation as well. But I'm sure that this amount, in addition to the amount that has been allocated for internal security, which is around 2.55 lakh crore, will go at least to a great extent in terms of securing India even more proficiently. Back to you, Adi. Vineet.
All right, Mr. Bhaskar, coming to you now. Of course, there was a market shock today as well. The hike in STT on futures led to 0.05 and options to a 0.15% drop in Sensex and Nifty. Nifty, of course, went down by 350 points, Sensex by 1500. It's Sunday today, so maybe the markets are going to react differently tomorrow. But what I want to understand from you is that, in the past, as a precedent, markets, usually react to budgets, but this is perhaps the first time that I've seen such a slump. Secondly, Mr. Bhaskar, let's also understand that governments who are into their third term, governments who have also been in their second term in the past, have taken risks when the elections have not been closed. This was an opportunity for this government, do you think, to take such risks?
Firstly, the markets fell partly because of STT, which the markets didn't like, but more because the markets had already been overpurchased and overbought, and the markets are propped up. They needed an excuse to correct themselves. Point one. Point two, look at the way FIIs have left India. And FIIs have left India because of two reasons. One, when a currency declines, it's never good to remain in that country. They walk away. And they'll come back only when the decline is stopped. And that's the time when they can come in with more rupees for every dollar. If you cannot stop this decline of the rupee, FIs are not likely to come in quickly. There's a third reason. Look at FDI. FDI has kept on slipping, and net FDI has gone to the negative territory. In fact, for the last 3 years, remittances by Indians has been higher than FDI. So there are many issues on the investment front which are problem areas which are flashing, and there's nothing done to remedy that. You need investments badly. Your capex is largely funded by the government. And if you look at the CAG reports, there's a cost and time overrun in almost all government expenditure. You need private investment. Indians are not willing to invest, and neither is the foreigner. And there are structural reasons for that also. Just look last week, how an Indian businessman committed suicide. It reminds you of the Coffee Day promoter committing suicide. You can't have corporate mitras on the one hand and compliances on the other, and a draconian regime of taxation on the third.
Okay, fair enough, valid point. Mr. Raval, there are some sectoral challenges that are also apparent with this budget, manufacturing, infrastructure, big pushes for some of these sectors. But what about rural consumption, school education, subsidies on fertilizers, which has been a big bane in previous budgets, in fact, previous governments as well?
Good evening, Vinny. First of all, let me tell you, this is the first budget in my career of 20 years since I'm covering the budget for last 20 years. I haven't seen any budget which is without any subsidies and without any freebies. I have seen this time that nothing of that sort is there. So I think this is the best part. Now I think new era has started, that we are now deciding the direction, not the speed. Speed will automatically come. We have to decide for the direction. This budget is giving a direction where we want to be in 2047 as well as in 2030. Let it be. We are not imposing any taxes, neither we are giving any incentives, nor we are penalizing you for anything. This budget is not meant for that, how much we are taking you back, how much. Budget is meant for this is the balanced budget, as I think initially we were heard about it. This is really a balanced budget on seeing the geopolitical situations throughout the world, how the things are going. Despite that, giving this kind of budget is really a commendable thing on the part of the finance minister as well as for the government. It was really a tough thing to go. It was a tightrope balance. It was not so easy to come this kind of budget, this kind of allocations, despite the fact that tariff issue is there, your dollars are down, your stock market already not doing well for the last 1 year, your silver and gold prices are going hayway, and then it is crashing like anything 2 days before the budget. Seeing all these things, then you talk about the rural expenditures. I fully agree with this, that the infrastructure improves each and everything. If you really see the NCR, where we all mostly live, if you really see the 150 kilometers of area is now being covered by rapid transport, which is going to decentralize the main towns, which is the need of the hour on account of environment, on account of employment, on account of the accommodations, the additional accommodations we are going to get, the additional employments we'll be getting from the tier 2, tier 3 cities, which is basically now is the core behind the whole budget. So I feel this budget is giving a direction. It may not be giving a straightaway answer to your questions for 1 year, but this is a long-term budget. And if this blueprint is carried on for the coming 10, 20 years, I think we will be at a different path and different place. And our goals are very much visible now. If you really ask me, there are some issues on account of medical, because needs are very high. On account of education, the budget's allocation must have been high. But if you ask me as a citizen, I was expecting some reliefs on account of for the salaried employees, for the smaller taxpayers. Already it was given in 2020, last year 2025. So we were not expecting much, but I think something could have been done to save the market. Unnecessarily, there was already a problem area, and raising the STT on that, they say effort, we don't want effort to carry on. But it is like writing a message on the cigarette packet or a alcohol bottle that don't drink, you can die. But same in the F&O case, the SABI says 99% people lose their money, don't do F&O.
Let me come back to you, sir. Also joining us at this point in time is Mr. Nitin Rastogi, CFO, Wallplast. Mr. Rastogi, appreciate you being here with us. I'm sure you've heard and dialed into what some of the other panelists had also to say. Do you think that this is a continuing budget which is focused on investment, stability and capacity, and there are no dramatic giveaways this time from the government?
Yeah, so thanks for having me here. So in my view, I fully agree with you. This is a, forward-looking budget where we are focusing on, continuing with the reforms process and also focusing on the skill development in the MSME sector, which is a major backbone of our industry, right? So I would like to touch base 4-5 points here. Firstly is the tax reform. We are like our Income Tax Act 2025 would be effective from 1st of April 2026, where they are saying it will be very simplified. It will help, in the making the compliances in a better way. So I think this is a very big step towards the more, reform process. Then secondly, the capital expenditure, we have given an allocation of 12.2 lakh crores of capex budget here, right? Which is, I think in 2014-15, it was just 2 lakhs. From 2 lakh crores, we have reached in 10 years time to 12 lakh crore. And the capex budget, has a 5-fold impact on our economy. If we are spending 1 rupee, it will have a impact of 5x in our economy by generating jobs, by generating demand for the various, industries. And it is a very good thing, like, we are keep on increasing the capex budget. Then secondly, focus on the tier 2 and tier 3 cities. This again is a very right step, because see, our major people live in the tier 2 and tier 3 cities and the rural areas, right?
Right.
So
Mr. Rastogi, let me just stop you here, sir. In fact, joining us at this point in time is Mr. Sanjeev Sanyal, former economic advisor to the Prime Minister. Mr. Sanyal, appreciate you being here with us. I hope you can hear me, sir.
Yes, I don't know why you have mentioned me as former economic advisor, since I'm still here in my office.
I apologize for that, sir. I apologize for that. Thank you so much for taking out the time and speaking with us. Well, first up, we'll get into the nitty-gritties just a little later. Do you think that this is a budget which is focused on the big picture? It is focused on continuity. It is focused on stability. And it is a budget which is completely aligned with the Viksit Bharat, projection that the Prime Minister has given time and again.
Well, you're right. I would call it a no-nonsense, workman-like budget. There's no populist sort of flare-up for state elections or any other thing. I think what you do get here is a solid focus on macroeconomic stability. It's an economy, remember, that's growing at over 7%, the world's fastest. We don't have any inflation issue right now. So this is a good time to focus on things like fiscal consolidation. You are seeing the fiscal deficit now come down to 4.3%, en route to becoming below 4% in a few years' time. The debt to GDP ratio, which had spiked up over 60% for the central government during the COVID period, has now come down to around 55-56%, and by the end of the decade should be even below 50%. So all of these suggest a very solid focus on fiscal consolidation. Of course, there are specific areas like customs, income tax, etc., where specific process reforms have been announced. But I would argue that the single most important thrust of this is building macroeconomic foundations for sustained growth over the next 25 years.
Mr. Sanyal, the fiscal deficit is under control, growth is under control. Do you think that there was a possibility, I'm being a devil's advocate here, do you think there was a possibility of a reformist budget? Do you think that some risks could have been taken?
I think you are being unfair by saying it's not reformist, in the sense that, do remember that this is ultimately a fiscal document. Just in the last few days, we have had a major free trade agreement with the European Union. A few weeks ago, we announced the culmination of the labor reforms. We are announcing all kinds of things outside of the budget. Even within the budget, there are a large number of reforms. But they are obviously fiscally oriented reforms, like, for example, smoothening out the customs system, removing a lot of irritants and rent-seeking opportunities for the income tax framework. So all of those were announced. But I think this fascination with
every budget has to be some sort of a big bang. I disagree with. Everybody who knows me knows that I'm a big advocate for macro stability and process reforms, both of which were there in abundance in this budget.
Mr. Sanyal, there has been no tax cut, but there has been tax simplification, which has of course been a very welcome move. This is obviously once again in line with the Prime Minister's vision of simplifying taxes, having a faceless ecosystem whereby which people are not scared but are cooperating with the government to give what's due. And I think that's a great step that has been taken.
Yes, that is the idea. As I said, process reforms is absolutely key for ease of living, ease of business. There were, for example, several provisions earlier which effectively criminalized, for example, if you had a bank account in the US, which you hadn't told the authorities about, had a small amount of money in there, you had lived there as a student and you forgot about it or whatever. Earlier, the rules would create a space for maybe harassment. That has now been taken out. There are all these kinds of smoothenings of the system, the customs system, to the extent possible for regular exports and imports. It'll now become pretty much faceless, and there'll now be an X-ray system that will the containers will just go through. So the idea here is that to the extent possible, remove officials from interfering with the day-to-day business of collecting taxes and doing business.
Right. Mr. Sanyal, last question before we let you go. Data centers, fishing, MSMEs, all of these have had some pain points. And I think, with impetus and a fillip given to these sectors, there is something in this budget for everyone.
Yeah, I mean, there are areas that we have, data centers being an example of an area where we have gone for expansion. Obviously, if you want to be a information technology and digital powerhouse, we need to have those kinds of data centers. We do have some, but clearly not in the scale we need. So if we want to be the world's third largest economy, we should at least aspire to have the third largest ecosystem of these data centers, if not more. So that is what is being done. And there are other areas also where we have, like biotechnology as well, is another area where we have provided support.
Mr. Sanyal, one last question I want to pick your brains on. There's also been an announcement of 7 high-speed railway corridors. Now, to put into perspective, sir, this is not just about infrastructure. This is also about growth and connecting growth. I don't want to mention this, but this is something that China has gotten good at. And we obviously want to pick up the good parts from China. It's also not about trains. It's also about linking markets. How important is this announcement? Would you elaborate for our viewers, sir?
So if you look at the last decade or a little bit more, what were we all complaining about, say, in the 2000s? We would have said India's transportation infrastructure is not up to speed. Since then, what has changed? We have now got a reasonable civil aviation network. The airports are decent. The highways have got significantly upgraded. We can do more, but they are clearly now bits of it which are world class, and more can be done. More money has been given for that as well. We are now, the old railway system is getting upgraded with Vande Bharat and other things being put in place. But now we need, at least for the major hubs, high-speed railway. The first leg of that, the first time we are attempting to do that is getting done between Ahmedabad and Mumbai. But that, I think, we are now looking at 18 months to completion. So the idea is now to begin to put in place the next stages of that. These are all long-term projects. It's not like they'll get done tomorrow morning. But you've got to begin putting the vision in place. You need to survey, get the land, get the financing, get the technology. So this is kind of putting that in place.
Mr. Sanyal, thank you so much. Appreciate you taking out the time and speaking with us. Thank you so much. All right, I'm going to go back to Mr. Rastogi. Mr. Rastogi, of course, sorry to cut you short. Sir, please continue. You were elaborating upon the capital expenditure and its effect on labor markets as well as growth, which is going to penetrate rural markets as well.
Yeah. So see, the one way of reviving economy is to do the capex to the extent possible, right? Nowadays, if you see, the capex by the private companies are not much more, right? So they are, I think, I don't know, they are either waiting for the demand to grow. So the action of the government to increase the capex by the government of India is a very welcome step. They are keep on increasing this, and this way it will help in growing employment and growing demand. So I think it will have a very good impact that as the demand will grow, that the private companies will also start investing in the capex thing. So it would be a very good impact of this. Then secondly, if you see, focus on the tier 2 and tier 3 cities is a very good step again, because see, most of our people stay there in the tier 2 and tier 3 cities. So once they get employment, they'll get the spending power. So again, it will help us in our overall development. Then the as it has been touched base by other people also, this deficit of 4.3%. This is a very good step. We are focusing on how we can contain the fiscal deficit, right? So it will help us in maintaining the lower interest rate as well as the health of the economy.
Okay.
So I think this is a very good budget in a very right direction, and we are also trying to see how we can focus on the domestic growth, because there are lots of problems which are there internationally. So the focus on the domestic economy will help us, it is help us in growing in a right way, in the right direction. Yeah.
Right. Maninder, coming back to you, there also have been some corrections, Maninder, not pertaining to the GCC landscape, but if you talk about the fisheries, if you talk about some of the other areas like data centers and MSMEs, who have specifically been battered by the tariff scenario which has been created by Donald Trump. What more do you think the government could have done when it comes to, having a cascading effect of these benefits for the service sector as well?
Right. I mean, this is definitely going to help to an extent, Vineet. But like I said earlier, I think some of the initiatives around, investing more in setting up, innovation hubs, research and development hubs here in India, support product development so that because of, as I said, the immigration changes in the US, that could be supported from India. I think that could have been picked up and invested a little more. We didn't see any of those happening, but it was a big opportunity. And to that extent, I think the government have been expecting private players to do some of these investments. Unfortunately, obviously, because even after the GST reforms and other benefits in the past, the collection hasn't been at par. And also the expectation from the private investments have not seen as much light. I think while we've not seen those changes coming through from the government, some of these should be pushed or should be made lucrative for the private players to invest upon. But yeah, in addition to the cloud, the data centers and cloud operators, research and development, product development, innovation, R&D were some of these areas where specifically, schemes could have been launched.
Okay, Pathakrit, coming back to you, this is obviously a budget, like I've said and I've repeated over and over again, that's in line with a continuity factor. And that continuity is, obviously taken at a time when there are no major elections happening for the government. In the past, we have seen that, a lot of bold decisions have been taken when there is a safety net for governments right before and after elections. Do you think that the government could have taken more risks?
Let me put it this way. See, unlike in the past when the budget document was the only time when policy announcements were made by the government, nowadays you see throughout the year there are major announcements going on. So budget is just probably one of them. For example, the GST reform that was brought in, even though, that has nothing to do with the budget, but it was a very major announcement. The labor code reform that happened was not part of the budget. So you would see, we have been witnessing large number of policy initiatives being taken by government and being announced throughout the year. You may say that some more things could have been done this time, in the budget. That's always more to be done. But I think I'm sure many such things would be invariably happening in the due course of the next 1 year. Secondly, if you look at it, see, I mean, when it comes to tax incentives, when it comes to indirect and direct tax incentive, I think enough has been given. I mean, there has to be somewhere a rational limit between how much the government can give while ensuring that there is adequate expenditures being done in the capital front and revenue front to ensure the economy continues to run. That's one part. Secondly, see, I mean, when it comes to the service sector, the skilling part has been a very big push, because one of the major problems in India, in spite of being a service-oriented economy, has been the lack of skilled manpower. So the kind of impetus that we witness in terms of skill is a very, I think it's a very big thing. In terms of GST, I mean, somebody said that GST numbers have not been very high. I think 11.9 lakh crore for a year, I think it's decent amount. And we have to understand one thing. We are going through a very, very difficult global cycle of tech shifts. Neither you expect any government to go for profligacy, nor you would see government containing investments to that extent that it would have an impact on the economy. See, if you look at election you mentioned, Vineet, there are major elections coming in both Assam and West Bengal. They could have gone for a populist measure for that purpose, but they haven't done that. This year you have election in Kerala, Tamil Nadu, West Bengal, Puducherry and Assam. All these states are very, very important, because especially for Kerala and Tamil Nadu, BJP is not in power. But they have resisted from getting into that path. And instead what they have done, what I could understand from the budget, is that major critical, rare earth industrial corridors are going to come up in some of these states. More is being done in terms of developing the industrial corridor. So eventually, we already have an issue with the freebies in this country that was already flagged in the economic survey. So I think instead of going for that, the government is more going towards capital expenditure. And secondly, tax incentive beyond the point will become counterproductive. So a balance was needed. And I think that balance has been shown. But I agree with you that if you talk about more announcements in certain areas, I'm sure in the due course of time within the next 1 year, some more administrative, structural, economic reforms may take place. When it comes to the power sector, when it comes to agriculture sector, a lot of critical reforms are pending. But I think in the last few years, we have seen that is not part of the budget announcements. They have happened in due course of time when individual ministries have taken it up, or the Prime Minister himself have taken it up without being announced in the budget itself. Back to you.
Fair enough. Mr. Rastogi, if you're still there with us. Mr. Rastogi? Right, Mr. Rastogi, there is also a big impetus on manufacturing. Semiconductor, has been given a program. It's called the Launch of Semiconductor Mission India, the ISM 2.0. 40,000 crores is the outlay. The Biofarm Shakti scheme is going to get 10,000 crores. It aims to make India a global biopharma hub. In terms of the capital expenditure as well, which is huge, 12.2 lakh crore, how is this likely to transform India's velocity as well as India's speed to getting to Viksit Bharat?
Yeah, so see, as our economy is very much dependent on imports, these are the reforms which, we are trying to have less reliance on the imports, because, due to the imports, we have the, our currency is under pressure. So in my view, these are the very right steps again to see how we can start manufacturing these semiconductors here in India. So the dependency would less on imports, and our balance of trade will also improve, right? So the point is how we can be self-capable of manufacturing the things, within India, and not having the reliance on the outside world for this. So semiconductor is one of the many, things like that. So these are very, very right step. Over to you.
Mr. Raval, let's also talk about the fact that there is a fiscal tightrope also being walked here by the government. There are disinvestment targets this year which have been amplified again. But what about the disinvestment targets, which the government talked about last year? They have not been completed as yet.
Actual thing is, as you have rightly said, they are working on a tightrope. This is not so easy. if you really see the global situation, the geopolitical situations, under that situations, sometimes domestic decisions are kept on hold because the market volatility and other factors are not allowing them to go forward for that. They need money. If you really see this year also, I think they are going for a big borrowings. With that borrowings, and moreover, inflation 4.4%, and now they are come out with 4.3% for the next financial year they are planning for. So, working on that tightrope with that numbers, even without this investment, is really a commendable job. This is so I feel this is not it is not always a 1 year job. Whenever a disinvestment is planned, it takes time to settle down, and I think this year they must be taking up for that.
Maninder, coming back to you once again, any areas you felt that the government could have touched upon and has not when it comes to the service sector, as well as incentivizing people who have been let down, in terms of these H-1B norms that have been changed in the United States. Also, that drawback has been dampened, Maninder, because of the continuous FTAs that have been signed with various countries and organizations, the latest one being with the European Union. Do you think there's still something that could have been done by the government to cushion that blow?
Well, not directly. I mean, that wasn't the expectation, I think, but indirectly by creating more opportunities around the space where you've seen people migrating from India. If those opportunities and employment can be made available here in India by attracting more companies, I think that was one of the areas I was talking earlier about. But having said this, Vineet, I think at times it is really important to know what are the priorities and what makes more difference in general, and it's okay to kind of deprioritize some of the things. I think government have been clear enough in that sense to only include areas which have which would impact much more in general to the economy. So from that perspective, I think it's fine. The only comment I would like to make, and this is something that have been a concern in general, is while you recommend and propose all of these different schemes and investments, it's about the execution and the governance, which has been, not up to the mark or not 100%. And you also asked the same in the last question. I think the entire focus now has to be how all of these schemes and initiatives can be delivered. How can it be fast tracked if there is a possibility to make sure all of these benefits that we are assuming from these proposed schemes could be seen on the ground. I think it's going to be a big ask and also a big task on the government. But if they are able to pull this off, I think we'll see the economy to improve further.
Mr. Rastogi, anything on your wish list you would have hoped that the government touched upon?
Yeah. So one area I would like to highlight here, because see, in my view, we have a large, the population which is there in the rural areas, right? And in the last few years, if you see that those people are not, I'm talking about the people at the ground level, who are having very small kind of a, businesses or the jobs where they need very micro kind of a, capital, 5,000, 10,000, 20,000. In the last few years, if you have seen, there's that industry, that vertical was in a much pressure, So that the thing is how we can enable those people, because those people can help a lot in, reviving the economy, because, those people are not having the access to the capital, and they are the people who are having a bread and butter on a daily basis, right? So in my view, the government should have touch based upon those people, how we can bring in the reforms in the microfinance sector, right? So in the sectors like, which are to address the people who are at the very ground stage of our country, where, the banks are not reaching out, and, those people have nothing to give as a security or as a collateral. So that is one area the government could have touched base. That could have been better. Over to you.
All right. Well, we've run out of time. We're going to take a quick break now. Maninder, Mr. Rastogi, appreciate you being here and sharing your thoughts. We have more on the other side.
सोच रहा हूँ टर्म लाइफ इंश्योरेंस ले लूं ताकि मेरे बाद फैमिली को पैसों की कमी ना हो। तू भी ले ले।
अबे जल्दी क्या है,
बाद में देख लेंगे। आराम से आराम से आराम से।
अब तक कुणाल को हार्ट अटैक आ गया यार। पॉलिसी बाजार पर 0 GST के साथ अब 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
यूपी में ग्रीन मोबिलिटी को नई रफ्तार, निवेश और रोजगार के अवसर अपार। यशस्वी प्रधानमंत्री श्री नरेंद्र मोदी जी की प्रेरणा और माननीय मुख्यमंत्री योगी आदित्यनाथ जी के दृढ़ संकल्पों से उत्तर प्रदेश इलेक्ट्रिक वाहनों के विकास में अग्रणी राज्य बन चुका है। नोएडा और ग्रेटर नोएडा में ऑटो कंपोनेंट और बैटरी इकाइयों के विकास के साथ 2400 सार्वजनिक चार्जिंग स्टेशन स्थापित किए गए, जिसके परिणाम स्वरूप दिसंबर 2025 तक यूपी में लगभग 15 लाख इलेक्ट्रिक वाहन पंजीकृत हुए और वित्त वर्ष 2024-25 में यूपी में इलेक्ट्रिक वाहनों को अपनाने की दर हुई 10%। राजधानी लखनऊ में निजी क्षेत्र की भागीदारी से नया ईवी मैन्युफैक्चरिंग प्लांट शुरू हुआ है, जहां इलेक्ट्रिक बसें और छोटे कमर्शियल वाहन बनाए जाएंगे। आज हरित मार्गों पर 750 से भी ज्यादा ई बसें संचालित होती हैं और उत्तर प्रदेश इलेक्ट्रिक वाहनों के मैन्युफैक्चरिंग के वैश्विक केंद्र के रूप में स्थापित हो रहा है। हरित राहों पर बढ़ता प्रदेश, आत्मनिर्भर उत्तर प्रदेश।
इम्तियाज जी के फादर को बीमारी के कारण अचानक हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
This week on the roundtable, we are taking a look at the danger our country faces from the number of Chinese imports that have been literally dumped onto our country. Our economy is at great risk. What can the budget do about it?
The budget is like an iron dome. It protects our factories, it protects Indian capacities, and we need to defend them from the onslaught that the Chinese economy is doing on India. And it has reached huge proportions, so there is a need for an urgent step to be taken by the union budget.
What I feel is not single measure, there can be multiple measures, but the best way to stop Chinese imports is by raising tariffs. History has shown it. We must raise tariffs as per the WTO agreements, and we have the limit of 50.4% average weighted tariff, whereas we are imposing hardly 6%. So there is a huge gap between what is the bound rate and what is the actual effective rate.
I think we should strengthen our industrial policy and see to it that our PLI scheme also is interweaved with quality in a very strengthened manner, so that we are back on the path of having the QCOs into the country to a great extent of sectors and pushing them very hard.
Thank you. Hello and welcome to a very special edition of We Women Want. I'm in conversation with Lakshmi Puri, who's come out with her next book. It is about the sari called The Sari Eternal. What made you write this book?
Well, I wanted to express through this how the sari is India wrapped in its folds, how it is Indian womanhood expressed in all her magnificence and resilience and fluidity and intelligence and creativity.
It's not a book, it's a work of art. It really is. And the first thing it did, it made me want to wear a sari immediately. So I really do suggest you read the book, but first watch our show.
Watch We Women Want at these times on Newsx.
This week on the roundtable, we are taking a look at the danger our country faces from the number of Chinese imports that have been literally dumped onto our country. Our economy is at great risk. What can the budget do about it?
The budget is like an iron dome. It protects our factories, it protects Indian capacities, and we need to defend them from the onslaught that the Chinese economy is doing on India. and it has reached huge proportions. So there is a need for an urgent step to be taken by the union budget.
What I feel is not single measure, there can be multiple measures, but the best way to stop Chinese imports is by raising tariffs. History has shown it. We must raise tariffs as per the WTO agreements, and we have the limit of 50.4% average weighted tariff, whereas we are imposing hardly 6%. So there is a huge gap between what is the bound rate and what is the actual effective rate.
I think we should strengthen our industrial policy and see to it that our PLI scheme also is interweaved with quality in a very strengthened manner, so that we are back on the path of having the QCOs into the country to a great extent of sectors and pushing them very hard.
Thank you.
अब छोलिया हो या लोबिया, सफेद चने या काले चने, सब कुछ मजेदार बने।
MDH का किचन किंग किचन में हो तो हम सब कुछ बना सकते हैं। बैंगन का भरता, आलू गोभी, भिंडी मसाला और भी बहुत कुछ।
MDH।
लाल रंग इसका अपार, तीखा कम है फिर भी स्वाद। बेमिसाल बेमिसाल MDH कश्मीरी।
MDH कश्मीरी।
MDH।
दादी के हाथों का जादू और खुशबू से महकता घर। MDH गरम मसाला, असली मसालों से भरा हूँ मैं,
क्योंकि हर रिश्ता है स्वाद से जुड़ा।
आपके घर के खाने में रेस्टोरेंट जैसा स्वाद ले आए MDH का शाही पनीर मसाला। पनीर को क्या मस्त बना डाला।
सस्ते वाले दाल मसाले स्वाद हुआ बेकार। MDH की हल्दी मिर्ची धनिया करे कमाल। ये रंग दे, ये खुशबू दे, ये तीखा, ये कम पड़े। क्या निराला MDH मसाला।
इसको तो फुटबॉल खेलना भी आ गया और इसे तो पियानो बजाने भी आ गया।
चंद्रयान भी उतर गया चांद पर हमें
अब तक टेस्टी राजमा बनाना नहीं आया।
बिना MDH राजमा मसाला के टेस्टी राजमा कैसे बनेगा?
स्वादिष्ट राजमा के लिए MDH राजमा मसाला।
क्या स्वादिष्ट राजमा बनाए?
MDH।
MDH की देगी मिर्च,
देगी मिर्च का तड़का, अंग अंग फड़का।
MDH की देगी मिर्च।
MDH कसूरी मेथी लाजवाब है
स्वाद और सुगंध इसकी
लाजवाब है।
अगर MDH कसूरी मेथी नहीं डाला तो खाली हाथ मलते रह जाओगे।
एक एक पत्ता हाथ से चुना, स्वाद और सुगंध जगाए कई गुना।
A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research and manufacturing.
All right, on this historic day, February 1st, 2026, the first Sunday budget presentation in Indian history, Finance Minister Nirmala Sitharaman unveiled a game-changing initiative in the Union Budget 26-27. The establishment of dedicated rare earth minerals corridors in 4 key states. This announcement comes at a pivotal moment when the world is scrambling for control over rare earth elements, those 17 obscure metals that power our smartphones, electric vehicles, wind turbines, defense missiles and even AI data centers. They're not just commodities, they are the linchpin of the green energy revolution and high-tech dominance. Hello and welcome, you're watching Newsx with me, Vineet Malhotra, and today let's take a look at India's rare earth as it stands as compared to, of course, China. But why now is the big question. Well, global supply chains are fragile, dominated by one player, that is of course China. India, with its own vast reserves and surging demand, is finally stepping up in this extended analysis. We'll dissect China's iron grip, India's current lag, the fresh budget boost, and what it all means for self-reliance. Well, buckle up. This is about geopolitics, economics, and the future of technology. Let's start with the elephant in the room, China. Well, Beijing is not just a player. It's the referee, coach, and star athlete in the rare earth game. China boasts around 44 million metric tons of reserves, which according to USGS is about 37 to 48% of the world's total, estimated at 90 to 120 million tons. These reserves are mainly concentrated in the Inner Mongolia Autonomous Region, the Sichuan province, the Jiangxi province, and Guangdong province, Shandong, and a few more. In fact, the Bayan Obo mining district near Baotou city is the world's largest redeposit, primarily rich in bastnasite and monazite ores containing light rees like neodymium. It's a sparsely populated area, but mining here supplies the bulk of China's output. But reserves are potential. The real power lies in production. In 2025, China mined over 270,000 tons, capturing 60 to 70% of global output. That's more than the rest of the world combined together, including runners-up like Australia that mined around 18,000 tons in 2025 and the US that produced 15,000 tons. But why does the rest of the world fall behind that badly? Well, the real chokehold is in processing. China refines 85 to 90% of the world's rare earths, turning messy ores into pure oxides, metals, and alloys for sintered neodymium iron boron permanent magnets, the super strong ones in EV motors, wind generators, and hard drives. China produces 90 to 95% globally. Heavy rare earths like dysprosium and terbium, crucial for high temperature performance. Well, China controls 98 to 90% of separation capacity. This monopoly isn't benign. In 2025, China imposed stricter export controls on rare earth technologies and materials, citing national security. Prices skyrocketed. Neodymium oxide hit over 700,000 Chinese yuan per ton, up to 50% from 2024. Countries like the US, Japan, and India felt the pinch, with supply disruptions rippling through industries. Remember the 2010 rare earth crisis when China cut exports to Japan by 40% amidst a territorial dispute? Well, history repeats, and it's a reminder. Dependency on China is a strategic vulnerability in an era of trade wars and tech decoupling. Environmentally, China's dominance comes at a cost. Toxic mining practices have polluted rivers and soils in regions like Bayan Obo, but they've invested heavily in cleaner tech to maintain their edge. Globally, this imbalance fuels initiatives like the US CHIPS Act and EU's Critical Raw Materials Act, but China remains ahead, with state-backed giants like China Northern Rare Earth Group leading the charge. Now, pivot to India. We are not starting from zero. We rank 5th globally in reserves with 6.9 to 8.52 million tons, or 5 to 8% of the world total. These are primarily monazite sands in coastal belts. Kerala's Chavara, rich in thorium-linked reefs, Odisha's Chhatrapur, Andhra Pradesh's Vishakhapatnam area, and Tamil Nadu's Manva Larkuchi. A recent 2026 discovery in Karnataka's Gundlupete adds 6.35 million tons, but it's early days. Yet production tells a different story. Just 2,900 tons annually, under 1% of global output, placing us 7th worldwide. Why is there a gap? Well, historically, underinvestment, regulatory hurdles in sensitive ecosystems, and a focus on exporting raw concentrations rather than building processing plants. We import 80 to 90% of our rare earth needs, mostly from China, costing over $221 million in 2025 alone. Domestic demand is exploding from 2,900 tons today to 8,220 tons by 2030, driven by India's EV push, renewables, and defense modernization. The challenges are multifaceted, including environmental risks like beach erosion and radioactive thorium waste from monazite processing, technological lags like lack in advanced separation tech for heavy reefs, and policy inertia. Though that's changing, without action, we'll remain a buyer in a seller's market, vulnerable to China's whims. coming back to today, just hours ago at 11 a.m. Indian Standard Time, Finance Minister Nirmala Sitharaman announced the government's support to the mineral-rich states of Odisha, Kerala, Andhra Pradesh and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research and manufacturing. These corridors will transform these states into hubs for the entire value chain, leveraging their monazite deposits to attract investments and create jobs. Experts hail it as a serious and structured effort, emphasizing the need for an end-to-end domestic chain in EVs, wind energy and defense. Internationally, tie-ups like Pax Silica's US partnership add firepower environmentally. While not detailed today, the scheme nods to sustainable practices under Net Zero 2070. In essence, China towers with 70% production and 90% processing, while India trails at 1% output and near total imports. But today's corridors mark a bold pivot, potentially narrowing the gap by 2030. It's Atmanirbhar in action. From reserves to magnets, India could emerge as a counterweight in a multipolar world. We'll also talk about this. Joining us on the program is Mitali Nikore, senior economist. Mr. Atul Thakur, policy analyst, is also joining us on the show. Mr. Nakul Sharma from SKPS and Company is also with us on the broadcast. Mr. Vineet Nahata, chairperson of the Economic Affairs Committee, PhD Chamber of Commerce, and Mr. Sirish Korada, Managing Director and CEO of Minds Consulting, is with us on the broadcast as well. Thank you everyone for being a part of this conversation. Mitali, I'll begin with you. Well, you've just heard me talk about the huge gulf between India and China. While we are all talking about, adjustments in terms of the tax rates, we are talking about a lot of capex for infrastructure. We are talking about push for MSMEs. This is the big sixer here that we need to address.
No, absolutely, Vineet. I think, a lot of announcements often happen on budget day, and there are certain things which get lost in the details. And I think the rare earth push that has happened today, when we see it alongside the electronics components manufacturing mission, as well as the semiconductor mission 2.0, then see that becomes a very interesting cocktail of measures that India is putting in place for its Atmanirbharta, when it looks at the entire supply chain and when it looks at the entire value chain for these fast growing sectors. Because let's think about it, right? Like when we think about a sector like semiconductors, you still need rare earths to be refined, to be mined in the early parts of that supply chain. You don't want to ideally be importing those parts. You should be able to actually produce a very critical raw material, which is rare earths, within your own country. And that's exactly what this rare earth mission will do. And what is interesting about this entire push is that it's not a push of just one activity in the value chain. It is a push across different activities in the value chain, because for each of these, whether it was for electronic components manufacturing, whether it was for semiconductors or for rare earths, at the end of the day, it was about skilling people. It was about skill training and upskilling. It was about investments and driving investments, foreign direct investments, as well as domestic investments. And then it was about logistics for actually moving the final products as well as moving the intermediate products. So the entire value chain was actually covered in these missions and in this push. Of course, implementation is going to be a challenge. We know that it's not going to be easy to start simply from, ground zero and refining rare earth metals. And I think that the recent, attendance of the Prime Minister of the Shanghai Cooperation Summit actually has a lot to do with this, because India can work with China also in learning some of these processes and for technology transfer. The ultimate aim is Atmanirbharta.
All right, let me rope in Sirish Korada, MD and CEO of Minds Consulting here as well. Sirish, what did you make of the overall essence as well as the paradigm continuity factor that we got to see in today's budget? Of course, the government does not want to rock the boat. Whatever is doing well, let it be. Don't tweak it. But there are opportunities, Sirish, that the government is definitely looking to explore. Let's talk about what they have done for the MSMEs. Let's talk about the cushioning that has come about as a result of the tariffs which were imposed by Donald Trump. What did you make of the government actually getting into the nitty-gritties, like they say, getting their hands dirty when it comes to sectoral transformation?
Thanks, Vineet, and thanks for the question. Hopefully you can hear me clear.
Loud and clear, Sirish.
Perfect. You're coming across a little faint, but I think I got a sense of your question. Let me start with putting a moniker on the budget. Everybody's looking for monikers for this budget, but I think boring. It's a boring budget, but sometimes boring is beautiful. And I like to say it's beautiful because from a corporate and an entrepreneurial part of it, continuity of the tax policy, continuity of the policy targets, especially the fiscal prudence that's been shown, continuity of the tax benefits, and no major policy flip-flops. I think that is one of the key themes I kind of believe. And two, it's a continuation budget. It's looking at a long-term view rather than a short-term view. And things, like the rare earth minerals that were just spoken, things like focusing on key priority sectors such as defense, textiles, healthcare, tourism, biotech, pharma, all of that. I think, I've heard for the first time in a budget where where a tax haven has been provided up to 2047 or some critical sectors. So it's definitely focusing on the long term per se. Now, obviously, the market had already factored in no major direct or indirect tax benefits as such. Obviously, there's expectations on it, and I know the markets reacted pretty poorly today. But that aside, I think there were some great hits for GCCs and entrepreneurs as such, and I think there was a few misses. Vineet, let me just quickly talk to you about what are the things that are great or can really add value to us. And it's all around the tax compliance and ease of doing business. The transfer pricing rules and safe harbor rules defined for all IT services, and safe harbor set at a 15.5% with no sort of tax penalties or no sort of arbitration. I think that gives a lot of relief to a lot of founders who want to put money, and especially foreign investors. I think the panel on education to employment is a fantastic thing. I think we need to really, really look at how we are going to create jobs and create jobs for the future, looking at AI and all other technology initiatives. And another one which really excites me is the capital expenditures planned on developing tier 2 and tier 3 cities. We know our top tier cities are already quite jammed and from an infrastructure, and I think we need to really expand that out for companies of the future to invest and really add and create jobs for our tier 2, tier 3 and rural economies. So some great things there, but a few misses as well, in my view. I think there could be a little bit more conversation on GST, a bit more harmonization of the sort of the rules as such from income tax, GST, FEMA, RBI, all of that. A bit more simplicity or ease of doing business could have been great. And, I had expected a little bit more from an MSME standpoint. I know they outlaid some capital out there for the MSME, but the push has always been on the manufacturing side with the PLI scheme, and that's great. But I just want to, I just want everybody to remember that the services firms kind of contribute about 46% of exports. With a widening trade deficit, we can't throw the baby with the bathwater out. We need to really, really help and push the services sector. And, simple things like, the 4480A provisions that a lot of our service people use, bolstering that, making that wider and broader could really, really help, So I think there's a lot in there, to be honest, but I would see it as a continuation and sticking to the targets, and especially very happy to see the fiscal prudence and the fiscal deficit projected to be about 4.4 or 4.3%. I think that's really, really great to see.
Fair enough. Good analysis.